coffee. Come on, wake up now. Pour that coffee down your throat hole. It's hot. Now you got a hole in your throat. Oh no, just call your boss. Take the crust from out your eyes. So tasty, not a coffee.
Good morning, you knuckleheads. Happy Tuesday to you both.
Hello.
Hola. See, Vanetta and I are in the green hues. You're in gray over there, which is close.
Same.
Pretty good. I mean,
Yeah, I messed up today.
Okay.
I think I'm going to just wear Christmas sweaters from now to the end of the month. I have enough.
It's the right weather for it. I mean,
Yeah.
Wait till you see us in our Christmas sweaters.
Oh my God.
I almost peed in my pants.
We're not alone. The
Yeah.
whole team took compromising positions. Pictures. I'm not gonna lie.
We are working on a project, yes, for our holiday promotion, but we did like a JCPenney photo shoot in Christmas sweaters.
Like those weird
With everyone.
JC.
Yeah. Julia and I look like we're gonna go pick out a Subaru. I love that for us. You and your dad, it's giving, I don't know what
It brought back such fond memories of, like taking that holiday picture with my son, having him on my lap. It was really kind of.
I was wondering if we have any of those pictures anywhere.
I'm sure they're somewhere.
probably
I have them
box
somewhere. For sure. Too funny though.
So good.
It's
I want
always
physical
fun.
cards though.
You could just go to Staples, go to Walgreens.
Yeah.
They'll make you physical
Oh,
cards.
Yes.
but I was talking to Tracy. I want to send them out.
Yeah.
Oh,
I want customers to open their mail and see the Christmas card from Taste.
yeah. I love it.
Put it on the fridge.
Yeah.
You know?
Do you know what's going viral though? And I was like, ooh, this is a good idea because I get this. I'm sure you do too. This time of year, you get all the holiday cards from your friends.
Yeah.
And it's like, oh, we just got married this year and like we're having the baby.
Yeah,
we
they
bought the
really
house,
rub it all in.
Right. But then there's this girl, right? And I was like, oh, congratulations. But then there's this girl.
My life is going so well. What are you two losers doing?
No, but there's this girl on TikTok. She was like, ladies, if you are single, she's like, make a holiday card. Because I don't send out a holiday card. I was like, no one cares. But she's like, that way, when your friends put it on their refrigerator, single men who come through their house can see you on the refrigerator. And then someone in the comments was like, girl, no, go step up. They're like, send that shit to banks, dentist offices.
See, I don't know if that would work for me with like the picture of me like riding on top of you like a horse. I don't know if any.
You're gonna tease them too much. You're gonna tease them. Oh, he did one like that too.
Yeah.
I saw it.
Yeah, I don't know if that would be really get the juices flowing there. And that the little thing was because we were talking about it before.
Silver?
And
Yes, silver. He
He
just sold silver at 44. Silver trading 34 right now. You got
I can take it.
You got a nice dime on it.
Not yet.
Silver up just about 1 5/8% this morning.
Back
near its highs.
Yeah.
So, people ask why, and I don't know if it's going to work or not, but it's just price, all right? You're not looking at anything.
I have the pair on, so I'm long
You do.
gold. I was long gold against one silver,
Which is
So I
not
had-
working this morning. Silver is up
Yeah.
big.
Yes.
Yeah, right.
Yeah.
It's down about a half a percentage point.
Yeah. But now
Now you're 2 to 2.
so I'm more short silver than I am long gold.
That is correct. You'll be looking at scalp silver if you
Yes.
can. That's what you want to do. Sorry. Go ahead.
No, go ahead.
Sorry.
Back
You're
to
making money.
our Christmas card talk.
Yes.
And by the way, I was talking with Laura, and I'm like, this is really weird looking. She goes, oh, don't worry, there are others. And she sent me some pictures of the rest of the team.
Yeah.
You all, there's nobody throwing any shade at anybody here. You all outdid yourself.
Oh yeah, it's good, and we still have Mike and Katie to go, and
Yeah.
Liz and Jenny, and
I told E, I was like, yeah, this is how you stay around for 10 years. They keep this blackmail on you for 10 years. This stays here until we release it.
That's
It's
too funny.
It's funny. No one is immune.
No.
We're gonna make everyone a
When are those
star.
going to go out? I mean, we're in the 12 days of Christmas already.
That's true. That's true. And you can sign up if you have not opted in. Yesterday was day 1. Today is day 2. But go to tastytrade.com/12 days to opt in to the trading email series. Get fresh insights delivered to your inbox every day. The theme of today is IRA.
Oh, there you go.
Oh, yeah. We'll be talking about that across all of our shows
contributions.
and some videos. Yeah.
Which you have until, I think, April 15th or something like that to fund. But, don't procrastinate.
Yeah.
Right.
If you're looking to do that, do it. Get it done.
I'm starting to get the tax questions as well.
Are you?
We are not tax professionals.
We are not.
Just to put that out there. But for the most part, the tax center, the Taste Trade Tax Center that gives you all of your reporting, it does pretty much everything.
Does a
for
good
you.
job.
I mean,
Yeah.
So if you're
Still got to do your own due diligence, but sure.
yeah, if you're a lot more active like we are, you might need to get like if you're.
So you can send me all the tax questions you want. I've never done my own taxes, so
You've never done your own taxes? I do my own taxes.
No.
But my taxes aren't complicated.
Yeah.
So.
no.
But
I'm a virgin.
I would say any CPA can do this. For
Yes,
you. You
yes.
should have no problem there. If you are using a tax software, the reports you can upload them
Yes.
into the platform. If you're very active, you might have to buy like a more premium
The deluxe version, right.
version, which is like
The
another, like,
DGen version.
DGen version, which is another like $50 or whatever. But for the most part, there's no like, it's pretty cut and dry. Like if you make money, you pay taxes. If you don't make money, you don't pay taxes. Like there's not a ton of like, it's not real estate.
How do I get
Don't have any-
declared a religious organization?
You have to have I think it's like a 10 by 10, some sort of, I don't know what they call it, but a plot on your land that is dedicated to that. So, you could have like a little like, what do they call it? Like,
What?
yeah, like where as long as there's like 2 people's worth of space.
Well, may I
it is?
spread the gospel? Are you prepared to let Taylor Swift into your
But
life?
That's what they do in Arizona. Arizona, everybody has like people do that. I think
Seriously?
Wisconsin, they do that too. There's some sort of weird loophole. Yeah.
It's like having an alpaca on your property in Texas or something like that.
I don't know that one.
Yeah, it's another one. You become like I don't know. I'm talking out of my arse
Yeah, that
right
would
now. Yeah, you become some sort of farmer. I know TP could probably tell you about
Yes.
that. Who knows?
But don't ask Chat GPT your tax questions because you might end up in jail. I'm just saying they get things wrong. So like it gets things wrong sometimes, and like if you act on that, then you
That
could
was
be
one
in
of my
trouble.
favorite
It's
conversations.
typically money well spent when you find
Hire an
out a
accountant.
professional. Yes.
Hire a tax
Yes.
professional.
Yes, just drop it off. It's a lot better. But
Yeah.
yes,
Yeah.
that was always one of my favorite conversations with Donnie around tax time. I was like, Donnie, so if I just like leave something off the taxes, like a small fish thing, like are they really is that really going to be a problem? They're really going to come on after
To
me?
be fair, they fired half of the IRS, so
that's what I'm
YOLO,
saying.
Yeah, who knows? Who's
YOLO.
I just, oops, forgot this one. Is that really a problem?
You left off one or two of your tendies.
Yeah, like there's like a couple things a little missing,
I don't know if you can ask for forgiveness with the IRS.
I mean, it's wild to broadcast your crimes, but
That's true. Please cut this out of the recording. I was talking theoretically.
That's right.
hypothetically.
Hypothetically.
Yeah.
For somebody out there doing this or thinking this.
I got a question
Right.
that asked this.
Yes,
That's it.
yes. An email came through with that question.
That's it.
Is tonight golf night?
It is.
It is.
It's actually a buy for the team in our league,
Okay.
but we are using this as a practice round.
Oh, okay. Because you were
No
hot
rest for the
last
weary
week,
over
though.
there.
We are actually in first place, not only in our division, but nationally.
The girls and the men's division you're in first place in? Is this what this is?
No, they do it
And
nationally.
kids?
You're nationally
Nationally?
ranked.
First place.
You were so
Out of
good.
like
You guys
500.
must have been the
Whoa.
biggest grifters, liars on your scorecards to start the
No.
season.
No.
Did you have to get? Did
so
you have to get drug tested? You were so good last week.
No, but we think that the next time we play, we're going to have somebody watching us because they have the top 3 teams get a all expenses paid trip to like I think it's somewhere like in the Dominican Republic or something. So
Cuba or something like that. Go
No, I
ahead.
think
Are they going to traffic you?
maybe. But so
Do you have to take a boat there, like a speedboat kind of thing?
I don't
and go
know.
fishing? Nothing?
If a billionaire asked you to go to his island, don't do
No,
it.
don't do it.
Don't do it.
Don't do it. Don't do it.
Yeah, I'm not. So we'll see. But it's the 15-foot gimme range. That's really what it. So like, if you're, because I'm getting a stroke a hole,
Yeah.
and if I can get it in the gimme range, that's like 2 strokes.
Right.
Because I'm not making that 15, 20-foot putt.
Right. Well,
Why don't they
20 foot,
tighten
you
that
gotta putt
up?
it. 15 foot, you're inside.
Yeah, I know. But in real life, 15-foot putt.
Yeah, no. That's a 3 putt.
Yeah.
Right.
Yeah.
On a good course.
On a good course.
Yeah.
And these are like good courses.
Right,
That
right.
we're playing with like tournament.
And you're getting
greens.
gimmies.
Yeah, and I'm getting 15-foot gimmies.
But everybody gets that, so it's fair.
Yeah. But my handicap dropped 8 strokes. So
Yeah.
It's going to be tough.
Yeah.
Wow.
I think
Hard to
Yeah, that's not sustainable.
And when's the
I
season
was
over?
20 before.
Like, so you can get this trip. When's the season over?
Uh,
You still got plenty of time?
yeah, like it goes into like February, I think.
Oh, okay.
So you're starting like the Bulls. You start out hot.
Yeah, we're
and
really
then,
hot right now.
And then it could just drop off, and then you drop 9 games.
Yeah.
Yeah. Kind of like his fantasy football league that he's in with me.
No. I'm still number 1.
Yeah.
First place. I've been in first place the entire year.
Bell to
14
bell.
straight weeks.
Bell to bell. That's what I want to see.
Yep.
It's pretty good. What'd you get up to last night?
Ooh, nothing last night. Very
Nothing?
quiet, very nice, quiet night. It was really kind of good. No tutoring. Vinny's in tutoring stages right now.
So
with
he's
finals coming.
So he's still in school. I wasn't sure.
Yeah.
Between the ski trips and the hockey and
Well, so now I started baiting him with his test scores for the going to hockey kind of
Right,
thing.
yeah.
You know what I mean, going to skiing kind
Right.
of thing. So yeah, I know. So he needs a B in science, which is a tough one for him.
it's just still science. Like it's
No, it's
okay. Like
it's
it's more
I forget what they
specific
call it.
normally. And biology, chemistry, physics.
Chemistry.
Okay.
Chemistry right now. Yeah, he's having a hard time with chemistry.
Yeah.
So he needs a B. He needs a B to go skiing this weekend. He's got test this week. So he's like, Dad, he goes, it's gonna be a tough one. You can do it, son. I have faith in you. He goes, all right. So we got tutoring 3 times this week. He went once already.
Oh, good.
Yeah.
That's
yeah.
wonderful.
Yeah. I think the tutor actually cares a lot more than he does. Because the tutor will call me on the weekends, like text me, I'm free on Monday night at 4:30 if he wants to go to the library. And I'm like, oh, because he does have finals this week. I go, wow, finals this week. Okay. Then I go, Ben, you got finals this week?
You're like, that is news to me. That is brand new information.
He's like, yeah, finals this week. I go, all right, well, you got tutoring 3 times this week. He's like, all right, Dad. So, yes, tutoring this week.
Oh, good.
Yeah. He's trying.
Are you sitting in there? Are you learning some things too?
I should. I'm wondering what his, he had a math skill to him. Then he has a English language,
Sure.
picks up dialects real good.
That's
He's good at,
wonderful.
Spanish class, he's doing real good.
Good.
He's got the, other side of the brain working.
Sure.
One I cannot relate to, you know what I mean? Because I can't speak anything. Not even English, so
You don't talk good.
I don't talk good. I don't good talk.
Talk good.
What about you? What'd you do? Work out?
I did not work
Swole?
out. I'm working out today, hitting legs today. But no, I just ran some errands last night. I watched the first of 3 episodes of the Diddy documentary.
Is it good? I want to
It
watch
is good. It is good. First of all, I love just how petty Curtis 50 Cent Jackson is.
Yeah, he's still going on with this,
He's
25 years later,
giving
right?
a master class in just the levels of pettiness that this man.
So
is
did
The
Diddy-
Mayweather, when him and Mayweather were fighting, was just that
it's so good. Like I love it.
so good. It was so good.
Did he find 50 Cent? Is that?
What do you mean?
Well, like, was he his manager or something like that?
No,
So they just battled from.
No.
From, like,
No.
He didn't get diddied.
No, actually, no. 50 Cent was signed to Aftermath. He was working with Dre.
So it was just
Eminem.
rapper to rapper kind of annoyed at each other.
Or he had heard some things about like what he was like. He just didn't like him as a person. Which was like valid, like what we know now, right? Yeah,
valid. Yeah, the man's in prison now. Yeah, sure.
Yeah. So I watched the first 3 episodes of that. Just it's the whole thing.
Oh, little scalpy on
Scoopy, little song.
Is that still
20
silver?
ticks over there. That's nice one. It's a big tick on /SIL.
Big tick energy.
Yeah.
If we get a little bit of a bounce back, I'll
Good job out of you. 12 minutes.
whack him again.
12 minutes later. I like it. I did watch Mayor of Kingstown.
How long is this show?
So good. It's so good. If you haven't watched it.
Are they hour-long episodes?
Yeah.
Okay.
Yeah.
How many?
Or
What
a little
season?
bit less.
What season are you in?
I'm in the present one.
Oh, I didn't know if it was.
Yeah, maybe
Yeah.
three.
Oh, okay.
3 or 4 seasons. I don't
Okay.
know. Yeah, whatever one's. I'm current.
Okay.
there. Landman current.
Okay.
Yeah. All good. It's good. You should watch it. You would like it. It's a little dark. You would like it.
I like sexy realtor shows. We got 2, like, the Manhattan one is coming back and Selling the OC. That's also back, so I'm very excited. I'm going to watch that. I'm going to lock in the Christmas holiday. Hey, we got a great show for you today. We will get to some market talks, not all just, reality TV.
There's
But
going to be no market talk today. We got numbers coming out tomorrow. It looks like it's set.
The market's just going to go sideways. Like,
Yeah,
why are we even here today? But we have a great show for you today. It's a terrific Tuesday here on Tasty Live at the top of the 8 o'clock hour. We're going to have Options Jive recap of options risk. What does that mean?
Yeah, that's a good one. So we're referencing a lot of things in Julia's book,
Oh, okay.
which if you want, you could.
Not enough pictures in Julia's book, by the way. We needed more pictures.
There's a lot of
There,
pictures.
I know, but not good ones.
Yeah.
Like, they're all graphs and stuff like that.
Okay.
So talking about like CVAR and and
She
standard-
loves her conditional value at risk.
Yes, we have 2 CVARs today. 2 studies with CVAR in it.
Double the CVAR.
Double
I was
the
always in
CVAR.
denial. I never wanted to see my CVAR. Like, that was like something I did not want to know. Like, when all hell breaks loose, how bad can this get? I was in denial.
Yeah, definitely.
Sure.
Never wanted to know.
You don't want to think about
Never
that.
wanted to know.
So yeah, we're going to talk about buying power and standard deviation of P&L. Just some basic.
Okay.
With some fun charts.
Speaking of fun charts, we got Chris Vecchio in the house at around 8:40. Let me explain. What are you talking about with Mr. Vecchio today?
Whatever Vecchio brings at us. But Vecchio is the man. Everybody tune in for that.
Okay.
He is
Then
the man.
9 o'clock for market measures, the impact of market swings on portfolio performance.
So another kind of study on risk. So we're looking at kind of tail risk, more reasonable tail risk, 3 to 5% moves that we've seen on the last 5 years. So looking at risk and how much that position moves, and just kind of studies on risk.
Okay. And then live from the trade desk at around 9:30, we got Marty in the house. It's not a party until you get some Marty. And Glenn, G-Money. Marty will be counting down the top trending tickers over at tastytrade, and Glenn giving some insight into the FX side of business. And also today, Liz and Jenny live from the floor of the SIBO. It's always electric when the ladies are live. Did you guys have a Christmas tree on the floor back in the day? Would you celebrate for the holidays? Like, did you decorate the floor? I was curious.
What do you mean?
That was a place of business.
I don't
We were
know.
businessmen.
Did you wear Christmas
on the
ties
floor.
on the floor? Yeah, when you were.
Guys wore Christmas ties in July. I mean, it was not
Okay.
a tie was a very sensitive. You had to wear a tie first.
I know you had to wear a tie, but I didn't know if when the holidays came around, if you
Right.
wore
So
like,
most of the guys would wear any kind of string around their neck that would that the security guards would say was a tie. Like,
Okay.
A lot of people didn't like wearing ties, and then you had other people that liked wearing big flamboyant ties, look like a clown kind of thing. Just noticed in the pit.
Sure.
And get ripped and raggedy and stuff like that. Some guys would just keep the knot on their tie, all the time and just open it and close it.
Sure.
You know,
I think Tom would do that.
Yes,
He just like he hated
Then
ties.
The skinny ties were real big for a while.
Ooh.
Leather ties
Okay,
were real
80s.
big for a while. But we never did like a Christmas tree or I mean, they would always have like some sort of little stupid thing on the desk that was like a 2-foot bush and maybe a menorah, something like that for the holidays. But nothing like a big area that would have presents underneath it and stuff.
I was just curious.
No tinsel hanging from the ceiling or anything like that. Nothing like that.
Interesting.
Unfortunately, there was no Christmas spirit on the floor. It was dog eat dog world.
Well, we have a great show for you today, but hey, in the meantime and in between time, you guys want your daily dose?
Sure.
Hit me with my theme music. Let's go.
Our leading story.
today's
Breaking
headlines.
news.
Breaking
Across the wire. Our leading story. Top story. Just in.
In today's headlines.
This just in.
Breaking news.
Just real fast, before I get into my intro, can I tell you, I am winning at life. Celsius powder packs. Put it in the water, so you're still getting water, but it's got Celsius in it.
Are you getting a kickback for these?
I might have just done
like
something.
Celsius.
But look, instead of having the both, where I'm trying to get my water and then also my Celsius, I just put the Celsius in the water. And
I feel like that was a Truman
Costco.
Show type thing.
Costco.
Yeah, it does
Like in the
sound like
Truman
it.
Show where she turns around and she's like, "You need some coffee." Yeah. Like that was kind of, you gave me one of those.
This is the part of the show we like to call the Daily Dose, where we talk about today's financial news and headlines on this terrific Tuesday, December the 9th. My name's Vanetta. Are you ready for the news?
Sure.
Earnings, Mr. Bat.
None.
Okay,
I mean,
great.
Yeah, Toll Brothers last night.
Yeah.
It's actually down $10. Big deal.
yeah. We didn't. You didn't do anything in it, did you?
No.
Yeah, I don't think we did.
Oracle,
Oracle, Adobe tomorrow after the close. What's that?
Lulu as well.
And Lulu.
Lulu.
Yeah. Today you're gonna take a breather.
Yes.
Hey, this headline says, we fear people will end up in financial trouble. Americans are going to spend a record $20 billion versus buy now, pay later during the holidays. The record spending we've already seen for Black Friday and Cyber Monday is being fueled by this buy now, pay later phenomenon. And the numbers just keep growing and growing. What are your thoughts?
Oof. I hate it. I've said this from day one.
Yeah, I do too.
I hate this. This is the the mafia model where they lend you money this week so that you could pay your bills from 2 weeks ago, and then you got juice on top of everything else. You don't pay everything right on time. So I mean, I hate this model, to be honest with you.
Yeah.
I think this is like drones. It
I
could
think-
go bad. It hasn't, but it could go bad.
I think it is shining a light, though, on some of the cracks that are starting to form in our economy, because it's all just AI and buy now, pay later. We're in trouble.
Yeah. A little bit of consumer.
Well, we usually grab a lot more. I know I do. I mean, when it's, unlimited spending, you usually grab a little bit more than you should,
Yeah.
what I mean, or could afford or whatever. But you know what? I've always said you should always push yourself. I always thought, you should always buy a bigger house than you can afford, a better car. Well, not really a car. Cars, that's an asset.
Depreciating asset, yeah.
But always like a house, a business. If you're going to spend money, always spend more, because money is cheaper today than it's going to be tomorrow. So I've always lived that way and done that. But
That doesn't apply to a Chipotle burrito.
no, it does not. It does not.
That you're
No, it
about
does
to
not.
shovel in your face.
That's correct. That's
you
correct.
don't need to spend more on that.
Right. Or a dinner, for I'll buy dinner tonight for
Yeah.
the 6 of us, buddies and stuff like that.
But looking at this, are you doing anything in Klarna, KLR, or Affirm, or PayPal?
Look at you. Let me guess, another silver.
Yeah,
At
yeah.
36, which is kind of the middle of the range where you sold it last.
Yeah.
Very anxious on
A
the.
little anxious. I want to be.
You just keep adding to your tax center.
That's true. It's a good thing. I take that PDF and I hand it to my man Kurt, and I say, "Here you go, sir. It's your time of the year. Enjoy." And it's usually like that.
And then you got to remember to pay him too, because it comes.
Oh,
that way.
he doesn't forget. He doesn't
Just help
forget.
himself. He can help. He knows your routing number.
He gives you a ton of options. Check, Zelle, Venmo,
Crypto.
Cash. Yeah, he's not a crypto guy.
No, he's not a crypto guy.
He would probably take like silver coins.
Yeah, he would.
A doubloon?
He would take
Yeah,
gold.
Kroner?
maybe ammunition, possibly.
Is that going to be a thing someday, you think? Because I got a lot. I got a lot of rounds.
Yeah.
Yeah.
Maybe.
Affirm, Klarna.
Affirm, Affirm,
no,
PayPal, not our jam. We haven't. I don't think we have a position in any of those. I know
Okay.
nothing in Affirm. If I go down to the P's, we don't have. Oh, we do have a position in PayPal.
Hey.
We were short like an in-the-money put, so we were a little bit long PayPal. PayPal had a rally
65.
from November up to about December, where it got up to our short put, and now it's below our short put in PayPal. So
Volatility is so low. I've looked to roll that, but it's like a 70-cent roll.
Oh.
yeah, that's a tough one. So all right. So this
You might just take stocks. I'll call, which is the same
Well-
thing as rolling the put, or just sit with it.
Sure. So you're here, let's put this up just for a quick second. So you short the 65 put with 10 days to go. If you wanted to roll that, you would have to buy the 65 put, correct?
Yep.
And then you would look to roll it to January with 38 days. And like you said, you're only going to get 65, 70 cents for that roll. You might think about selling a 65 call, which would be your covered call that you wanted to do if you wait the 10 days to get stock, or sell the 67.5 call. Now, 67.5 call is going to get you around 70-ish cents.
Yeah.
So I would probably sell the 65 call against it, and that'll give you that covered call you wanted today as opposed to waiting 10 days from now.
Yeah.
I mean, it'd be better on an uptick, obviously. It would have been better yesterday, but since you procrastinated and waiting and scalping silver, it will be okay.
JP Morgan is raising fees on one of its deposit products for small and mid-sized businesses. Great. It's the first time they're raising fees in 18 years, in over 8 years, excuse me. America's biggest bank will increase monthly service fees and transaction fees on Chase Performance business checking accounts by 33% and 25% respectively. Good Lord, Jamie Dimon.
Yeah, 315 near its highs. I mean, these fees probably should be zero. We all know it's, just a way.
But what a critical time to hit small businesses and when everyone's scrambling. And then JP Morgan's like, you know what? Now's the time. It is time.
You be all right. You be all right.
Hey, this is great. I love this opinion piece. Young men aren't investing in a 401k for retirement. They're banking on Bitcoin.
Yeah,
A recent survey of 1,000 U.S. men aged 18 to 29, the research found that among young American men, 26% of young men own crypto, and 28% own any crypto-based asset that includes ETFs, and that's higher than the 21% who have a 401k or Roth IRA or similar retirement fund. I thought this was perfect since today's theme is why you should have an IRA. What is your argument of crypto over an IRA?
I don't think it should be that big of a disparity. I think you should.
You could have both.
Some crypto,
right? You can do.
I
You
think
can have both.
There's definitely. I mean, it was a couple years ago, or maybe even less, where nobody wanted any crypto, where this was fake. You can't have any of it.
We've always talked about a small amount, 3%, 5%, something like that. Now, in a smaller account,
If you're 22 years old,
I like the risk. I talked about it a few days ago. I like the risk that
you want
they're
to put
taking.
20 or 30% in at 20 years old, or 25 years old, or whatever, then go for it. But
yeah, in your 60s, it's a different story.
Yeah,
I mean, that's why these answers are a little bit, you got.
But make your case for why they should also have an IRA or a Roth IRA.
Right. Well, they're embracing risk, and I said this. Maybe this generation will come back around. The wheel is always round. It always comes back. There'll be a little bit more. Embrace risk instead of being risk adverse, which I think a lot of the past generations have been risk adverse.
Yeah. I mean, I think the greatest thing about
crypto falls out of bed, goes to zero, and then they'll never invest again in their entire life. Anything.
If you have 100%, that'll be a problem.
I'm kidding.
But if you have a small percentage, it won't really matter. But I mean, the greatest thing about this is that you can't touch it. That's why I like an IRA, because,
Oh, look at my man, scalping another 20
Johnny.
ticks on silver. Look at you. How do you do it?
You like an IRA because you can't touch it. You were saying.
you can't touch it.
Yes, and it's compounding.
Yes. Just
Well, you can take it. You just got to pay the 10% fee. And
do your own IRA. Start a traditional account or a Roth IRA if you don't have one, and just buy S&P or NASDAQ, or pick a couple stocks that you like and do it yourself, so you don't pay any fees. It just sits there, it does its thing, no problem, and it's a savings account essentially.
Yeah, there you
with
go.
upside.
Your other scalp took 8 minutes. This one took 5 minutes. How do you do it so efficiently?
I'm gifted.
Gifted, good. Good.
Yes.
The CFTC will allow Bitcoin, Ether, and the dollar-pegged stablecoin USDC to be used as collateral for derivatives trades, a decision that pushes crypto deeper into the plumbing of U.S. finance. What are your thoughts on collateralizing your crypto assets?
No, it's the CFTC, right? It's just the futures commission here. So I kind of like it. I don't see why not. It's an asset as anything else, a liquid asset. Remember, it's probably going to be affected by span margining, which means that your I don't know how they're going to do it. Like if they're going to keep it the same way they do cash, where it can grow. Yeah. You could use more. You could need more margin. So watch your leverage there. But I like it. Why not?
This has too much volatility. Just like we said yesterday, volatility. It's a feature, not a bug.
Sure.
And when you're borrowing cash against something that has tons of volatility, you might be out of that position, which is collateralized on a move that might not even be that wild of a move relative to what we've seen, because it's a high volatility asset. It's different than collateralizing SPY.
Yep.
Or like.
But there's that stable coin component, which is like a weird sort of middle ground.
Yes, it is. Yes, it is.
Yeah, but that's not. I don't know if that's what they're talking about here. They're talking about like Bitcoin. Stable coins are cash. So
but it will allow Bitcoin, Ether, and USDC.
Yeah.
Yeah.
Got it.
What's Bitcoin doing this morning? Wow.
It was trading around 90,000 last night. It's 91,000 right now. It's had a tightish range, relatively speaking. We've had about a $2,500 to $3,000 range last couple of days overnight. You've only had around $1,500 range this morning, but it's at the higher end of its range at 91. Middle range for the last 2 weeks or so.
Michael Saylor's strategy has bought another 10,624 Bitcoin for $963 million, as the Treasury holdings have now reached 660,624 Bitcoin. Let's talk MSTR.
MSTR is unchanged, down maybe $1 or so. I guess it's mirroring Bitcoin. It got down to 160. It got up to around 190 and change. It's 180 and change right now. It hasn't had the velocity of the upside that I thought it might have if Bitcoin caught a bid. Maybe, they're looking for that $100,000 mark on Bitcoin before MSTR kind of trades at a multiple, or at least some multiple of its coin on hand. Right now, it's trading pretty much at parity, right? I believe pretty close to it.
It's like it's similar to like a leverage ETF, like a T.
Yeah, it may never have that.
But you need consecutive days. You need that upside volatility to come in. There's been none, and Bitcoin's been pretty much sideways. You have a huge, 30% drawdown and then chop sideways. This thing is going to get vaporized.
Yeah, Ryan was on the show yesterday. What did he say? It was about a 50% vol in.
Which is low.
Which is low. Yeah, I was going to say you need it in that 75, 85.
Feature, not a bug.
Feature, not a bug. That's right.
Medical supply giant Medline said they were targeting an up to $55 billion valuation in its hotly anticipated, says who, girl, U.S. IPO that's expected to be 2025's biggest IPO. The Northfield, Illinois-based company is seeking to raise $5.37 billion by offering 179 million shares priced between $26 and $30 a piece.
Yeah, not too far from my house, right there.
There you go.
Yeah. Medline.
Do you think they're worth $55 billion?
Evidently. Why not? I got not from the outside, but on the inside they must be. Yeah.
All right.
I don't know what to say.
The best thing is, if you don't think they're worth $55 billion, what you do is you short the stock.
But you can't on an initial public offering. You're gonna, it'll be hard to borrow. You can't short it. You have to wait about 2 weeks or so.
Yeah, you gotta give it time. It probably won't be until the new year that you can.
You'll have to wait. You'll have to wait.
All right.
In an interesting turn of events yesterday, President Trump said he would sign an executive order that would create a single national rule for AI, which the industry has said is necessary to override all of the separate laws passed by U.S. states. In fact, over 100 different AI laws have been passed across 30 states. Who should have control over AI, the federal government or your state?
AI.
AI should control the AI.
Sure, why not? We're going to ask them anyway what should have the control.
But states are trying to control things like protecting your data, protecting like what companies can scan on you and take, and protecting the ability of just to do lots of things. Like that's why there's laws. Like.
Yeah, I don't know.
But on the other side, the Trump administration says in order to compete globally, we need just one rule, one law, so we can, sort of have the Wild West, and we'll try to figure it out later.
Yeah. I think that's probably the way to go, because you also need to kind of set the precedent for the rest of the world.
Well, one's easy to look at than looking at every state. And then, even like when we were trying to get registered in different states, every state has its own kind of rules, especially of crypto. So couldn't get registered in New York forever because they just had like these huge amount of collateral that they would want, like 3-4 times what you would have in your account. You just couldn't make it get done. So maybe one rule is better. I don't know. I mean, I don't want the hate emails.
One other tweet that sent one stock soaring yesterday was now the U.S. will allow Nvidia's H200 chip to ship to China, with the government, of course, taking a stake. What are you doing in Nvidia?
Yeah, had a big range yesterday. I guess a big $6 range from 182 to about 188. It closed around 185.5. Looks like it's trading over 186, up 50 cents. But nowhere near its highs of 210, nowhere near its lows of 170. So IV rank of 9 in there. I think it has to be a little bit directional.
Yeah, the news has been less of a play on Nvidia. I mean, you had it in the after-hour session, but Nvidia's kind of been. I think it's kind of found its spot. I think the ceiling is kind of closer to where we are now.
Acting more Microsoft-ish than Nvidia of yesteryear, where it would go from $100 to $140 in a week.
Yes.
The U.S. government would receive 25% of the proceeds from those sales. So good job, I guess. Marvell's stock fell yesterday in the wake of some competitive concerns. There are new fears on Wall Street related to the future of Marvell's work with Amazon and its potential to capitalize on opportunity with Microsoft. Shares of Marvell dropped 7%, reflecting concerns about both.
Yeah, and it was down almost 10%.
I sold the 80 puts. I figure because I'm hoping it doesn't run in the family of bad trading in Marvell, but I figure that because you've had such a tough time with that stock, I figure we'd catch it.
Marvell's low-ish range is in that, high 70s.
Little Johnny trade.
It was 101 just about 48 hours ago, and then it's trading around 91 and change, down 10-15 cents this morning. I don't hate it. IV rank of 28, but this is why I can't do well in Marvell. Marvell's monthly implied volatility slightly over 20% over, say, Nvidia's monthly implied volatility, and Marvell moves, 7-10% a day.
Yeah.
Where you're typically not going to get that.
What is Microsoft doing?
Good question. Been a little bit of a stud. Microsoft $490 and change, down about 80 cents or so. It's well off of it. I say it's a little bit of a stud. I mean, in April it was $350. It's almost $500 now. $490 and change, but not near its highs of $550 that it reached twice back in July and then just as late as October. So. Microsoft IV rank of 12. You're probably going to be directional there too. I mean, volatility is low across the board, although you're getting a little bit of uptick the last 2 days in volatility, 1775. Remember, we were flirting with 17.
Warby Parker announced they
I
are
have some of their glasses.
collaborating with Google to develop lightweight
Stupid
AI-powered glasses. This is the first iteration, if you remember Google Glass. The announcement made during the Android show marks the first time the companies have set a public timeline for the release. They hope to launch their first product in 2026. You can actually trade Warby Parker, WRBY, but of course you can also trade Google.
You can trade Warby. I don't know why you would want to trade Warby, just because the markets are just too wide. And
It was that girl in the 2010s.
Yeah.
I'm surprised it's still around, but
Yeah. It's actually in the middle of its range, around 21. Had a big day yesterday on this.
on this news,
On this news, basically unchanged right now. On the other hand, Google didn't have such a big day, but it's right near its highs. It is down about $1.50, $2 this morning at 311 or so. It hasn't seen 311 or so since maybe November 20th or so, when it had that gap up from around 300 to about 320.
And I practice Santeria. No, 311. No, okay. It's a tough room.
Carlos
Wow.
Santana, right?
Wow.
Sorry.
Good Lord.
Carlos Santana, right?
What? No, 311. No,
Oh,
it's
sorry.
okay. Never mind.
Never
It's
mind.
Fine.
Yeah.
People, if you support me in the YouTube chat, no, okay. Hey, drama. Drama developed yesterday as the Warner Brothers fight heats up. There's now a hostile bid from Paramount. They said they could top Netflix's $72 billion bid with a $108 billion bid cobbled together with the Saudis and Jared Kushner. Girl, what? And now they want all of Warner Brothers. So Netflix just wanted like the studio. They didn't want the cable channels, but then Paramount was like, no, we want it all. And then of course, then Trump was like, hey, I'm going to be overseeing this deal. I'm going to see what's going on. And then so now like
finder's fee.
Right. So now it's getting hostile. What's Netflix doing?
That sounds like about a $30 billion spread for CNN.
Yeah.
That
Seems a little aggressive,
That's a
doesn't
lot.
seems.
Well, it's almost like you got to take this crap if you want this really good
Yeah,
stuff that you
that's-
seem to want really
you
bad.
So
And a lot of people
maybe this
want it
is-
too.
Yeah, this
so-
might be trying to squeeze Netflix
Yeah.
a little bit. Like
Yeah.
get Netflix up to 85 or something. You say, okay, you take it.
Right.
But from a monopoly perspective, like you could sort of see a path forward with Netflix because again, it was just the movie studio part. It wasn't this massive media
Yeah,
conglomerate.
it's Sublime.
But yeah, Sublime, yeah.
Yeah, you said 311.
I said 311. My bad.
Netflix unchanged 97, although
Got the peeps going.
Thank you.
know.
All right.
lower yesterday.
On Netflix. We'll see what happens there. Meta is pledging to use less personal data for ads, and it gets the EU nod and avoids daily fines. Zuck does it again.
What is this a pledge? Like, do they have to hold up a
They're like, I pinky promise.
Right. I mean, like, what does that mean?
Crisscross applesauce.
Either you
I
do
don't
it or
know.
you don't.
But if you cross your fingers,
I promise you'll be grounded
this.
this time.
If you cross your fingers, then it
Doesn't count.
It doesn't count.
It doesn't count.
That's what Meta does.
Yeah. Meta closed at 666.
Uh-oh. It's a mark of
It's
the
under
beast.
663 right now, down $3. But it's had a nice rally from under 600 the last 2 weeks to 660 and change where it sits right now, off of its highs of almost 800.
Skipping a story here, John. Instacart is integrating ChatGPT, and that means AI can be your personal shopper. Online grocery company Instacart is the latest third-party service to be integrated into ChatGPT. The new tools will allow you to build a shopping list, pick groceries, decide where you want to buy from, tell Chat how you want it to be delivered, and decide on extras like a tip and even pay, all without leaving OpenAI's chatbot.
I haven't traded Instacart. I don't trade Instacart. Ivy rank is 15. Stock has had a run from around 35 to 45, right back into the middle of its range. A lot of these stocks are right back into the middle of the range. But when they start coming out with these kinds of news articles, it's probably time to, if you have some long delta in there, to let it go a little bit, in my opinion. Although I haven't traded Maple Bear.
Maple Bear? Well, here's something else that I hate. Uber's latest play for ad dollars. It wants to turn data about your trips and takeout into insight for marketers. Uber Advertising is launching an insights platform for marketers called Uber Intelligence, and it will aggregate users' data without revealing their identities. Yeah, right. Uber says their ad business is on track to generate $1.5 billion in revenue this year. It's like, Vanetta, stop ordering so much Chinese food.
Yeah, Awesome. Are they going to aggregate like your average calorie per order? You've added 5,000 calories this week.
Right.
Uber Eats.
I mean, it's hard. It's hard enough when you see the calories on a menu or something like that. Do you want to be reminded of that?
Well, you want to make an informed
You
decision
can't
about
because the salad is 1,250 calories, just like the burger. So you say to yourself, well, I'll just eat the freaking burger where you might have had the salad if you didn't see the calories.
Are you okay? No one is forcing you to eat
That's a
salad,
very
girl.
subjective question.
Right? Can we talk about Uber, the stock?
If we have to,
great, thank you.
$92 and change, basically unchanged. The middle of its range.
Okay.
Most recent range. So place your bets here.
There you go. Tesla stock dropped yesterday as Morgan Stanley analysts downgraded shares, citing valuation. He downgraded Tesla to equal weight from overweight upon resuming coverage of Tesla after the prior analyst shifted to a different role in Morgan Stanley. But he did up Tesla's price target to $425 from $410 in the process. So make that make sense.
Well, it's $440.
Yeah, I know. I know. Make it make sense. The stock was down yesterday.
And it's so funny because you could take these, like, they have valuation downgrades going back like 10 years.
Yeah.
When the stock was, a $10 billion company.
Well, Tesla's been on its little horse, so it's at the higher end of its range. So trading $436 right now, down around $3 or so. IV rank in here is 8. You'll notice a lot of these IV ranks are lower, and a lot of these, if you're looking at January with 38 days, for that to be your directional bias on everything. You're trying to do like a Jan-Feb spread like Nick would do. A lot of diagonal type spreads don't use that much capital and stuff. You've got a larger volatility in March than you do in February, which makes that setup a little bit tough too in a lot of these stocks. So watch that when you're looking to put on positions. You don't want to buy that higher implied volatility in March and sell a cheaper volatility in January. Oh, sorry, buy it in February and sell it in January.
GameStop, which I think they have earnings this week, they held an event where customers could trade in almost anything, and people did not disappoint. Trade-ins have been synonymous with GameStop, but on December 6th, the company held its first ever Trade Anything Day, and people could trade in whatever they desired with some restrictions for store credit. So things that were traded in, this dog portrait, it looks like Snoop Dogg there, a stuffed bobcat, a goose, a tiny Jesus, a creepy doll collection, some Air Jordans, a can of whoop-ass, and a speed limit sign, amongst other items.
GameStop is on the fast track to become a swap meet. Like that's what they really finally, do. It always felt like it when you walked into one of those, that you were in like a glorified swap meet kind of thing. But anyway, $23 a change, and you're right. Has earnings after the close today.
Okay.
$23.
Oh.
This is a good idea.
Job out of
I like
you.
this.
I think it's funny, like especially all the crap
What would
that our
you want to get
boomer
rid
parents
of? Like if you could
want to
swap
give us.
something in your, not my tile saw, but what would you swap?
That is probably a good one. I would like to. That takes up a lot of room, and you can't do any. It's just it's a heavy square. You can't fold it. It doesn't fit in anything. That is that.
Why do you have a tile saw?
I did. I did
Some
my
tile work in his house.
Yeah, I
He
did
needed to
some
borrow
tile
it.
work.
Never returned it.
But you were like, I don't want it back, and I was like, I don't want it.
That's your story.
either.
I'm sticking to mine.
Yeah. So I think it's gonna just go away at some point. I'll give it to someone. Figure out.
Hey, in a, I guess, inspiring sports story, 44-year-old Phillip Rivers is going to work out with the Indianapolis Colts today after Daniel Jones out for the year on a torn Achilles. What is going on with everyone's Achilles just blowing up this season? Phillip Rivers is legitimately a grandpa. Like
Yeah.
I'm not being like he is a literal grandpa.
He also has like 14 freaking children.
Yes,
So-
well that's why he's a grandpa.
they're all in
44
college.
is a little bit young to be a grandfather. I'm not gonna lie.
44.
I'm telling you, he Rivers has never seen a condom. Never once. not a chance.
Wow. Wow.
That's an expensive. There's a lot of college bills.
Yeah.
For an NFL QB.
Well, that's why he came out of retirement, and he's like, "Hey, I'm
hanging
take some
in there.
snaps."
The Colts.
Yeah.
I mean, they're middle of the road. I mean, eight and
No, they were number one in the league at one point.
Oh,
In the
were they?
AFC, yeah, I think so.
Yeah.
I know they're like 8 and 5. I just looked at their record.
Yeah.
I didn't know where they are in the standings. I figured.
Yeah,
it's
but
middle of
then
the road.
Daniel Jones had the fracture, the fibula or fibula, whatever one of the
Tibia.
the blah blah blah.
The tibia is the big
One of them.
because I broke them both.
Freaking leg.
Because I broke them both.
Oh, yeah,
I
I
know.
remember that.
The fibula is the little one, but the tibia is the big.
Yeah.
Don't you usually break them both? Like if you, well, I mean,
You can break your fibula is like real little, so people will normally they'll break their fibula, and then it's not a good time, but yeah, if you break your tibia, then and that's a super,
Tanner, one of the kids on the team below us, broke both of them. And
Yeah.
Out for like 12 weeks. He got like 2 surgeries.
yeah, it's not a real good time.
Very sad.
But good luck to you, Philip Rivers.
Yes.
Hey, for my viral video of the day, I saw this and just instantly chuckled. Nikki, you might have some more competition for your inheritance.
I
Because
have no more children.
I think I just
I don't know
found.
what inheritance you think there is.
I think
That's
I
right.
just.
That's right. I'm
This thing is
spending it.
This thing was milked years ago.
I'm spending it or
think-
wasting it. I'm
I
telling you
think
right now.
I think I found.
Make your own.
I think I found maybe an undiscovered Batista. Watch this.
No more, please.
This velour tracksuit initially as a joke, not a joke, even a little bit. I would be very careful before you make this decision. I haven't taken this off in 3 days. It's starting to affect my personality a little bit. I'm starting to like how I feel in it, okay? I'm at my parents' house. They have a guy coming to fix... They have a guy coming to fix the Wi-Fi. My dad's like, hey, give him a tip when he's done. So now I'm standing here with a little bit of cash. Hey, buddy, you want to solve my problem? I'll solve your problem, okay? I want to eat cured meats, a little gabagool, a little prosciutto. I bought this velour tracksuit.
I like it.
Good. That's good.
I had a black Jordan one for 25 years. I actually think I just got rid of the top not too long ago. I had it forever.
They are comfy. You want a little gabagoo?
I have been in my peppered cured meat stages lately. Yeah, we'll give you that too.
If you sit in your sauna long enough, you'll be a cured meat. What's coming up next?
We're going to take a quick 90-second break. We're going to get more Tasty Live with Confirm and Send with my 90 Seconds Tasty Live.
Tasty Trade's Money Match event. Unlock 30 days commission-free trading. Plus a 1% cash match on all qualifying deposits to jumpstart your trading when you open and fund a new Tasty Trade account. Level up your trading experience with Active Trader Mode, smart order tracking, risk analysis tools, dynamic watch lists, and more. The Money Match event starts now, exclusive to new Tasty Trade customers.
Tasty Trade's Active Trader interface makes futures markets your arena. Built for the bold, not the bored. Trade CME futures with a single click. From micro contracts to major ideas. And go even further with futures options. Tasty Trade lays out multiple ladders and charts for total visibility. Plus, hundreds of built-in indicators for traders who want a broader view. Tasty Trade, pro-level tools, intuitive design, total control.
Global markets never sleep. Explore them with Forex, now available on Tasty Trade. Get in on over 80 Forex pairs, 24 hours a day, 5 days a week, with the Forex platform that adapts to your style and speed. FX marks the spot. Trade it on Tasty Trade.
So why are we all doing all the things that we do inside of the active trading space? Simple. To make money and generate returns. Well, inside of the Tasty universe, there are essentially 5 keys to making those returns. And in this crash course, we're going to break down all the details of each one of those keys. So I'll see you inside.
Tasty Trade is now on TradingView. Trade stocks and futures directly on TradingView charts with Tasty Trade's low commissions. Try it out and leave us a review.
Grow a strong community with Tasty Trade's referral program. When your friend joins Tasty Trade, you'll both receive $100. As your community grows, you get more bonuses. The referral program runs through December 31st, only at Tasty Trade.
Nicky, we are back, son, and you know what that means. Time for a little bit more Tasty Live on this Tuesday, December 9th with Confirm and Send. But before we do, let's take a quick look at the market. Even the S&P is down 4 handles, about a $25 range top to bottom, or about the middle-ish of the range, maybe middle to lower if you zoom in on this little candle here. NASDAQ down 46, Russell down $2 and change, the Dow down 30. They're all down small on a percentage basis. I consider it basically unchanged. Volatility catch a little bit of a 1% bid here, 1775. The high from yesterday was right around here, if I remember correctly. Yeah, 1787 or so was the high at 1775. Bonds up 18 ticks, needed that, trading back near their highs from yesterday, trading at 115.21, 115.23 is the high there. I know we're short some puts with a relatively low IV rank of 9, just trying to get smaller. Notes also trading 112.13, not as high back as the bonds have gotten, but trying to claw themselves up to positive territory. Bitcoin down 400 to 90,500. You'll see here right in the middle of its range, maybe the higher end of its middle of its range. Ethereum down 19 or so. It really is, when you look across here, pretty much of an unchanged market. Oil down 20 cents. Gold up 13. One of the bigger movers is going to be nat gas, which is down 5.5%. That's 17 cents. Tough product to trade here. I know a couple of people were selling some call spreads. You were one of them. When nat gas was trading closer to its highs than where it is right now.
Small, tiny, small.
Yes, tiny, small. Nat gas is not a huge player. Silver, you've been trading back and forth. That's the other second biggest mover of the day, up around 1.5%, which is 92 cents, back to 59.34, which is the higher end of its range, 59.47. It got down under 58, so silver's had a big move. We are long 2 gold futures and short 1 silver, which is against us today by about 1-ish%.
2 silver.
Now you're short 2 silver. You've scalped back and forth about 20 ticks
twice.
Two times already. Yeah. Third time's the charm, or this is where they wacky poo-poo you?
Probably wacky poo-poo.
You have to have that attitude, when you trade this, because it's a gift, and
yes.
if you don't accept the gift will slap you.
Yes.
Okay.
Don't be a pig. Don't be a greedy pig.
Don't be a Peggy.
I will say, all of December, we have stayed within 20 to 30 handles of 68.50. So
say it one more time.
68.50, where we're at right now. Mm-hmm. We've just chopped this range. So
yes.
on the first, open it at 54, close at 26. You got 30 points there. Open at 20 on the second, open at 29, close at 40. On the third, open at 43, close at 62. I mean, you've had some two-sided action,
sure.
But I'm talking about just the open and close. On the fourth, open at 66, close at 66. Nowhere.
Right.
On the fifth, open at 65, close at 78. I mean, there's just 20, 30 handles in over a week. On the eighth, open at 83, close at 55. And then today we're sitting here. We opened at 65. We're at 50 right now. So we've been in this chop ya. Volatility contracting too. Hopefully we get out of this.
Yep.
Tomorrow's our day.
Tomorrow's our day because the
FOMC.
Right.
Gotta move us.
Chris will talk a little bit about that today on Let Me Explain, I'm sure, at 8:40.
Yes.
So I'll wait from the expert.
Cool. Confirm and send. Let's do it.
All right, you ready? What is the difference between a buyout and a hostile takeover? I keep hearing about Paramount making a hostile bid for Warner Brothers, but I don't understand what that means. Is one better for trading than the other?
I think from a trading perspective, neither is better. I think once the news is out, and the options kind of reflect that, and it kind of goes into like the arbiters and everybody that's a little bit bigger playing in this sandbox. So I don't think from a trading perspective there's much to be had here. The Netflix side can be traded. I don't think you really look into like a Warner Brothers trade here. Like there's nothing really to. I don't think you.
A little bit more of a nuance. I mean, typically, again, I'm not
from the takeover side. Those are different.
Well, hostile, you're usually going above the board, meaning you're not going to the board of the company that you're trying to acquire. You're going right to the shareholders, and you're saying, "Hey, I'm coming out with this sweetened bid deal for you. Your stock is trading at $100. I'm going to pay $150." And I want to buy your company. Yeah. You're making a bid for it. There's usually channels that you go through, and you come to the stock that you want to acquire. You go to the board, and you say, hey, you look attractive. We look attractive. It'd be accretive. It'd be work for all our companies to, come together. We'd like to make a bid for your company and acquire your stock. Blah blah, that kind of thing. So. Which one for trading is really your question. They both probably stink.
Yeah.
Because once that happens, once this bid is over, maybe a hostile one is more if you're looking to get into it and play the deal or fight the deal, which I don't like to do either one of them. I like to take it off my watch list and just be done with it.
We wouldn't even be talking about this if the VIX wasn't in the 17 handle.
That's correct.
And I think that's kind of a reflection of what this is. It's like people are looking for something to do in this market, and that's where we are here.
Yep. So I don't know. I think it stinks for trading either one.
I agree. Excellent. If I'm assuming liquidity, or if I'm assessing liquidity in an underlying, what should I be looking for? What do you look for to determine whether something is liquid or illiquid?
It's a good question. So I thought about this for a second. I'm trading ABC stock that I've never traded before. I'm going to look at it from an option standpoint. If you're a stock trader, you'll probably look to the bid ask, and if it's tight bid ask, how much stock you're really going to trade. It's probably worth it for you, to trade it, especially if it's a couple of pennies wide. Even if it's 20, 30 cents wide, you put a bid in or an offer in somewhere in between, and you try to get filled. It doesn't make that big of a difference. You're going to trade options, and you're going to get strategic, and you're thinking about it as a 45-day time frame, and you're thinking about rolling to the next month. You have to dig a little bit deeper. So what do I like to do? I like to look at the option chain. The first thing I do is tight bid ask between on all the options I want to trade. Meaning the offer and the bid and the offer of each option. Is that tight? Now, what's tight? Everything is relative. But $100 stock, just for throwing it out there, maybe 5 to 10-ish cents wide. For a $200 stock, maybe 10-ish to 20 cents wide. $300 stock, 20 to 30-ish cents wide, and so on, just as a quick guide. Then I would probably look at the volume intraday just to see if there's volume trading on every strike. You want to see a couple trading every, on almost every strike. And then I would look at the open interest just to see if it's, in play today. Like, if I looked at the volume and it's got 100 contracts, just using a round number, on all the strikes, and then I look at the open interest and the open interest is 100, I'm going to say, okay, well, it's only being traded today because it's in play, maybe some announcement or some news. Yeah. But if there's thousands of open interest, I would say, okay, tight markets, volume, open interest, strategy allows me to do anything. So I would trade it.
I think the only other thing to add is that you should be looking at the monthly expirations. If you're looking at monthly expirations and the bid-ask spreads are wide and there's not much trading, this thing isn't ever traded. Like that 30-day or closest to 30-day expiration, that's where the most volume is going to be.
Yep.
And so if you see that all those things that you mentioned aren't there in that 30-day, either I would look at January expiration right now. If you don't see those things there, it's probably not ever in a tradable asset.
Yep. So. Good job. Next one, please. I want to begin trading. I want to be a dentist. I want to begin trading futures, not options.
Okay.
but want something that is not volatile, where would you start? Futures now, not options.
I would probably do something like the micro E-minis as a start.
You got to go liquidity.
Yeah,
right?
you got to go liquidity. And frankly,
you can go NASDAQ, small NASDAQ too. It'll be a smaller tick than the E-minis. Go ahead.
Yeah, or the micro crude. I mean, that's another one where it's 100 notional, so it's kind of easy to understand. But honestly, I would just stick to options. I get the allure of the quick, and it's fun. It's great scalping, and things go against you sometimes. You gotta keep that in mind. But over time, the scalping I don't think is something that you should be doing with the majority of your funding. Like I think you need to have higher probability. You need to be playing, the volatility and time are the things that I like trading. I like engaging with these trades, and like my silver trading today, it's great. And, I do it very, very small, but that's not determining my portfolio.
You're seeing perceived opportunity with futures, 50-50
and I'm taking small, and I'm trying to, just kind of. Yeah,
I agree with you, and I don't know what the number is, but from my own experience, let's just go from this. You can trade futures exclusively, and it's very rare to find. It's been very rare for me to find somebody who trades futures exclusively and is consistent and makes a significant amount of money over a long period of time. I'm going to put it at 20%. Oh, good job out of you. About 15 ticks, 15 ticks on silver right now. On options,
that's $150.
Yeah, on top of two other scalps that you had for 200 apiece. So
damn, I should have held it.
That's the other thing about trading futures. You told me yesterday on the break I sold the top. Yeah, you did, but it would have taken 4 hours. That kind of thing. But let me get back here. I think it's closer to 10%, but I'll say 20% of futures traders make money consistently. That's just because it's a 50-50 shot. The products are usually trade them too big, and you're usually undercapitalized to be trading.
You can't hold it. You can't.
Exactly.
That's always.
Yes. Now that you have micros instead of minis, and when I started trading futures, they were actually 10 times bigger than the mini future is right now. Now that you've gotten so small, maybe that number's up to 30 or 40% success rate. I don't know. That's just my guessing. But if you're trading options and you're putting on a position that has a 60 to 70% probability of success on entry, well, you're going to be 6, 7, 8 out of 10 are going to make some sort of money over time just because the strategy allows you to do that and managing it early and being able to get smaller. So if you're trading, I like to look at options, but if you're going to trade futures, know that size is going to be your killer.
Yeah, and you can't just look at buying power. You have to understand the size of the product you're trading because buying power can and will change, especially with changes in volatility. That is going to be, that's where you get squeezed out, and then you're, it's gone. It's done.
Yeah, and that being said, you couple futures with options.
Yeah, and you got a lot.
Then you've got some play, right? Yeah. And if you futures options provide a lot of leverage too, then you got some play. So if you push it all together, you can make some consistency out of it.
Yeah.
Mm-hmm.
Next one.
Yep.
Do you ever leg into a spread for a better fill?
I would say no. I mean, I would be lying if I said I've never done it.
Yeah.
But as a general rule, no.
Try not to.
It's basically a pick-em market, maybe 1 penny difference between, getting a fill and not getting a fill.
If you're doing this, you're probably trading something that's really not liquid.
Yes, and that itself is a bell that should be going off. Like you shouldn't be. In my opinion, you should probably go someplace else if it's too liquid. Yes, I agree. So not something I do. Something you?
No, I mean, like I leg out of trades sometimes. If you got stuff that's
come on, you got a calendar spread or diagonal spread or something like that, or a 1x2 spread, and your two that you sold is trading for pennies or dimes, and you want to. We did it in.
But if I'm trying to put on an iron condor, I'm not liking the whole thing because that tells you that
I'm not going to sell the short strikes because I think volatility is high, or buy the
market's
long strikes.
If you're looking at that, doing that. You don't want to do that.
Very good. Even the S&P is down $6.75, holding steady. We'll take a quick 90-second break and come back. We've got an option jive immediately following this drink that I'm going to have. We'll be back in 90 seconds. Tasty Live.
At Tasty Live, we live and breathe the markets. But when the live show's over, are we out of breath? If you want to inhale the latest breaking market news, we've got you covered. The Tasty Live research team and on-air personalities post refreshing content updated daily covering earnings, economic reports, trade ideas, and much more. If you want a breath of fresh air and not stale takes, visit the News and Insights tab at tastylive.com.
Got trader's block? We've got the cure. Get data-driven trade ideas with Cherry Picks, our weekly newsletter that gives you insights into the market. Sign up at tastylive.com/newsletters.
Tasty Trade's Money Match event. Unlock 30 days commission-free trading. Plus a 1% cash match on all qualifying deposits to jumpstart your trading when you open and fund a new Tasty Trade account. Level up your trading experience with active trader mode, smart order tracking, risk analysis tools, dynamic watch lists, and more. The Money Match event starts now, exclusive to new Tasty Trade customers.
Grow a strong community with Tasty Trade's referral program. When your friend joins Tasty Trade, you'll both receive $100. As your community grows, you get more bonuses. The referral program runs through December 31st, only at Tasty Trade.
It feels good to get smart. Get even smarter with the ultimate how-to guide. Learn 31 different option strategies, cover calls, iron condors, jade lizards, become a trading mastermind. Get the guide at tastylive.com/guide. Look who's back testing. Tasty Trade now has options back testing for free. Test your trades with over 10 years of data for the most popular symbols. See how your trades would have performed in the past. Look back at profit and loss and take the guess out of guesswork. Oh, did we mention that it's free? Get back testing at Tasty Trade.
In the world of investing, a beast lurks between the numbers, ready to pounce. Some traders hide from it, some ride it. If that's you, join us on Tasty Trade. Genius loves company.
It's option jive. Nikki, we are back, son, and you know what that means. Time for a little bit more Tasty Live. That's right, with this option jive. Recap of options. Risk. You like looking at risk? Have you set your risk already? Like when you go to a future, you know how many futures contracts you're going to trade. When you go to an option contract, you know how many contracts you're going to trade, right? I mean, has your risk already been defined, or your size already been defined? Or do you really look and go through your position and see? I mean, I know when you're a newer trader, you really should look at, like, you know, how much. You can do it on the Tasty Trade site platform right on the right-hand side there. Look how much each one is used. You can have it a column on your position tab, seeing how much each one uses in buying power. But do you really look at the risk?
I think it goes back to your comment that you never wanted to know what your CVAR was, but you intuitively know.
Yeah.
After so many years of trading, you know that.
Yeah. If your little self says to you in your head, "Ooh, Daddy's in trouble here," that's when you have too much risk on.
Sure, but you know, like when you sell a put in Netflix, you know realistically what you're kind of paying.
I'm going to make a
looks
couple
like.
points. This is the way I look at it.
Or if you're trading futures, but you understand like your tail risk.
Yep.
And I think knowing the exact number doesn't really do me any good, because I think I understand what the kind of day-to-day tail risk.
Yep.
You can't kind of quantify the black swan event, but realistic 95% range, you kind of know that intuitively.
Yep.
Trading.
Yep.
So I would say that. But here's a couple ways that you can know your risk. We'll get through that.
Awesome.
So we're going to do a little recap of option risk. Let's do it.
Do it.
So the potential loss for an undefined risk option strategy, such as a short put or a short call or a short strangle, is not known at entry. This is our undefined risk. Everybody freaks out at that name, so we're going to try and quantify that. So, however, there are metrics traders use to estimate the loss profiles for these type of strategies. We're going to get through that here. Next slide, please. So some of the common metrics include standard deviation, which is our volatility of P&L. We always talk about kind of trying to keep that as tight as possible. You can do that via managing positions. If you like stop losses, you can put stop losses in there. Rolling positions, trading in high implied volatility. Those are all ways that you can reduce the volatility of your P&L. Conditional value at risk, which is our CVAR, that measures your tail risk probability and what that number is. So your 5%, your 2 standard deviation risk on a position is your CVAR, which is in the platform, so you can see that there. And then, of course, buying power reduction. So buying power is roughly what your realistic loss expectation should be. And by realistic, it's still going to be past a 1 standard deviation.
That's
somewhere
right.
between a 1 and a 2 standard deviation of risk is really what your buying power is. So buying power gives you a good realistic gauge. CVAR tells you you're like shit's hitting the fan risk. And then your standard deviation of P&L is really what your portfolio does as a whole. And tightening that up is kind of the key there.
100%. Don't know what they are.
So we're going to take a look at each of these to better understand what they are and how they are used. Get to the next slide here. So the standard deviation, which is your volatility of P&L, and these are all coming from Julia's book. So if you don't have that, you can grab that as well. If you send us an email, we could send you one. So
yeah, sure.
If you want a book.
Yeah.
So when you're looking at this, like managing trades is going to be the way to reduce your overall volatility of P&L in both directions, right? So you don't have max winners, you're not going to have your max losers. Like that's kind of you're always there's always a gimme and a gotcha here. And really it tightens the spread of your P&L distribution, which is what we want. And this is a historical P&L distribution for early managed SPY strangles. I think this goes up to 2023. I know we have present here, but 2023 I think is when we had the book.
I believe so.
2022, something like that.
2-3.
So there's a lot of
in that range.
Yeah. Mm-hmm. Yes. Just understanding that managing trades is going to tighten that distribution. It avoids a lot of the tails, which are mostly on the downside, and avoids the max profit.
Well, I don't know. Market's at all-time high. You get some tail risk to the upside too these days.
That is very true.
Mm-hmm.
Next slide here. So the standard deviation of P&L is helpful because it describes the range of most likely losses, so usually based on historical behavior. However, it tends to overestimate the size of the common losses because of the skew of the distribution. So when you're looking at like your mean P&Ls, they're skewed because of how big some of the losses are. And so if you can mitigate that, you get closer to the middle range of that distribution. So by managing winning trades, you remove a lot of the tail losses, which tightens up your P&L distribution, gets you closer to the middle, which is ultimately what you want here.
Exactly. I mean, look, if you want it to be, not too hot, not too cold, middle's right where you're supposed to be.
Just right.
Just right.
Next slide here. So CVAR, conditional value at risk. CVAR gives an extreme estimate of the potential losses of a portfolio or position over a given time period and a given likelihood level. So this is generally talking about 2 standard deviation risk. The example that we have here shows the extreme per trade loss threshold for a 16 delta SPY strangle in the worst 5% of cases. So this incorporates both sides. So it's just the worst 5% of P&Ls. And you can see what your realistic risk is on a tail type event. And I shouldn't even say realistic risk, but you could quantify your risk as $2,000 per contract on a tail type event. Like if you hit the worst possible time, $2,000 is kind of what you're looking at in terms of risk on your position, which lines up inside what the buying power is in a Reg T account. Portfolio margin, you get a little bit of extra leverage. Reg T account, you're going to use somewhere around like $4,000, $5,000, $6,000 to put on the strangle. So your this sort of risk is baked into the position.
If I'm staying mechanical, usually my CVAR doesn't come into play. I mean, occasionally it has to, right? That's why options get to be the prices they are over inflated, because you have that risk that somebody else is willing to pay for that, once every 30 time chance or something like that it may happen. My CVAR changes for me after this event, and the things I do after that. I usually get too big or I get too aggressive. That's when your CVAR changes. If you're staying mechanical, it never really even comes into play.
Yeah. If you can hold, you got to be sizing correctly.
That's correct.
For sure.
That's correct. It's what you do after that is a problem.
Yes.
You roll down the untested side. You don't use more buying power, but
or you double down on rolling down the call. You roll down the call, and now you go from 1 contract to three contracts. You got a little bit of a bounce, and now you're short, and you're like, why?
Typically, the product will die after a move like this.
Yes,
and you can't get it back. You're looking pigeonholed. I have to be here, and you're missing opportunities there.
Yeah, but that it's really the thing you only get into that situation if you're too big.
That's correct.
On the entry. Because then you're playing catch up. You can't just hold the position and let things play out.
That's fair.
Next slide here. So CVAR is useful for short options because it works well. It estimates the magnitude of the unlikely tail distributions, and that's just because it's heavily skewed to the downside. But these are naturally pretty uncommon occurrences. I mean, they happen, the 2 standard deviation. You can't really play for that.
That's correct.
On a long time horizon.
That's correct.
Next slide here. So we're talking about buying power here. So buying power reduction, which is our BPR, is the amount of capital required to place and maintain a trade and is designed to capture 90 to 95% of the potential losses. So as we were just discussing, it incorporates this CVAR risk. That is what buying power is. And so when we get asked that question, like the platform says it's unlimited risk, how can you even place this trade? Well, you can look at the buying power and use that as kind of a rough gauge of what the realistic risk is. Can it be more than that? Sure. Do you play for the 5% tail occurrence? No. Is it always going to be there? Yes. If you're afraid of the 5% occurrence, you're never going to be able to make a trade because that's why.
Or define the risk by buying a huge, small wing far out of the money, and then you have defined risk, and you can be happy with your defined risk. The other thing is, you're looking at. You said it's your real risk. It's the real risk that a brokerage firm that's taking $1 is willing to hold in your account because they feel for the $1 that they're paying you in commission for that option, that money is going to cover any problems you're going to have. So if it's good enough for them at $1, it's probably good enough for me.
Yeah. And if that 5% doesn't exist, meaning that tail risk or that black swan isn't there, these options don't trade for anything.
No, they trade for zero.
They trade for zero. And that's why, selling premium exists, is because of this sort of event. You're selling that tail.
That's right.
So for the short undefined risk options, buying power is the largest of the expected loss from a 20% move in the underlying or the expected loss from a 10% strike breach. So it takes either or on that position. Generally speaking, the first one is really what I use. So whatever the notional value of that option is, if you sell the 100 strike put, and it's going to likely use somewhere around $2,000 in buying power, 20% move in that underlying into that strike.
Very nice.
Next slide here. So buying power reduction works well as a simple fairly reliable estimate for the worst case loss for the undefined risk position, noting that this is not 100% foolproof, especially if you're looking at something like futures, where futures have a dynamic risk assessment to them. They change based on time, volatility changes, the price of the asset. Those are all going to change how much capital you're using to hold the futures position. But if you're selling puts in Apple, the buying power is a very, very good gauge of what your like max pain on the position is for all realistic occurrences, all tradable occurrences here. However, buying power is also intended to capture the extreme behavior and neglects important nuances in the risk profile of an investment. This comes into play with kind of your futures. So you got to keep in mind that buying power will change, can and will change. If something goes 20, 30 points in the money, you're going to see buying power change because it reflects that new risk buying power is looking at right now, here and now.
This is one of the hardest things for me to look at in an option jive is like worrying about the risk. I mean, risk comes down to size.
Always.
Is there one more slide? Or?
Yes, one more. Just take a couple takeaways, then we'll get to a quick break here. So undefined risk.
Get to the opening bell where we can put on some trades with risk on them.
Oh, I know. Undefined risk positions do not have known potential losses at trade entry. That's why you see that undefined number there. But there are metrics that traders use to make educated estimates. These are 3 of those. Standard deviation of P&L is normally used to estimate the most likely range of losses according to historic behavior. CVAR and buying power, those are good ways to estimate really what your max pain is on those positions, at least a quantifiable max pain.
Good job out of you. Good job out of the team. I'll assume the risk. We'll take a quick 90-second break that we're going to come right back. Even the S&Ps are down 750. Let's Tasty Live.
In the world of investing, a beast lurks between the numbers. Some watch from the safety of the sidelines, but others saddle up and ride that 1-ton rowdy ribeye for all he's got. If that's you, join us on Tasty Trade, named best online broker for options trading. Genius loves company.
Tasty Trade's Money Match event. Unlock 30 days commission-free trading. Plus a 1% cash match on all qualifying deposits to jumpstart your trading when you open and fund a new Tasty Trade account. Level up your trading experience with active trader mode, smart order tracking, risk analysis tools, dynamic watch lists, and more. The Money Match event starts now, exclusive to new Tasty Trade customers.
Tasty Trade is now on TradingView. Trade stocks and futures directly on TradingView charts with Tasty Trade's low commissions. Try it out and leave us a review.
So I see you're taking an interest in open interest. Open interest, open trades. It's right there. Imagine all the trades are in XYZ at the same strike and expiration. Day 1, Brittany buys 4 options to open a trade. Dean also opens, but he only buys 2 options. And then, closing bell. Day 2, open interest is 6 because of yesterday's trades. Now, Jessica gets in on XYZ, and she buys 2 options. Day 3, since no one has closed any trades yet, open interest is at 8. Watch this. Brittany closes her trades, Dean closes his, and Jessica keeps her eyes open. On day 4, open interest is now down to 2. That's because Brittany and Dean closed their positions and there are only 2 still left open. That's how open interest is different from volume, and both of them are parts of liquidity, which is something we look for before we enter into any trade. Pretty simple.
Global markets never sleep. Explore them with Forex, now available on Tasty Trade. Get in on over 80 Forex pairs, 24 hours a day, 5 days a week, with the Forex platform that adapts to your style and speed. FX marks the spot. Trade it on Tasty Trade.
Tasty Trade has crypto, and you can trade with 0 commissions. Bitcoin, Ethereum, Litecoin, and more. Diversify in one place. Crypto, we got it, we get it.
Nikki, we are back, my son, and you know what that means. Time for a little bit more Tasty Live with the opening bell being imminent. Even the S&Ps are down 7 and change. Your silver has been oscillating back and forth back to 59.30 or so. It's actually been a pretty tight 40, 50-ish cent range since you've been scalping it. NASDAQ down 57. Russell down...
I'm going to get filled. Oh! There it is.
You're doing it again at 35, it seems like,
35.
huh?
That's my little spot.
That's your, well, because it's worked for you.
Yeah, I've scalped it from there 3 times.
Yeah, it's been it's
now this one. This is the one. This is the one that gets you.
I thought the last one was going to get you. Now this one's the one that's going to get you.
There it goes, 30 cents. 30 ticks. 3 ticks.
That's correct. Volatility up by 13 cents, 17.67. Bitcoin 90,500. Everything a little bit of a holding pattern here. Gold sold off a little bit relative to the way silver's been behaving. Gold basically unchanged. Silver up 1 5/8%. So silver definitely overperforming gold. The opening bell is imminent in about a couple of seconds here.
Oh God!
There's your opening bell. Very low ding over there. There you go. Much better. Dow is up 24 as they come spinning out of the turn. Even the S&Ps have rallied about 8 ticks to almost unchanged. NASDAQ down 30. Trying to make a story here. There's not too much to say. Bonds catching a little bit of a bid, but you can see over the last 5 days they've been lower to 115.21. That was the old low range from going way back to September or so. Now we're there, a number I didn't think we would get to. That's why we're short puts. A little bit of long delta in bonds. Let's see what's moving this market to the downside. Carvana, what happened? Down $7 and change after being
up 50.
Yes, and put into the S&P 500, trading 440 now. IV rank of 13 in there. Reddit down about $7. Coin down around $6. Meta down around $6, Baidu down around $5, AVGO, which has earnings coming on the 11th, down around $5. Good IV rank in there of 33 relative. As you can see, the IV rank's relatively low across the board. MU down 3 and change, BABA down 3 and change, TSM down 3 and change. The Chinese stock getting a little bit hit. MSTR down, Hood down 2 and change, OKLO down 2 and change. AppLovin down 2 and change.
Yeah, you're not getting much vol here, but the Nvidia move is a little bit.
You don't like that it's lower.
I don't like that it's lower. I mean, it seems like the news cycle is starting to be less and less effective here.
Less effective to the upside, like some of the velocity of the news is taken out of these stocks.
Yeah, I mean, this thing was at 190 in the after hours trade. That's a big move. That's a lot of
184 now. Yeah. Mm-hmm.
Yeah. But the market itself is not really reflecting that. But when you look around, like in my positions, E-mini's down 4, NASDAQ down 87. It's a nothing day, but pretty much everything. I mean, like 3/4 of my positions are down.
Yeah,
on the day, are down small. Like it's not huge, but
yeah. Even if you look at the upside here on an pretty much unchanged day, slightly lower. I mean, you got Lilly and UNH as your two tops. Adobe up $2, but everything else is up. Pennies, dimes here. You don't get there's not that $8-10 mover to the upside like you have on the downside here, where you've got some stocks. Multiple 3-digit red stocks here. But yes, you are right. We aren't going anywhere. It looks like the Dow's catching a little bit of a bid. The Russell's staying steady, and even the S&Ps are trying to find their footing. It seems like we're going to drift a little bit lower here inside the expected move. Even the S&P's expected move is about $25. If you want to look to do something there, we can either on this break.
Want to do like an SPX?
Yeah. $25 expected move is relatively low. Volatility is upticking a little bit.
Hey, you want to try and put on like the 20 delta?
You certainly could make it even on both sides. Let the stock beat us. You're gonna go $10 or $20 wide.
I'm gonna go 15. Split the difference.
So you're looking at 68, 65, 80. Where were you looking? I mean,
yeah, 68, 65, 68, 80,
68, 10.
Yeah,
95.
Yeah, and we'll see.
Trading for around. And you'll notice they always trade around the same.
It's always $5. It's 1/3 with the strikes. I mean, that's what it is.
Yep. Something around $5. You are correct. I think you're working a 520 offer.
I'm gonna try 515. Like let it sit here for a second.
Okay. I mean, the S&P is down 3. They just rallied 5. Dow.
Where's my SPX?
115. Got it. Sorry, 515.
Yeah, and we'll put it in an order to close that.
Even the S&P is
like
unchanged.
$75 or something is we'll try and target.
Okay.
That's kind of where we've been sitting. We'll put it in for 440.
Good job out of you. We'll see how that plays out for the rest of the day, which hopefully we feel is about 40 minutes or so.
Yeah, I think we're gonna.
I mean, all things work out.
Choppy day today.
So if you're gonna have a choppy day, do you think this is the type of strategy that would work or not work? I mean,
Yeah,
assuming you put it on, you have confidence in it, right?
Yes, this would work.
Volatility up by 11 cents. I don't have too much to report here.
Yeah, I'm gonna try and close this BE position in.
Gold catching a little bit of a bid, but so is silver. Silver back to 59.70 and change.
My scalps.
Live by the sword, die by the sword.
Yeah, it's okay. So that was like a 1/3 playing the upside volatility in BE. I took like 100 something out of that.
You closed that trade.
Yeah.
Yes.
I mean, that was one I did into it took like $140 out of that.
You paid around $280 for it. Yeah, you paid about $280 back on the 4th, which was only a few days ago.
Yeah.
I'll put that up on the board for you. This is the trade that you did. And you can see the markets are quite wide here, right? You know, natural bid 130, natural offer 730. Wide markets. You put on a Jan D spread for 280. You took it off for 430 credit. If you're selling this for would you sell it for 420 or something like that?
Yeah, 420.
Yeah, 420 credit. A nice buck and a $1.40 in a couple of days. That's a nice trade.
You got that OKLO position.
And that's just volatility contracting on those out of the money options.
On the shorter duration.
That's right.
Yeah, the long option kind of stays bid. You have this OKLO position up about $100. I think this was a option trades today.
Let me see. OKLO. You did I forget about this? Let's see. OKLO.
I'm just looking at stuff that like has moved pretty decently.
Yeah. Let's take a look. If you want to look at these, you can go to the follow page. You can put in a symbol, OKLO. It'll set it up. The last trade here is an option trades today. I did it for $2.07 credit. All you have to do is agree. It'll punch it back up there. It's trading for around, like Nick said, about $1 profit. Sure, put a bid in, take it off.
Go for it. That's you.
Okay.
What do you want me to do? I'm gonna take them. You got freaking hands.
I'm very.
Do it yourself.
I'm very sorry. I apologize. Markets are going to be a little bit wide in there too. So
I was just looking at it like, that's a pretty. What was that? A week ago?
Yeah. I don't know what else you're.
It's the same thing with the BE trade. It's like, what am I gonna hold that junky position for? Another 2 weeks and have the tail risk.
Yeah, you reduce the buying power. You take it off the board and see what else you can do with it.
Yeah.
Very nice. What else we got? Thank you for pointing that out. Appreciate it.
Yeah. Team game, baby. The bats. Look at this.
Is that it? You ready to take a quick 90-second break? We certainly can. We've got our man Chris waiting in the wings.
Yeah, sure.
With Let Me Explain.
Sure.
Kind of a boring opening here. It's completely unchanged on the E-mini S&Ps. NASDAQ down 46. Russell up 7. That's your leader in the clubhouse to the downside, and leader of the clubhouse to the upside. And then the Dow just hanging in there up 91. Volatility up 11 cents. We'll take a quick 90-second break and come back. Silver on a tear up 2% and change. We'll be back in 90 seconds. Ooh, live.
Ow.
Ooh.
When the market moves, traders need to move faster. tastytrade Active Trader Tool offers full depth of market visibility, one-click order entry, and instant position management so traders can react in real time. While others charge for professional tools, tastytrade provides them for free. Opportunity can move fast. Seize it with Active Trader. Try it now on tastytrade.
tastytrade's Money Match event. Unlock 30 days commission-free trading. Plus a 1% cash match on all qualifying deposits to jumpstart your trading when you open and fund a new tastytrade account. Level up your trading experience with Active Trader Mode, smart order tracking, risk analysis tools, dynamic watch lists, and more. The Money Match event starts now, exclusive to new tastytrade customers.
Grow a strong community with tastytrade's referral program. When your friend joins tastytrade, you'll both receive $100. As your community grows, you get more bonuses. The referral program runs through December 31st. Only at tastytrade.
Ready to take your trading skills to the next level? Dive into the world of stocks, options, and futures with tastytrade courses. Whether you're a beginner or more advanced trader, our courses can empower you with the knowledge to succeed. Watch as our team in Chicago shows you how to use the tastytrade platform and go over the basics of trading. Perhaps you'll learn about a new strategy or a potential product for your portfolio. To find our courses, go to the Manage section of our web platform or head to courses.tastytrade.com. Start taking control of your financial future. Visit our courses today.
What's up, everybody? Check out my new series, Life Cycle of a Trade, where I show you my real-time trades with insights into strategy selection, adjustment mechanics, all the way to the closing order for all of the tastylive core strategies.
tastytrade has crypto, and you can trade with zero commissions. Bitcoin, Ethereum, Litecoin, and more. Diversify in one place. Crypto, we got it, we get it.
Nicky, we are back, son, and you know what that means. Time for a little bit more Tasty Live. That's right, with this man, Chris in the house. Let me explain. Mr. Chris Veio, explain something to me today. How are you?
I'm doing well, Tony. Nick, good to see the Batman in action again. How are you guys?
We're doing good. We're fighting for truth, justice, and the option way.
Oh, just you gave up on the American way already?
Yeah, I mean, listen. Since we've named the
we stick to our lane, Chris.
Yeah, we stay in our lane. But I will say this. Since we've named it Gulf of America, hurricanes are afraid to go there. Cape Coral's been just fine. No hurricanes.
He's been waiting to throw that. He's been waiting to throw that one out. He's excited about that one.
Gosh. Yeah, no, I saw Kristi Noem say that to President Trump the other day, thanking him for keeping the hurricanes away. And I said, oh,
it's all right. The timeline we're in right now is one for the age.
Yeah, listen, if you can't laugh on X, you might as well put yourself a hole in the ground.
No, but like, that to me is so indicative of something that matters so much for markets, which is like, if that's the world we're living in, he says that affordability is not an issue. Guys, they're going to run this thing so damn hot. They're going to keep pushing up those deficits. They're going to keep spending the money.
Affordability is a made up name. It's just a thing. I mean, come on.
Yes, coming from the boomer over here.
If you have to ask, you can't afford it. Come on.
Tony, those are Arabic numerals on those grocery receipts. You can't trust them.
I was having this argument with my son because he'll go into this like TikTok thing where he'll listen to some schmagegi on TikTok, and he's joking, he's tongue in cheek, but he's got a guy that he listens to that says, you're a sheep if you are, worried about mathematics. You're a sheep if you should be eating clean, raw food. That kind of thing. And you're just a sheep if you're, to the man. It's made up numbers a couple thousand years ago. Big deal. Because he's not great at math. That's why he's doing it.
Yeah. That's good. The TikTok brain rot is really getting to him and validating.
And I feel like, it's owned by China. They're just, kind of brainwashing us. No, this is Instagram, Dad.
Yeah.
Oh no, these are American companies.
Yes.
Well, they do the brainwashing too.
Of course.
It's equally brainwashing.
That's right.
It's just a little different brainwashing. Right.
Yeah, well, the most telling thing about all that stuff is like you listen to Mark Zuckerberg talk about Instagram, and does he let his kids use it? No.
Yeah.
Of course not.
Yeah, right.
Yeah. Why would he?
Yeah.
Yep.
Normies let the kids do it at the dinner table.
I'm just saying, when the dealer's not willing to use the product, I maybe, don't hit it.
Oh, come on. I remember when you shouldn't be standing close to a TV with a VCR. You're going to be fine.
Yeah.
Don't worry about it. It's your upbringing.
Aren't you guys the asbestos and lead generation?
Yeah, look at us. We're fine.
That's why they're so messed up now.
Look at us. We're fine.
Well, we're the microplastics generation.
You are the microplastic. Oh, that's another thing. Got to get rid of all the microplastics. I know he's on that kick, but I got to get rid of all the microplastics.
I'm.
And there's nothing wrong with it. I mean,
when you're cooking with hot food, there's no reason why you shouldn't use like a metal utensil.
Sure, but you throw it in the microwave, right?
Throw what in the microwave?
You throw your food into a microwave and warm it up.
Not in plastic.
Yeah, not in plastic.
I know, but you think those radioactive waves going through there are going to be
That's a little different than putting plastic.
It's all the same thing. You should be using a toaster oven like I grew up on.
I usually just eat it cold. I like my leftovers cold. Pizza, pasta, those things you just put in a bowl, eat it right there cold.
Why put it in a bowl and dirty that? Just eat it right out of the new.
Can't afford the electricity, Tony.
Yeah.
Oh, what's affordability? Isn't that how we got on this?
Yeah, cutting costs.
What do you got for us today,
so.
Chris? What do you got for us?
'Twas the night before Fedness. Okay, I'm going to stop there. No, I'm not going to go any further than that.
Is he going to wear a hat for us? Is he going to have like a little Santa hat when he gets on stage?
You going to put a tinfoil hat on?
He's going to wear a purple tie, though.
He will. But that would really screw up the whole purple tie thing, is if he comes out with like a Santa Claus hat and says, the money printer is coming to everybody's doorstep here.
I'm just saying the main color of Christmas is red. The main color of Hanukkah is blue. Red and blue is purple. He's going to be wearing a festive tie tomorrow. Okay. It's all going to be okay, Nick. Purple tie, time to buy, as you like to say. But
yes.
The Fed meeting tomorrow, of course, is basically set in stone. I know that I've been talking about this a lot on air since first call on Sunday night, Nick, but we're looking at like a 90% chance of a Fed cut priced in from Fed funds futures. If you go onto the tastytrade platform and look at the SR3Z5 contract, it's fully priced in at 100% as well. So what is the Fed going to do then that actually impacts things? Because just big picture, since 1998, anytime the market's priced in at least a 55% chance of a move the day of the Fed meeting, the Fed's delivered in that direction 100% of the time. So on the eve of Fedmas, unless something dramatic happens before tomorrow, it's likely, I would say, that we're getting that cut. But beyond there, the market's only pricing in 2 for next year. So this isn't like a market that's built on these rate cut hopes per se that 3, 4, 5 are being discounted right now. And when the Fed doesn't give them to us, we're going to walk away disappointed with calling our stockings, guys. I'm curious, though, the volatility in the bond market is treating this like an absolute non-event. And that to me is the most interesting aspect here, particularly because we're seeing the long end of the curve come under a great deal of pressure. Tony, I'm curious, because this is such a negative IVR situation. The last time I checked TLT or Was even looking in ZN, for example, it was -4 yesterday, and I know it's back to 5 today.
Big deal.
I'm curious.
I mean, big deal. It's not a move. Yeah. That's a move. It's still low, right?
It is low, but it makes me think this is not a situation where you would deploy your typical tasty methodologies.
No.
And if you're looking for a little bit of action, the bond market is typically a place that delivers it around the Fed. So curious, what low IVR strategies do you think we should be employing? Because I have one that I'm working on here. I couldn't get it filled yesterday. Nick, I'm curious about your thoughts after I pick your dad's brain here in a minute.
Sure. We have some short puts that are basically at the money. So we typically would not sell, and we did this when implied volatility was in the teens, IV rank, but
bonds were higher.
Bonds were higher. Yeah, we haven't gotten the move that we want. We want to get smaller. So if you sell a 30-ish delta put that's now a 50-ish delta put, you certainly saved yourself some money. Yeah. Might be a losing trade, but you save yourself some money just because you got smaller. I think you were at, you were handcuffed. You either had to buy a vertical spread. If you're bullish, we're bullish. I mean, if you're bearish, you go the other direction. But we were bullish. You either had to buy a vertical spread, which is a 50-50 shot, or get a little bit smaller and sell the put into the low implied volatility, hoping for the move that you want. That's the way we went. We knew going into the trade that you weren't going to get the volatility contraction. You needed price to cooperate, and we have not had price to cooperate. We're short puts in both bonds and notes that are basically at the money right now, just a little bit out of the money with the recent move lower.
Yeah. I mean, I'm interested to what you think about bonds here, Chris, because the bond market having basically the lowest vol it's had in over a year at minimum, into what is
a contrary move, right? If you read the noise or the news.
The craziness of the back and forth and the projections and especially further out on the curve. What am I missing here to why there's no volatility in the bond market?
Yeah, what are we all missing? Because that's one of my biggest questions on emails. Like, why are the bonds going lower when the bonds go lower, rates typically go higher, but they're cutting interest rates, and the Fed Watch tool has it at 80% or something like that. Why? Well, I don't get it. So please, Chris, shed some light on this for us.
So twofold here. With respect to thinking about the volatility itself and then how maybe to work a trade around it, because we were having a small discussion off air about gamma trading, and I think this is actually feeds into it. Let's go back to last fall when the Fed cut by 50 basis points. Did yields go up or down afterwards, right? They went up.
Yeah.
Why? Why did yields go up? Because I think the market on a macro level says, oh, you're giving us rate cuts in the context of an economy growing near 3% and unemployment near 4%. That's going to give us more growth and more inflation. And so where are the growth and inflation premiums stored in the treasury curve? At the long end, right? This time around, yields are going up. What's the context? You look to the Atlanta Fed GDP growth tracker or the New York Fed Nowcast, 2 to 3.5% growth. The unemployment rate's still below 4.5%, and CPI is gearing up near 3. So you look at all those metrics and you go, okay, rate cuts in this context probably heats things up from what's a decently warm level already. And so you get faster growth, faster inflation priced in at the long end of the curve. Maybe you sprinkle in the fact that these tariffs might get rolled back by SCOTUS. Trump's been tweeting about them a bit as those arguments are being heard. And quite frankly, a decision could be coming down the pipeline. How's the government going to pay them back? They're going to have to issue new debt, which probably pushes up 10 and 30-year issuance, if only temporarily, while that all gets sorted out. Either way, though, rate cuts, more growth expectations at the long end of the curve. So higher yields, higher stock prices. That was last fall. I could see those two things playing out. But for the low vol, I can't tell you why, if that's the context, if tariffs are going to be removed. I want different exposure, though, because I was sitting in some long delta positions in notes and bonds, which didn't work out. Last week, I flipped to short deltas in ZB. But with the low vol in ZN and us sitting basically right at just a little bit north of 112 right now, I'm thinking something like a reverse iron fly out at like 73 DTE could be worthwhile. Long the 112 call and puts, basically at the money call and put, short the 110, 114, 110 put, the 114 call. It's a 67% pop. It's a 2-to-1 risk to reward, risking 2 to make 1. There's a ton of time on the board there. And we're just effectively saying we don't care if where price goes, as long as it goes somewhere and
Just not
volatility
here.
expands. Yeah, it just volatility needs to go up and price needs to move. We don't care which way it goes as long as it's not here.
Yeah, I mean, I think that's an interesting.
I mean,
trade.
it's a scenario. You're taking a lot of liberties. What this is all about when nobody knows anything, right? I mean, but we're painting a picture here.
But the story is
I know, but he's on the opposite side of where I am and maybe you are. I mean, we're short put, so you would actually have short delta in the bonds.
You'd have no delta.
Chris?
I would, slightly positive.
Yeah.
But
okay. So
it's supposed to be delta neutral.
It's long vol.
Yeah.
It's long bond vol.
Yeah.
Right, but I thought he said he was short delta. I thought I heard him say something about being short delta in TLT or something like that, but maybe I heard wrong.
No. Into the move.
I have short deltas in
the bonds,
ZB. I'm short delta. Right.
Yeah.
ZB looks like it's breaking down.
Yeah.
I'm not creating notes if they go one way or the other. I'm agnostic, but just the vol being so low, given all of the events that we have coming, I don't know, a little too quiet in the house before Fedmas.
Yeah.
Before Fedmas, yes. You know what? Volatility is typically never wrong. I mean, you know what I mean? Like that 70, 80% time it always gets it. So I think you're going to have a little bit of a muted move, not too big of a move. And I'm just going to play the reversion to price back to the mean. I'd rather be long a little bit of delta in there than short a little bit of delta in there. Again, a really small position, right? I mean, it's kind of like you trading silver today. You're just, you're not in it for a long time. You're in it for a good time. Or at least that's the
hope so.
That's the assumption that you put in there, right?
Yeah.
Can it be both?
It can be.
Yeah.
It can be.
Sometimes if you get lucky.
Yeah. Mm-hmm. Yep.
Yeah, so silver to me is fascinating because unlike over the past week where you saw it chop around between like 57 and 59 and vol was contracting, one of the telltale signs of gold and silver's rally is petering out over the past, I would say, almost 2 years now.
Mm-hmm.
Today, vol is going back up in silver.
Mm-hmm.
And if you just take we peek a look at that chart, that would be the high close ever if the market closed here today for silver prices. So gold, I think one of the more fascinating relationships we have right now in the market is this gold silver ratio, which I remember a few months ago, Tony, we were doing these, specials here on air.
Yeah.
What to do with the gold silver ratio north of 100. And now it's collapsed into the low 70s and perhaps even lower. I, for one, have been leading a little bit longer gold and copper than I have silver during this recent upswing. I'm feeling foolish because they're not going right now. What do you make of this market, though? Because silver's obviously an uncharted territory. Tony, I think this is actually a good exercise that maybe Nick and I could only really relate to through something like crypto. But how do you look at an uncharted market? You're looking in your screen and you go, these are prices that we've never seen before. How do you approach that? Because I'm sure you've seen that a little bit more often in your career than Nick and I have.
You're not going to like my answer.
The ratio's at 71.
Between gold and silver. Yeah.
Even lower than what we've been looking at the last.
You're not going to like my answer because I play it from a contrarian side. So on your silver, I would be trading it like Nick is right now from the short side.
Yeah.
If I was doing the gold silver ratio, I'd be doing it like Nick is doing, buying 2 gold, sell 1 silver. If he was doing it differently than I would do it, I would be pretty boisterous in my disapproval of him, as I think I'm going to be disappointed in you, Chris. Which way would you be trading it?
Why not buy 2 gold and buy 1 silver?
Yeah.
Ooh, you could do that.
You could. We call that a stupid, right? Yeah. I mean, we're all on one side of the market. Although it would have worked quite nicely in any time. I have been trading personally my own GLD short puts on the 3-day, 5-day, 2-day time frame because I wanna be involved. So I'm looking at gold silver ratio, and I think gold is underperforming towards silver. So that's how I'm playing it, looking at just a little bit of a backwards way of trading the ratio spread. So that's how I've been doing it. So yeah, I don't necessarily disagree with you, Chris, although to answer your question directly, I usually fade it.
Big round number there too, 60 on the dot there for silver.
Yeah, you didn't think we were going to get there today. We almost got there, 59.82. We're back to 59.65. Your last tranche was around 73. I know you're trying to increase your cost Wouldn't be basis because that's buying your sale.
Yes. Little scalp. Trying to get a little out of it. A little something.
Yeah, now you're struggling. I get it. I hear you. Even the S&P's up 5.
Yeah.
Chris, what do you...
Quiet day. Yes.
Go ahead.
Yeah, I would say quiet day probably around the corner because of this Fed meeting tomorrow. We haven't seen that too much action leading into the Fed. There was this tendency during the 2010s, it somewhat faded, but there was this tendency that where there was the pre-FOMC drift where markets would just generally melt higher in the 24 hours leading to a FOMC event on a Wednesday. So Tuesdays are usually a layup just to be long the market, look for like a 0.25% gain. That's dissipated, particularly in the post-COVID era. So it's more or less just choppy sideways grind. The New York Fed's Liberty Street Economics blog has a good deal of research on this phenomena in markets. It's worthwhile read to see how they change their viewpoint on it over the years. But I'm more concerned with looking at something like Bitcoin and crypto. And while I'm not trading it significantly, Tony, I still have that IBIT position on that you and I put on market measures the day before Thanksgiving. So that's doing well enough. But it feels like this is a market that's not dead, but dying.
Yes.
How do you...
Yeah, go ahead.
Like how are these death rattles? Is this rigor mortis after a 25% pullback? What's going on here at the lows? Is this all about MicroStrategy? It feels different than it has during previous pullbacks for whatever reason.
Yeah, Nick was talking a little bit about this. Like the volatility is kind of the up move volatility has been taken back. They're getting more. They seem like they feel like they're more established companies and not the high flyers that they were. They feel like they're becoming, God forbid, although Microsoft is on its highs, but like it's $300 no longer $50. Like I remember it, but it's becoming more of a Microsoft, IBM type stock. Oh, a little scalpy on your silver, helping you out a little bit there.
A little bit, trying to battling silver.
So yeah, I agree with you. The bloom seems to be off the rose to the upside. That said, if you get these old Mag 7 stocks back to behave like they used to behave, you've got an upside potential in the market. And we're only a skosh above skosh below all-time highs that could lift this market into 2026.
I mentioned this, and I went through it this morning. You had the Nvidia news after the close yesterday. Stock was at 190. We're basically at 185 now. We've given that entire move up. That's a huge move.
Yeah. Typically, that would not be,
past Nvidia announcements was a 20-point face ripper. Vol exploded.
And the next day, another 20 points.
AMD's up 15 on the back of it. MU up 15.
Even the S&P's up 100. NASDAQ's up 300.
Yes, you don't really have that. We've stayed in like a 20 to 30 point range of 68.50 for the past, basically all of December. We haven't moved off 68.50 really. It seems like everything's kind of just waiting for this event tomorrow. Like that seems like it's the market decision. Whether we move off this higher or lower, it comes tomorrow.
You mentioned Microsoft there. I have a line in the sand drawn at 495. If it gets back above 495, that's probably a clue that the worst is over for the OpenAI Nvidia grouping of companies. But Tony, I know it's not really your forte here, and I'm sure I'm going to pry on this in about 2 weeks' time when I come back for Let Me Explain. But if there was one asset class that you're looking forward to trading the most in 2026, what is it? What's been your most successful, what you think has been the easiest thing that you feel most comfortable trading coming out of 2025?
Wow.
Or are you just agnostic?
No, it's a great question. Nick runs the account that we do here. I mean, we do it in conjunction with each other, and we bounce the ideas off of each other. But it's his to own. Somebody has to own it. So he's been all over the board with all of his trading, which has been absolutely great for the show. Doing the show and having that cross to bear. I've been staying more into the ETFs like SPY and GLD. A little bit of some of the high flyers like OKLO, BMNR, just for my own kind of trading. So for me, it's been more of the Nvidias of the world, more of the high flyers, but even a little AVGO. But really more into the ETFs just because it's so hard. I don't want to have and I don't have a different opinion than what Nick puts on for the show, and it makes it harder to do my own. So I don't really do too much of my own for, to show the crowd. But I've been staying in ETFs and the high flyers more than anything else.
You mentioned Broadcom. They have earnings coming up later this week.
Yeah.
One thing that I'm not going to do again, I tried putting on.
And it doesn't have great markets, by the way, in AVGO. It's a difficult trade. You have to really be, it's 25, 30 cent wide markets, but you have to be opinionated, I think, in AVGO. I've been playing it to the upside, so it's been working.
Right. I mean, for me right now, the thing that has worked as just, I call it my yeoman's work, my layman trade is just short volatility in oil. It's been doing wonders. It's been the single thing that just consistently month in, month out, unless there's geopolitics, it's been reliable, I feel like, for years at this point in time. So that's probably the thing I'm going to continue to reach for as my go-to just foundational level strategy in futures next year. The one thing I'm not going to do again, and I seemingly make this mistake every year, and I'm bearing the cross of it right now, I'm going to stop trading around earnings.
Yeah.
It's not how my brain works. What the heck does the Fed have to do with ServiceNow earnings? Why am I placing just what are you doing, Chris? So
right.
My whole thing is to try to continue to cut out the bad behaviors that cost me money. Nick.
Yeah. And I agree with you on the oil trade. When oil is the thing that sticks out in your mind of the last, couple months, that there's not a ton of volatility in the market when you're going to oil iron condors and saying, that's my go-to now. That's kind of the market we're in.
Butter.
I think I agree with you. I think that's a great trade. It's a great way to get into something that's kind of diversified from equity markets. But I don't think the game changes next year. I think you're going to have a lot of two-sided action in these tech names. You're going to have a lot of news flow, a lot of changes in implied volatility. Like I think when you get those opportunities, those big moves, when Michael Burry comes out and says everything's a bubble and the stocks go down. That's going to be a good opportunity to sell puts. Yeah. I mean, that's going to be, I don't think the story is going to change next year. I think we're going to even have even more of it. It's going to be even more news driven because this stuff is moving so quick. So right. I think we're in a lull of volatility right now. You got to be mechanical and reduce your sizing and manage your winners and do everything we always talk about because the opportunities are going to be there again. I don't think we've had the regime isn't changing after this year. I don't think.
I agree. Just because the calendar year changes doesn't mean the influences do. Guys, we're running over time here, so I will stop. Dealer, I'm out.
All right. Sounds good, man. Sounds good.
Oh.
Don't worry. Make sure you get your free drink before you leave. We're going to take a quick 90-second break and come back. We got more Tasty Live. Do they still give out free drinks at the casinos? I mean, they must.
It's gotten a little iffy. Yep. A lot of them are sometimes you got to be at the tables now. It's not the, free money era like you had. It's everything.
Affordability. We're going to take a quick 90-second break and come back. We got more Tasty Live after this with a market measure next. Back in 90 seconds, Tasty Live.
Feel like your wardrobe is missing something? Like style, purpose, and maybe a dancing dog? Can I pet that dog? The new Tasty Trade and Tasty Live web store is now live. New merch, bold designs. Did we mention all net proceeds go to one tail at a time? Invest in the real bull market, dogs. Go to tastytrade.threadless.com. Grab some gear and help some pups. You get merch, they get a home.
Tasty Trade's Money Match event. Unlock 30 days commission-free trading. Plus a 1% cash match on all qualifying deposits to jumpstart your trading when you open and fund a new Tasty Trade account. Level up your trading experience with active trader mode, smart order tracking, risk analysis tools, dynamic watch lists, and more. The Money Match event starts now, exclusive to new Tasty Trade customers.
Tasty Trade is now on TradingView. Trade stocks and futures directly on TradingView charts with Tasty Trade's low commissions. Try it out and leave us a review.
Look who's back testing. Tasty Trade now has options back testing for free. Test your trades with over 10 years of data for the most popular symbols. See how your trades would have performed in the past. Look back at profit and loss and take the guess out of guesswork. Oh, did we mention that it's free? Get back testing at Tasty Trade.
Tasty Trade has crypto, and you can trade with zero commissions: Bitcoin, Ethereum, Litecoin, and more. Diversify in one place. Crypto, we got it, we get it.
Today's episode of Market Measures is brought to you by Cboe. Cboe is partnering with tastylive to provide educational opportunities for traders at all levels. Did you know index options like these can provide opportunities for diversification, lower volatility, liquidity, and other benefits? To continue your education on some of the mechanics learned in today's Market Measures, check out Cboe's Retail Trader Suite at www.cboe.com/minis.
Nicky, we are back, son. And on that break, I mean, for a nothing-ish day with even the S&Ps, pretty much in a $10 range since the opening, down 5 to up 5. You've made a half a dozen, 14 trades already, and a couple of nice little, you got a nice little scalp in SPX that you filled, right? I mean, you bought that back at 440. You sold it at 515 or so. You bought back some Netflix puts at $1.64 that you sold, two?
Yesterday.
Yeah.
I sold those yesterday, but I'm still short the hundreds and the 96, so I have like a covered call in Netflix.
Yeah, you still got long delta Netflix Netflix unchanged, right?
Yeah.
Yeah. So
I put on an SMH position yesterday into the initial Nvidia move, so I took $100 out of that as well.
Silver back into a tradable spot for you here, 59.45. Got to be helping you out on some of your scalps that you've done there. I mean, I think you sold them at 73 and bought it back at 65 recently.
Yeah.
You sold them back out at I
got 2 left over. I'm wrapped around. I'm probably higher with all the scalps from today because I had.
But you're wrapped around 40, probably 35, 30, a little under 35, or?
Yeah, probably somewhere.
Forget about with your scalps. I mean, your last tranches are around.
Around right here.
Right.
Yeah.
Forget about the profits that you made. But
Right. Yeah, exactly.
If you wanted to scalp them, it would be around. If you wanted to scratch them, it would be around 35 on silver. I think silver is now it's trading back to 50. It was just trading at 42 or something like that a moment ago.
Yeah.
So it's all over the place, back and forth. Well, good job. So far, so good.
But it was something Jamal and I talked about on the last call yesterday. Is like, you look at, we've had a very back and forth choppy market. We've been sitting at the 68.50 mark, volatility contracting. It's hard to find those new opportunities. I sold the puts in Netflix. Like that was the one that I saw yesterday and took $50 out of it. That's like not, a huge. There aren't huge, sexy opportunities out here.
No.
My portfolio, my closing to opening trades has been 90-10. 90%
closing
of my
more
trades
than your opening,
have been closing trades, and that's just because of the market we're in. There's not, there's not a ton on the board here.
Not a ton for selling volatility. No. It looks like you almost have to be more directional.
Yeah.
Very good. You ready to do this market measure?
Sure.
Let's do it.
All right. Market measure, sponsored by the Cboe. The impact of market swings on portfolio performance. You think market swings good, bad? What do you think?
What do I think about
big swings? Not good.
Big swings are bad. Up and down. Even though the up ones feel really, really good, you know that's a high watermark. Like, you know, like you think you're going to keep it, but it's a high watermark for some period of time. You know what I mean? Like, it's not going to, you know, for argument's sake, you're sitting at 100 and you usually are up or down a couple $100 a day, and all of a sudden you make $2,000 and you think you're going to sit at that level at 102. You always go back to like 105, 107 or something like that, and you play, but it never stays that way. So swings up, swings down. You want this little stair step straight.
Well, in both directions.
In both directions, the way
it allows you to kind of get in and out of positions there. So yes, totally. Well said.
Yep.
First slide here. So risk is always part of markets, and many viewers have asked how big swings up or down can hit their portfolio. So today we break down how price movements. Oh, that's your.
Yeah, no. I'm just putting in a.
Today we break down how price movement impacts buying power, risk, and profit ratios, and what that means for your trading decisions. So this is kind of to parlay on our segment from this morning, the option jive, around like ways to kind of quantify risk in options. This is kind of another look at, you know, more granular that risk to portfolio and to your positions as a whole.
Very good. Check it out.
So the study that we have SPY 16 Delta Strangles. We're looking at the last 5 years, 2020 to 2025, 45 days, managed at 21 days. We computed the average P&L over buying power, so kind of another risk metric. Risk as in CVAR, we looked at the premium over the buying power and the max over the buying power. We compared the results as price changes. So we're looking at like buckets of price movement, 5% to the up or downside, and then like buckets in between that, kind of give you an idea of your risk along, based on movements in the market as a whole. And this is just looking at SPY Strangles. This is why we use like beta weighting, so you can weight this to however you trade. If you're mostly long delta or mostly short delta, this gives you kind of the way to do that. So the table that we have here shows key portfolio metrics and how they change when the market rallies by a given percent. And we're looking at the last 5 years. So you can see we bucket these in 0 to 1%, 1 to 2, 2 to 3, 3 to 5, and then greater than 5. And you can see, there's a lot of occurrences in each of these buckets, which is quite surprising. The last 5 years have been very, very volatile, which is why you're seeing a lot of those, 3+% moves. It's not that's atypical. That's
right.
That's above 20 VIX, projection. VIX at 1718, where we're at right now, we're at 1690. Is roughly 1% expected move up or down on a day-to-day basis. So we're right in that, second bucket here. But this gives you an idea of like kind of your average P&L on Strangles. Obviously, when you're getting these way bigger moves, your P&L is going to greatly decrease. Your CVAR is obviously going to increase as well as you get these bigger moves, and this is to the upside. You'll see this be even bigger to the downside because you have that volatility component that comes into play. But you can see here, if you're selling Strangles, you want inside moves.
You want inside moves.
Not a shock. We're giving you the info here that, when you have
this should not come to a surprise, right? I mean, for you, this is what you've been playing for.
But it does tell you the story of, the 3 to 5% up move. You get a little bit of pain there, but it's not unmanageable. Obviously, when you're having these tail type moves or two standard deviation type moves of 5% plus moves, those are painful as well. But you'll see they're a lot different than what they are to the downside on your position. So when it kind of explains why when you're short delta, the up moves aren't that painful, right? Like, because you have a variation of positions. You have long delta on some positions, you're short volatility, you're long time. The up
volatility contracts, which helps most of those positions.
The up moves outside of the 5% face rippers, you're kind of okay.
Yes.
On all these trades. That's kind of the story.
You got wiggle room. You can work on things. You're not hating yourself yet.
And we're just looking at SPY Strangles. This doesn't take into account higher volatility stuff that you're trading. You're trading,
strangles in Microsoft or short puts in Microsoft that had some of this, or Apple or Nvidia, stuff like that. So
little off topic, just to crowdsource here a little bit. You closed your 0-day trade for a nice profit. I think you bought it back at 440 or something like that. Got a lot of emails from other people also trading 0 days at 9:15. I know it's 9:17 now, closing all of these trades and kind of packing up shop for the day as volatility has in the 0 days has collapsed so quickly across the board. Now /VX is actually down 8 cents. I actually thought your spread would work a lot easier on the downside, believe it or not, than the upside. And you were able to close that for a profit to the upside. That's all because volatility was contracting.
Yeah, and we saw that in the segment yesterday with Kai, which was awesome. And we're going to do that weekly too. So, which was just a look at the
Kai's market measure was great yesterday.
Really cool, which was a look at the last 2 weeks of 0-day data. And it, you can see very clearly.
I don't know where Kai's been all the last decade that he's been here. I mean, he really finally come up to play here. Good job out of you, Kai.
Yeah. But you can clearly see you closing those positions of 0-day trades quickly avoids a lot of the problem.
Yes.
I know it's lesser profits. It's not as sexy as that $5 credit you get on entry that you get at the end of the day, but you avoid a lot of that wide distribution of P&L, which, is good if you're doing this every day. Next slide here. So according to our study from 2020 to 2025, when the market rallied, 0 to 2% rallies are the Goldilocks zone. So, this is kind of expected move upside is what this is saying. If the market stays in its expected range to the upside, even if you're short delta and you're selling premium on both sides, you're still in a good spot. The edge drops once you go past that 3% range, which is, too much of a move. You get the vol crush, but you're getting too much of a move. And you also get that premium rising into big up moves. People forget that volatility is a reflection of speculation and hedging. So when you have these big moves to the upside, much like you see in like a Tesla or an Nvidia or something like that, when you get these squeezes to the upside, volatility actually increases to the upside. You see that in the short term in SPY as well. Just due to these huge moves, you have volatility staying kind of where it is, not contracting as much as it would had you in a vacuum said that the market was up 5%. You imagine vols 0.
That's correct.
Goes down a lot.
That's correct.
In market rallies, traders can sell this slow 1 to 2% grind. So you want to be selling premium in that kind of choppiness. Avoid the 3% moves. You want to hedge if you're getting these huge moves. It's not a huge shock here. Next slide, please. So this is on the downside. So you obviously have a lot less occurrences. The last 5 years have been pretty much up and to the right, but you can see, your risk on the downside moves, the tail type downside moves, are a lot bigger here. And that's because the component of volatility is going against you. You're long delta and short vol, and vol is expanding. On the upside, you're short delta and short vol, which typically goes hand in hand. When the market goes up, volatility typically contracts. When the market goes down, volatility typically expands. And so, that's why we typically like to have some sort of short delta, because even into the up move, it doesn't hurt you as much as the downside risk is. So here you can see, across the board again, the inside moves are where you hope to be.
Inside move is nirvana. I mean, there's no other way to put it, which is a lot of strategies that we, when we're selling premium, do. Now, you can put this on a ratio spread too. You want an inside move, even though, you have room, you have exposure either to the upside if it's a call ratio spread or to the downside if it's a put ratio spread. You might want an inside move, especially if you're buying that 20-ish delta, which has a 50% chance of a touch, and you're selling that 15-ish delta, which has a 30% chance of a touch. So you still want it to be inside the expected move, but maybe a slow drift in one direction. Again, it all goes to your assumption. I love the numbers that they put on here, but you're looking at just kind of one type of strategy, like an iron condor or a strangle, or even a straddle, where you want it to just stay in one spot. Even the S&P is up 2.
stay
It's a nothing day.
all freaking day. It can be.
It's gonna be a grind.
Gouge your eyes.
Silver just traded over 60 for the.
Oh no.
Oh no, just over 60. Yes.
Hey, good thing I scalped that extra.
Yes. Jack be nimble, Jack be quick.
Next slide here. Do I put another one on? That's a big question. Do I?
Yeah.
Do I really? Do I poke
really
the bear?
snowball here?
Do I
or do
really?
I just hang out?
Or maybe I get long like a gold or something. Another gold. You could do that.
You
That'll
could.
reduce a little bit of
Gold catch a small little bit up 15 handles. I mean, gold is up a third of a percentage point.
We'll do that.
Gold is up a third of a percentage point, and silver is up 2.5%. So now what you just
3
did,
to 2. From 3 to 2.
3 gold to 2 silver, because you were 2 to 2 just a moment ago.
Yes.
Right. So you're actually, listen, they both could go in opposite directions and hurt you. But what
both go in the same direction.
Both go in the same direction and help you.
Yeah.
But what you're trying to do here is you're saying, all right, if silver keeps rallying and that's going to hurt me, maybe it's going to take gold with it too. So it's almost like it's like you're short futures and the market goes a little bit higher and you sell a put out of the money. You know what I mean? It's just a little help here.
Come test me, no problem.
Right. Uncle, you showed me your strength. You know, you are a formidable opponent. Just hit me here, okay? Hit me here. Sorry.
Next slide here. So yes, according to our study from 2020 to 2025, when the market turns down, small dips will pay, but losses scale linearly and flip hard at the minus.
It's a hard word for me to say too.
Yeah,
it's been all administrations linearly.
Yeah.
has been a tough one.
It's a tough one. But yeah, I think it might be the Chicago accent. CVAR max loss, obviously widens out in these tail sort of events. Those are baked into trading. The best zones, 1% to either direction. 3% is kind of like the danger zone. When you get past that, that's when you should expect to see some outsized marks on your positions here. A couple takeaways on the last slide here. So position size for crashes for the past 5 years, the market spends 64% of the time in that 1% range. Pretty amazing.
It really is.
How it always, even in the crazy times, the distribution tends to play out. You do have those kind of tail risk events. So, position sizing, diversifying strategy. When volatility is low, you should be taking off some of those short premium positions and looking at more directional stuff.
You talked about it just
calendars,
like that. You talked about just a minute ago, just even the trades you've made today. I mean, throw out the scalps that you've been making and trading futures, and you've been taking off a lot more trades than you've been putting on, right?
Yeah.
So.
Yeah. That's it. I mean, just you want inside moves. That's the ideal spot.
You want insight. You want another way of saying, we say, you know what, we want the stock to beat us or the market to beat us, right? This is what you're supposed to typically do. Come and beat me. I don't know what's happening, so come and beat me.
Yes.
All right, good job out of you. We're going to take a quick 90-second break. Even the S&Ps, let's take a quick look at the market. I mean, it's been a paint drying day. Even the S&Ps are up 5. You can see here this really tight little candle going on here, meaning not a lot of movement in the market. NASDAQ down 17, Russell up 5, and the Dow up 83. Volatility tried to poke its head up. It's back down 8 cents to 17.
I got to do another silver here, don't I?
Silver this is the problem. This is the problem with futures. Okay, so now here's what he did. So
I got the gold.
No. You bought your gold. You bought your gold, so that makes you even smaller.
Yeah.
Now it goes higher,
and you got it. You can't stop it. Can't stop it. It's all right.
You can't stop, won't stop.
I'm not a greedy little SOB though.
No, I
take them.
And let me tell you something. When you trade futures, we're gonna have Marty come in here, and Marty was a greedy little SOB futures trader back on the floor of the CME. So he'll be able to add more light to this than I would. I only started trading futures probably 10-ish years after I started trading options. So Marty has a lot more experience in this area than I will, which we will bring in just a moment. We'll take a quick 90-second break. We'll hear from our trade desk here at Tasty Trade in just a quick little second.
We got Glenn as well.
Yes, we do. Of course we have Glenn. Come on.
Yes. We closed our
South African rand yesterday, so he better come with.
You're gonna have to pat him on the back.
Fresh.
Yes.
Oh, yeah,
yes.
I
You hear
told
that, Glenn? We need fresh trades. Fresh trades. We'll be back in 90 seconds with Tasty Live. And that greedy little.
Tasty Trade's Money Match event. Unlock 30 days commission-free trading. Plus a 1% cash match on all qualifying deposits to jumpstart your trading when you open and fund a new Tasty Trade account. Level up your trading experience with active trader mode, smart order tracking, risk analysis tools, dynamic watch lists, and more. The Money Match event starts now, exclusive to new Tasty Trade customers.
We wanted to call in because recently some traders may have known there was some crazy activity in the SPX, and for some reason they were stopped out 200 or 300%. And what happened, unbeknownst to us, is the trade desk just emailed us and said these trades have been busted and you're not going to have to pay it. It saved us about $10,000. And then Marty calls us this morning and says, I just want to explain to you guys what a trade bust is. When you really get down into the nitty-gritty and you're in the foxhole and things are going bad, when you can reach out to the trade desk and you talk to someone that you've spoken with before who understands your account and the way you trade, that is a feature of Tasty Trade, which I think you guys need to emphasize more, because it certainly has meant a lot to us. It saved us a lot of money, and it's taught us how to trade a lot better, and that's really helped a lot.
Well, thank you. This
was not a paid, you're not getting paid for this advertisement.
Ready to take your trading skills to the next level? Dive into the world of stocks, options, and futures with Tasty Trade courses. Whether you're a beginner or more advanced trader, our courses can empower you with the knowledge to succeed. Watch as our team in Chicago shows you how to use the Tasty Trade platform and go over the basics of trading. Perhaps you'll learn about a new strategy or a potential product for your portfolio. To find our courses, go to the Manage section of our web platform or head to courses.tastytrade.com. Start taking control of your financial future. Visit our courses today.
Look who's back testing. Tasty Trade now has options back testing for free. Test your trades with over 10 years of data for the most popular symbols. See how your trades would have performed in the past. Look back at profit and loss and take the guess out of guesswork. Oh, did we mention that it's free? Get back testing at Tasty Trade.
Your crypto needs a wallet, and crypto is better when it's tasty. You can now do more with your digital currencies with the Tasty Crypto app. We're proud to offer a self-custody wallet for Bitcoin, Ethereum, and Polygon. Transfer your digital tokens directly in-app and access thousands of tokens available only on-chain. Your wallet is your key to decentralized finance. Download the Tasty Crypto app and get started today.
Step into the futures arena with Tasty Trade's active trader. Multiple ladders, hundreds of indicators, precision control. From micro gold to NASDAQ, all CME one click.
Wolf! The first half of this year's market has been giving the good guys the business.
It's certainly been back and forth for sure, Pete, and I'm getting whiplash over here.
With good mechanics, we can see Team Tasty stay strong in the second half.
Absolutely. Let's check out our starting lineup.
Dr. Jim Schultz, Central Michigan University. Number 51, because trading the Tasty Trade way, that is our minimum probability profit.
Kai Zan, University of North Carolina, Chapel Hill. Number 16, because 16 is one standard deviation on one side.
Brittany Sherrick,
Bradley University. Number 15, because I like to carry a positive theta of 15 to make $15 a day. Whoop, whoop.
I like the looks of that lineup.
Well, be mechanical is always better than just trying to run plays to see what sticks, Pete.
When you got skin in the game, you stay in the game.
That's right. Now get off the couch and get into the game.
Watch Tasty Trade.
Got the need for speed? No problem. At Tasty Trade, you can turn smart ideas into real trades with just a few clicks. Wow, that's fast. Tasty Trade, make your move.
Nicky, we are back, sons. But you know what? I got an old friend in here. Enough out of you. Tasty Trade World Headquarters, your friend of mine. I called him a greedy SOB back in the day, Spoo Trader. Today, he's Marty.
What'd you call him?
Just,
sir,
stop taking my trades, Tony. If he was in the pit, right? That's where the greedy. I just want to be introduced as greedy SOB from now on.
There were two guys. Right. There were two guys that I hung out with, and Marty and I didn't hang out a lot, but we would run in the same circles. Mm. But there were two friends that I had that could go out at night with $10 in their pocket, come home with $10 in their pocket, have a killer evening. Have a great time. All the extracurricular activities in life had to provide in the 80s, 90s, and 2000s. I, on the other hand, had to have a couple $100 in my pocket, go home broke to have the same type of good time. But Marty was one of them. The other one was your good friend. I don't know if we're allowed to use his name because maybe he's married now.
Who? Whom?
Who else would it be?
Benno.
I
mean, but the friend list was wide and varied back then.
Come on, there was only
just
one
guy.
There was only one other guy.
Campbell?
Barry couldn't get action with a fistful of pardons in a women's penitentiary. I mean, that's his uncle, for crying out loud.
Really?
I don't think Barry got a lot of action.
I mean, unless he was paid.
Well, you know.
I mean, come on.
That's what happens when you marry the first woman that you have sex with.
He definitely wasn't paying. I know Barry. He doesn't pay for a lot of things.
I don't.
He's certainly not paying for that.
I'm not gonna. If you can't get it, then you're making me look like a
So
liar.
he didn't come out with just $10. He would come out with $10.
He lives in Florida now, I think.
I don't know.
He used to cut hair.
Oh, he's in Arizona. Ahmud, the master of color. Ahmud Sharf.
That's
right.
correct.
He's a nice Jewish boy. Yeah, he did pretty good with the nickel in his pocket. Very well, as a matter of fact.
Come on.
But he would give you a trim.
He would.
Right. He might get a free
He would trim the trim.
Right.
He would trim the trim. He was a He was a hairstylist.
Yeah. Ahmud. Arnie. Arnie. He did very well for himself on a very limited budget too.
Yes.
You knew that.
There you go.
Right.
There you go.
Right.
There you go.
So, gentlemen, what's going on?
Oh, my God. Am I getting myself in trouble today?
Yeah. No. Trust me. You're fine with him. Because this would be going whoosh over the top of his head. Right?
You're not kidding. You're not kidding.
I mean, he got a 6 on his ACT. He gets 7 for
He once
signing
went
your
on
name.
a date with my wife.
Right.
Not his mom, my wife.
Really?
Yeah.
Well, listen.
Some aunt wanted to set her up, you know what I mean, who got a haircut over there, you know. Yeah.
Probably not a good idea.
Nothing happened.
You know what I mean?
Nothing happened.
I don't think I like it.
It was going to be a deal breaker for me, you know, because I can't do that.
Especially if he's still bringing that nickel in his pocket out, right? He's not going real far with that.
It's an incestuous business. Trading is a small world. It's gotten much bigger now, but it used to be a very small world.
See, what I would like him to do now is I would go and see him and just make scissor sounds behind my head.
He's got no help with you.
Right, but I'm saying if you just make the sounds behind your head as if you're actually going through the process of getting a haircut.
All right, right this ship, Marty. What do you got to talk to us about? You have something I know. You came in here like your arse was on
remember
fire.
all of our tasty nation out there that they can trade all these strategies that you guys talk about all day, okay, in an IRA account.
Right, most brokerage firms won't allow you.
Won't even allow you. And if you need more information about it or you're interested in it, just send an email or call the trade desk and ask for Bill because he'll hook you up.
There you go.
There you go. I got him taken care of, right?
Marty's a phone guy, not email guy.
No, I'm phones. When I first started, I was emails, and just, they can kind of never end.
I write like I speak, and I don't speak well.
I mean, if it was,
I wouldn't be the first choice for
You guys
email.
got the. This is,
Yeah, but
we do hunt and peck. I'm a pecker.
and I work, of course, behind the fastest typer. I would challenge anybody in the Western Hemisphere. Against Jason?
Yeah,
is he good?
It's not normal. It sounds literally like, one of those machine guns on a helicopter that spins like this. And I got to give a shout out to his wife, Karen, because she puts up with it at that house too.
Yeah,
because it's
loud.
It's
You can
unbelievable how fast he is, though.
I have a keyboard. We have keyboards here that don't make any noise, so that we can
Well,
type.
that's the thing is the fast typers as like kind of.
That's their.
They get a different keyboard that has more like little like.
Yeah, he needs the recoil because otherwise his fingers would just probably heat up and start potentially melt a cuticle off of it. This fast.
Fair enough. Okay.
Because it's remarkable.
Yes.
Nice.
I'm at like 18 words a minute right now at top speed, which comes in handy to being just on the phone talking.
Yeah.
I'm bad too. I'm with you. I'm not great.
Right. Yeah. no interest.
Silver is a future that's ripping the face off of my son over there right now.
$2 now.
Yeah, and I just saw that SLV is at like 93%, like
it's
IV or something. I was looking at that before I came in. What's it at? 53 and change?
60 and change in silver. IV rank is
SLV at 54.
Yeah, 54 I saw. Yeah. That's an all-time, isn't it now or no?
Oh, yeah. I think it goes back like 30 years or something.
Would you say every futures trader, and I'm going back in the day,
okay,
as a market maker, a local, as you would call them on your exchange, which was the CME, snowballed, meaning they're a 5-lot trader. They became a 15-lot trader very quickly.
Well, not real quickly, but it would just, it just depends on where you're standing too. That was the whole thing.
Sure, back in the day,
I mean, I think they probably started out small, and then as you moved your position closer to where
closer you got to the top.
Closer you got to the top step, the more you had to endure, which was.
Otherwise, you couldn't stand there. That was the geography. Unlike on the CVAR,
they need to get stuff up. They needed to get their orders filled. And
right.
It's probably the same where you were.
Nah, I mean, closer to the broker, you would take down more, but it wasn't a rule. Like you actually had rules.
They didn't want to look around, and they just wanted to get rid of stuff, and that's what we were there for.
Yeah.
Me being the
liquidity provider that you were.
Me being SOB.
What else you got for us, Marty? I see I hit a nerve. I hit a nerve.
Provide that service, Tony, as you well know.
I hit a nerve.
No, busy, a little busy today.
You got a demo.
Yeah, let's do this demo. Yeah.
No. You got a demo, same day strategy demo.
Yeah, at 1 o'clock today, they're doing a same day strategy, 0-day expirations and options. Quentin, my young trade desk son, is going to do it. He's quite excellent at it. Okay. Just ask him if you need to know, but they're doing that today at 1 o'clock Central. So if you can tune in.
tastytrade.com/webinars, tastytrade.com/demo, tastylive.com/demos.
That's what a professional does when prompted like that. And
Marty, my peeps want to know. Back in the day, did you have a wave? Did you have hair?
Oh, I had nothing but cabbage up on top of this dome. Okay, nothing but. Now we're going back.
We got to find some.
I'll send you over a picture.
Yeah, you got any retro pictures of
Of course I do.
guys?
Okay,
Time has not been good to him. He was a handsome son of a bitch. He really was.
Yeah, but look at I have perfectly shaped head. Perfectly.
Sure.
Right, because you can't.
Sure.
Some guys, if it does go.
Yeah.
It's not going to be a good.
We don't have the good head for it.
Yeah, but you guys got both full heads of hair.
I do look horrible in hats.
It's too. It's too long and thin. We're gonna look like Conehead.
Yeah, but you're not going. Your hair's not going anywhere, and yours obviously.
Knock on wood somewhere, please.
Right.
Please.
I mean, I love the fact that he has her. You could style it a little bit. You know what I mean? I mean, I could hook you up with Arnie.
Arnie would be great. That was the guy. That was the man.
Yeah, I'm just waiting for scissor sounds. That's it. I'm going to go with that.
All right.
But yeah, you guys are fine. And
we're going to be all right?
You're not follically challenged. Both of you will be fine. Just it's hereditary, right?
Got good genes, but he might not have good luck. I don't know. We'll see.
Break.
Just make sure you're in that will, okay? Nick, just make sure.
It's all right.
No, make sure he doesn't white you out on that, okay?
The pecking order is.
Right.
You're thinking being the firstborn son, he would have top
He's number
priority.
one, right?
He's got like 14 brothers and sisters now too that are gonna stake claims. The Batista
probate.
Yeah, this thing is going.
Moving to Florida. He's moving to Florida.
Yeah, and he's getting old and a little senile too. So I don't know, like if he's like
I'm giving it away.
Like if he's signed anything, he clicks on links in his email.
Do yourself a favor. Stay close to him, okay?
I'm trying.
You want to be there when that
I
hits.
want him
in another 40 years, right? Listen,
Marty, let's go through your list before I get in more trouble.
He wants you out, I guess.
He does.
All right, at number 20, MSTR. This voice is for you, Jason, just by the way, at 30%. Number 19, CVNA at a 9. 18, TLT, 6%. 17, Sophie, 12%. 16, Palantir at a 4. 15, IBIT, 46% IV. 14, MU at a 60. 13, Google L at 13%. 12, Starbucks, 15%. 11, Robinhood at 16. 10, Oracle, 83%. Nice. Number 9, Amazon at a 12. Number 8, Netflix, 28%. 7, Apple at 3. Number 6, GLD at a 34. Number 5, AMD, 23. Top 4, SLV, as discussed, 66%. Number 3, Meta at a 6. Number 2, Nvidia at 10. And guess who's number 1? Tesla.
My man.
Excellent.
Tesla IV rank is low at 6,
right.
but it did catch a bid. It's up 6 now. Tesla pre-market was actually down small, I believe. It opened at 435. It's 436 right now. Up 6.
Excellent. Can't fade them, right?
Good job out of you, Marty. And I'm
Thank
getting
you, my
accolades
friend.
for your perfectly shaped egg.
Oh, listen,
that
you
you
know
have
what?
there.
You got that going for me.
You do.
Perfectly shaped cranium. All right, gentlemen.
Somebody who has a nice flow in their own right. Mr. Glenn.
How we doing?
We're doing great, man.
Bitcoin just rallied $2,000.
Yeah, Bitcoin 92.4.
Risk on right now.
Right at its highs of
Giddy
the
up.
day.
Giddy up.
I need this hair. My head is not so.
You don't have you ever had
You got the brain though. You got the big
Yeah, you
old
do.
noggin in there.
I don't know if the brain accounts for all these lumps. I think my dad was playing basketball with me as a child.
Ooh.
But let's just hope it doesn't.
Well, you don't have to worry about that for many.
God, I hope so.
You got good flow.
Thank you.
Really silky and nice.
Yeah, he's got a nice flow. What is that, like Breck? What do you use?
No, I often get a lot of flack for it. I use the 2-in-1, shampoo and conditioner.
You're one of those guys? Yeah,
Well,
I guess.
I actually have a reason for it is because if I use it separately, then it'll look like it'll fall. I get no volume if I condition it separately. I wash it every day.
I do
That's about
too.
it.
Yeah.
They say not to wash it.
I know, but I can't. I have to. I can't. Yeah.
They say that, but your hair's actually very reactive. So it's just the only way you'd be doing a disservice.
Now you're a hair expert too?
Yeah, I know hair.
What can't you do?
I know hair.
I mean, Northwestern hair expert.
Get the clippers out. I want fresh cuts for the whole team.
It just depends how much oil your head produces. So
Yeah, and I'm a secretor.
Yeah,
I think
so. You got to wash it away every day. But over the long term,
Greasy secretor. It's Italian.
You're a greasy bastard.
you can train your hair. Is what I meant to say. So
You can train your hair.
Those that take an absence of washing it, for a long period of time, your head will then stop producing it at the same clip. So it's kind of a positive feedback loop there, if you will. But people then lose the oil.
That's why I wash my body as fast as I want to, too. It's my body. I wash it as fast as I want. So, I mean...
I'm good, actually.
It's reactive. It's reactive. Like the hair.
How fast? Are we talking 1 minute and we're out?
As fast as I want to. It's my body.
That is your choice.
Your choice. Your choice, your body. Tasty FX, look at you representing over there.
Shut up. to you for the.
Oh yeah, the rand. Is it
South
rand or
African
rand?
You bottom tick that one?
Bottom
Nice.
tick that one. Lunch money.
Only because you pointed it out to him, we never would have done it.
Yeah.
Well, when you have
right. I mean, you have to be honest. It was even hard for you to find because they don't have any
give them too much
description on
credit because I got the
description column.
The what?
Because if you had a description column, it would be much easier.
Right, right. It was harder to find because you don't have the description column.
Yeah, that would be tough.
That one's coming, but first we got Tasty Trade, TastyFX Mobile finally launching in the coming weeks. So that is what I'm most excited about. What's the point of trading 24/5 if you can't trade on the go? So
You have a working order somewhere.
No, it's yeah.
Our dev team worked very hard to get this out. Should look very nice.
When is that coming?
In the next couple weeks.
Beautiful. Look at you.
Pre-Christmas.
Yeah.
Christmas for you.
Okay, that will be a Christmas present.
There you go.
That's good.
But yeah, when you have 86 currency pairs to mine, tough to see all possible opportunities. But we got a couple here for you today. With the Fed decision tomorrow, that's what all eyes are on.
Are you
for
ready?
US
Do you
dollar.
sleep? Like, do you have a trouble sleeping? You're like, oh my God.
I play.
Day, this is.
Yeah, no, I do my affirmations in the mirror. Who's the man? You're the man. Who's the man? You're the man.
You can do this.
Be the ball. Be the ball.
You got this, boss. You got this.
Yeah, my marine breathing exercises. But yeah, it'll be a lot of fun tomorrow afternoon. Hopefully a lot of trading opportunities for those active dollar traders. But in the run-up to that, you tend to see some consolidation. That's what you're seeing to a great degree in this euro-dollar pair. Not been a fun one to scalp around. Really tight range there. But does that mean you have to stay away from the U.S. dollar altogether? No, it does not, because we've got U.S. dollar moving against other major currencies. News of the night was Australian dollar, U.S. dollar up about 0.5% today. Actually, just starting to pull back a little bit. But they had their meeting last night at around 10, 11 p.m. They held rates steady but did not rule out a rate hike in 2026. So conversely to the U.S., which is in a cutting cycle, they are looking back on the horizon to hike rates, perhaps a little boost as well off that Nvidia China news. If it's good for Chinese GDP, Australian dollar can be traded as a proxy for that as well. So we're getting a lift there. And then in other news, U.S. dollar, Japanese yen, the big mover of the day, less of an exciting storyline development there. Japan affected by that earthquake overnight.
Yeah.
Some concerns about potential GDP impact. Very important that everyone is safe.
Yeah,
first
yen's
and foremost,
been taking a slide the last 2 days, 3 days.
Has not been doing well against not only the U.S. dollar, but all other G10 currencies as well, which brings.
Which has been good for you, though. You've been long dollar, short everything else, right?
Yeah, I took off some of my long dollar.
Not good for your euro yen, is it?
Euro yen, not good.
Not good, but the mover of the
Aussie
day,
yen,
exactly.
not good either.
That one's
a tough one.
That one's my mover of the day, up almost a full % on that combination of a bolstered Australian dollar and a weakening dollar yen, sending that to new 18-month highs. Haven't seen that since 2024 July, to be exact.
The Australian dollar's been on an absolute tear, right? I mean, it's last time it had highs like this was back in September, and then you got to go into last year.
Just getting out of its kind of choppy range that it traded in right around that 66 cent level. Structurally, you got a lot of things supporting that over the long term, as 2025. Not good for the U.S. dollar, but it has been pretty good in that pair specifically. Stayed around those April lows, U.S. dollar gaining some traction earlier in the year. Now
there's a yen thing coming, decision next week.
Exactly. The Bank of Japan meeting is the 19th, I believe, 18th or 19th, but much sooner than that, we got a lot to look forward to tomorrow. Not only do we have the Fed decision in the afternoon, we have a Bank of Canada interest rate decision in the morning. So if you're looking for some action while other markets perhaps consolidate in that U.S. trading session leading up to the meeting, maybe there's some potential
And
opportunity.
the Canadian dollar's been catching a bid too. I mean, it was in the what is it?
140s,
around 70. Right now, it's like 72 and change or so.
Exactly. So yeah, quoting the futures would be that Canadian dollar, U.S. dollar pair. If you're trading it on the spot side, it'll be flipped U.S. dollar, Canadian dollar, just like that yen relationship as well. So yeah, that dipped under, now trading well under 140 for the first time in a while. But that one's, in terms of intraday trading ranges, has presented a lot more opportunities than that euro-dollar market has in recent days and weeks. And that same margin requirement at 2% leverage of 50 to 1. So just as tradable of a product there. So if you're looking, that rate decision should be 8 or 9 p.m. 8 or 9 a.m. tomorrow morning. So you get a few hours of that shakeout before the FOMC announcement. And then trading through the night, we've got an SNB rate decision, Swiss National Bank. That, in the term of, the pecking order of what central banks are interesting, that one usually not top of the radar, but, with their rates remaining ultra low, I think they're at 0%. Any sort of guidance. Right now we have some sensitivity to, the big headline of what's expected in 2026. We'll get that for the U.S. As well tomorrow, with now traders pricing in less cuts in 2026, even though a cut for tomorrow is very well priced in. That's what we'll be looking at, very forward looking from tomorrow's meeting. Similar story in that Swiss franc, which that one back near its highs of a recent range, been a pretty solid range there of around 150 pips, 0.81 Swiss francs, the high there per $1 US in recent months. So we'll see if we get some dollar strength in the next days, but a lot of idiosyncratic opportunity on some of those events when you're trading not only the US dollar, but some of these other currencies and their crosses. So unfortunate for you in the short term on trying to call some of that yen weakness back.
Yeah, that one
doesn't look like that'll happen.
Getting a little painful
today, tomorrow.
You getting a little painful here?
Yeah, I don't like the yen. Not a big fan of the yen.
That one is tough because not only are you waiting around for that to come back in your favor, but you're locking up a little bit more capital there with those 5% margin requirements. So if you are trading,
well, he's got unlimited cash over.
That usually helps.
Much. Yeah. Big shot now. Trading silver futures like crazy over there. He's just winging FX. He does everything. Nothing the man can't do.
I mean, you got very large screens in front of you, so sure he's got.
If we do have very large
18 windows, you got your trade.
Need more. The more screens, the better the trader.
Obviously.
Yeah, we only have 2.
You got your robots going for you.
No, not yet.
Ding, ding.
All right, my friend. Are you done?
Yeah, good stuff out of you.
Good job. A lot of stuff out of you, by the
more?
way. Which is nice.
I don't have more.
No more? That's it?
Are you going to be on tomorrow for
Pencils
any
down.
of the shows for
Yes, I'll be on with Mike and Jamal. Is Mike back?
I believe so.
Okay, hope so.
You
Otherwise,
don't know if your BF is back or not?
Might have another day, jet lag, all that stuff. I mean, it's all the way on the other side of the world. So
I forgot who I was talking to.
Oh, yes. Hardest working man.
I got
hot as that.
Travel days.
I didn't go to the
Travel
bathroom for 25 years.
3 years. 3 years I didn't go to the bathroom.
I've sat in that
3
chair.
years.
You got a little operation going on there. It's very small.
Long urethra. What it comes down to.
And your earpiece, very comfortable. Thank you.
I'm very comfortable. Very comfortable. All right, listen. I'm going to take a quick 90-second break from you guys. And
we're breaking from you too.
And your travel days. Even the S&Ps just caught a bid. They're up 7 and change. This is about as high as I've seen them for the day. I know they got up to 68. NASDAQ up 11. Russell up 9. Dow up 106. Volatility in by 17 cents. Bonds only up 3 ticks. Trading 115.23 on the high, closer to the lows of 115.02. Bitcoin, as you pointed out, son, 93,000 caught a bid here. That's near its highs. Ethereum caught a bid also, up 3.5%. That's $111. Oil down 60 cents. Gold up 18. And silver, which is really what you care about, 60.5, trading near its highs. We'll take a quick 90-second break. You want the market probably to maintain this move for a little bit and silver to reverse in the next hour or so, if you can make that happen.
Yeah.
I'll call my
Unless you
guys.
know somebody that got a couple 1,000 ounces of silver, I might need some collateral.
We're going to take a quick 90-second break and come back. We got more Tasty Live with, Liz and Jenny next. Peace.
Peace.
At Tasty Live, we live and breathe the markets. But when the live show's over, are we out of breath? If you want to inhale the latest breaking market news, we've got you covered. The Tasty Live research team and on-air personalities post refreshing content updated daily covering earnings, economic reports, trade ideas, and much more. If you want a breath of fresh air and not stale takes, visit the News and Insights tab at tastylive.com.
Tasty Trade's Money Match event. Unlock 30 days commission-free trading. Plus a 1% cash match on all qualifying deposits to jumpstart your trading when you open and fund a new Tasty Trade account. Level up your trading experience with active trader mode, smart order tracking, risk analysis tools, dynamic watch lists, and more. The Money Match event starts now, exclusive to new Tasty Trade customers.
Feel like your wardrobe is missing something? Like style, purpose, and maybe a dancing dog? Can I pet that dog? The new Tasty Trade and Tasty Live web store is now live. New merch, bold designs. Did we mention all net proceeds go to one tail at a time? Invest in the real bull market, dogs. Go to tastytrade.threadless.com. Grab some gear and help some pups. You get merch, they get a home.
Grow a strong community with Tasty Trade's referral program. When your friend joins Tasty Trade, you'll both receive $100. As your community grows, you get more bonuses. The referral program runs through December 31st. Only at Tasty Trade.
Tasty Trade's active trader interface makes futures markets your arena. Built for the bold, not the board. Trade CME futures with a single click. From micro contracts to major ideas. And go even further with futures options. Tasty Trade lays out multiple ladders and charts for total visibility. Plus, hundreds of built-in indicators for traders who want a broader view. Tasty Trade, pro-level tools, intuitive design, total control.
Got trader's block? We've got the cure. Get data-driven trade ideas with Cherry Picks, our weekly newsletter that gives you insights into the market. Sign up at tastylive.com/newsletters.
Hello, everybody, and welcome to the Liz and Jenny Show. I'm Jenny Andrews. This beautiful blonde is Liz Deerking, and it is a pretty quiet Tuesday in the markets here.
It is. Well, you know what? We got something going on tomorrow, Jenny. What do you think it is?
Everyone's waiting for the interest rate announcement.
I mean, it's a done. I think it's. I mean, once again, we are not economists. It's a done deal for the interest rate. I think what they're waiting for is to see what's happening going forward.
What they're going to say, and it's funny because I've been.
Nothing is a done deal. Nothing is a done deal. I shouldn't say that, but it's
yeah. Everyone's waiting to hear them speak tomorrow, and there's inflated volatility in tomorrow's options. This morning at 8:30 when the market opened, we went to put on the SPX calendar, 0-day, 1-day calendar that I've been putting on every day, and every day it's around $7. Today it was $14. It was double the price. Instead of $700 for the 0-day, 1-day SPX calendar, it was $1,400, and that is only because tomorrow there's a lot of juice in those options because of that announcement.
There are, and that is what will happen, right? So when you think about it from that perspective, today is going to roll off. So today shouldn't be affected by anything,
right?
And then that's going to keep its wings up.
Right. So, today are usual prices. Tomorrow, inflated vol. And I guess we could even look at, you could look at the 0-day volatility versus the 1-day volatility in SPX.
You know what? We can.
Do you even see a big difference?
You can. Let's here. Hold on.
Yeah.
Let's go. Let's jump in the platform. I've got it pulled up because we're in SPX, and this is what we're referring to right here. So you've got 15% implied volatility. No. Hold on one second though. I just need to say something because when I had TP on 2, he says the 0 DTEs have an already inflated volatility because they have to have. So this is what he was saying. So it's kind of misleading, this 15% implied volatility, because these options way down here have to have a bid and an offer, and that's what keeps the implied volatility for the 0 days up inflated.
So if you change open interest to implied volatility, and we just look at the at-the-monies,
where's implied
volatility
Oh,
down? Yeah, right there. So you look at the at-the-monies, it's not 15, it's 12.
Correct.
Yes.
So that's why, and that's what TP was talking about with this 15. I just wanted to be clear because 15 to 17 isn't glaringly obvious, but the 0 DTE options have to have some volatility because there has to be a bid in
there has to be something in those like
down here. Take a look at this.
Options.
Take a look at I think this is a good assessment. Let's take a look at the 6800s. Okay, 6800s. It's 40 cents. Okay.
Yeah, we're $60 away. It's a 3 delta.
Yes, and then if I'm going to go to the 6800s here, it's $7.40.
Well, and you can see that implied volatility is just a 17. It's close to, it's just what its actual volatility is. But in the 0 day, that implied volatility of that level is like a 30, close to a 30, because
it's got to, and that's what that's what inflates this number right here. So
right? Or how was that? Go back to.
I wanted to keep you.
Go back to that 6800. Oh, it's like a 21. Yeah, 21, but much higher than the at the money, which is a 12. So when you talk about a calendar, and I'm selling the at the money 0 day, buying the 1 day, I'm selling a 12. You'd be selling a 12, but then buying a 16 because of the interest rate announcement priced into those 1 day options.
Yes.
So it was expensive today. I didn't do it. Liz did it.
I did.
Where? Oh, you don't. You're not in your account.
Not my account. I did, but I mean, when SPOOs, I bought it when SPOOs were almost unchanged. I can't imagine. It was up about $300 when I sat in my seat today. I mean, I don't know. It's probably wrapped around there.
And $300 would be over 20%.
Yeah.
But you didn't have any desire to close it.
I don't have a closing order for it. I don't know what to do with those calendars. I don't know what to do because in my mind I keep being like, I want the call for tomorrow, and that's the dumbest thing that you can do as a trader.
It's hard to say like I want this profit target out of them. I mean, I did a back test on 10% or 20%. Those both worked. But yesterday I had one that was 30 SPOO points away, or 30 or 35 SPOO points away at 230 when I looked at it, and that I thought would be a full loss. I paid $700 for it. I was able to close it for about $300. So it was only a $400 loss. Less of a loss than my put spread. My put spread that I sold in SPX was a bigger loss than that calendar was. And I wouldn't think that would be the case. I wasn't sure how that would go.
I mean, I wasn't sure either. Now, granted, I do think today's a different day because the juice in these. But I just went to something that was $30 down. So where are we trading right now? I'm in, I went to the the 6830s, and it's $13. The rest are $14. I mean, they're all, I mean, I don't consider that a big price. No. I don't consider that a big difference.
No, I'm saying at the end of the day.
It still had stuff, yes.
You put the calendar on, and at the end of the day, I thought it would be close to a full loss. It wasn't. There was still, but that's because that 1 day is still going to have juice in it because of the interest rate announcement. Yeah. That's kind of an anomaly. Like today's kind of an anomaly. So you're still going to, so maybe it was a good day to do it.
I do like those calendars.
I know, I do.
So, but that's just it. I'm not going to look at prices anymore. I mean, my husband's going to love this. That's my New Year's resolution. I'm not looking at prices for anything. I'm just going to buy it.
Just going to buy it. Oh my gosh, were you listening to Tony and Nick today? And Tony was talking about, and just the way it came out. He's like, I've always encouraged people to like spend more. You know, when you look at that house, spend more. When you're looking at this, spend more. Like push yourself, spend more. And that's.
I was like the exact opposite. I think he's trying to say never, like, always be getting better, but that's not, don't buy a bigger house. That's the dumbest thing I've ever heard.
I mean, I don't know what to say. I don't, but it was funny.
Take that loan out.
Right. I would remember our first houses, and people are shocked nowadays when they hear it. The young ones at work, like my first house was $147,000. Your first house was like $150,000.
Yeah. Yep. And our mortgages were like 19%.
Oh, I remember my mortgage payment was probably like $1,400 a month or something.
Yeah,
because the interest rates were so high.
Interest rates were so high.
Yeah,
That's correct.
Yeah, interest rates were so high.
Yeah.
So funny.
Okay, but Jenny, today we have let's set up expectations, right? Today is day 2 of the 12 days of trading, which we're very excited about.
Talking about IRAs.
We are going to be taking live tweets with the hashtag LIZJNY. And Jack Tucker, I'm sorry we didn't get to you yesterday, and we appreciate you watching and posting everything. So he is watching, ladies and gentlemen.
We'll let the boys know because we're your number one fan, and so are they. They are your big fans too.
They're huge fans of it, which is pretty fun.
They are.
Then we are also going to, we have Kai study we're going to go over, and I actually like looking at that because I like looking at the SPX. That's my favorite thing is the SPX move yesterday versus today.
All right. Well, this week's got to be kind of inflated because of the interest rate.
Yeah.
So
we'll see.
How did our yesterday we put in a TLT Zebra? We got a little bit of a bump in bonds, right?
$24, Jenny. So let's take a look at TLT.
Only up. It's not up much at all now. It was up a little earlier.
So let's take a look at. I just want to look at ZB just because we did this as a proxy for ZB.
It was trading 114.
Oh, it was in the 14 handle.
Yesterday.
Yeah, that was crazy when it was in the 14 handle. Now it's back in the 15 handle.
And can we see Ellie? I just want to see if live cattle continues this run. And I'm not going to look at it anymore. Today's the last day. The last day, but does it it does. Go to the chart. This thing has been on a tear.
It's back, baby.
Live cattle.
You should have taken delivery of all these live cattle.
I don't know. Does the rise in live cattle have to do with has anything to do with the rising beef prices? Probably.
Are beef prices rising?
Yeah, haven't you heard it in the news?
No, what news do you watch?
No, I'm serious. It's all over the news. It's all over the news. It's all. It is. I don't listen to the news. They're all talking about the beef prices for sure. Anyway, we're gonna change. We're gonna go into something else right now. We never got filled. Yesterday we were working a trade in Disney. We didn't get filled on.
There's some things that I want to manage real quick though, if that's okay.
Okay, sure. Go ahead.
So then, before we jump into something new, let's take a look at something that we might be able to take off.
Okay.
Just assessment, no real reason. Bloom Energy, we put it on yesterday. We have $50 and it's 12%. Part of me says take that off.
Yeah, 12% overnight. Right. Yeah, go ahead. This was a Jeet Strangle. And did that much vol come out of it overnight? It doesn't look like Bloom Energy is up.
I think it had a little bit of a pop yesterday after we put it on. I think when we put it on, it was down.
I want to look at. I'm going to read you the strikes of the strangle, and I want you to look at the strangle price. See if everything came out and the whole strangle. Could
All right,
come up.
let's look.
Okay,
I'm going
back. I'm going back to the strangle, and I'll give you the strike. So it was the 80 put.
Okay, we're in the same 80 put.
80 put. Okay, and then if I could find it.
The 80 put, Bloom Energy was up a little bit.
It was like the 80 put and the 180 call. It was $100 wide. 80 put, 180 call I was looking at, and that was both of them together. Why do you only have one? Yeah, it was about that.
Yeah, I know Bloom Energy was down a lot more when we put this on because it was out of the way. But yes, we're going to close this.
Okay.
Well, we're working in order to close it. If we get filled, great. If not, no big deal.
Sure.
Okay, $40.
Okay, $50. Circle. What do we have going on in Circle?
Circle, I just took a look at this because it's got 10 days left. It is just a put spread, the 75-85 put spread, and we are at 40% with 10 days left to go. I'm going to cancel this.
And we have been in that trade for 27 days.
Yes.
27 days. So let's just take our win in Circle.
Okay, and that gave us back more than the Bloom Energy is going to give us back. Mm-hmm. Okay, ETHA. Let's take a look at this one. ETHA is the.
That gave us back. It was defined risk put spread.
It was $10
wide.
Yeah. And Bloom Energy was only using 800.
Yeah.
That's the only reason they gave us back so much. Okay, ETHA, let's break this down into its easiest parts. Here is an iron this is going to hit immediately. So this is.
Oh, yeah, look at that.
Here, I'm going to go in to show, it's just easier to see for me. And if it's easier for me when I'm controlling, that's what we're going to do. So I'm going to go I'm going to go to here. So here's a zebra, and then this is a jade lizard type component right here, where we have the 30-31 put spread, and we have the 23-19 put spread. Okay, so I think that our GTC on this is going to get hit because I'm going to change it right now.
Go ahead. So far today we got out of. Hold on, it looks like an IBIT GTC hit at 8:30 this morning.
Oh, there's a real possibility because there's no IBIT in here. Bitcoin is up today. So let's take a look at Bitcoin, which they all go with it. So Bitcoin's up 3%. It's at 93. That's pretty good.
That is good.
This morning when I opened it up, it was at 90, and my account was really taking a turn.
Okay, so I'm pushing everything out to the follow page, and that's where I noticed the IBIT order.
There we go. IBIT got hit at 8:31.26, right? So IBIT Circle we closed, Bloom Energy we closed, ETHA we closed our Iron Condor there. I do want to make sure we're still in things, so maybe readjust that.
We had a working order in for the Iron Condor, and the reason we set that up is because we had done that Zebra and maybe done the Iron Condor before or after, I don't remember, but just to keep separated of like, this is one trade, this is another.
And there was 50% on the Iron Condor, which is great.
Oh,
okay,
yeah, good.
What I want to do here is, this is what I was trying to get to, is in ETHA, we have the 2022 Zebra. Now, granted, there are 10 days left, but let's take a look at this, Jenny, because you can either take this out in time or ratchet it up. And I
so
looked
this
at the
is a good lesson on the ratchet. Can you go to the positions? Now, I'm glad we have just this Zebra.
Here, I'm going to get rid of our closed orders.
Okay, so here's the 2022 Zebra. We put it on when ETHA was trading 22. We know that because we sell the 50 Delta. So this 2022 Zebra, 19 days ago, ETHA was trading 22. That's when we put it on. We paid $4 for it.
We paid $4 for this? Okay, so then take a look at this. So if it was trading 22 and it's trading 24.83, we should be making around, I don't know, 200, 270, 280. That's exactly what we're making. So it has done its job. It is a stock replacement strategy that uses less capital.
It is working just like 100 shares of stock, but there's 100 shares of ETHA that used $400. Now we have 672 tied up in this. How do we take some of that risk off?
Okay, let's close this. What I was going to say, here's option A. Now, granted, I know we have 10 days left, but you can sell a 50 Delta. You just ratchet it up where you're going 50 Delta, 70 Delta. Change those. We're taking in $4. We'd have this on for free.
I do not do Zebras 10 days or less.
But we always did this. Because it's ETHA and IBIT, we do everything nearer term.
No. I never do a Zebra less than 10 days because then it can, if ETHA goes down, it can like work against you because you can be losing double because you're long two, short one, and you don't have, normally if it goes to your long strike, you've got that inflation and extrinsic value that can help you, but when you're getting very close to expiration, that doesn't help you anymore.
Okay, then here's option B.
You got to move it out in time.
No, watch this. You don't have to move it out in time because you could just go with this. You could take in $4, be long one option.
Sure, and give up 37 cents.
And give up 37 cents.
So take off the Zebra, replace it with one long call, so we're still long 100 shares of ETHA.
We are near term. We're always near term in ETHA and IBIT. So that's why I don't mind being in the 10-day, but to your point, I understand what you're saying if you're going to ratchet it up.
Or let's see. Let's take a look at the chart. Or do we want to just take off that Zebra / long call and sell put spreads or jade lizards or something else?
It's not bad. That's what I was saying. When I wanted to manage this because I don't think we should leave it. That's the one thing I don't want to do in ETHA is leave it.
No,
right?
we shouldn't leave it.
So we're going to do something. So I don't mind if we wanted to continue having this unlimited upside potential through the announcement. We could just, take it and go. Even if you wanted to do this, you're still getting 320.
I don't give up 37 cents. Look,
you can
it's
give
up
up
$1.18 today. I don't mind giving up 37 cents and having very little risk in the trade. So we're still long, like synthetically long 100 shares of ETHA, but we have very little risk.
I mean, what did we pay for this? Our trade price was $4. I'm going to try to see if we can get it on for free.
What if you try to, I'm curious, what we could take in if we move the Zebra out to December 31st, to the end of the year.
To the end of the year.
To the end of the year, to let our crypto run.
There is no, you can go January 1st. January 2nd.
January 2nd.
Or December 26th.
Yeah, let's just see, let's extend it a little bit and see what we can take in.
So I went January 2nd just to see. So I'm going to go 50 Delta.
Yeah.
50 Delta, 70 Delta.
Sell 150, buy 270.
You're taking in $3.
$3, and now we've got this going until January.
That's the winner. I didn't expect that. I expected to actually be to do it for a wash almost.
I wasn't sure, but I would rather, because here now if it falls to 23, that 23 will get a boost. Yeah, and
extrinsic value. That makes sense. All right, we're shipping this. Now it's a little wide, so I'm going to take it down to 290.
That's
we're
fine.
Still taking in.
So this is called the ratchet. So we're basically moving the Zebra out in time, collecting almost $3. We paid $4 for this original position, and we're taking in $3. So technically, we have $1 in risk of our original outlay of capital.
If it drops down to the 23, that will have extrinsic value.
It's really, 14.
It's really hard to get.
I thought if the market was going to do anything today, it might be a little heavy, trying to inspire more of a interest rate cut.
Okay, we got a 279.
Or more of a talk of interest rate cuts.
It's already cutting.
No, I did no. Just I thought if sometimes I thought maybe if the market were down a little bit, it would scare them into being oh yeah, we better say we're going to be cutting interest rates.
I don't know. I think it's going to go. I think we're going up into December. I mean, once again, I believe in Santa Claus. It is the 12 days of trading. I believe in the Santa Claus is just going to go straight up from here. Who's with me? I'm just kidding. The guy walking by, just see him. I was like, I believe in Santa Claus.
Yes. All right. So now
the next person that walks by, I'm going to ask if they believe in Santa Claus rally. That's all I'm going to ask them. That's what we're going to. That's how we're going to get these traders.
I'm going to push that ratchet out. Can you go to the analysis page so people can see what our position looks like?
I can. Hold on, I gotta go. Let me figure out how to get to the analysis page.
It's so nuts because like today is so quiet, and tomorrow will probably be quiet too.
And for our show, it will be.
Yeah.
Okay, this is what it looks like. We are controlling 100 shares, and this is what I love. This is a good segment into our IRAs, which we will talk about tomorrow on what we
today
can
and
trade.
Tomorrow. We're gonna after this.
We're gonna talk about what we can trade in an IRA tomorrow, but we're gonna talk about IRAs a little bit today. But right now, we are controlling 100 shares of ETHA, which is the Ethereum ETF. Brian, if you're watching, my brother.
Oh. I didn't know who.
He's like, this is what I got from him the other day. This is what I get from my brother, and I love him. I mean, I'm glad he's like one of our like people on the show because he doesn't watch. He's like, Liz, you got to look into this for me. They're thinking about putting together these ETFs that are going to hold cryptos. I was like, really? He's like, and this one's legit, and I forget which one it was.
This one's legit.
This one's legit. And I was like, yeah, there's hundreds of them, and they're all legit. And he goes, this one's going to be traded on the stock market. And I was like,
oh my gosh.
Oh my God. What am I supposed to do with him?
Here's what I like about ETHA and IBIT. There's a couple things that I didn't realize at first. And I like being long, having just like the actual coins too. But if you're in these ETFs, let's say I have a tastytrade account, and if you're in these ETFs, it's part of your account. It's held as this account value. And if you are in a Bitcoin or Ethereum in those actual coins, it's held at another. It's not like held, that money's not held in this account, and it's held. Who do we use for the Bitcoin and
Zero Hash? And we should not be speaking about this because what are you talking about?
No, because like so. Let's say you have, let's say you're trying to get portfolio margin, you're trying to keep portfolio margin, you're in the range of portfolio margin.
That's where you're going from with this.
Yeah.
I got it.
So to maintain portfolio margin, I think you need to maintain $150,000 in your tastytrade account. But then if you have like
Bitcoin,
50,000 or 100,000 in like Bitcoin and Ethereum over at Zero Hash, then that
takes away. It's in your net lick, but it's taken away from like.
It's in your net lick, but it's not in that like portfolio margin balance you need to have.
Does FX get pulled out too? I think it does.
FX gets pulled out too.
Yeah.
So like you have to have in your Tasty account. So I switched all mine to Ethereum and IBIT just to maintain that level.
I get it.
To me, that made sense.
Okay, that makes sense. I didn't know where you were going. I was like, stop talking about this because there's something we don't know about where everything gets held. I see what you're saying.
Because as far as like if you need, and that's another, we're going to talk about that another day.
Oh, yeah. That's on our docket.
We're talking about portfolio margin. I don't know if that's on the 12 days of Christmas.
I hope so, because that's the gift that keeps on giving. Okay, but hold on. I just want to finish, put this to bed. So we are controlling. Okay. Keep in mind now, we have ratcheted up. So for 24 days, or however many days until January 2nd, I can't remember right now, 24.
How many days till January 2nd? Because that's the day I get on my cruise.
24 days! Come on.
Do you get on your cruise January 2nd?
January 1st. I'll be on already. Okay, but so in 24 days, we ratcheted it up, so we paid $4. We collected $280, $292, whatever. So for $120, I feel like I'm a salesman right now. For $120, we are controlling 100 shares of ETHA for the next 24 days.
Right. That's the money we have outlaid into this position. Now
watch. But if I was going to buy 100 shares of ETHA, it's going to, in a margin account, it's going to cost me $1,800.
The margin is so high because it's a $24 product. So typical margin would be 50%, $1,200. It's using $1,800. It's higher on these cryptos.
It is higher on the cryptos.
It's a wild ride trading cryptos.
Hold on, I'm just trying to go to the stock.
Did you hear Nick talking about like all these, or maybe it was Vanetta, a survey of all, it was Vanetta in the news, like a survey of all these young guys who instead of putting money in the IRA, they've got all their money in crypto.
That was in the news that I heard. Nothing about beef prices. I heard that before.
No, not their news. Beef prices.
I heard that from Bloomberg this morning too, that kind of news.
I don't know if I heard that from Vanetta. I heard that from Vanetta.
This is the stock my brother told me to look into.
XXI.
Yes.
21 Capital.
They're doing a Bitcoin stock.
Or is this like a MSTR or something? I have
no idea.
Or is this like another SBET? Because I can't.
Exactly. That's what
I don't know.
But this one's legit, so just
Okay, so we heard. Remember the day of the.
I like when you lower your voice. What's happening?
Well, because I don't want them to hear. So there was the day that the water spilled. We had the mop, the cleanup, and now we hear these are going to be illegal. We're not going to be able to have our drinks.
Jenny dropped her drink, and now we can't have them.
And
Are
I'm
you
gonna
happy?
tell you
this
that-
is why we can't have nice things, Jenny. This is why we can't. This is why we can't have nice things.
So it's 10:21, 21 minutes into this hour-long show, and I've already almost drank my whole cup.
This is why we can't have nice things.
What's
she drops
gonna-
it once, and Matthew informed
They're
us
taking
that
it
they're
away.
taking away our
Taking
cups.
away our drinks. So I don't know if you heard that, boys, but 21 minutes into the hour-long show, and I've already almost drank my whole cup.
I don't know if you want a gold star for that. I don't exactly
I'm
know.
just saying, when they take it away, I'm going to do the second half of the show like...
She's going to be... So thirsty.
All right. What do we have next?
So we do have to jump into our IRA segment, Jenny. Let's talk about that first. We're going to spend the next 3 to 4 minutes talking about IRAs.
On the second day of Christmas.
Oh yeah, on the
'Cause this is
second
the
day of trading, my traders gave to me
the ability to trade in an IRA. Okay, let's jump right in. Are you ready?
Know what? We're gonna come up with a song for the next one. Yeah, hit it.
I'm not a singer. So
Clearly. Just kidding. Okay.
Are you ready?
I'm ready. I'm ready. Hit it.
Are you going to jump into... There we go. There we go.
Okay, so I went to the Tasty website because I just want to show what kind of IRA accounts that you can do. I have transferred. It was very easy to transfer my old IRA that I've had from... Do you know what's funny? My IRA was from Anderson Consulting.
Yeah, not to exist anymore.
Not to exist anymore, which is now Accenture. But so and that kind of followed, and I wasn't trading it, and then I transferred it. Very easy to do. But here, on the Tasty website, we have traditional Roth IRAs, SEP IRAs, beneficiary traditional, and beneficiary Roth.
So lots of choices here. What I think is so great about Tasty, it gives you the ability to have an IRA and be an active trader in it.
I'm an active trader in mine, and we're going to talk a little bit about that tomorrow. I very actively traded in mine to the point where I make sure that every penny is at use.
Oh, yeah, right. So, and you're using options smarter to do more, and I don't want to say like to get more leverage, but just to do...
Oh, I get it for leverage.
Just to be smarter about having your money in an IRA, because I'll tell you a story. In 2004, my son was born. I left the trading floor. Right before my son was born, I left the trading floor, threw some money, like whatever money I had built up in my SEP IRA from the trading floor. It was just sitting there. And I didn't do anything with it. And in 2011, when we started Tasty Trade, I went to go find that and say, I'm going to move this into
something to trade, right?
Into something to trade. Yeah, move this into something where I can actively trade, where I could, sell calls or do spreads or whatever, actively trade it. And when I went and found that account, because I swear, I probably never looked at it from 2004 to 2011. That wouldn't surprise you, would it?
No, that would not surprise me at all with you.
Because I don't open my mail. So from 2004 to 2011, it was less in 2011 than it was last time I looked at it in 2004, because it rode through the 2008 debacle. And
you're like the Gen Pop that we talk about all the time. People that don't know what their accounts are doing because they get statements quarterly and don't open them.
Don't open them, right, right. So thank God we have the ability to actively manage an IRA. That's all. That's my point.
I agree. And actually it's fun to actively manage your IRA. So it is, it's easy, it's fun, and there's so many things you can do. And actually Jenny and I are, I'm not saying we used to have an entire IRA segment on it.
Oh, we did. We did have an IRA segment. What was it called?
Trading in your IRA.
Clever. We are very
got
creative.
real creative with the names. Trading in your IRA. And that was when our shows were segmented. We used to have 15-minute halves, and then all of a sudden they said we can't take breaks anymore, so now we're all one blended segment.
That happened during COVID.
That happened during COVID.
Yeah, we used to have 15-minute segments with commercial breaks.
They took away our commercial breaks.
They took away our commercial breaks. Now they're taking away our drinks. What's next, Liz? What's next?
They've never given it back. Yeah, so we used
Just
to
don't take away our lighting.
We used to have a traditional IRA segment, and it was fun. Like, I liked it. But a lot of times what you're looking at us doing here, and I'm going to make a conscious effort in 2026, Jenny, to talk about if you're putting it into an IRA or not. So if we're selling naked puts, I wouldn't be doing that in my IRA. I'm spreading it off.
Doing something different.
Because there's always a way. There's always a way to do something in the IRA. And actually, if you understand how to be a tasty trader, you can actively trade in your IRA because you know how to make it.
Oh yeah, for sure. So tomorrow we're going to be looking at actual trade ideas for your IRA. Today is just the,
Today's just the teaser.
The setup of like why it's important to have an IRA that you can actively trade in. So that's it, Liz. Hit it. On the second day of Christmas,
my true love gave to me. Oh, my trader gave to me.
On the second day of trading.
On the second day of trading, the traders gave to me
the ability to trade in my IRA.
Ta-da! Tomorrow's going to be amazing. Just wait. It's going to be amazing.
All right.
Okay, now let's go to, just because we're right here, Jenny, let's transfer this good segment into Twitter. I want to talk about today's potential earnings plays. But that being said, Bob, we appreciate you. Bob on Fire, we love you. And we're going to look at these. But these two fools are on last call. So we're going to put a pin in that.
Oh, I forgot.
I know. That's why I'm saying it out loud so you remember.
You're lucky you reminded me or I wouldn't have shown up. You would have been on last call by yourself.
Yeah. And today's going to be one of the only days I'm going to be in the office and you're going to be in a remote studio.
Yeah, that's fine.
I'm not a fan.
Unless my train's late.
It's not fine because the lighting in the studio, my lighting at home is better than the lighting in the studio.
Oh, it's fine. We're gonna be on last call, so we'll put a pin in these earnings trades.
Yes, we're gonna put a pin. So thank you. And let me make sure we're getting. Okay, there we go.
Okay, Lulu. What is he doing? Short strangle. Hey, what do you think about a strangle in Lulu?
So, I am immediately thinking about the product.
Strangle. It sounded like a good idea because we have this old commercial where we're like, strangle Lulu. Sounded like a good idea.
It does sound like a good idea.
Let's take a look at it. So he's got the...
here's one product I'm not afraid to sell calls in because who was a Lululemon addict, and my husband called it my uniform, have veered.
To what brand now?
Alo.
Oh, really?
Alo. And the other athleisure wear I like is Aritzia.
Hey, my sweater I wore yesterday, Aritzia. My favorite sweater.
I know. I walked out of Vegas with bags and bags from Aritzia. Uh-huh. Took all my winnings. Took all my winnings.
Whoa, hold on, miss. I only go with the carry-on.
It all fit in the carry-on.
How'd you get all your stuff home?
I had a husband with a carry-on that was empty as well.
All right, so
but it's clothes. You can roll clothes up. It's not like I bought a basketball.
What strikes is he using here? I'm trying to take a look.
You keep the strikes up. You look on your Twitter, and I'm going to go
30, January 16th.
You keep it up.
Strangle Lulu.
January 16th, 150, 230. So let's take a look at this. He's getting three. He's pretty symmetrical, and I like this from a G.
$7, just like the $7 in Bloom Energy yesterday.
Just like the Bloom Energy, right? So here you're using $1,800 to get 7. I am less afraid of the call side in Lulu.
Right, since she wears Alo now. I can't believe it. What about your jackets though? Your zip-up jackets?
Vinegar smell.
It's clean.
That's it.
I think. Again, there are vents above us. The fumes come out. One day we're gonna fall off the chair.
We'll find the source. I know we might.
Okay.
Now
you're not afraid of calls in Lulu.
Only because naked calls in Lulu, but only because we are talking about IRAs. Mm-hmm. So this is something that
you could make a synthetic strangle.
You can do in your IRA, but you can always make a synthetic strangle.
Yeah, you can always make a synthetic strangle, but sometimes you could get yourself into using more buying power than the actual trade. Yeah, let's just do $10 wide, 150, 140.
But that's not bad. Now I usually like to get $3 on this. 38 days. It's not bad.
I don't know. This is why I'm a big fan of naked options versus spreads because we were going to gain $7, now we're getting $2.
How about
$3? $3. I mean, G'll be long gone out of his strangle, and we'll still be holding this thing.
Hold the phone.
We'll be holding this thing. And then it'll be 10 days to expiration.
Jenny, hold please. We are missing some key information.
What?
I was like, why is Lulu a 73 rank? They have earnings in 2 days. What's the date today?
He said that in the tweet.
I didn't read that. So I'm not going to put on a strangle in a January option 2 days before.
He said it in the tweet. They've got earnings.
Did you just read it silently in your head?
Yeah.
While I was.
Yeah, I did.
So that's one thing I don't want to do. We'll do it on the 11th because today's the 9th.
Today's the 9th.
Yeah. So Lulu, Ajit,
Oh
we're gonna,
man,
we're
hold
gonna
on.
put
I'm
a
gonna
pin in
go.
that.
I'm going to full screen because we have a special. We have a. There's everybody. Brace yourself. There goes Doc Hollywood. Mr. Hollywood, Trader Hollywood. There he goes.
Yeah, what's funny is you can see that way. I have no idea what's coming, but I assume it. But I assume it by the look in her eye.
I mean, he comes by every Tuesday and Wednesday.
Shoot,
between
I was
10
going to
and
ask
11.
somebody, and he would have answered.
What?
Do you believe in Santa Claus rally?
Oh yeah, let's
Some
ask
people
him when he
don't.
comes. He
I'm
doesn't have a
only-
mic though. We're gonna
No,
get in big
no,
trouble.
no. I don't want a mic. I just want to hear, like, and I'll yell it to people.
And if he knocks our water off again,
Matthew's going to tackle him. Do you know how awesome, Matthew, there's $100 in it if somebody comes by us and you tackle them on camera.
no, I'm not going to have anyone come over here without having prep them earlier.
Without her
because
sippy
if
cup.
they knock over my water, I'm still blamed. I'm still waiting on my fine.
Oh, I was trying to get her fined. I asked every floor official to fine her.
Yeah.
No one would do it.
So I'm not doing it.
They said the first one's free. The second one.
All right, so Bob's list. Yesterday,
Hold on,
Liz,
we got Ajit.
Yeah,
Got
you
Bob's
can see
list.
him. If you go back to Ajit, he mentions the earnings. You can see earnings 12.11. He doesn't care.
That kind of slid in there.
He doesn't care. You know what you're going to get, Ajit? If I have one in this pocket. Oh yeah. Certified badass card.
Certified badass option trader. Did you give one to Ajit when you met him?
I don't know. You know who?
Hold on, I'm asking Ben. Ben, do you believe in the Santa Claus rally? That's all you got to say.
Hold on.
You know, you don't have to come on camera. Do you believe in the Santa Claus rally?
Yes.
Yes. First trader believes in the Santa Claus rally.
Yep, Santa Claus rally.
I hope so.
You heard it here first. Everybody that I know their name, I'm going to ask them on the way by.
I hope so. Here comes another guy. These people are going to kill us. Here, do you believe in the Santa Claus rally?
Whoa, what's going on?
Do you believe? No, you don't have to be. But do you believe in the Santa Claus rally?
Oh, for sure.
Yeah,
For
good.
sure.
Two for two. We're 2 for 2.
Everyone believes in the Santa Claus rally. Everyone believes in the Santa Claus rally. So far. So far.
So far, we're 2 for 2. So the person I asked was right there. When he was off camera.
With the American flag.
Yeah.
Okay, so let's go back. Let's go back into the platform.
Platform?
Sure.
We have a
Let's go
Kai
back.
study, too. What time is it? It's 33. Okay.
Okay.
So we're in the platform. Oh, do you believe in the Santa Claus rally?
Hold on. He won't come on
You don't
camera.
have to, we won't even put you on.
He's shaking his head. Won't give us an answer.
Hollywood, do you believe in the Santa Claus rally?
Hollywood, come here. We're taking a survey.
No, you don't have to talk into it. You just have to smile. We just need to see your face.
We're taking a survey. Do you, yes or no, thumbs up, thumbs down,
Yes.
do you believe in the Santa Claus rally?
For sure.
Yes.
For sure.
It's a real thing.
We're 3 for 3. Yes,
It's a real
that's
thing.
what we're
And
doing.
do you think it happens leading up to Christmas or after, or like?
I would say like the week before I always see
Yeah. You
always see.
something like that. I think so.
Santa Claus
Okay.
rally. That's
I
right.
think it's a real thing.
You heard
All
it
right.
here first, ladies and gentlemen. All traders believe in Santa Claus.
Well, let's get long, Liz. Someone wanted us to go over a Delta Buster, but let's get long.
Let's get long. Yeah. Let's get long. Let's get long Disney, because the magic is real.
Oh, yeah. All right. Getting on my Disney cruise January 2nd.
Okay. If we were going to get long Disney for the Santa Claus magic,
Well, let's get long. Let's put in a long SPY position for the Santa Claus rally. Okay. But we will put in a Disney trade too. Sure.
okay. So SPY.
Yeah,
Santa
let's
Claus
get long.
rally. Let's go December. Ooh, you know what? I think that there's a toss-up. I mean, I'm never going to go against the traders because we're 3 for 3 with people believing in Santa Claus.
Yeah.
But I'm going to go January 9th because if it is the week after as well, because some people believe.
No, but I think it goes till.
Some people believe the Santa Claus rally is the week between Christmas and New Year's.
Yeah, I know, because that would just get you to January 1st.
Fine, we'll go to January 2nd.
Yeah, go to January 2nd. January 2nd. Go to January 2nd. Let's do the opposite of a Delta Buster, where we buy a call spread and
So hold
sell
on. I'm going to sell a $10 wide put spread. I just want to see.
Okay.
I'm just going to play with some strikes right here.
Okay.
I'm selling a $10 wide put spread.
328.
Okay. So and then I'm going to buy.
No, but like we want our calls. Usually we start our buy. Maybe we just need to do.
Hold on. I'm gonna play with strikes. I'm gonna go.
See, the reason that Delta Buster works is it takes advantage of this skew. Where here, this isn't going to.
Well, look at this. I got an idea. We're spending 4 84 on this, okay?
Okay.
And then I'm gonna go down and I'm gonna do, we're gonna get real creative. 70, but I'm gonna do 2 of them.
2 put spreads. Yeah, see, you're not getting enough.
No, you're not getting
because
anything.
of skew, like it doesn't work. We have to come up with a different bullish trade. So a different bullish trade would be
is going to be
a the
diagonal.
Buffer.
Oh, the buffer?
Diagonal. Maybe.
SPY is a $685 product. If we did the buffer, we'd have to buy something. You could do that in an IRA.
Yeah, like a buffer where you buy something, or we could do it in XSP. A buffer. I don't know if there's any like premium in XSP to do a buffer.
Let's go to January 2nd. So buffer trade. Let's talk about that.
Yeah, there is. There's
There's
definitely
plenty of premium. Okay, buffer trade. You start with buying the put debit spread. I'm going to go to the expected move. Let's see what we can do here. Actually, you know what I'm going to do? I just want to keep it symmetrical. We're $15 wide, so we can make $15 on this, right? So
and it's costing $377. No.
Yeah, I bought that. You buy the put spread.
But you don't know how much you can make on it until you sell the put for $378.
No. I'm just. I know it's $15. All I'm saying is it's $15 wide. It'll give us $15 in protection.
In room to the downside.
Yes. And then I'm going to try to find a call that is going to be.
Why is it getting busy?
Wrapped around
Squeeze
there.
up 15.
Yes, squeeze her up.
It's just there got to be like a little bit of a rumble back there.
Okay, so. We start with buying the put spread. We have $377 in debit. Now, granted, I know I'm a little bit underneath. There will be a little bit of room to be wrong here. So you try to find a call that's got that much extrinsic value, which brings us to $399. I'm actually going to pay a little bit for this. I'm going to $700. Okay.
I don't know, and I know I said this thinking it would use less buying power, but it's not. It's not. 12,000. So we just go back to SPY. Start this over again.
Well, we're going to have to make it smaller because we're going to buy something.
I wonder how much buying power it would use. It would be too big for us.
I'm going to make it smaller, so we're going to get $10.
$10 wide.
$10 wide. It was $15 in the other one, but we've got to make it smaller.
And then instead of selling a put that's $330, sell one that's $430, so we have $1 to buy something.
So I'm keeping numbers the same. So $695, okay? So
we have like $1.10 to buy something, which is going to make this super wide.
No, but I don't mind paying a little bit for this.
Yeah.
So let's go.
Pay $250. I don't know.
I'm going to pay $250 for it.
And see.
It's $2,000.
That's not bad.
This isn't bad.
That's not bad.
So let's take this to the curve view.
We're going to have a little bit of a loss.
Yeah, I'm okay with that. Okay.
So here we go. All right. Now.
How do I zoom in on this? Up here?
That's what I wanted to try to do. Yeah, that plus.
This thing, right?
Yeah. Hit the plus. There we go.
There
we go.
Okay.
So
here, this loss is $120. That's fine. Like, we're willing to give up something.
Yeah, that's fine. Like, if it falls between $675 and $685, we lose.
And the reason we're losing that much is because of the one we purchased. The one we purchased was $250 instead of $1. That's why it's $1.27 in between there.
Now we have that $2,000 risk to the downside, but to the upside, how much can we make? $873.
It's not bad.
It's not bad. This is if we believe in Santa Claus rally, and so far
we're 3 for 3. Oh, 4 for 4. Jeff just nodded his head, Frank. He did not.
4 for 4.
He did not verbally answer, so we can't accept him. I don't know if he believes in Santa or not. He might be getting coal.
But we're 4 for 4 on the Santa Claus rally.
Yeah.
Yeah. Do we do it?
Oh, I forgot to ask Tim. He's on the phone.
He's on the phone.
He's on the phone.
Okay, do we want to risk 2,300? If we want to risk less, we would tighten up. We would bring up our long put. See that long put? Just drag it up a little bit. If we wanted to risk just like $1,500. Bring it up till we're risking $1,500 and see how our loss changes at that one area. And if the loss is getting too big, we'll say,
I don't like it.
What's the loss now in the middle?
192, $200.
That's not bad. That's not bad.
We can make $800 still. That's not bad.
No, it's not bad. It's not a bad looking P&L if you want a bullish trade. It's not giving you room to be wrong.
It's not giving us any room to be wrong. That's what I'm saying.
But
that's
neither is the other one.
But I also think, okay, so conceptually great. Like, I think the buffer's a great idea. But looking at this, I think I want something different.
Let's look at the diagonal where our short call is at the.
Yeah, that's what I'm saying. There's so many other things that we could do.
At January 2nd. So our short call is at the January 2nd.
So the short is going to be at the
expected move. You're only getting $2 for it.
That's fine. So we're getting $2 for it, and then I'm going to bring the long call to Let's go.
We're going to pay way too much for it. You're going to be paying $22,000 for it.
Where is
right? You have to go further out in time.
So ALO thinks that it's going to go the week between Christmas and New Year's. So I'm going to do this.
No, your long call has to be after. You're going the wrong way.
I'm going the wrong way.
You're going the wrong way.
So let's do it backwards then. So let's do. Hold on. You're going the wrong. Good reference.
You have to go.
So let's do this. He thinks it's going to be the week between Christmas and New Year's. So I'm going to sell this, and then I'm going to buy this. It's $7.
$6.80. It's only $15 wide. So it's the
not
same
bad.
profit potential.
It's the same profit potential.
So,
we're using $700 to do it.
Same profit potential.
You can't look at this on the curve analysis view, though. It doesn't really work.
I mean,
it's the same profit potential.
Yeah, you have the same profit potential, but the difference here is like before we said we have no room to be wrong. Here you don't have any room to be wrong. It needs to go up to break even at expiration because we're paying $9 extrinsic value in the one we're buying, and we're only getting $2 extrinsic value.
Right. I'm not trying to say I like one over the other, but I am going to say you also have a sale in between.
Right. You do have a sale in between.
Santa Claus rally.
And we're only risking $7.70.
I'm pushing that button because I believe in Santa.
It's a diagonal. It is a diagonal. You see how it was a little bit of a struggle to come up with, because you can't just do a reverse Delta Buster.
No, you can't.
I mean, we might have been best off with a zebra, honestly.
Yeah, but that's going to be very expensive. If you're going to do a zebra, hold on, I'm just
in the January 2nd cycle.
Because we can always, once you put a trade on, you can always take it off. Okay, January 2nd, you're going to be selling 150 Delta, buying 270 Deltas. It's going to be very expensive, Jenny.
Yeah, $3,000.
Yeah, I mean, it's still, when I say very expensive, it's still cheaper than going out and buying SPY. But if you believe in Santa and you want to put up $2,834 to be long SPY through there, it's way better than going out and buying SPY.
$2,800, it's not that bad.
$2,800.
No, it's not.
Write that down on your popsicle.
That on my note. It's not bad.
That's not bad, but not for this account. And we trade with handcuffs on this account, and that's okay.
All right. So what
once
are you
again,
pushing through?
So to Jenny's point, we put that on. But if you wanted to control it through the end of the year, you can use $2,800, or you're going to go out and use $34,000 in a margin account. That's insane.
I know.
That's why
to buy 100 shares.
Zebras for the win. Okay, so that's the SPY that went through.
Okay,
now
that's it's pushed out on the fellow page. It's pushed up 10. I mean, Jack Tucker, Eric, everyone who sold a lot of premium, great. So far, it should be working, and maybe you're already out.
They might already be out.
I made a terrible mistake this morning. Well, it wasn't that big of a deal. Wasn't that big
a little dramatic.
Wasn't that big of a deal, but I was looking at the calendars. They were so expensive today. I said, forget it. I'm just going to sell put spreads.
New Year's resolution? Don't care what the price of things are.
But I said, I'm just going to sell put spreads. And because I was looking at the calendars, I sold my put spreads. And I thought, geez, I'm getting a lot of money for these put spreads. I sold them all in tomorrow's, in the one day.
Yeah.
So then...
forget it is what she said, and then she closed out of it.
All right, what's next? Do you want to get to Kai's?
Let's do it. No, we're going to do, I'm not saying an abbreviated version of Kai's study. Hold on, where is it? Oh, there
it is. There it is. Options Jive.
So they went through this yesterday. Let's get to the. We're going to go through. This is a quiet week with the U.S. Treasury. We know that's going to happen. So this is the Fed meeting is December 9th. So tomorrow.
I mean, today is the 8th. Tomorrow's the 9th, but the report comes out tomorrow, right? I mean, that's what the options pricing is telling us.
We hope so.
That's what the pricing is telling us. Otherwise, that calendar would have been super cheap instead of super expensive.
Yeah.
Yeah. Options don't lie, Liz.
Options don't lie. Okay.
Options
so
don't
this
lie.
is the index weekly performance. That's great. Here's what I wanted to get to.
When you say you're going to speed through this, I never saw it yesterday.
I didn't either, but you've seen it all. Look at this. Green, 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 green.
Well,
you are all green. Hippie, do you believe in the Santa Claus rally? Do you believe in the Santa Claus rally?
No.
We got one no. One trader that doesn't believe in Santa.
But honestly, if they were all standing here, if all 5 of them were standing here,
I would have said hippie was a yes.
I don't know. And you said, Jenny, pick one of these guys that doesn't believe in the Santa Claus rally.
All the hype's over.
All right. There you go.
Fair enough.
Hype's
there
over.
He
said hype's over.
Hype's over.
Hype's over.
I don't believe that to be true. And you know what? we're going to get them all hyped up because there's going to be a Santa Claus rally.
I don't know, Liz. If you go back and spy, I keep having
Debbie Downer over here. What are you going to say next?
Well, I keep having, sometimes I have these dreams or premonitions, and
we don't want to hear about your dreams.
December 2018, is it? December 2018. Can you go to December 2018?
Nope. No.
Just go to spy. Do me a favor. Do me a favor. Go to spy and go to December 2018.
Not going to do it.
I'm going to do it. I'm going to look it up myself. I'm going to look it up myself.
Nope. Not going to do it.
All right, you could go ahead with your research corner, and I'm going to look it up because for some reason I keep having flashbacks.
This is all I wanted to do. I wanted to get to this before we go to December. So
go ahead.
The SPX, I want to see what the weekly move is. So the weekly move, when you've got implied volatility, Jenny, take a look at this and then I will. The weekly move, so your implied, the VIX is 15.4, but your weekly move is higher than it was when the VIX was 16.3.
Shocking.
That's what I wanted to show you. Okay.
Yeah.
But now I want to see where the move is, so we'll go to SPX.
Okay, so
oh, sorry.
So I'm just saying, you go to SPY and you go to December of 2018.
Can I go to SPX because we're already in it anyway?
Yeah, sure.
Okay.
Sure. And you go back, go to the chart. You go to the chart and scroll back to 2018. You'll see it.
It's gonna take forever.
No, it's not. There it is. There it is. Okay, and see what day this. Go to today. Go to like December 10th. Today we're at December 9th. So there, okay, and look, what if we have a repeat of this, that was today, and look at the move from December 10th to the end of the year.
But I don't think history repeats itself.
No, I'm just saying, for some reason, I keep having these flashbacks of December 2018.
That means I'm going to buy everything I can. I'm fading Jenny Andrews.
I don't know why.
Well, it's because everything's so inflated. I know why, because everything is so inflated. Now, granted, it didn't feel inflated here because this is why this is the rat trap we all got caught in December 18, because it went from highs of this all the way down to here, which means implied volatility was higher, which means everyone, and I mean everyone, got caught, every tasty trader, because as it fell, we were loading up. That's why this hurts worse than anything else.
Yeah, can you remember this?
Yes, because it went from, I do remember, it went from, 2,900 all the way down to here, right? So it was choppy through here. Vol was high. So because Vol was high, we had sold premium. And then when you sold premium, a lot of times there's puts involved. And with those puts, when the market crashes, you feel a little bit of pain.
Isn't it weird how your brain works? How we're like, oh yeah, we're coming up on these days, and I keep getting these like flashbacks of 2018.
But I feel like you say this every Christmas.
I don't know.
I feel like you do. We can take it to the tape.
Line me up with those guys. Do you believe in the Santa Claus rally?
No.
Not really. Not really. I don't know.
No, it is funny because you don't know when it comes. Like Chris Veio says after Christmas, but then is it a Santa Claus rally? It's a New Year's rally.
Yeah, then it's like shopping numbers are
then
in
it's
rally.
I'm cleaning up my account and I'm trying to.
Right. I'm not sure. I don't know.
So Frank wants me back. Carl, do you believe in the Santa Claus rally?
He doesn't know.
He doesn't even know. So we've got
Santa
4
Claus
yeses.
rally.
Frank, I asked your clerk, and he doesn't know.
The Santa Claus rally. No, he doesn't.
Oh, we got another no. So we got 4 yeses, 2 no's.
Yeah.
4 yeses, 2 no's.
We'll keep telling.
Because they cut rates every December?
And he says because they cut rates every December. So that spurs the Santa Claus rally. On this December, then that makes sense. It all started right around the rate cut time. Like, did they not cut rates? Did they raise rates? Like, what happened this year?
Was
this when like QE was ending?
I think so.
Yeah.
Quantitative easing. I'm just going to give you all what the acronyms mean.
You got an econ star, Liz.
All right, back to the study. So we're back to the study. So look at this. You've got the VIX, the week of 12.8 to 15.4 VIX, and it's higher than that right now. Where's the VIX?
VIX right now. Wait for it, 1654. It's actually down on the day now. 1654.
Okay, so then here, major asset IVRs and the way that they're moving. Natural gas is still high, but natural gas has pulled back a little bit, but that pendulum swings in both directions.
Wait. Tell me again. So natural gas IVR is up 65.
No.
65% is what it is.
It's what it is. It's just up. So that's what I'm saying. When I saw this, I almost fell off my chair when I was on this.
I feel like Kai needs to clarify this.
I don't know. I think everybody else probably got it because 65% increase in IVR.
A 2% in bonds, that's nothing. That's why the zebra we put on was so cheap in TLT.
Yeah. Yeah.
Which you would think, like, that's kind of crazy. Why is there no premium in bonds with the announcement?
You know what had a huge move today? Silver. So, the natural...
Oh, I know. Because my silver
gold
gold pair, which was winning yesterday, is losing today.
Oh, let's take a look at it. Let's pop in.
Well, we got out of ours.
No, I just want to look at the silver move. That is a big
yeah.
move.
Let's throw that silver gold pair back on.
Yeah, I think that makes sense. So
Okay.
I'm gonna look at gold too. Well, it was 14-2, silver to gold.
Yeah, so that pair, which we've been into and out of, it's in a good spot right now to put it on. So I can tell you a ratio.
It's 14-2. Well, I want to go to the pairs trade. Pairs. Jenny, look at this. I can't get it to go. Watch this.
You gotta go to the table page.
I know. I keep hitting pairs and it keeps taking me to crypto.
Go to the position page. Go back. Go like chart, back, trade. There it is. It's right there. It's up. Hold it up.
It was just above the crypto. Okay. So
silver.
It was 2 gold to 14 silver.
Is that right?
Yeah. You can look at our history if you want to. I mean, it might be different now, but it was.
So let me take a look at my calculator. So if I do 2 shares of gold, which is 314 times 2 is 628, divided by the price of silver.
54.86.
Divided by 54.86, you're getting 11 shares of silver.
Oh, it was 14. Watch this though. I'll pop it out.
11 Hello. We got 11 shares of silver to 2 shares of gold.
Sylvie, all symbols. Watch this.
That's just what it is now.
I know,
Silver's
it's changed. That's what I'm saying. I just want to show that it was. I believe it was. It was 14. It used to be 14-2.
Well,
It's gone up that much?
Okay, I'm just going to do the math again. And we're just doing notional to notional. Notional to notional. 387.
Because it was 16.
83.
So look at this. If you go for 60 days, it was 16, 16, 16. Then the one time we did it was 14. Now it's 11.
Times 2. So
I'm going
2
12.
shares of... No, listen. 2 shares of gold. You do notional to notional. 2 shares
Yeah.
of gold, 775. Divided by the price of silver, divided by 54.86 is...
14.
14.
Yeah. I don't know what you were doing before.
I guess I hit the wrong button on my calculator. 14.
Okay, so 14-2.
Okay.
And this is the chart we're doing it on. Oh, that's a
No,
weird
you
chart.
got to click the 1 month.
There we go.
There we go. See, it's at another extreme again.
Yes.
Load it up.
Okay, so 14-2. This is costing us
$772.
Yeah,
Not
I'm
bad.
sending it.
Send that. And I thought of you got to get in and out of these quickly because it
Yeah.
seems to be that pair keeps moving. It's
I was like, you got to be kidding me. It went down by that much. Silver went up by that
I must
much.
have hit the wrong button on my calculator.
Okay, so push that through. We did the silver gold.
Okay.
Let's kind of talk about what we did because we have a minute left of this
We
show.
do?
Yes. All symbols today. So we put back on the silver gold ratio. We put on a bullish trade, a bullish diagonal and SPY. We took our ETHA zebra and took it from December to the 24-day. Then we closed our ETHA iron condor, closed our Bloom energy for a profit, closed our circle for a profit, and our IBIT GTC hit.
Okay.
So anything else that we want to manage?
I can't believe we have 2 minutes left. This was the fastest. We say fastest hour of the day. This really was the fastest hour of the day. All right, everything is out. Silver, gold.
There's like a low rumble going on back there.
I know. There's a little bit of action happening. Everything's pushed out on the follow page.
Okay.
So that's it.
I want to see what the VIX is doing. We have 1 more minute. I just want to see what the VIX is doing right now.
And I feel bad if we didn't get to everyone on Twitter.
Oh, I'll go to it real quick.
Steve Jones came in. Florida 7 came in. Jenny, did you empty out your TT0 hash and place those funds in IBIT shares? Yeah, and IBIT is marginable. And IBIT is, yeah, I did. I did move my stuff from Bitcoin into IBIT. I did.
You know what, Ash? We will bring back a weekly IRA segment.
I love this idea and didn't watch back then. Sure. Yeah, a good idea. Maybe we'll bring back commercials too and segments.
Yeah, we
50-minute
will.
segments. Get commercials. We'll bring it all back.
And then Steve Jones, the lid comes loose on the cup you're using. Search for a spill-proof drink container on Amazon and Google spill-proof drink container.
You know what? If this is what they have here. They have this amazing drink machine, which my husband asked, what do I want for my 50th birthday?
I priced it out. It's too expensive for me
the
to buy.
The bevy machine, how much is it?
I'm kidding. I didn't price it out.
The bevy machine. So they've got these cups next to the bevy machine, and if they don't want us using these cups, put different cups out there.
Oh, Florida 7.
I'll bring one.
And I feel
I'll
like Florida 7 might be on the payroll, because listen to this one. The money you have in Bitcoin also affects your minimum requirement for PDT. If the money you have in Bitcoin brings your remaining net liquidity to less than 25K, you're subject to PDT rules.
These are just things to be aware of.
Florida 7 is so good at this, though. He's the one who called me and TP out on what we were saying.
Yeah,
I love
so again,
it.
these aren't like, oh, do this, not that. Just things to be aware of. Things to be aware of.
Yes, I agree. All right, well, thank you very much.
All right, we're out of time. We're out of time. We're getting the hook. We have to go do a photo shoot. Just Those will be exciting pictures when they come out.
All right, and I'll be in the studio for last call, so send us your assumptions too. They need them for tomorrow.
Oh, yes. Everyone, have a wonderful day. Remember to trade small, trade often.
Laugh with us, learn with us, and watch the Liz and Jenny show. We'll see you back here tomorrow.
We'll see you at last call tonight.
Oh, yeah.
Today.
Oh, yeah.
2:30.
Don't forget.
I won't. Bye, everybody.
Look who's back testing. tastytrade now has options back testing for free. Test your trades with over 10 years of data for the most popular symbols. See how your trades would have performed in the past. Look back at profit and loss and take the guess out of guesswork. Oh, did we mention that it's free? Get back testing at tastytrade.
tastytrade is now on TradingView. Trade stocks and futures directly on TradingView charts with tastytrade's low commissions. Try it out and leave us a review.
Global markets never sleep. Explore them with Forex, now available on tastytrade. Get in on over 80 Forex pairs, 24 hours a day, 5 days a week, with the Forex platform that adapts to your style and speed. FX marks the spot. Trade it on tastytrade.
tastytrade has crypto, and you can trade with zero commissions. Bitcoin, Ethereum, Litecoin, and more. Diversify in one place. Crypto, we got it, we get it.
tastytrade's active trader interface makes futures markets your arena. Built for the bold, not the board. Trade CME futures with a single click. From micro contracts to major ideas. And go even further with futures options. tastytrade lays out multiple ladders and charts for total visibility. Plus, hundreds of built-in indicators for traders who want a broader view. tastytrade, pro-level tools, intuitive design, total control.
Grow a strong community with tastytrade's referral program. When your friend joins tastytrade, you'll both receive $100. As your community grows, you get more bonuses. The referral program runs through December 31st, only at tastytrade.
What's up, everyone? Welcome back to the show. This is Options Trading Concepts Live. My name is Mike. I'm here with Jamal and, of course, Thomas, as it is Thomas Tuesday on this green-ish day here.
Hey, look, he's back, but come on. You're back. That's just the story here. That's the story here. You're back, man.
We're back.
Can I get a round of applause? You're back.
We're back. It feels good. Thank you. Feels good to be back. The portfolio has gained some monies back before close some positions today. But yeah, it looks like the market's back to all-time highs pretty much.
We needed you. We needed you to return. I mean, dude. Give us some highlights or something. I mean, give us some highlights.
Well, so I was in Japan. For those that do not know, it's an amazing spot, amazing culture. You can go to rotary sushi places, and the sushi quality is like Nobu. Like it's just there's nothing that compares to it. So if you're a sushi person, Japan is the best place ever. Also ramen, endless amazing ramen. One of the best parts about it though is like you just walk everywhere. So you're hitting like 20K steps a day. So you can just do whatever you want. You can eat, drink like all day, and you're just fine. Like,
and their food's not that heavy anyway.
No. But yeah, it's all about nourishing the community. Everyone, like Thomas said before the show, they just find their craft and then they master the craft, and like that permeates through all of the culture in Japan. Very proud country. There's like no garbage cans anywhere, but there's nothing on the streets.
Yeah,
it's absolutely spotless. So, yeah, I will be back for sure. Probably 2 years from now.
The chat's going nuts. Happy you're back. I mean, konnichiwa. I mean, the whole nine, dude. Like
the whole nine.
That was so. Wait, it was crazy though because there's the earthquake that happened right before you left. I mean, wild. Did that affect your flight at all?
So we actually had already taken off. We were in the air, and then a bunch of us that were on the trip like turned our phones on, and everyone was like, "Are you okay? What's happening?" And we're like, "What are you talking about? We're just chilling on the flight." And then we had to look it up. But yeah, that was crazy. Apparently you could feel it in Tokyo, but I think it affected the northeast region mostly. But yeah, now they're on tsunami watch, which is always scary.
Yeah.
But yeah, fortunately it did not affect us. We were out. But
deal.
And I don't think there's anything scarier than a tsunami. Like, if you're just on the beach, you look at your phone, tsunami warning, just start sprinting to high ground.
Yeah, seeing the videos and stuff like that, I know it looks super scary. I remember, God, when was that Fukushima? Was that 2011? I remember.
Some crazy videos.
Yeah, and again, I always bring this up, like, I hope you don't think I bring these things up in regards to trading because that's the first thing I think about. It's just that's what alerted me to it. And so, yeah, that was one of the crazier things to watch the reaction from markets when that happened. In Japan, of course, it really affected, the stock market. It was so crazy how that happened. But yeah, it brought a lot of crazy volatility. Trading at that time was wild.
Yeah, it's a good point.
Yeah, it's hopefully everything will be good there. But
hopefully,
yeah, it's always a rude awakening when you come back. Because I take the blue line from O'Hare, and the public transportation in Japan is just unmatched. Like not even the bullet train, the actual like L's can't feel a thing when you're on them. Yeah. Everything's perfect. I immediately just like getting jolted around on the blue line. Some dude was smoking cigs inside. I'm like, you gotta be kidding me. This is insane. But,
funny.
Yeah, happy to be back.
Nice.
But yeah, markets appear to have recovered. Like literally almost all the way, almost back at all-time highs. I did close some positions this morning. Closed a UAL position for a $100 winner, and then closed a what was it? Palantir? No. Yes, Palantir and UAL. So just getting rid of positions that were near expiration, trying to get rid of these Jan or D's positions, and just open up the playbook for new stuff coming through.
I just closed a bunch of stuff actually before the show. I had been debating for a while what to do, and I just decided to close a lot of the Delta Buster trades that I've had on Tesla January Qs, and they were all January. So that's actually the main reason why I did it. I mean, they're all kind of in the middle of the short put spread and the long call spread. But because it's January, I don't know. I've had these on for a while, and because it's January, because we got this event coming up, I just felt like all of a sudden I was going to find myself in a situation where for some reason we fall back down towards the end of the year, and then I'd be stuck. And I was like, let me just close these now. If I'm wrong and the market keeps going up, that's fine. I got a couple of more in February, and I'll just, we'll be good. So that's what I did. Close some long deltas today.
Beautiful. Beautiful.
But of course, I added some more. I added a Netflix because, again, this is something I don't know if you've seen much about. There's been the Netflix deal, and then there's the back and forth between Netflix and Skydance now, and Netflix stock has struggled as a result. So I added a March Delta Buster there. I already have a Feb one, and then I just literally added one in CR CoreWeave as we started the show here, literally just a little bit ago. So that's what it is.
Yeah, I did see the deal with Netflix. I apparently need to watch the Diddy doc.
Yes, I did watch it.
I that was like the last thing I saw when I was leaving was that.
I didn't know we were going to go here today. But yes.
It was like the headline of the day where like the Diddy doc overtook Stranger Things for the #1 spot. I'm like, you gotta be kidding me with this. But
it's fascinating.
I'm sure.
Fascinating. Yeah.
And I will definitely be watching that for sure.
Yeah, that's my era, guys. I know. I mean, I know majority of the stuff in that. There's a few things that I don't know. It's interesting. So, yeah, it's fascinating.
Because it goes back like.
Oh, it goes back to like 1990, 91, 89. It's
crazy.
Yeah.
Absolutely nuts. But yeah, it seems as though the markets are, sitting near highs and volatility in the teens. Maybe we get a little blast off mode for Christmas for everyone, all the bulls out there.
It's there to be had. Honestly, it feels like it. I mean, this could result in a solid 150 points higher over the next 3 weeks, I feel. Easily get to 7,000, but who knows?
Wouldn't be surprised if we hit it. Bitcoin, though, catching a bid as we talk. It was only up, 1,200, 1,300. It's catching a bid right now. So seeing a nice boost up almost to 95K in the Bitcoin futures, well above the recent high that we've seen over the past couple of days. But in terms of other futures products that are moving, I know we're going to look at the WASD report that hit the wire 8 minutes ago. Get a live look at it. But natural gas moving to the downside, down almost 3%. A lot of other products actually moving to the downside as well. You look at heating oil, you look at crude oil, lots of movement to the downside. And then, of course, to the upside, Ethereum, silver, Bitcoin, platinum, gold, looks like precious metals and precious crypto moving to the upside over a bunch over 1%, but a lot of them up 8%. Ethereum, big move to the upside. Silver up 4%. So seeing some movement here in the afternoon.
What has been cemented to me, I feel like, over the last couple of weeks is that the same money is trading Bitcoin and AI-related stocks. I mean, I think that's pretty obvious at this point, especially when you see a day like today. The other thing that cracks me up is, like, people are funny. Traders are funny, man. I mean, nobody wanted to touch Bitcoin at 89, 88, but everybody all today I'm seeing all over Twitter, Bitcoin has reclaimed 94. Like, what the hell does 94 matter about anything? But all of a sudden it means something. So,
yeah,
I don't know.
It's the narrative.
This is why I put on the MicroStrategies trade. This is why.
There you go.
Find the most hated stock at any given time and put out a trade about 3 months out and see how it plays out.
Yeah, MicroStrategy up 7% right now.
Loving it.
But yeah, I mean, this is one that dropped below 200 and then hit the floor near 150, which is crazy to think about. But would not be surprised to see this recover if Bitcoin continues to recover in a quick fashion. I think that's the catalyst for MicroStrategy. You need some continuation here to the upside in Bitcoin with some big gaps higher. But yeah, if you want to join us on the YouTube channel, we are streaming live there. You can pop over to the Tasty Live YouTube channel, put your trade ideas, questions along the right-hand side chat. It is IRA account day for the 12 days of trading. So if you want to check out the link I just posted in the YouTube chat, check out some more info on IRAs. especially at Tasty, you can do a lot of different option strategies with IRA accounts or IRAs. I always forget to leave the account off because IRA has the account in there.
True. Yeah.
But yeah, check it out. If you don't have an IRA with us, plenty of flexibility there.
You guys. So I actually have an IRA account with us. I hear him tell the story, but like, so when I was at SIBO, I had SIBO stock, and when I left, I actually like closed out the stock and just rolled whatever I had in that into an IRA account here. Arguably, I think I've lost on that trade because if you look at SIBO stock where I closed it and where it is now, it's actually way higher. But whatever. I actually moved that into this account because that's when I learned that you can do all these different option strategies in an IRA account. I didn't know you could do it. I didn't know that was a thing. And again, we have such smart people here who were able to figure that out with regulators, et cetera. But that's actually when I talk about my long-term account, that's usually the account I'm talking about. It's my IRA account.
Love it.
So for the people who hear about that, that's what it is.
Yeah. I think from a strategy flexibility standpoint, Tasty IRA accounts are definitely, I just did it again, IRA accounts. We're definitely up there in terms of flexibility. But, I mean, that's kind of the MO with us anyways.
Yeah, I mean, getting the extra income generation from doing things like selling covered calls and whatnot, I mean, it doesn't even really take too much time if you're doing them like 1-2 months out. You can go in your IRA, you know, if the stock keeps rising, just keep, you know, increasing that price by the same amount. That's what I've done with a lot of stocks, like things like AT&T that already pay a dividend. You're just generating a little extra. You know, and if the stock goes up enough and you lose it, you know, you can wait for a pullback, always buy back in again.
Heck yeah.
Love to see it. Yeah. Why don't we pop over to the slides if we can and take a little look at what's going on today. December WASD. Are the grains moving right now? Looks like.
Corn is. Corn is. Corn up about, where is it now? Up about 0.7%. Had a nice little reaction. The others, wheat is down, and soybeans are down even more. So soybeans, some weakness. Soybeans going through their 50-day SMA right now. I've been in corn. I'm long corn, so this is a good move for me. I am also long the soybeans via short put spread at 510, 520. So I'll be fine keeping that on. You know, so I was positioned long going into these. And the WASD report is one thing. It's been coming out amid the government shutdown, but other things like I think there was a grain stocks report we missed and some things. So if I remember correctly, this WASD, only the demand estimates changed. The supply estimates have not changed this one. So really, if I'm looking at the numbers right now, because this report just came out 14 minutes ago, you know, we could first let me explain the chart right here really quick. You know, corn, soybeans, wheat, this is ending stocks for 25-26 marketing year. The blue dot is the average estimate, and that bar you see is the range of estimates. So the lowest analyst is, you know, the bottom bar. The highest estimate from one analyst is the top bar. So a pretty wide range on soybeans and wheat. They're a little tighter on corn. But what happened with corn, and it looks like corn was really the only one changed for the ending stocks. Corn, you know, last month we had 2.15 billion for those, the million of bushels. So 2.15 in billions. In this one, it lowered to 2.02 billion. So it's even below the average estimate by quite a bit, under the previous month, but of course still over that previous year. And soybeans and wheat, like I said, it looks like if I'm seeing these numbers right, those ending stocks did not move at all. So soybeans remaining at 290 million bushels and wheat at 901 million bushels. So corn, you know, it makes sense that it's putting in the positive reaction here. And corn, you know, it's one of the more tradable ones right now. ZW, you know, IVR of 0. Soybeans and IVR of only 15.3. So corn, you're really getting that high IVR rank of 70. So, a lot more volatility in there. And, we're still chopping within this range. We have a pretty wide range from the November high being around 457, and then the November low being down at 434. So, if you want to do an iron condor on this, at or a little beyond or even within those prices, I think that's, one trade that could generate some good premium there. I'm going to play it, especially now I'm going to keep playing it a little more towards the long side of the trade. But, so the numbers really, soybeans and wheat, I'm guessing they're falling because it didn't give any surprise to the upside. They just stayed the same. Corn is the only number that the ending stocks really decreased on. And if we look into the report just a little bit, it says this month's corn outlook is for greater exports and lower ending stocks. Exports are raised 125 million bushels to 3.2 billion, reflecting shipments to date. Export inspection data showed robust foreign demand during November and implies total shipments during the September-November quarter will likely exceed 800 million bushels, surpassing the prior high set during 2007. So with no supply change and use rising, corn ending stocks down 125 million bushels. Season average corn price received by producers unchanged at $4 per bushel. So it looks like that foreign demand really helping drive corn exports going forward. And, I think that looks pretty bullish. I wouldn't be too confident that we exceed the prior November high anytime soon. But playing for like a rise to that range, 454, 455, I think that's what I'm looking for. But we're still getting some good strength. I mean, they're up about 0.8% right now. So, for me, this is the only thing tradable right now. I don't want to. I'm in a weak position, but if I wasn't, I'd probably stay out right now. Unless you're expecting a big drop, maybe going long a put spread. If you expect some volatility to come back or kind of a mean reversion play, because can't stay down at zero forever for wheat. I don't know. Are you guys in any grains or anything?
Just the corn, the one position when I put on last week when we were on the show, short the corn put spread, but that's it.
Yeah, I'm not in anything right now. But to your point, corn, the only one that's green compared to wheat and soybeans. But yeah, corn almost up 0.75%, where wheat and soybeans are both down. Wheat's down 0.33% and soybeans down 0.6%. So seeing some movement there.
Yeah, you go out and Thomas gets me to put on my first grains position in like 2 years.
Hey, that's how the cookie crumbles, or the corn crumbles, we could say. But yeah, the last position I had in corn was closed on the 25th of September. So yeah, I haven't been dabbling in here. We've been trying to buy some dips in there, but it's been tough sledding for sure. But yeah, some opportunities out there.
For sure.
Love to see it. Thank you for the analysis.
Yeah, of
course. Yeah, right now the only other futures positions I'm in, Natty Gas, I've got this 441 short put spread for January, the 49-day expiration. And we did see a little bit of a pop there, actually a bit of a pop there in Natty Gas, coming back down to reality over the past couple of days, but still out of the money there. It's a $100 winner. I'm going to just hold on to this, see where we go from here. Crude oil, I've got the long contract. It's a slight winner, but happy to stay in sub 60. And then M6B, I've got one contract there, just a micro British pound future contract. I believe I followed Katie into that one. And then copper futures, I've got the 6-strike calendar spread, long Feb, short Jan. So that still has plenty of time. It's a $62 winner right now, but happy to hold on to that one with so much time remaining. And that's pretty much it for my futures exposure.
Yeah, copper's hurting me today. I don't like that move.
Wait, copper?
Yeah,
big. I didn't realize that.
Yeah. I got out of Natty Gas Friday, so timed that pretty well, fortunately. I'm looking at getting back in on the March contract, which is H6. Yeah, H6. So I actually put an order in there for a short put spread at 3.5, 3.4. Yeah, it's down, the H6 contract down 2.6%. So it looks like across pretty much the whole curve prices. It looks like the weather models are shifting a little bit warmer, cold air receding further north in the northeast where a lot of that demand is concentrated. So it makes sense that, some more of the froth is coming out here. And the H6 contract, it's kind of breaking below the support that I wanted to see, which was kind of this October swing high from mid to late October there around 3.78. We're also going below the 50-day SMA. Still, there's a support trend line in there from October, and that's lining up pretty well right here, actually. So, I'm going to take a stab. The trade is risking one to make one with a 60% POP, and that's because it has that nice IVR of 61 in there. So, I'm going to try to keep slinging this to the bullish side on these pullbacks.
I like it. Yeah, it's been making higher highs, a lot of green days, some red days in there too, but trying to fill this gap that we saw early August. And yeah, still two-sided action either way. So I do like the idea, like you said, Thomas, of just buying the dip where we can. But yeah, I'm already in there synthetically with the short puts, the long call calendar spread.
Calendar, right?
Yeah.
I took mine off at some point. When did I take it off? I took it a week ago. Yeah, about a week ago.
Love it. But yeah, I'm going to pop over to the YouTube chat now, see what we got going here. Question at the bottom, do you trade futures in your IRAs? You can.
You can. I've done it at times. I used, the most recent one was silver, actually, when early October. I was trading that SIL. So yeah, I've traded SIL, I've traded MGC, but I don't do it regularly, but you certainly can. It's up to you. I try to keep that as more of a long-term account. Like I try to, like anything like 6 months and out, but sometimes it gets a little tempting to do stuff near term.
Yeah, I think sometimes if you have a high conviction idea, maybe, because you could do the micro contracts too, you could add a little bit of exposure. You want to, you feel really good with an idea, IRA, why not?
Yep.
Yeah, it's a nice thing with the Tasty IRAs is just the ability to do pretty much everything. There's obviously some restrictions, but it's not as restricted as some other things I hear where like you can only buy stock and sell covered calls, things like that. Like you can actually do a lot of different futures and option strategies in IRAs.
The only thing you can't do is make it a margin account. That's the one thing you definitely can't do.
Yeah.
Everything is, again, you sell SPY put. You're paying full freight for that.
Yeah.
Government trying to protect us from ourselves.
Yeah, for sure.
Sometimes it's a good thing. But yeah, that's why we talk about like synthetic strangles, synthetic spreads, where you can just buy an option to define the risk, technically define the risk, even if you don't believe it's going to come into play, free up all that buying power. But yeah, check them out. Yep. Japan is great. Yes, I'm also glad the earthquake did not affect us. Would have been wild. What do we got here? Any trade can someone send silver to the downside because pain?
Ooh,
yeah, that's a big move. 4%, reaching new highs, 60 in the silver futures. 55 in SLV.
Yeah.
What a time.
Yeah. Something else.
This product has doubled since the beginning of the year. which is crazy because it's silver.
It's painful missing this move because I was calling for a bullish bull flag, breakout, continue the pattern. But this
exactly
move
what it
is, it's impressive. I mean,
it's like gold, but
doing
gold's
work.
not doing it.
Yeah.
It's a catch-up trade, maybe.
Well, we were talking about this earlier on the gold-silver ratio. It's so low compared to where it was earlier this year that you'd figure, if you're looking for a reversion in that gold-silver ratio to come back up, you'd figure gold would be the one to outperform a little bit into the end of the year. But silver still has its legs, it looks like. I mean, this move, it's accelerated a lot from the start of the day.
Yeah, this is an interesting area, I would say. I think at this point, and I've talked about this the last couple of days, you could see it was kind of consolidating and looking for a breakout one way or the other. Now it's to the upside. I think it could easily go another $3 to $4. If it does that, it's going to reverse hard. So pick your poison here, I think. You could play for a little bit more upside, which I think is still there, but you got to be ready to pivot because I think it will. I would like to see it jump another $3 to $5. But if it does that, it's going to look like October of this year, and it'll reverse hard for like a day or two, I think.
Yeah. And I think when it comes to silver implied volatility, we were looking at gold earlier this year where gold had this big rip from 300 to 400 in GLD, and implied volatility wasn't really catching up. Like 20% IV into a move like that isn't necessarily reflecting the realized volatility, where silver, I think, is doing a better job of that. 63 IV rank and the actual raw implied volatility at 50% is much more reflective of what we're seeing in the realized move here in silver. So I think I would still be going with defined risk just because the move is so drastic. But just something to consider that you are getting a decent implied volatility for SLV where you really weren't getting that in GLD on a similar move to the upside. CoreWeave have rolled a put spread in Jan, the 80-70 strike. It was dumping, finally breaking even. Safety says I should take it back, but feels like I'm missing the chance to win on this trade. Thoughts?
Yeah, I had a lot going on there for a while, and I closed a lot of it out a while ago. Closed the whole position out some time back. And I'm not going to tell you what to do with your trade, but I actually just decided to get longer today for the exact reason I was talking about. I think this and Bitcoin have been traded by a lot of the same money, and I think the sentiment is starting to turn bullish now. Ryan was just on the show yesterday with his crypto update, and you could see, like, just in the near term, they were trying to find a bottom here in a lot of the cryptos. And again, I think CoreWeave was kind of lumped in that because a lot of that is high beta money. And so it looks like to me these might be turning around to the upside. So that's why I just put on a Delta Buster to the upside. I did it in Feb.
I like it.
That's how I feel about it.
Yeah. And yeah, it sucks to have a spread that's underwater, but now you're out of the money if you're short the 80-70 put spread. If you're back to break even, totally fine getting out of it, but you still are, this is still a trade that would be a fine trade to put on today if you wanted to enter a new trade. It's a, 1/3 the width in terms of collection, selling the 80-70 in January. You could also move this out to Feb or something like that. There's other ways you can defend it if you wanted to just give yourself more time. But yeah, as of right now, still a decent pop, 65% with the current position. If you're at break even, you're looking at the same credit. So not too shabby. I want to do a 45-day SPX Iron Condor, 6,500, 7,100, 100 points wide. Do you have any recommendations for this trade setup? Am I still in this thing? Yes. I'm going to close this. Maybe I'll join you. I've got the 6,450, 7,100 that we put on a couple weeks ago, almost a month ago actually, on the SIBO floor. $280 winner, more than 50%. I'm just going to close this and let's see if we can get something on. Not 100 points wide, but I could do 10 points wide, 15 points wide. We'll see. So 45 days.
Oh yeah, I feel like he asked us about this. I remember this. I remember him asking about that trade, actually.
Yeah. I think for this one, I would just either go to the Jan AM or the Jan PM. The Jan PM is going to be just as liquid as the Jan AM, but I would give up some of that time and just go to the monthly or near the monthly. It'll be a more liquid environment to trade in. But 6,500, 7,100, let's see. So you'd be outside of the expected move in a pretty big way to the downside. So you're leaning short here with this position. 7,100 gets you that nice 7,000 area if you think we'll chop around there. But yeah, leaning a little short. If I did this 10 points wide, what does this look like? Yeah. Collecting 330, risking 670, literally 1/3 the width. I'll throw this on in solidarity. Can I get 350 for it? No. Absolutely not.
Solidarity.
I'll leave it at 330 if we don't get filled there. And we're filled. 330. But yeah, for 100 points wide, going back to your question, 100 points wide would be the 6,400 put that you're buying and the 7,200 call. Yeah, it's a similar setup. I mean, you're giving up a good chunk of that premium. So it's still not a synthetic strangle in this case because SPX is such a huge product. But yeah, I think it's fine for a high probability iron condor feel, collecting a lot more than the one I just did. You'll be able to get more out of this more quickly because your short and longs have a good amount of premium difference, and your delta difference is certainly going to be much more aggressive than the one I just put on. Mine I'm probably going to have to hold for quite some time. But yeah, I don't mind this at all. And your probability of reaching max loss is significantly lower than mine because mine is like right next to my short. So there you go. It's just filled on the closing position for the old iron condor. But yeah, no notes for the 100 point wide if you want to do something like that. Smack Lovin'. If we're looking at buying upside call calendars in Adobe, AVGO, and Oracle, would you wait until after the Fed announcement tomorrow?
These are all earnings plays, right? Yeah. I mean, well, geez, that's a good question actually, because again, these are all after the close, and obviously the Fed announcement comes out in the afternoon. I mean, yeah, I would wait till tomorrow. I would wait till tomorrow afternoon. Why not? I mean, you want to wait as close as possible to, right before earnings coming out, right? Like if earnings come out in the morning, obviously you want to wait till closer to the close, and it is what it is. The reason why is because you want to choose the appropriate strikes that eventually will be affected by this calendar call, right? Like if you did it today, you have no idea where stock's going to wind up tomorrow. So yeah, just wait until closer to the close, the close, as we usually do, right?
Yeah.
Again, obviously with that event coming up, you want to be prepared.
Yeah, I think it's a good call out, and I think with call calendars and diagonals too, like diagonals, calendars more specifically, you really need that vol crush in the short option, and that's not going to happen until after the announcement. I think you can run into a lot more trouble if the market tanks tomorrow and you have it on, because now your long option is losing a ton of value and your short option at that point would lose value too. But if you get the opposite, if you get a rally up towards your short strike and your long strike, like you're not going to get paid on that until after the vol crush in the short. Mm-hmm. So yeah, I agree with Jamal. I think you wait until after, and maybe you realize if the market crashes tomorrow, maybe you realize you don't want to be in this anyways, because you might get good numbers in these products and they might just sell off anyways. Mm-hmm. We've seen that before. We've seen the opposite in a handful of names, but I think it would be it's more conservative of a decision to wait until after the Fed announcement. Even if Oracle, AVGO, Adobe rally, you're still going to be able to put your strikes at a decent spot, and you're going to be able to capture that vol collapse after the announcement. And it might even work out in your favor if you get the rally, and then like a non-move from earnings, or a smaller move from earnings. Yeah, could work out.
I think Oracle might be. It feels risky right now because the AI trade. It seems like it's on, not as confident ground as it was a couple months ago. So I mean, bad numbers. Big customer of Oracle is OpenAI. That could cascade throughout the market.
Yeah. AVGO sitting at highs, Adobe sitting near lows, Oracle right in the middle. So you've got 3 different situations, but yeah, I like going with calendar spreads or diagonal spreads. Keep that thing defined risk. That way you know exactly what you can lose going into it. Yeah, some points here. No tax losses in IRAs. Yeah, you basically just trade. No tax issues there unless you're taking money out, of course. No PDT rule in IRAs, also true. No crypto in IRAs, also true. But outside of that, everything is pretty much available if you have the permissions. Let's see. Silver would continue to 1,000. Get in now. Wow.
You saw that.
Damn.
Too funny. I know, right?
1,000.
God.
I mean, anything's possible these days. But yeah, it is crazy that it has doubled. Literally doubled from the beginning of the year. We're sitting at 26. Now we're at 54. What a move.
Again, like I said, this is a point where you got to be a little careful because, again, I think it could explode a little bit higher and then it could make a move in reverse too. And remember, silver trades overnight, so a lot can happen. Just be aware of that. So if you're setting up, trades right here, like case in point is a Delta buster, right? Like, I mean, I was trying to eye one of those up, but I mean, again, if you're selling downside to finance upside, we could see some big moves, and then all of a sudden your downside is in the money before you know it overnight. So be careful. It'd definitely be a risk to find, though, I think, at this point.
Yep. I agree that the reason people are buying metals is the reason they're not putting it into bonds. Yeah, could be something there. 90% chance we get a 25 basis point cut tomorrow, which would tell us that we're basically getting it. It's just another scenario of what does the Fed speak after the announcement is made. I think that's really where the moves can happen. In terms of SPX expected move, we've got a 50-point move, 45-point move for tomorrow. Feels light.
Pretty low. Pretty low.
Yeah, I think the market, we're baked in on this rate decision. I think Powell will stick to a pretty cautious tone in that he won't say anything that's going to really rattle the expectations for next year. And, you consider he's kind of essentially a lame duck Fed chair now. So what he says going forward has less and less bearing on the forward outlook versus, what Kevin Hassett or and I don't know, is that I don't think it's official. I think Trump just announced that he intends to name him.
That's what I don't think it's official.
Maybe they're doing that to gauge how the market reacts. Give it a few weeks, see if he's the
Wouldn't doubt it. To that point of the building on that of the expected move here. I mean, look, the last couple of trading sessions, I see. Whether you look at average true range or average daily range, I see a 9-day average true range of 65 and an average daily range of 41. Today, so far, range 28 points, 58 yesterday, 48 the day before, 44 before that, 55. So, yeah, 51 before that. I mean, it's been fairly low, which, again, means consolidation, but most of that consolidation has been higher. I think barring anything crazy happening on Wednesday and Thursday, again, markets, I think, could continue higher. I mean, just from the way we've seen more recently. So,
yeah, we've got, based on prediction markets, 90% chance that we don't get an announcement this year for the next Fed chair. But the majority of the minority probability, only 8% chance that it's Kevin Hassett, but there's still a number of people on the board. But yeah, 8% for Kevin Hassett, and the next highest is 2% for Chris Waller. So we will see. I'm sure those probabilities will shift as we get closer to the end of the year. But that is a good call out that what Jay Powell says means less moving forward as we get closer to the announcement of the who will be taking his place. So that could be translated into the SPX lack of implied volatility. Because, 50 points seems a little low given the fact that we're sitting at almost 7,000.
Yeah, and Kalshi, who will Trump nominate as Fed chair? Hassett sitting at 75%, Warsh at 11%, Bessent at 5%. And Hassett's really jumped up. He was in the lead, even versus Warsh and Bessent, about a month ago. But now he's jumped up considerably.
Yeah, the one I was looking at had the date baked into the probabilities, which is probably why it was skewed so much. But yeah, big probability that Hassett's going to be.
That's the one thing that makes me nervous about some of the prediction market stuff is the wording.
Yeah.
I would imagine you really have to pay attention to the wording because, it's one of those situations where you can get annoyed at how the outcome comes. Case in point, like 2-3 years ago, I was betting, I was doing like round robin betting in golf for finishing positions. And I didn't realize that they had within their whatever, it's called bylaws. It's almost like if somebody, I can't remember how it worked out, but I thought that I did the round robin such that I would benefit if like these positions finished. Like if I picked I can't remember how I did it, but whatever it was, the wording was such that in there, the payouts was that like if two guys tie, then basically you lose. And I was like, are you kidding me?
Yeah.
I was so mad about that.
Yeah.
But again, that's kind of how it's worded. So if you're going to be dabbling in those markets, again, it's still not regulated. There's a lot going on. Pay attention to the wording.
Yeah. I know exactly what you're talking about.
Futures.
It was probably like that someone will get fifth place or better.
Yeah, it was
something like
that.
T5. There was probably 5 people that were tied for
up.
first, and
Exactly.
then you got a fraction of your expected payout.
I somehow didn't get anything. I was so pissed. I was so mad.
And you're probably celebrating so much. They probably made a birdie putt on the 18, like get T5, and then you get nothing
I was
back.
so mad, man. I was ready to call them up, man. And then I realized nothing I can do here.
Where's the phone number for
Exactly.
Oh no. How about a 6-day, 3-day, 6,900 call calendar in SPX?
Love the idea. Already on it. Did it. Saw it in the chat. Loved it. I personally did the. What'd they say? 6,900. I actually did the 6,925, which is up against near-term highs. So that's what I did.
I think I might join you.
$3.80.
Yeah, I think this is a fun way to trade the week that something is being announced. It's basically what you're doing. You're paying $1,600 and change for the 6-day, 6,925, collecting $1,200 and change for the 3-day. The 3-day, of course, encompasses the implied volatility of the Fed announcement and a few earnings reports that we've got coming out. But yeah, when you look at the days, you've got twice the amount of days and only a 10-point difference in the implied move. So I like the idea. This will work out greatly if you get a rally towards 69.25. If it sells off, you're going to lose a lot in that 6-day. So the realized loss of $300 and change is real. But the nice thing about it is if you do get a sell-off and then you hold this Monday call option, if you get that gap higher over the weekend, you can benefit from that. But yeah, I like this. Let's throw it on. 380 debit for the long 6-day, short 3-day, 69.25. How was Japan? Japan was great. Glorious. Always is. I don't think I had one bad meal there. And, of course, the convenience store lifestyle is amazing. Like you literally walk into 7-Eleven or Family Mart or Lawson's, like those are the top 3. You walk in there, you get...
Wait, Lawson's is the name of a convenience store there?
Yeah.
That's fun. That's not what I expected.
Yeah.
Okay.
But you can get like, you need some vitamin C, there's a little vial for that. You went out the night before, here's a liver healing vial. Like they just have all these things.
Awesome.
And their food is amazing. Like you buy an egg sandwich or like a sushi roll, incredible.
Listen, man, I mean, like seriously, I talk about this all the time. You know, you look at certain, you know, the way certain people live life and how they progress through life and their ages and what they eat. I mean, that's definitely, you know, a society to follow in some regards with regards to that. I mean, seriously, like, you look great at older ages. I mean, it's amazing.
Yeah.
It seems like eating fish is one of the things.
Fish, noodles, rice.
Tea, fish, yeah.
You know?
I actually saw a stat. If you eat enough fish in your lifetime, you reduce cardiac health issues by like 90%. So
there's just a lot of things that they have that come from the sea, right?
Yeah.
You know?
And again, their whole craft is to like give you this perfect, unadulterated, like literally the egg. I had so much egg when I was there, and every single egg is like that deep orange color, the yolk, which is, you know, it's good stuff.
Oh,
like
yeah.
it's not the ultra processed stuff that we see here. But yeah, the blue line is always makes me laugh.
Welcome home.
Yeah. Welcome home. Welcome home. How about an Apple Iron Condor in Jan? You can check it out. Before the earnings announcement that is slated to be end of Jan, Iron Condor. It's not too bad. I mean, I would just go like straight to the orange bar expected move, which is going to give you a 50-50 pop here. But I would rather go with implied volatility in the 20s, Ivy rank at 2. I would rather just take more risk and get paid more if I'm right by moving these strikes in. That way, if there is a big blowout to the upside or downside, your risk is less than if you did something like a 255, 250, and a 300, 305. Like, if the blowout happens, you're risking a lot more and you're not getting paid nearly as much if there's a chop near the current price. So I think if I'm doing it, I'm just going straight to the expected move here, picking up $200, risking 300, kind of that same style of Iron Condor that we've been doing in the 0 days for SPX. Brian, yeah. We actually have a lot of Japan natives in this chat. I've seen a few.
Oh, wow.
Love it. Yeah, Family Mart. Family Mart, Egg Sando. I will miss them. Let's see. Short a Jan Netflix put ratio for 210.
Yeah, that one's been hurting people, I'm sure.
Yeah, wow. I forgot this thing split. I was like, $95.
Yeah, I know, right? So
Yeah,
it's weird
big slide.
because they came out with this deal, or this potential deal on Friday. Stock dropped, which usually means they don't like the deal. Then on Monday, Peace Guy comes out and is bidding higher, 20 billion more, and Netflix still drops. I really don't understand that. It's kind of weird to me, honestly.
Yeah, I don't know. It's interesting times for sure, but this has been a massive move from the July highs to where we are now. Kind of saw a similar thing in Chipotle after they split. Never really saw a bid in there, but I think Netflix is going to be a different story. We'll see how it transpires, but yeah, sitting at almost April recovery lows after the tariff stuff. So opportunities in there if you are looking to get bullish. But yeah, a put ratio 199 for 210 credit. Considering selling the 96-97 call ratio, and again, another call ratio, would you? If not, what's your move? I mean, I have a hard time selling into the hole here, especially if you used that put ratio to get long stock or have a long stock feel. I mean, your break even is down at like 96 where it is now with just the 199 put ratio. So if anything, I would close out of that long put spread that you have, if you're in Jan, if it's close to it, like what is this worth? 65 cents on the $100 max. So you could consider closing out of this and then just having the short put here, securing some of this value. Usually I like doing this when you have closer to $100 in max profit, because you still have 35 cents, 40 cents to make on this. So it's not a snap decision, but something to consider. But yeah, I don't really like adding the call ratio on top of it, because then you're basically killing your upside profit potential, giving up all that credit. I mean, you're collecting more credit, but you're creating an inversion, and that can get you into a neutral profit potential situation if Netflix recovers a little bit. But if your whole plan was to just roll this put perpetually until hopefully it gets back up above 100 over the next couple months, I like just sticking with that personally.
Yeah, I agree. You're adding risk if you add that particular call ratio on.
I think someone is going to buy Sono.
I was looking at that. I don't know. I mean, you look at open interest. I mean, again, it's always something interesting, but you look at open interest. There's a lot in January, but there's always a lot in January. I don't see a ton of open interest in April. And I wouldn't even bother looking out further out. So I would tend to disagree with you just because I don't see the amount of open interest. Usually when there's the idea of possible getting bought, there's a lot more open interest. And again, January doesn't count because everything has a lot of open interest in January. It's around the longest. So I don't know. I don't see it.
Yeah, I mean, maybe there's some writing on the wall with the rally we've seen. Like this is the first time I've even heard someone mention Sonos.
Yeah.
In terms of trading, but the stock price has doubled since early August. So we will see. We will see. A couple minutes left here. We are at the bottom of the chat. Yeah, Ichiran, staple. I've discovered the salt ramen, chicken salt ramen, which is it's kind of like a lighter version of ramen, but for whatever reason, I was on a light broth ramen kick. I loved it. Loved it.
God, I don't even know. I assume we have tacos for lunch today, but I don't even want that now. All this taco ramen and amazing sushi. Ugh.
We have to start getting a poll together, see if people want sushi catered. Oh, that will really kill the budget.
True.
Cater sushi for the whole office?
Yeah.
Yeah, I mean, SPX, we're in. We're in for the upside call calendar here. 69.25. I closed that other one for $280 winner, I believe, and then opened this new Iron Condor in light of the YouTube chat idea, the 6,500, 6,490, 7,100, 7,110. Any thoughts for the rest of the day here?
Wait, well, there was one more question I think we skipped. Somebody had an AMD short strangle, 195, 270. They collected 890. Would you take it off or leave it? I mean, that's a good question. Honestly, I think you always let IVR be your guide and not much more if you're really kind of worried about it. I mean, 21 IVR is a good area to take it off. These are great strikes. Trust me, it looks great. I mean, it does, 195, 270.
Yeah.
But don't forget what this name has done in recent times. Could happen again. Who knows?
Yeah. I like the strike selection because you're basically at the lows and highs of this recent trading range after the gap higher. But, yeah, I think there is movement potential for sure in these names, considering you've got a Fed announcement tomorrow. You've got some other products that are
Oracle.
Yeah, Oracle. Related products that are announcing earnings. You could definitely see sympathy moves in a product like AMD. But yeah, if you're looking to remove risk, nothing wrong with taking a $200 winner and freeing it up. I mean, it still takes up $2,200 in buying power, so it is a little bit elevated in that sense.
That's what yesterday and today are about, risk management, honestly. That's what I've done. I mean, I advise it for everybody.
Yeah, I'm for the Fed on position. I have a long call spread for MES, a little closer to the money, but to protect myself, I have a far out put spread, long put spread on RTY. So my thinking is, if the Fed projects that they have limited ability to cut rates next year, the Russell is going to be hurt a lot. And if, we get something more neutral, I see the S&P 500 grinding up a little bit. So if that's the case, I could just take off that protection RTY put, long put, take it off for a small loss since it'll only be a couple days, and then, ride out the MES position. But I have that far out in price RTY put spread to, if the market goes just plunging, I'll be pay out nicely there.
Love it.
There it is.
Love it. Well, that is it for us. Thanks for tuning in. If you got any further questions, you can find us on Twitter. I'm at Trader Mikey B. Jamal is at Jamal Chandler, and Thomas is at FX Westwater. Stay tuned. We got plenty more content coming your way on the YouTube channel as well as tastylive.com. Click the link at the top of the YouTube chat. Check out the IRA options, not IRA accounts, IRA options that are available. Lots of strategy flexibility at Tasty, so check that out. We'll see if the Bitcoin move can hold here. Love to see it for the bulls. And we'll be back same time, same place, 11 a.m. Central tomorrow. We'll see you then. Peace.
Your crypto needs a wallet. And crypto is better when it's tasty. You can now do more with your digital currencies with the Tasty Crypto app. We're proud to offer a self-custody wallet for Bitcoin, Ethereum, and Polygon. Transfer your digital tokens directly in-app and access thousands of tokens available only on-chain. Your wallet is your key to decentralized finance. Download the Tasty Crypto app and get started today.
Look who's back testing. tastytrade now has options back testing for free. Test your trades with over 10 years of data for the most popular symbols. See how your trades would have performed in the past. Look back at profit and loss and take the guess out of guesswork. Oh, did we mention that it's free? Get back testing at tastytrade.
tastytrade's Money Match event. Unlock 30 days commission-free trading. Plus a 1% cash match on all qualifying deposits to jumpstart your trading when you open and fund a new tastytrade account. Level up your trading experience with active trader mode, smart order tracking, risk analysis tools, dynamic watch lists, and more. The Money Match event starts now, exclusive to new tastytrade customers.
tastytrade's active trader interface makes futures markets your arena. Built for the bold, not the board. Trade CME futures with a single click. From micro contracts to major ideas. And go even further with futures options. tastytrade lays out multiple ladders and charts for total visibility. Plus, hundreds of built-in indicators for traders who want a broader view. tastytrade, pro-level tools, intuitive design, total control.
Ready to take your trading skills to the next level? Dive into the world of stocks, options, and futures with tastytrade courses. Whether you're a beginner or more advanced trader, our courses can empower you with the knowledge to succeed. Watch as our team in Chicago shows you how to use the tastytrade platform and go over the basics of trading. Perhaps you'll learn about a new strategy or a potential product for your portfolio. To find our courses, go to the Manage section of our web platform or head to courses.tastytrade.com. Start taking control of your financial future. Visit our courses today.
tastytrade has crypto, and you can trade with zero commissions: Bitcoin, Ethereum, Litecoin, and more. Diversify in one place. Crypto, we got it, we get it.
What is going on, everybody, and welcome back to Risk and Reward. Today's Tuesday. We got a little bit of a volatile-ish kind of market. We got a little bit of a rebound, if you will. But we'll see if the market wants to take it higher or if we want to take out some lows. We don't really know yet. We're kind of in the queue. But with that being said, hope everybody's doing well. Gus, my brother, how are we doing today?
Yeah, that's a QUEUE.
Oh, I like that.
For all those not catching it, they put an extra UE in there just to confuse the children. I'm doing well. I'm enjoying. I was just sitting here reading chat before we came on, and everybody's talking Japan with Mike, and it made me think, man, we're underwhelming. We got no stories. I got gas yesterday.
That's pretty fire.
I've been needing to do that, so I'm happy.
It was pretty cold yesterday. No Japan stories, but I would love to go to Japan. I would love to go to Tokyo.
Oh, yeah.
Is that on your bucket list too?
Yes,
is that an interest of yours?
Yeah. Japan is high on the list. I'd also love to, and I know that this is a divisive topic, but I would love to get to like Vietnam, Laos, Thailand sort of area sometime as well. I think that's, a lot of people will say those places aren't safe. I'm not buying it. I'm not buying what they're selling.
Yeah.
I won't go places I legitimately deem unsafe, but I don't care what everybody says.
Yeah, no, I hear you.
I don't know. It varies, but not a whole lot has changed for me. Crypto is rallying. I'm pleased to see that. I literally this morning just found a long ETHA position that I did not know that I had. I was completely blind to this position in my portfolio this entire time, but here it is sitting at the top. So I'm glad I got long ETH whenever I did this.
No, it's nice. The plug hasn't been pulled on ETH yet. Maybe here in a little bit we'll look at some of the other crypto products too. But Bitcoin taking a little bit of a bounce. Plunge protection team coming out on Ethereum. So shout out to the plunge protection team propping it up.
Yes, absolutely. And this was going to be my opening question. Pineapple on pizza. Thoughts? I had pineapple on pizza yesterday.
I gotta say, pineapple on pizza is one of those things where I'm not for it. I know it's been a long-standing debate. I was in college. One of my boys tossed some green sauce, like Tabasco, on it. Took a couple bites. That was hitting. That was like the first time I was like, yo, this pineapple on pizza is kind of valid. But my gut reaction is no.
Sure.
So what about you? What's your perception on it? Let's hear your chat.
I like pineapples on pizza at large. However, I would say something that I've discovered recently that really takes that up a notch is if you also do banana peppers alongside.
Okay, that's not okay.
It kind of like, because the banana peppers have a little bit of sweetness too, but it kind of fades into spice.
Yeah.
So it sort of cuts through that like real, strong pineapple flavor.
That's fair.
So I'm interested to see everybody's thoughts.
No, that's fair.
Vietnam,
That's fair.
Oh, everybody's. So Hill went to Vietnam and Cambodia last year? Great shout, Shark. That's awesome. Vietnam is a trending destination spot right now. Vietnam sounds exciting. Everybody's high on Vietnam. Apparently, I gotta get myself to Vietnam. I know it's very, very cheap destination as well.
Yeah, well,
inexpensive, I should say.
Right.
I don't mean to offend. It's inexpensive.
If you slide over to Vietnam, let me know.
Yeah.
Let me know. That actually sounds kind of fun. Go explore a little bit.
Yeah, we could hit it.
It's never been even high on my bucket list, but like the exploring side of it and learning other, that sounds fun.
Yeah.
So.
Yeah, absolutely. Yeah, I've been all over Europe, but I've never had the fortune of going to Asia sometime. And
okay.
Yeah, I'll have to make a few trips over there to get to everything, or even get close to everything. Obviously, you never could.
With that being said, as we catch up to these comments, we can jump into the Tasty Trade platform, and we'll kind of just do a little tour of the market as we catch up on everything.
Yeah, absolutely. Yeah, let's dive in. It's an interesting day.
Yeah, I mean the market's trying to rally a little bit here. You can see SPY flirting with all-time highs. Can't believe we're here right now. QQQ, kind of, similar story over here. Very similar thing with the Russell and some of the small caps too. Those being a little bit more aggressive. With the market popping here, VIX just absolutely dead. I'm waiting for the VIX trade again, Gus. Some of us might take it too whenever we get it. I mean, if we get it, it'll be exciting, but we might have to make new lows for that to happen. You've been eyeing VIX at all, or has it kind of just been on the back burner?
No, I mean, VIX is usually something I keep on the back burner. It's something that I trade a lot, but I pretty much only ever trade VIX to the short side unless I want to put on some like naked long if I feel like I'm too overexposed to the long side in my portfolio. But generally, my strategy with VIX is just to try to time the top as best I possibly can and then wait, which is usually a fairly effective strategy. But to that end, I never actually really keep up with VIX. It's like VIX shows itself to me when it's time.
It comes that trade comes to you.
When things are going wrong enough, I see something about VIX and then I'm like, oh yeah, it's time.
I like the stock.
Get involved. I like the stock. Yeah, guys, I'm value investing in VIX. The PE ratio on PE ratio on VIX is way too low. You guys see VIX's earnings report last quarter? Okay, I'm done.
It's fire. No, I mean, with that being said, we took a couple, which we'll get into the trading view charts here in a little bit. We took a couple trades today on NASDAQ. We got stopped out a couple times. We'll talk about that. And then we had a couple, we got some short deltas on in QQQ. The other day, We put on some more short delta by selling and added the money call spread. And then today we started rallying and the position went against me and I ended up taking it off, which if I was using the futures, it would have been like a break even, or maybe I would have been down 10, 15 points. But this one went against me, and because it was a premium that we sold and some of that premium was leaking out of the contracts from when we sold it, I was able to reap like 10 or 12 bucks, on a trade that went against me when I wanted to cut it. So another massive benefit of using the options. Like I know I'm so like honed in on the futures contract and, trading very directionally, but the futures contracts and the premium, I think they can absolutely both be utilized to their maximum. I guess just to your trade preference or your trade ideas.
Sure.
So although we're so actively trading these futures products, it's so nice to take advantage of the call spreads and not have to time the top, So it's been a little bit more passive. But that's what's all exciting in the portfolio. QQQ and some NASDAQ. Anything else been sticking out to you on your end?
Yeah, it does look like I'm probably going to lose on this Rivian short position because, of course, I am. But I'm honestly not upset with paying with that short position if we are going to hold these gains to the higher side.
I don't know.
Yeah, we'll see. Should we? Are those? Oh, I was going to say, are those my lines? No. Should we donk? It's what would be most frustrating is if I somehow land like in the middle of this range at the end of this week, or if we hold these gains, just until Friday and then it sells off, but just not quite all the way.
Right.
That would be most frustrating to me. I do still have this thing open. I haven't completely lost confidence yet, and there is still a little bit of premium on the table. I'm only down $68 on this position, which is 4 contracts, so really has not moved that far from my buy spot, which was about here.
Yeah.
But that theta decay starting to come through in a big way. So. We will see.
We breached those highs, but I think the true character of Rivian is trying to start to show again.
Yes, yes, we will see. If it's gonna stay here, it better stay here for some weeks and not just wait until Monday and then go back down into my range. That would frustrate me. Yeah, we need to start a inverse Rivian ETF, but it's just based on me, like an inverse Kramer ETF, but it's just Rivian. And it's me.
I like
anytime
I will add
I say something about Rivian, it's going to do the opposite.
I will add liquidity to that pool. Let me know. Can you show how to set a stop loss on the platform? If you're talking to Tasty Trade platform, it's very simple. Go to your contracts. I'm going to right-click this call spread right here. I'm going to right-click on it. I'm going to go to close position. And I'm going to go over here down to order type. It's going to be a window that pops open. And I'm going to go ahead and do a stop limit. So I can use a stop limit in that sense. Let me see if we can find another position to where maybe we even just put one on real quick.
Or we could do it if we want to kick over to my platform. I have no shortage of positions where we could demonstrate this.
Yeah, absolutely. I was gonna enter a position to exit, but
that's what you should do actually. Yeah, enter a new position, put on a stop loss, and if it doesn't hit, then
let's do that.
That's fine.
And we're gonna buy a 0 DTE. We're towards the end of day. Yeah. Let's just lose some. No, let's
just have a little fun.
Let's just pennies up. Let's see what these are even going for. We're gonna close this, but let's utilize that stop loss function. 0 DTE.
Yeah, throw on a naked something.
We'll go. What are we feeling? We feeling a little bullish end of day?
I think I'm feeling a little. Yeah, I think I'm feeling a little bullish. I'm with that. Okay. Oh, you're gonna sell a put, you maniac? No. Okay.
We could sell. we could sell the put. We could buy the.
Selling a put is a very high risk way to go about demonstrating this.
No. 35. Yeah.
That's good. That's a good example.
We're actually going to go a little bit in the money. We're going to buy the in the money 625 calls. The markets look a little bit wide here, actually. Let's go up just a couple and let's see if we can get filled on this. I was just looking at the volume trade because I was like, if we get back out of here, I don't want to actually have to give back $20 just to get out, So I was like, for a second, I looked at the volume column on the left-hand side to make sure there's enough liquidity and volume traded at these prices. So good, we're going to send that one through. So now we bought the 625 calls on QQQ. Now Gus is going to do the rest. He's going to bring the market up for us. Now we just, let that one ride. No, but this one is actually really simple. And before we take it off, I'm going to show how you can see your stop loss on the contract too, because extremely overlooked, but I think super helpful for visualizing your risk. So we just bought this call. I'm going to right click on it just to make sure that I'm sitting on that one. I'm sorry, let me go to the options chain, go to the 0 DTE. I'm going to right click between the bid and the ask spread on the options chain. And then I'm going to click view contract. And then from there, we can actually see our average entry price on the contract itself and not the asset. So now let's put in our stop. And we can just see, right, from the option contract, we bought at 89 cents. The option contract's trading for 87 cents right now, so we're down $2. That's almost a whole McChicken. I don't know, where we want to put our stops. Maybe we can put it in at 73 cents? Maybe if it takes out this low for whatever reason, this isn't a good reason as to why we're putting in our stop.
Oh yeah, this is an example trade. But yeah, I think 75
there.
looks good. Yeah.
73, that's a risk of $16. We can calculate the risk just like that. Let's right click on the contract. We're gonna go to close position, and then we're gonna go to stop market, and then what do we say, 73 cents?
Yeah.
So 72, 73 cents. We'll go 73 cents, and then we'll put in the stop order for there. So these 0 DTEs can get so volatile, so difficult to manage your risk sometimes, but if you do want to trade them directionally, I think it's a little bit easier to do that using a stop loss, just because they are 0 DTEs, like your position is fluctuating like crazy. I guess maybe unless you're sizing for 0, which I guess that could be a strategy. Maybe you size your position for the worst case scenario, but if you're not looking to risk your entire 0 DTE position on that one single trade, I think a stop loss can be utilized sometimes and be helpful.
Yeah, absolutely. Yeah, or just anytime you think a stop loss may be applicable. But yeah, the most critical part is just changing your order type on the order chain to be stop limit, and then you can set whatever limit that you want.
Not too bad.
Yeah, looks like this one might work. And you also see this working order like the way you would see a typical working order in your positions tab as well. Does no crypto include the ETFs like IBIT? Absolutely not, Seeking Theta. I am Seeking Theta, by the way. Like that name. But no, I am very exposed to IBIT right now. A little bit exposed to ETHA. I'm more than happy to get involved with these ETFs that I can get options exposure to with crypto. So no, does not include the ETFs like IBIT. Also, I'm not anti-crypto. I just don't hold much crypto directly. I just prefer this as the vehicle. I prefer options as the vehicle by which I would like to trade crypto, and the ETFs give me the ability to do that. Yeah. I do have small Bitcoin holdings, like in a long-term context, but I don't trade Bitcoin very frequently. I would much prefer to use IBIT, BITO, BitB, whatever you like, as a trading vehicle.
I want to trade Bitcoin a little bit more. Again, it's just another product that's so foreign.
Yeah.
We can jump into the trading view charts here a little bit and start checking out some of these other assets.
Yeah, it's similar to. It's you could trade you especially with the way that you trade futures in those high value products. I think that you would have no problem trading Bitcoin. Or if there's micro Bitcoin.
Yeah, I'm gonna try dipping the toes into it a little bit. But one thing I noticed again is that the multiplier, since the multiplier is different, I noticed that one thing is like you gotta try and kind of recalibrate a little bit to that type of multiplier because the volatility is just a lot different on these assets. Silver again caught me off guard. We should check out silver too. But with that being said. Here's the micro NASDAQ. We took a couple trades today. We were looking to take a couple shorts. We had to manage our risk. The first short was at 25,651 near our value area high for today. I was really hoping we could get this short, especially, obviously I was hoping for a little bit more downside. It would be nice if we can get more downside, but when we're looking over here, I know.
Your greed, it sickens me.
No, the opportunity. We want the opportunity. But just kind of forward looking a little bit. It's like all these swing lows down here. It would have been nice to get short. Usually I would have covered down here, but this is one I probably would have maybe tried to hold a little bit longer. Usually like to just let the options contracts help you catch the bigger moves, so those swing moves, because it's difficult to hold the futures contracts overnight if you want to sleep well sometimes. But I was looking for the short opportunity this morning at the value area high. That didn't really pan out. We put our stops in at the highs. Then we got stopped out. I tried a couple more times. Actually, I flipped long on one of them. They got stopped out, and then that was just a 3-strike rule for me. I have a rule for myself because this can be such active trading. And sometimes in the moment, whenever you see the market just kind of just flip-flop in its bias, maybe it can put you in the spin cycle sometimes. For lack of a better phrase, I like to have a rule to help me know when to just take a pause, step back, come back later, go back and reassess. So I kind of have like that 3-strike rule. Boom, boom, boom. I'm done. I got stopped out to the upside twice. I got stopped out another time looking to get long. This little, honestly, for the long, hindsight, 2020, I get it, whatever. But honestly, I shouldn't have even got long until I saw some type of BS move like this that it pulled. And then I should have gotten long. I know. Hindsight is 2020. Anybody can say that after the market rips. But we took a couple of trade opportunities here, and really the value area highs and value area lows just serving as an area that gives us an opportunity where the market might do something here. So it gave us a good risk reward opportunity. The market ripped to the upside. We'll see where we go from there. Maybe we keep floating higher, but not a great day on my end. Great managed positions, but in terms of going in my favor, not too much today. Not too much.
Yeah, no. It's a good lesson in management, but yeah, understandable position. I think a fun exercise we could do with this value area sometime would be like just like look at it on like a weekly or a week-long chart, like establish a week-long value area on like a Monday, and then just spin a wheel of S&P 500 stocks, and then just establish the value area and make a trade for the week. I think that could work.
Like swinging it?
Like just on the assertion that it really doesn't matter what stock that you're trading. These principles can apply.
Oh, I see exactly what you're saying. I do see exactly what you're saying. 100%.
Yeah,
100%.
Yeah, something we might have to move on.
No, 100%. And I kind of wanted to start doing that with a little bit of like the metals, like gold, maybe crypto, Bitcoin, and stuff like that.
Oil could work too.
Yeah, we'll keep up with that too.
Oil though,
it's a different breed.
Oil is a different breed. I mean, and the metals this applies too, but like oil especially. I think as far as technical indicators go, and I should broaden that out to not even just technical indicators, literally anything that you can do on a chart, I think applies to oil the very least. Oil does not.
Agreed.
Because it's not a company, because it's the aggregation of information and the psychology is just fundamentally different.
I literally cannot figure out how to trade oil. Like, I can't find any rhyme or reason to give you any conviction off of this.
Yeah,
use the value areas as well.
All I really know is
it's a different breed.
Well, and it's so weird too, because like oil especially, like I say this all the time, if you trade oil, I just respect you so much. I don't know how anybody can ever have a good read on this product. And yes, it's like, because sometimes uncertainty in the Middle East is bad for oil price, but then sometimes it's good. And I don't ever understand. What causes what. I don't even know what countries are most relevant in this regard. This is a market that I just have absolutely zero feel for.
I'm in the same boat there. I gotta say, just by looking at the chart, very liquid asset. It's pretty volatile. This looks like a great product for traders, I gotta say. But in terms of like, again, grasping that conviction for this specific product, I think it can be tough to do. And then also just keeping up with the headlines, because the fundamentals can be very dominant in oil in a lot of those headlines. So it can be a tough one. Keeps you on your toes for sure. Not that NASDAQ doesn't, right? That's a volatile product, but energy can be a different breed.
Oil has been pinned to stonks. I like it. Just trade short-term technicals on XOM and CVX. Yes, Catterday night. This is a fantastic point, and this was actually going to be the very next words out of my mouth. Took them right out. And USO is another great vehicle as well. USO definitely is more price sensitive to these macro things that I'm talking about, but it's a great vehicle that you can get some options exposure to, and it moves enough. There's enough volume there. And then yes, you can also, if you want to just express your sentiment, you could go XOM, you could go COP, ConocoPhillips. What was the other one mentioned? CVX, Chevron, BP's publicly traded. A lot of different ways that you can go about that. Great point. Love it.
There's definitely something for everybody.
Am I seeing trades made on Bitcoin here?
Nah, this was, I think these were the trades from like a week or two ago. I'm on the daily chart. Yeah, I'm on the daily. That's why I threw up the perception a little bit. But no, not too much going on over here. I think we can do some quick analysis on Bitcoin together, because although we haven't taken any trades, the analysis is lining up pretty well so far. Like, typically, I like to only talk about things that I've taken trades on, because I sometimes hate analysis and there was no money where your mouth was kind of stuff sometimes. But I think we still take some more stabs at micro Bitcoin, even though it's going to be a little bit more of a difficult product, especially trading around 94,000. We're flirting with these key levels near all-time highs.
Yeah, I mean, I'm just happy being long and waiting. I mean, everything I have on Bitcoin is a little bit dated. Some of them dated a little bit more aggressively and shorter than others. But yeah, I mean, I'm still, and especially after today's action, I'm still fully expecting this to be a fairly V-shaped recovery on a 1 day chart time frame. I think that this will come right back. People can only stay away from crypto so long, and 2025 is sort of my logic. Cheers. I went long MSTR. Interesting. Yeah, that's, I will say this. I crap on MicroStrategy a lot.
Yeah.
But I only crap on MicroStrategy in the context of a long-term investment to get exposure to Bitcoin. That doesn't make a lot of sense to me. Where MicroStrategy makes a ton of sense to me is as a trading vehicle, which is what it sounds like you're using it as opposed to a long-term investment. As a trading vehicle, it is very powerful because in situations like this where crypto is beaten down, it essentially offers you leverage. The recovery will be quicker in an asset like MicroStrategy. So yeah, I really like that logic. You might have actually just put me onto a trade here. I'm looking at contracts.
Yeah, no, I mean, Micro's strategy looking like it's not working out too hot right now. They were definitely riding a huge wave.
I'm looking at like maybe something next summer expiration on MicroStrategy could get a little freaky with it.
You still got a bad taste in your mouth about their Bitcoin kind of strategy, their Bitcoin playbook?
I think yes. I think that on a company level, like if I am the CEO of a company, I think the Bitcoin treasury strategy is dumb. In the long term, it doesn't really change anything. I mean, it keeps you from going bankrupt, I suppose, if you have all this Bitcoin. But all you're doing is tying yourself. You're just making yourself a correlation asset to Bitcoin, and nothing about your fundamental business actually changes. Right. So I've never really understood it when businesses decide to take that approach, especially a business like GameStop, which is trying it now. As a trading vehicle, though, really, really good. LOL, yeah, all in. LOL. All right. Well, Godspeed. I am going to tail you here. I think I'm trying to find the angle here. I'm willing to be pretty aggressive with MicroStrategy with the way that this thing likes to move. Like I'll go pretty far out of the money here when I'm talking 191 DTE.
And maybe your people will recognize how stupid the business model is and bail the F out. Honestly, Grumpy Mike, it almost seems like some are feeling that way already, just by the way things are panning out.
The moment I saw this announcement,
right.
I bailed out, at least in a long-term investment context. But like I said, though, you also can't deny that the value of this company now fluctuates greatly with Bitcoin, and that this company is inherently more valuable when the price of Bitcoin increases, which perhaps is their whole thesis: Bitcoin to $1 million, we 10x our market cap without even trying. But I don't know. I don't know that I necessarily see the vision, because at the end of the day, you're a business, and you have to make money. I mean, is MicroStrategy, and I don't know, I'm asking this like in a hostile tone, I really don't know, is MicroStrategy going to give Bitcoin profits back to their shareholders as dividends? Is that how this is all going to work? Because if so, maybe I could see that a little bit more. But then again, I just circle back to, why don't you just buy the Bitcoin in the first place? It doesn't. I don't know. It doesn't make a whole lot of sense to me. I suppose it's Bitcoin with a dividend, if you want to choose to look at it that way. I don't know. Can't wrap my head around it.
No, I mean, that's completely fair. I mean, I even feel like the dividend perspective is completely fair. I think you can definitely feel that way. But I mean, especially with MSTR, I mean, just to see it pan out this way in such a short time frame later is always interesting, because they're getting hit a little bit harder than it's looking like Bitcoin is taking a hit right now. So with that being said, we can take a look at some of the metals over here. Haven't traded too much gold either, but been looking at the market. Haven't been getting the squeeze on gold like we've been seeing on silver. But it's still sitting at some interesting levels. Right now we're on the daily chart, and we can see across the last 1, 2, 3, 4, 5, 6, 7, 8 days, so about a week and a half since we had this leg up, we've pretty much just been going sideways, and it seems like the next question in mind is, if gold can put in another leg higher, I don't think all-time highs is really out of the question, but if we do put another leg lower, for me, it's going to put silver into question a little bit more there too. But gold definitely cooling off some steam there. No short squeeze like silver.
I did just get involved.
Oh my gosh.
I did just get involved with MicroStrategy as well. Getting wild here.
Oh, yeah?
I have a 3-to-1 risk profile. I have taken the June 18th of next year 191 DTE, 240, 250 short put vertical. So over 250 is what I would be looking for here. This is not one that I necessarily plan to hold to expiration, though. I think that this could very easily just get goosed up a little bit if Bitcoin goes on a run, and then I would be happy to grab the exit at that time. But yeah, MicroStrategy exposure has been added.
I mean, we hope that pans out just like silver, because look at silver on the day-to-day. Absolutely insane moves silver is putting in, and I feel like it's going understated right now.
Yeah, I don't know. I don't know what we're doing with these metals anymore, man.
This is insane. This is insane territory. This is like just mania price. We're talking about the metals right now. We're not talking about GameStop,
it's getting to the point where, and I really hesitate to ever say anything like this on air, but man, somebody is doing this. A foreign government, some higher power must be doing this, because there is simply no reason.
You said it, not me. Look, I have my suspicions about MSTR.
I'm not.
I have my suspicions about people being used as liquidity on MSTR. Yes. I'm not going to state those, but
yes, and I'm
something like silver.
I don't want to necessarily formally make that allegation, but this is really sus. Is all that I'm pointing out. It is really, really strange to see metals being like this when there is very, very little, I should say, catalyst for it.
Maybe somebody's stuck.
Maybe
someone's stuck, and they're trying to get out right now. Maybe that's why.
Yeah.
I don't know. Is someone stuck in their short? I have no clue.
Yeah, I don't know either.
It's not. I can't rationalize this move.
Yeah, this is otherworldly. I mean, for metals to be taking a move like this, like the dollar or some worldwide currency should be collapsing. I mean, and that's just not happening. This is insane. I mean, when's the last time we got a move even remotely comparable to this?
So as we zoom out here, I just went to the weekly chart. So now every single candlestick is going to be worth 1 week. Last time we had a spike into these levels, was
2020. Oh, that's COVID.
A little bit further back.
That's in the middle of the onset of COVID.
It's a little bit further back. It threw me off too. If you look down here at the bottom, it's like 2011, I think.
Oh, this is
2010.
Oh, I see. Okay,
So,
wait.
okay, this
there
spiked
was a COVID run up there.
So
but-
COVID run up, yes, and it almost looked like the COVID run up was the prepping move for this run up that we're seeing today. I don't know, but we did put in some highs in silver last time around 2011. So to what we've been speaking on, we don't really see silver make moves like this. It isn't every year we see a move like this in silver, and if anything, it's usually like once a decade we see moves like this in silver.
Someone has very correctly pointed out 40-year cup and handle on silver. 45-year Saturday night, 45-year cup and handle on silver. It's true.
It's true.
Look at it. It's right there.
Yeah.
It's right there in front of us.
It reminds me of the meme that I saw. It was someone put on like this meme where it makes them look super old, and it was like them at their computer like me waiting for the 2008 lows to get swept so I can get long. And that's exactly what it reminds me of, because we got a 45-year cup and handle.
And it's true. And this is maybe the greatest example I have ever seen of chart patterns are only valid on the time frame that you find them on. If you identified this cup and handle in 2021, you had to wait 4 years, going on 5 years for the pattern to actually come to fruition.
What's crazy, before you could even visually see these digitally, this pattern was emerging.
Yeah.
Think about it.
No, yeah.
A lot of the,
It's true. It's true. And then, the other one, this mini run up before the giant peak in 2011 was the 2008 financial crisis, which is reasonable. That the 2008 is a time where silver should run up. I agree. I'm with that.
Have you ever done a deep dive into the Medallion Fund?
No.
The Medallion Fund is one of the most successful funds out there. It's not, you can't get, it's a private fund as well. They're one of the most successful. And I was like, why is a fund like how does a fund have such an edge? Like over the last 30, 45 years, they performed like 60-something percent, 40%, like the most insane numbers. I was like, how? Why? Apparently, they have data that they were stacking up from like the 1970s, 1980s, and 1990s. And they have access to so much data that nobody else had access to, because this is a time when people didn't recognize data was going to be so valuable. And now they have an entire edge because they have certain data sets in frameworks that were made in the 1980s, 1999, and in the 1990s as well. So anyways, that's the Medallion Fund. And I pretty much read that they have a permanent edge in the market against all of their competitors because of the fact that the data that they do have, because I always thought, I was like, why these other billionaires can't replicate what these other firms are doing? Like, you have the money, you can find the talent, you can do X, Y, and Z. And I found out their edge is they have certain data points that others don't have. But anyways.
That is fascinating.
Anyways, it brought me back around to the thinking of the fact that they were collecting so much data before you could even visually see the data, because this is the 1980s before we had all of this software and technology. So anyways, with that being said, 45-year cup and handle, how we feeling about it?
I mean, hey, the patterns are valid on the time frame you find them on. I don't know. It clearly happened, so who am I to sit here and say that it's invalid to look for cup and handles, I suppose. And then in response, our last thing here, I know we're kind of at our time. David, in response to your question, with zero DTE, I just keep going in and out. I hit 2 iron condors today for a total of $110. Should I keep going, taking 25% each trade? Yeah, David, I mean, that's a strategy that lots of people will implement. You just got to be careful doing that, especially with the zero DTEs, because that is fully the, picking up pennies in front of a steamroller type thesis. So just be very careful and make sure that your risk is managed, because it only takes one of those to go against you to wipe out like the previous 8, 10, 12 of them. But as long as you're cautious with your risk, you're keeping up with broader market conditions and making sure that you don't believe there's any volatility that's going to suddenly enter the market for any reason. I think that's an effective strategy. So I'm with it. Endorsed.
Amazing. Market's taking the highs for the day. That's going to do it for our segment. Thanks for taking the time to hang out with us. Be sure to stay tuned for more segments coming on next, and we'll catch you guys next time. Peace.
Tasty Trade's Money Match event. Unlock 30 days commission-free trading. Plus a 1% cash match on all qualifying deposits to jumpstart your trading when you open and fund a new Tasty Trade account. Level up your trading experience with Active Trader Mode, smart order tracking, risk analysis tools, dynamic watch lists, and more. The Money Match event starts now, exclusive to new Tasty Trade customers.
Tasty Trade's Active Trader interface makes futures markets your arena. Built for the bold, not the board. Trade CME futures with a single click. From micro contracts to major ideas. And go even further with futures options. tastytrade lays out multiple ladders and charts for total visibility. Plus, hundreds of built-in indicators for traders who want a broader view. tastytrade, pro-level tools, intuitive design, total control. Step into the futures arena with tastytrade's active trader. Multiple ladders, hundreds of indicators, precision control. From micro gold to NASDAQ, all CME one click.
Ready to take your trading skills to the next level? Dive into the world of stocks, options, and futures with tastytrade courses. Whether you're a beginner or more advanced trader, our courses can empower you with the knowledge to succeed. Watch as our team in Chicago shows you how to use the tastytrade platform and go over the basics of trading. Perhaps you'll learn about a new strategy or a potential product for your portfolio. To find our courses, go to the Manage section of our web platform or head to courses.tastytrade.com. Start taking control of your financial future. Visit our courses today.
Got trader's block? We've got the cure. Get data-driven trade ideas with cherry picks. Our weekly newsletter that gives you insights into the market. Sign up at tastylive.com/newsletters.
We're back. It's still Tuesday, December 9th, 2025. This is Futures Power Hour, sponsored by CME Group. I'm your host, Chris Veio. He's Jamal Chandler. Jamal, how's your Tuesday going?
It's going well, my friend. Just had some tacos. It's Tuesday for sure. And just waiting it out, just like everybody else, waiting it out until we get some data.
Some data, some information, something, because this market's clearly in waiting mode. And it's in waiting mode for good reason, Jamal. 'Twas the night before Fedmas, of course, and across every desk, traders sat wondering what Powell would express. Ooh. On the FOMC's website, the projections would be hung with care. Traders wondered if clear guidance would be there. But Jamal, as you know, government data has been a no-show. So what will the Fed do? Markets don't have a clue, which is why they're only pricing in 2 cuts for next year. It's not exactly a market that's getting ahead of itself because, quite frankly, what can we get ahead of ourselves on? You mentioned that we're waiting for data. We're not going to get the bulk of it, the ones that we actually care about, CPI, jobs, non-farm payrolls, until next week. So why would the market get wound up in thinking that the Fed is going to be so aggressive here? I don't see it happening, and I don't think we should be getting our hopes up for that either.
Yeah, I think you're right. I mean, honestly, I think if there's any big move in the market or volatility, it's just as a result of people adjusting positions for whatever different reason. I don't think it comes on the heels of Powell saying something that disrupts the market. Like you said, there's no way that they can. So I really think the only way, look, the market's not pricing it in. I mean, you can see it based off of the expected move. So, if anything happens, it's certainly not anything that we're expecting. It's just going to be a random event.
Going to be a random event, going to be an event where perhaps we just need a little bit of hope, right? An inkling that, you know what, if the data do come out and provide that clarity, the Fed could be prepared to act sooner than what the market's pricing in, which is 56% chance for April. That's not exactly a resounding endorsement by the market that something could be coming. It's almost as if to say that the market feels confident that for the rest of Powell's term, this may be it. Which also leads to the upside that if we do get another cut during Powell's term, it's kind of considered gravy. So there is that to look forward to, Jamal. But stocks have a lot to think about here as we get ready for tomorrow's FOMC rate decision. Maybe something on tariffs as well. We did see that President Trump did a 180 on his policy with respect to China. Trump 1 and Biden were very combative with respect to China. Trump 2 now seems to be taking a little bit of a softer touch with his news that these, was it H100, H200 Nvidia GPUs could be sold there. So I guess we're not going to see them as a competitor. NASDAQ is up a touch here today, 0.2%, but on very light volume. We talk about volumes being something that we pay attention to because it shows participation and gives you confidence in a move one way or the other. We like to benchmark a little north of 1 million now that we're starting at 1:30 Eastern, 12:30 Central Time. We are nowhere close to that. 657,000 contracts traded so far today. Jamal, everyone is keeping their powder dry. In the typical "'Twas the Night Before Christmas" song, there was not a peep in the house, not even a mouse here this Tuesday.
Look, this is not a surprise. I mean, I talked about this yesterday. Yesterday, at the end of the day, when we did last call, Nikki and I, it was 997,000 contracts traded. So like you said, not even close to 1 million. That was at the end of the day. We're very under 1 million, I should say. And it was at the end of the day. Again, we're already tracking to be even much lower today. That being said, you know, you're pulling up the markets here, and whether you zoom in or zoom out, you can see the consolidation that's been happening. You can see the smaller ranges that have been happening. That, folks, is essentially another way of looking at volatility, right? Which we've also seen kind of much lower than we saw about 2 weeks ago. You just look at ranges. Again, we've only had a 28.25 point range in the S&P 500 futures today, very small. And prior to that, it was 58.75. Day before, 48.5. Last week, Thursday, 44.5. 55 in the orders on 12/3. So ever since we started December, they are all pretty small. Small meaning under what we've seen over on a 9-day period. Doesn't matter whether you look at average true range or average daily range. This is smaller ranges, low volatility. No surprises there. That said, this pattern to me looks like something that could explode higher, much like you saw in silver, which we'll get to it a little bit later. But this looks like a pattern that could explode higher. Volume's getting lower. The ranges are getting smaller. This is the kind of thing that you see before a big move. I always like to say in either direction because, hell, I don't know what direction it's going to go. But I have been playing this and waiting on this to move to the upside. But again, we'll see what happens.
You know, you mentioned something interesting about this being a tight market. You want to look at the past 5 days? You want to look at the past 10? I'm seeing the smallest trading ranges going back to last December.
Yep.
December 18th, 2024. Lowest ATR, average trading range, both on the 1 week and the 2 week over the same period since we were back in July of this year.
I was just looking at that too. Yep. Accurate, my friend.
Things are real quiet. But you know what? For the NASDAQ and the S&P are exhibiting different things here. We were pointing out on yesterday's show on this 4-hour chart, you had this doji-ish candle on Friday morning, and it more or less marked the high lows that we've been trading in since then. Yesterday, we noted that you had a bit of a bearish reversal candle within that doji, and so it pointed to a little bit more weakness. We've since tested the bottom side of that doji range and really not much more, and we're stuck right in the middle here. So flagging still for the NASDAQ, not exactly breaking down as we head into FOMC, and I suppose that gives us a trading range of about 25,000, we'll call it 550, up to about 25,850. In the S&P, which doesn't have the bona fides of all that tech exposure, which is having a nice little decent bounce, and maybe less of an index or futures play, but something cooking potentially in Microsoft, Jamal. We're still a little bit soft here, trading just underneath the bottom side of that doji candle from Friday. So it's not exactly a strong market going into the Fed, but it's also a market that's not expecting a lot out of the Fed. I wonder, forget the directional move, right? Would the biggest surprise here coming out of the Fed be a market that doesn't really do anything because it has everything the Fed's telling us priced in?
I probably would. It's actually a good point. Was just outside talking to Nikki and Liz of the Liz and Jenny fame. Liz says hi, by the way. She says she misses you. And we were talking about the idea of the Santa Claus rally, right? And if that's going to happen, of course, she's taking her quick poll between the two of us. But that's the thing. I think people are expecting a move in one way or the other before the end of the year. That would be the biggest surprise, Chris, to basically end up trading around 68.50, and that's essentially where our year ends. That's very possible, honestly, because there really isn't much catalyst after Wednesday. There's expiration in December, and we all know that could lead to some movement, but really it's kind of flat at the end of the day for the most part. And so you're right. I mean, that could really be it. And, I've traded a long time. I like to think about the years where Santa Claus rally started early or maybe late. But as you often astutely mention and correctly mention about the idea of the Santa Claus rally typically happening after a Christmas. So, it really could end up leading to that. If we actually get movement, it could really come as the new year begins and not so much in this year.
NASDAQ here seeing volatility more or less level out with everything else. It has had a little bit of a premium compared to the S&P and the Russell in recent sessions, but given the tech concentration and the AI concerns, I don't think that's a surprise. This to me is the most interesting chart, Jamal, because when Microsoft, Nvidia, Oracle, the OpenAI flywheel faced a bit of headwind, it wasn't until Google and Broadcom decided to take the baton that the market was able to perk back up. And even so, the NASDAQ hasn't been able to return back to its all-time highs yet. I would look to this Microsoft chart, and I see this 495 line in the sand here. It's a line in the sand that was drawn going back to the lows we had in September. We had a bounce here in November, and ever since then, not exactly breaking back on through. I would feel a lot better, not just today, but really coming at it tomorrow, right? If we can make our way through this week, we get through the Fed meeting, the reaction holds up on Thursday, and a stock like Microsoft is sitting north of 495. You put that in the context of maybe an Nvidia here. That looks like it's trying to start to bottom. It's trying to break its downtrend off of recent highs. You have the trappings of a NASDAQ that has then the pieces in place to really then stretch its legs and make a run back for the highs that we established just a few weeks ago.
Look, I agree with you, especially when it comes to Microsoft. I have a long trade in February. Again, the Delta Buster trade that I've just fallen so much in love with more recently, selling the put spread to finance the call spread. I got it in February. I think it's been one of those names that's been oversold, and sometimes that's a matter of opinion. But I thought it was kind of oversold to some degree. So that's definitely one that I'm making a play in, but. We're at an interesting time, Chris, overall. We're still we're not completely out of the realm of people talking about how much overspending is going on in AI, about the circular spending. We're still not completely out of that. We might be bouncing out of the Bitcoin lull as we speak, again, with a strong move here today. And it's clear at this point it's very important, especially because it's clear at this point a lot of the same people are trading both of those, right? The same money is trading both of those, right? I mean, it's high beta stuff. And so I think, we've asked this question before, even though we're not at lows, nowhere near it. But will that be the thing that brings us out of the lull, if you will, I guess? Or at this point, let's just call it consolidation. Will that be what brings us out of the consolidation? Is it the Microsoft bouncing back and reclaiming potential highs? Is it Bitcoin getting going again? Because, again, there are a lot of names that are tied to Bitcoin at this point in time. So will it be those kind of things? I think it will. Obviously, that would help the market make a decision one way or the other.
So Bitcoin north of 95, which downtrend from the October high, not quite broken just yet, but we're getting pretty darn close to it. Jamal, we have to just reassess that to here. These are our swing highs in the BTC Z5 contract. We're poking through there on this 4-hour time frame. We're also poking through the swing highs that we have in November and early December, right around 94,500. Maybe the worst is over, and even a stock, definitely not futures, but even something like MicroStrategy here, as it started to carve out that lower range, it's perking up too. So the albatross around the market dissipating as a liquidity or sentiment gauge. You have to feel pretty good about how crypto's looking right now. What to do, though, in terms of general strategy, Jamal? I think you and I have touched on this a few times, but it feels like today is a good day. Last time to get out of Dodge here. If there's anything to do to clean up one's book, reduce beta weighted deltas, extend duration, right? You're worried about the Fed tomorrow. Use the low volatility to roll those positions. If you're sitting close to 21 DTE, heck, I'm even thinking the things that are in like the 30 DTE range right now, why be cute about it? Tack on an extra 2 weeks, reduce the exposure.
Yeah, that's largely what I've done today. If people have seen any of my trades, you'll notice that. So I had bullish Delta Buster trades in Tesla, in SPY, in Qs. And I took those off. I put those on November 20th, so you can see where we were at the time. And look, they're in the middle of the range. They're in between the short put spread and the long call spread, but I've made a pretty decent amount of money on most of them. Decided to close those out. Now, they are January, and that's why I decided to do it. I still have a couple of more, but they're February. I got Meta in February. I got Palantir in February. I got Netflix, which has been falling more recently, in February. But I closed the January ones because you're right. I think that would be being cute. Again, they're directional. It's not like it's vol. It's directional. And even vol in January, I think you could make an argument to close. That's anything that's lower IVR. I think you can make an argument because we just don't know what's going to happen on the other side of this Fed thing. Again, there's nothing projected to happen. If you look at expectations of all, it's low. But I think that's the thing that kind of makes me a little bit nervous. When I see, and I'm trying to just sort of manage my bias here, because when I see the markets, we looked at those charts. I don't care if you look at SPOOs, NASDAQ, the Russell, or the Dow, they all look like they're consolidating and are a launch pad to go high. They all look the same. And I like that, but I almost like it too much. And so I just kind of want to manage my expectations and manage my book to some degree, give myself a little bit of powder just in case, something doesn't go well. And if it doesn't, I'll be able to make tons of trades. If it does, I still have long deltas for the market on going higher. In the form of, you just mentioned the micro strategies, and I mentioned the Netflix and Palantirs and Metas. The other thing, if the market falls, this is what I would really love to do, and I think I mentioned this to you briefly, but again, this idea comes in the form of Mike Butler, the idea of doing a year-long sort of strangle. If the market goes lower and we get volatility, I'm slapping that thing on, and I'm doing it in MES. I decided I'm going to do it in MNQ, a little bit higher. It's going to cost about $2,500, but I'm going to try and I would like to structure it such that my put is probably closer to at the money, so to be bullish. And again, that's why I wouldn't mind the market falling. So I didn't want to close my bullish trades, but I'm okay with it now, and I got some bullish trades further out, so I'm still in the game. And I have a lot of powder in case things don't do what I expect them to do. And I think sometimes that's a hard play to make, but it's helpful at times like this where, again, this is definitely setting up to be the biggest pump fake that we've seen in a while. I hope it's not, but if it is, I'll be ready to go. And if it isn't, so be it.
Yeah, I mean, I feel like the path of least resistance tomorrow. How many people are holding on because they're hoping that the Fed gives us a little bit more clarity on cuts than what the market's currently providing? I think there's probably more people who are doing that than the opposite way, right? Yeah. Who are placing bets like, oh, I'm going to be long because like the Fed can only get more dovish from here. And there's probably people saying, no, the Fed's going to come out and say the data that we have is not great. We may need a cut again, depending upon how inflation shapes up. You pull that rate cut expectation forward into April, it's still maintenance-ish. It's not recession. So you get your market leg up. But there's also the whole side of this where, hey, the Fed comes out and doesn't give us any indication that the market is mispriced or not dovish enough on expectations for cuts. And so you get those short-term traders who decide to dump out. There's people who are over-levered. Bitcoin can't get its legs above 95. And yeah, it's a really nice move, and we're starting to break out. We're certainly down out of the downtrend, but we haven't cleared the 95,000 level yet. Mm-hmm. The only thing that's really perking up here today that's noteworthy is silver, which is delightful for myriad reason, Jamal, as you can imagine. But I only wish I had more of it.
That's what you want to say. That's how you want to feel. You want to say, man, I wish I had more, right? Like that's something I think I realized.
Oh, this went up. I had too much.
I know, right? And if you had too much, you would have been white knuckling it all over the last week and change. I mean, for sure.
I was just talking about this with Westwater because one of my solar installation guys was complaining how he had, if I had bought Bitcoin for the first time when I heard about it in 2013, I'd be so rich by now. And when do you start buying it? Oh, after COVID. Okay. It's like you wouldn't have, because you would have seen it run up to like 2,000 and drop back down to 5, and run up to 5,000, drop back down to 1, and go up to 19,000 and then drop back down to 3,500.
Exactly.
And it's no, like, I always think to myself, what if the first time I went out to go to try buy it when it was $2, I put the $200, I bought the 100 that I wanted. Would I have, white knuckled it all the way to here today? Absolutely not. Like, there's no pretending like, oh gosh, I missed out on, oh God, $100 million windfall. No, that's ridiculous. There's liquidity events in life. Like, you're telling me I wouldn't have sold any to help pay for a wedding or a new home?
Or just got shaken out at some point in time due to a big move. I mean, case in point, silver, right? Like in October, big move, right? I'm sure a lot of people got shaken out, and it happens all the time. So I don't know. These people who were like thinking they're just going to be buy and hold, like that just doesn't happen as much, especially not in something as volatile as silver, right? Other things maybe certain people are built that way, but no.
Well, when you're the kind of guy who buys it and buries it in your backyard, and like it's been a great long-term play. I'll just say that. Dirt's free storage, right? I suppose.
Or if it's not your money somehow. And by that, I mean, like if you inherited a position somehow, I mean, you're not going to sell it then. You're going to be like, it wasn't my money. It's different.
25.45 highs, 25.15 lows. It's a 30-point range here in the Russell the past few sessions. Going back to last Thursday, I think that gives us a pretty clear trading range for what to operate around. If you're a scalper, and this is something that you do around the FOMC, which is something that I am not particularly good at, but I could recognize that if I were legging into a trade here and I'm sitting long, I would not be comfortable if we get a move below 25.15. Maybe that leads to a little bit more of a pullback, a flush down towards swing low that we had. Give it another 30 points wide. So we'll call it 24.85. Okay, 24.85 carries you basically back to where the market started breaking out higher on Wednesday of that last week. So you basically unwind the move, just a round trip, not exactly calling for a top, but just a small setback. On the other hand, if you do make your move through 25.45, there's not really standing much in the way of a run up into the yearly highs, which I think is the important point. We got to get a green light here. The Russell's very well set up for continuation. It's almost as similar as the NASDAQ is right now, where you get that move through 25.850, 875. This is golden for a retest of the all-time high.
I can't help but put this poll in the chat because I'm curious. Looking at the full year charts here, SPYs, Qs, Russell and Dow, right? You can look in the form of them in the Russell in the futures, continuous contract. You can look at them however you want in the ETFs. But this is the first year that I know, Chris, that I can think of in the last several that they all look the same on a year-to-year basis. I mean, without the numbers on the side of the screen, I could pull these charts up and you would not be able to really distinguish between the three. Am I wrong? Or, tell me if I'm wrong, because they look very similar. You could argue some parts look a little bit different, right? But it largely looks the same. Huge dip March and April, generally trending higher throughout the rest of the year with a few dips here and there, and all those dips look the same. So that being the case, if you had to buy one of these and looking for a potential 20% gain over, let's just say, the next year, which one would it be? I'd be curious. But they look all the same. And it all started, my thought process on this all started from looking at small caps, because we have looked at this chart so many times over the last several years in small caps, and it looks so ugly. And it looks the most technically clean that we've seen in the last several years, man. And it's kind of interesting to see that, right?
It's been a long time. Small caps, and this was, we think about our longer term. I need to go to the monthly chart here to get the proper view. Let's go to the weekly. You kind of see like this cup, not quite a cup and handle, but there's this long-term trading range that we've started to poke through. The highs that you have from 2021, the highs that you have here from 2024. We just made a pullback after breaking out. We make a pullback into a former swing high and then bounce from there. So failure up here would be really damning. But if not, the Russell looks great. And then you think about the composition of companies in the Russell, all these companies that don't make any money, 40% of companies in the Russell don't make money. And the companies in the Russell that are doing well this year, the average company that doesn't make money in the Russell is up about 45% year to date.
Why you got to talk so much sense, Chris? Why you got to make so much sense? Let the people decide.
People have decided. Pigs fly, man. And that probably doesn't change into 2026. I was just bringing up this point, and it's not to be political. It's not the point here. It's kind of like how when the Biden administration said, yeah, there's no inflation. Don't worry about it, folks. It's all transitory. You kind of got the sense like, oh, they're not going to stop spending the money. This is going to get worse. The Trump administration, with respect to the affordability conversation, saying similar things like it's a made up term. And then we just came out of a month where we had record government deficits. We spent more money in the most recent fiscal month, Jamal, than we did at the peak month during COVID. Deficits are going way up, and now we're going to cut rates.
Right.
Yeah. I mean, like, it makes sense that the small cap stocks, slip of the tongue. But companies that aren't making money are the ones leading the market this year in anticipation of this lower rate, higher government deficit environment that has been coming into the picture. And it seems like we're going to get more juice next year with this cut tomorrow and then potentially 2 more in 2026.
No, it's a good point. I mean, this is not necessarily an environment for them to particularly make more money somehow, unless there's something I'm missing. But, look.
Literally every industry in the country since June has lost jobs except for healthcare and then government services, which looking at productivity measures, those are two of the most least economically productive industries in the entire country.
We're also dealing with a government that's not necessarily always following the rules. And look, I have no problem with that. I'd love to see it. I mean, honestly, and again, I'm the least political person you know. So I'm not talking about this from any political vantage point. It's just the fact that we're seeing PPIs, we're not going to publish those jobs reports. We're not going to publish those because we know that the Fed's going to use those to make certain decisions that might not necessarily do what we want them to do, right? And that's clearly what the administration is doing. So I don't know.
We've been misthinking about this wrong the whole time. Oh my God, it just hit me. They're not hiding the reports because they're bad. They're hiding the reports because they're good. And the Fed won't give us the rate cuts if they see good data.
Look, if this leads to a point where I don't have to pay taxes, then I don't really give a shit. I mean, I just hope that's what I'm looking for.
Yeah.
Look, hey, I heard once upon a time, some men just want to see the world burn. And so I'm curious if that's where this is going to lead, then bring it on. But I mean, if we're really following rules here, you're right. The small caps are not going to benefit from this type of environment. Again, just talking about the environment. We're not talking about anything political. The small caps are not going to benefit from the type of environment that we're basically headed towards right now. If we're cutting rates into potential recession, it's just not going to work. So it's something to keep an eye on.
So then we can't get recession for small caps to go up, which means we got to keep spending that government money, Jamal. Government money. Not your or my money, of course.
No.
Let's go into bonds, right? That's a good time. I don't have any more Christmas-related quips.
Ooh, they lost
for the rest of the show.
I just realized they lost it. I might have to try and buy my call spread again. I was trying to buy ZB call spread yesterday.
That's not what I want to be doing.
I know, of course not. I know. I feel it. You were just in it.
I was in it. I flipped. And I think the flip here today looks a little bit more substantiated, Jamal. I say that only because I go to this 4-hour time frame. We ran up into the 116 level, which had been that line in the sand for us. We've seen it work as support in October, again here in November. We run into it. We then sell off. 10-year note auction was today. 10-year note auction was today. The prior 10 and 30 auctions weren't great. They both tailed. This one for the 10s on the screws, bid to cover ratio 2.55, which is a little bit higher than the past one was. So I suppose that's not terrible. That stems the bleeding, or at least the weakness here in the market somewhat today, except for the fact that we're dropping back down towards 112 here. So consistent with that, Jamal, one thing I was trying to do yesterday, which I couldn't effectuate, which needs to try again here, is to get out of this bond position because I don't want to be short an iron condor anymore. Thank you, sayonara. Instead, what was put on was a reverse iron fly because at a negative IVR and a market in notes that's effectively sitting right at, well, its low point that we've had over the past several months, and quite frankly, the midpoint of its 6-month trading range. I see these low vols. I don't really care where notes go right now. I either want them to go back to the top of the range, or I want them to break down here and show me that this is a market that is literally topping out, which on the continuous contract looks pretty terrible. So I'm a little bit more comfortable doing that than being short an iron condor, which, as we see, I was writing it out. It's going to cost me like $40. Happy to take a $40 loss to flip positioning and maybe take advantage of a market that gets a little jittery on the other side of a Fed, because I have no clue. I cannot wrap my head around why bond vol is just so dang low.
I mean, there's no surprises, I guess, is the only answer, right? There's really no surprises, I guess, in bond and bond land, and I guess that's why the vol is really low. It's crazy to think that little over a year ago this time, these were 110 and change, 111. I really
we're basically still there.
I know. I mean, I don't have huge conviction in the idea. I was just looking at the idea of buying a call spread out in February because for no other reason than we've just seen this recent fall, right? And again, it's going out to February. I was looking at doing the 116, 118, seeing if this gets close back towards that top of the range. Not a whole lot of premium to do. And maybe I'll try it. Maybe at the end of the day here, bonds will lose their bid, and maybe I'll try to get that on again. We'll see. I'll actually try to get it for the price I did yesterday. But this has been one of the harder trades to figure out ever since the breakout in September. Honestly, I thought that was it, and it was about to make a move. I think I tried to get long at that point in time. It didn't work out, and I capitulated. I was done. I know you, and not only that, I talked with Thomas recently. Both had call spreads, and you both got out more recently, understandably so, because there's just a lack of direction. And I think sometimes when you just can't figure out a trade, it's time to just leave it alone.
Time to leave it alone, or in my case, time to switch sides. I'm a real Benedict Arnold here when it comes to the bond market, betraying my beloved U.S. Treasuries, Jamal. But you know what? If this was any other product and that's what the chart looked like, we'd say the same thing. Head and shoulders pattern, break of an uptrend. Got to be a top in the short term, which really just feeling really good about that longer term bond bottoming call in both CB and ZN. But maybe now's not the time. Maybe we need to do a little two-step and see a trade-off from what is, we're calling it a 3.5 point range here. Maybe it needs to drop down into the 113, 112 range before this thing finally has a chance to ultimately lift off. But notes and bonds, today we have a 10-year auction. Thursday we're going to have a 30. In between, we'll have the Fed meeting. I've been following these Supreme Court blogs. I think that there is a chance that we hear something about tariffs maybe Friday this week.
Mm-hmm.
That would be interesting, maybe, but certainly before the year's out. And we're kind of running down the calendar here because this Friday is going to be the 12th. And then we have the 17th. And let's see, we have the 12th, the 19th, the 26th. So will the Supreme Court be doing anything the day after Christmas? Probably not.
Yeah, probably not.
So we have 2 Fridays left in the year, in the work year.
Not much time, Chris.
Likes to put no, so I'm just like, if there's 2 Fridays left in December, and the Supreme Court likes to put their decisions out on Fridays, just like a good PR firm for a beleaguered, Fortune 500 company would do. Just sweep it under the rug at 5 p.m. once everyone's on the train home for work and the markets are closed.
Yeah, we've seen those a lot.
Yeah, I mean, like this week, next week, we could get to the other side of the Fed, and everyone goes, "Oh, finally we can relax. The year is over." Au contraire, mon frere, we have December 16th, and then we have this tariff announcement. So, and a BOJ rate decision that could ultimately yield some intervention in the end. Yeah, we're entering a little bit of a macro storm, and that's one of the reasons why I look at bond vol being so low and say that just makes no dang sense to me. So playing for vol expansion here, it's not a typical Tasty thing to do, but playing for vol expansion, either go up to the top of this range or show us a neckline break and get down towards 110. Either world I am comfortable living in. It just can't stay here.
Yeah, I mean, and again, we got a small catalyst. It could be something that leads. It could be one of the things that leads to a liftoff. You're right. For the idea, I actually want to see ZN break 112 more than anything. I think that would be more interesting to me than ZB, honestly. But like right now, it's just been somewhat of a tough trade. It has.
You mentioned looking some real, you go 73 days here in notes. Could we go 108? What kind of long exposure are we talking about?
I think for the further upside we go, it's not as bad, right?
I mean, you're
Still all
telling
kinda
me
cheap.
that right now, because of how, and this is also part of the planning here, right? You're telling me that for only $109 of buying power, I can lock up 100 days to expiration, 108 days to expiration, a long 116, 117 call spread that at worst is going to cost me $60.
Basically, yeah. And it's one of those where you can just not even have to look at it every day.
15 to 1 risk to reward. You were going 2 points wide before, and that's going to set up something similar. 18 to 1 risk to reward.
I was doing that in ZB.
It's a little bit of insurance.
I was doing that in ZB. February 116, 118.
Yeah. I think you have. Today's the day to do it. Is the point while the vol is low, because other side of the Fed, we've already had vol. How much more vol crush are we going to get?
Right, exactly. Today is the day to do it. I would think. If I was doing it in ZN February, I mean, I don't know. I'd have to go with the half maybe. I'd do a 113. Oh, gee, no, that's crazy. Not 115. I don't think. But yeah, I like ZN because I feel like there's been a lot more movement, and obviously more recently it would feel than anything. And obviously there's so many other things that are tied to the 10-year versus 30-year. But I feel like I like the risk reward in ZB doing the February one. What was I doing? I'm eyeing up the February 116, 118, a lot more premium than the cheap one in ZB. But again, going out to February makes it a little bit easier. I don't know. Maybe I just do nothing. maybe I just do nothing, man. I don't know. It is an interesting trade, though. I think, like you said, considering where we are right now, it's a play on something potentially happening that we just did not expect to happen, because markets have been so quiet, because the ranges have been so tight, because the vol is so low, not only in equities, but in bond and many other things too. So that's why it's an interesting trade.
Yeah, and there's a little bit of a difference between ZN and ZB. ZN, of course, is the 10-year note future. ZB is the 30-year bond future. Both are priced in points and 30 seconds. The tick size for ZN is half, whereas for bonds, for ZB, it's 1. The tick value is $15.62.5 for ZN and $31.25 for ZB. And then the overnight buying requirement, Jamal, which is something I frequently talk about. ZN is a smaller product, which makes it a little bit more accessible for the typical retail trader. You're talking about 2,063 versus 4,070. So notes, bonds, they're both in the same ballpark, right? You're talking about a 4.9 IVR versus, a 4.9 IVR. So it's not like you're getting compensated in the vol realm additionally for looking at the bigger product. And you always want to tailor the product that you use. So right now, ZN, if I'm looking for vol expansion here, if I wanted to take a longer term swing on something, heck, we could go out to 73 days. You could try to go, let me do the 108. We could go try to buy back the 114, say 116 here. That's better than a 6 to 1, $300 something of buying power. So be creative with the low vol. It's not a typical tasty environment, right? So you have to be creative if you want the exposure in this particular product right now. High-Yo silver.
Away.
Yeah, it's an okay morning.
What a move.
Oh, 4.7. Oh, $61.14 now. Didn't see you there. Looks like that was a bull flag, Jamal.
Yeah, looks like it was, right?
Why we stay low. Yeah, I just can't help but smile. I mean, like silver has made my year. And I don't betray. I'm loyal. It's one thing about being an Italian-American New Yorker. Okay. We stick with the people who treat us well. And silver, by the way, yesterday we started noting that as the market was perking up, there was a little bit of steadying in the vol. We stopped the pullback. That was the clue. Only wish I had more. 65.6 IVR. We're in uncharted territory here. There is enormous call skew right now in silver, more in silver than there is in gold at present time. Across the products, across the strikes, just name it, Jamal. There's been heavier volumes, particularly in SLV, which I think is a Frank was telling me, he thinks that we're seeing, easily volumes about 5, 10, 1 month, 3 months, 6 month yearly averages across the board. It doesn't matter what strike you're looking at. The volumes, the open interest have been just surging all session long. So I feel like this is the real deal. And it does follow on with a conversation point from yesterday that we were discussing here on the show, which is about how commodities are positioned, generally speaking, going into next year. It feels like this is DBC, the tracking index fund, and that's a little bit more heavily weighted toward energy. This is DJP. It's a little bit more heavily weighted towards the metals. They both feel like they're trying to crack on through multi-year levels of resistance, no matter how you strike it. This is a beautiful rounded bottom. Is this a cup? And here's your handle here, and we're finally just breaking out. But the metals look fantastic. And so I don't know how, I don't see the risk to reward being worthwhile in saying that this thing is done when, again, Jamal, has anything underlying this market changed? Have the influences gone away? No. So why would the trend not be our friend right now when it's been our best friend all year long?
The cool thing about this silver chart is, again, this is another one that looks as good as it has throughout the year. And it has technically followed rules. It really has. I mean, look at the more recent stuff. It's cup with handle and then boom, explosion, breakout, volume higher, consolidated for, 5 days, which again, anything could have happened over that 5 days because it's consolidation. It could have broken downside, it could have broken upside, but it chose the latter. And yeah, big move here. I think this is the area now where we could, and I was saying this earlier on the show on OTCL, I think now from here, it could go anywhere from $3 to $5 higher. And depending on the fashion in which it does it, that'll determine whether or not there is a quick turnaround, if you will. So if you're looking to get in now, I think you keep it tight. I don't necessarily know if you, I can't tell you what to do, but I wouldn't want to sell downside. I wouldn't want to sell it heavy anyway. It would be very tight. And again, if you're using silver, actual future options, you're going to have to really keep it tight in there because it can get expensive pretty fast. But this is a beautiful technical breakout, if you will. Again, after a huge breakout, and again, this is the second time we've seen this where it's had a huge breakout to the upside, a little bit of sideways consolidation, and another breakout, and it's looking great here. And again, I think the fashion in which it trades from here will help you determine what happens. If we get another $5 upside huge breakout, I think it's time to vacate the premises just for a little bit. But if it does another sideways consolidation from here, look out. It could be another big time breakout.
In those Aaron Ross Sorkin shows? No, not Aaron Ross Sorkin. Aaron Sorkin.
Aaron Sorkin, yeah.
Yeah, not Andrew Ross Sorkin, Aaron Sorkin.
Yeah, the guy who did the one who did
West Wing.
Yeah, West Wing. Also did the Facebook story.
Yeah, he invented the walk and talk in TV shows.
Yeah.
Walk with me here. Wedge breakout, swing high, swing low, $67.82 target. Jamal, I recall us saying crazy things like that when this was trading at $23 a few years ago. So what's another $7 here between friends?
Hey,
that's actually not that big of a move. That's less than 10%.
Yeah.
And we've certainly done more than that since November 20th. Yeah. So I'm actually looking for the rate of change to slow down, maybe. But that's also one of the things that we need to. No, but that's one of the things that like you had to. It was, I know, for traders like getting their head around that with gold. It's like, oh cow, gold moves $50. Yeah, when it's trading at 2,500, that's a 2% move. Now that it's trading close to 4,400, 4,200, that's not in the same realm. It's just over a 1% move now. And so this thing to get to that same 2% move, now it's going to be moving $85, right? It's no longer moving $50, even though the points on the contract are the same. Craig from CME was talking about this. When they started doing some of these products in like ES or MES, you look at the multipliers and like it was $100,000 position. And now because how the indexes have grown in value, now they're like, now you're swinging a $300,000 position. So it's silver, we're in uncharted territory. There's no liquidity up here. There are no highs here. Nothing has ever traded up here before. Also, volatility is expanding again. So, my only regret here, Jamal, is looking at that stupid gold silver ratio and going, oh, it's near 70. I should get more gold and copper instead of, but the other side of this is, as I was talking with Tony and Nick this morning, Tony said he's looking at something long like 2 gold, short 1 silver. When I'm thinking about the pairs trading, it's like, no, I'm going to be long all the metals. I want them all.
Yeah,
it's just that the weightings of what I'm holding on to, was a little bit less silver than gold. And obviously this is up another 7 cents since we started talking.
I prefer the latter, what you said. I would rather be long them all than trying to sort of do a pair trade with them. I don't necessarily think that works personally. That's just me. I think the idea of the gold silver trade when it's going much higher, is shooting up to 80, 90, 100, particularly 100, because that, if you look across time, typically sort of signifies some type of serious world strife going on or some type of war or something. And again, it was about 100 earlier this year because essentially we were in the middle of a war. It's kind of a currency war, kind of a tariff war. And I think it does more so in those times than anything. So I like the idea. I'm looking at the idea of, as a matter of fact, I think I'm going to pull the trigger on this, the February silver trade. God, I am really into these Delta Buster trades right now. I don't know what the hell happened to me, but these things are really fun. I'm trying to get an 85-cent credit, selling the 50-55 put spread to buy the 60-70 call spread. That's the play.
Mm-hmm.
I was trying to find the same thing in silver, the futures options, but it's a little expensive for my taste.
They are expensive, but sometimes you got to race chip. And at least this year it's worked out. It has not worked out for me in previous years when I take that attitude, that's for sure. 4,300 in gold looks like it could be a next upside target. I'm not loving what we're on offer, what's being on offer here right now, but I'm looking at the volatility and my mind's kind of racing because why isn't gold vol expanding? Maybe it is today as we climb.
It's small though. I mean, it's not really been much of a big move here,
Well, this is a little bit of a change in pace. Okay. I would point this out that when we had this rebound yesterday off the lows, did volatility go up throughout any of that? It did not. Today, as we come off the lows, volatility is back on the rise. And I like that relationship. So, gold, it's riding the rails here, not doing anything, flagging perhaps. If so, 4,300 tomorrow looks like it could be in sight. And then, at the 4,300, then, yearly highs, all-time highs, those quickly come back into focus from my vantage point. Copper right now, this is at my line in the sand for staying long in the short term because that's not the kind of candlestick I want to see. What the good metals giveth, they also taketh away on the same day, so you can't win them all. But thankfully, silver doing a little bit better than copper, net. 5.30 is my line in the sand. Below there, maybe we're back inside of this range, which means I don't want to be long if we've just made a false breakout. Not exactly the most reassuring looking chart in the world right now. So hopefully some recovery. London copper prices hit record highs today. You can thank your local tariff man because the U.S. right now has too much in our short-term storage and the world is a little bit of a wreck there. So unfortunately, the copper futures that we trade are not the London ones, but London copper hitting record highs. We don't have it here on the platform because of the contract history, but if you were to go over to CPER, C-P-E-R, don't need to kick that wire. If you go over to CPER, then you would find a 45.9 IVR, Jamal. So that is up, trending a little bit higher from where we started the month. Generally speaking, vol coming back into the metals has been a sign of bullishness. So let's not ignore it. If you're being a short delta person, be aware of that particular wrinkle here. It's not like trading equities.
100%. Got to.
We keep moving. We head over to the land of energy. Energy stays weak. We see here that oil prices are down 1.1% right now, Jamal. So that little bit of a hiccup yesterday turned into something a little bit more. Natural gas prices likewise slammed as well. Can't believe this thing was nearly a full dollar higher just 2 trading sessions ago. Not the end of the world for someone who is short an iron condor because the market's coming back in and getting pretty close to that 5.5 strike there.
Yeah, which one are you short? I'm short one as well.
49 DTE,
This thing's been
5557, 3735. So, 55 to 37. We're getting pretty close to the midpoint. 90 cents away on each of the short strikes. So this is the midpoint for me. I'm not upset. I got a question for you though. Do we treat the highs that we had 2 days ago as a reliable place to operate around if we're going to do a short iron condor or a short call spread? Mr. Westwater thinks that the weather is changing quickly, and that's the main reason why natural gas has done what it's done.
Well, I'm certainly about to. So my iron condor involved the 620 call spread and the 380 put spread, and I did that heading into this move. I don't remember exactly which day. I could look it up, but it doesn't really matter. All we need to know is that right now that put spread is looking a lot closer to at the money than it was before, and so I typically don't love the idea of rolling, different sides of the iron condor. I know there's a lot of tasty research that says it works out well, but there's sometimes where this thing just keeps moving around, right? Particularly a name like this. However, I think, again, we saw a really huge move heading into this, and now we've seen some relief here. So I want to get my call strikes on the orders of not too far from where you said. I'm going to probably go with the 5.5 and 20 cents wide, maybe 5.5, 5.70 I think will work out well. It's really not a whole lot of juice there. But I don't know. I don't want to get too carried away and go down towards, I guess I could go towards 520. Maybe the recent high of that contract, I guess I can go towards 520. Somehow this is going to backfire, but what the hell?
Yeah, I think this is probably going to be a longer-term buying opportunity for natural gas, given the power demand situation that we have in the United States right now. But if the weather models are shifting and we're going to be looking at warmer weather pushing forward into the Midwest after this forthcoming cold snap, then you guys get lucky and get your mud season a little early. That's nice. But it also means that maybe natural gas demand will be a touch weaker. Either way, though, across the curve, Jamal, you can see that prices are in sharply. In fact, some breaking even below 4 for the first time. It's still a bunch of vol, and it's directionally unrelated to anything happening with the Fed. So there is, I think, something to do here still. If I were putting the trade that I have on, it's at 49 DTE, so this is very much within the wheelhouse of what's acceptable still at the same strikes. Still a little bit better than risking 2 to make 1 at near 60% probability of profit. That would work. And if this was a position that we wanted to realize today from when it was put on, we'd still be able to take something out of it because of how much the market has corrected here. Either way, natural gas, oil, the directionally neutral stuff has been bread and butter for us. So I don't want to say that it's over, but hey, doesn't seem to be impacted by any rate speculation. Hey, Jamal, I love saying this. Dollar call it a comeback. Most of these titles are to miss the production years? Team. Yeah, you know how it is.
I do.
Dollar here is perking up for a third time out of 4 days. Back above its 50-day moving average, not quite back above the 1 month. Japan heading for war with China. That's what people are telling me. I don't know. All I know is that the market is looking at a depreciating Fed rate cut expectation cycle, and they see a reason to be long the US dollar. So all of that concern is me sitting here, this put spread. Well, we just erased several weeks worth of gains. We're now sitting at the lowest level we've had since November 24th. In terms of sitting in that long put spread here, ahead of a Fed meeting in which maybe the BOJ does something on the other side. This is part of the reason why I want to take down some of my positioning right now. The yen thing is working, but at 31 DTE, that's not nearly enough time. I'd hate for this to turn against me. And then all of a sudden wake up next week, it's like, all right, I got 25 DTE left, and I just, gave away a few $100 here.
Yeah.
Get out. So I'm getting out of the yen thing. It's worked out well. Hopefully that gets filled. It's going to be a similar story here wherever I go in my book, where if I'm going over to 6E, I've got to clean up my short call exposure here. I don't want this on anymore. Not much of a gain, but don't want so much risk concentrated in the dollar, in rates, in stocks and metals. So I'm going to be taking off all of the like AMD, Corning, all that stuff, Apple. It's all got to go today. So I'm going to be winding all that down from my follow page here over the next few hours.
So yeah, I have the call spread and the yen out in March with the hopes of some intervention and possibly some bounce back there. I got the 0067, 0069, so a little further upside, similar to that kind of bonds trade we were talking about. And looks like you're short the euro. I am also short delta the euro vis-a-vis a put spread, and I think I moved that further out to February. Yeah, I moved that out to February. So sitting in that, those are my two positions in there.
I'm not loving what we're seeing in the currency space here. The cryptocurrency space is far more interesting in terms of vol and price action, which, by the way, Bitcoin's added another $200 or so since we first started talking. I'm looking for that 94,000 breach up to 95. Okay. 6J is off 0.65%. The British pound off by 0.21. The Aussie here, though, has been an absolute beast. It's been really stable for most of the year, but over the past few weeks, it's been more or less a straight line up. They are a country that has China exposure. They have broad commodity exposure. They export metals. They export petroleum products. Australia, maybe this is a canary in the coal mine. Why is the world getting so perked up on one of the singular major currencies out there that tends to do better when commodity prices are higher? Why is the Canadian dollar, for all of its faults and not being able to enjoy higher energy prices in recent years, why is it doing better all of a sudden in this environment where I think about DJP, I think about DBC, and these broad commodity ETFs that look like they're trying to make some sort of meaningful turn here. Whether or not they actually do is another story, but it looks like we're seeing some of these commodity ETFs try to make a turn to the upside. Not much more we can do. Jamal, we're going to have to be back later, of course, because we need to make way for the next show. What's next on the calendar? It's FedMiss, of course, but not just FedMiss. It's Bank of Hanukkah. I don't know. Bank of Canada interest rate decision coming up in the morning, 9:45 a.m. Eastern. So it's a great day for those who like to look at our central banks. Will the inflation data come out tomorrow? Oh, it's on the calendar, but rumor has it it's been pushed back to next week. What are the odds?
What are the odds?
Jamal, we'll see everyone in a little bit. We're taking a quick break here on Tasty Live. Grab a drink, grab a sandwich, come back for more. Dr. Jim Schultz is in the house. He's here from Theory to Practice.
Forbes called us best online for options trading. Investopedia, best for options trading, period. With stockbrokers.com, we're number one for options and futures trading. The Motley Fool really likes us. And so does Business Insider. So what else can we say other than boom? Trade like a trader. Tasty Trade. Make your move.
Grow a strong community with Tasty Trade's referral program. When your friend joins Tasty Trade, you'll both receive $100. As your community grows, you get more bonuses. The referral program runs through December 31st, only at Tasty Trade.
What does it mean when you hear can't buy an uptick?
When a stock can't buy an uptick, it means that the stock just continues to go down every single day, every single minute, every single hour. It's a phrase to use when a stock just continues to go lower.
What's it mean when you eat like a bird and shit like an elephant?
Eating like a bird, like an elephant, that means you're probably picking up a couple pennies here and there on a trade. And then you might have one trade where you get a little too big for your britches. You have that big loss and it kind of wipes it all away. So you're pecking at profits and then you piss it all away.
What does it mean when you get whipsawed?
Ooh, when you get whipsawed, you are basically selling into the hole or buying into a big rally, and then the opposite happens. So let's say you have a strangle on and the stock rallies towards your short call. If you roll up the short put to add more premium to the position and then the stock drops, you have effectively been whipsawed.
from Theory Practice. Welcome to the show today. Welcome to the broadcast, man. Welcome to the Tuesday edition of what it is that we are trying to do. I'm so glad that you are here. It is only because of you all that we can do what we do. So thank you guys so much. If you are watching over on the Tasty Live network, I would actually bounce on over to YouTube because you can join the conversation and join the discussion and communicate with your brethren that are there in the chat. You can celebrate. Man, I don't know what you can do from a market standpoint, but if you are a silver bull, man, you can celebrate. If you are a silver bear, ooh, baby, you have seen better days indeed. So, Ryan, go ahead and bring us into the market. Let's take a look at what's going on, man. EMA S&P's unchanged. Right, you got the risk-free instrument, also known as the NASDAQ futures, up 44, pretty much unchanged. You got the boomers down 147, pretty much unchanged. You got the Russell up 7, pretty much unchanged. But look at what is not unchanged. All right, look at my silver bros out there. You got SI futures up $2.78. You've got the silver SLV index up $2.34. What a run that the Hunt brothers are on. Like, you thought they were over in 1978? Man, they are just getting started. So silver up over 61. Man, that's some wild stuff. You got gold even up a few points. Gold up 20. You've got the shifties celebrating with gold now at 42.37. And of course, oil's down. You got bonds up. You got everybody getting ready for tomorrow, which we know, guys, there's never been a more important FOMC print. Never been a more important economic data point than the one that's coming on down the chutes tomorrow. It is no less imaginary. It is no less fictitious than all the others. But man, it's coming, and we can't stop it now. So if you look at volatility, let's take a look here. You got volatility futures down 9 cents on the day. So volatility futures pretty muted. And then spot volatility, the old VIX, the old VIX instrument, that guy is going to be down 3 cents on the day. And so you've got volatility waiting. Everybody's in a wait and see type of mode. So maybe this is a situation where market-wise, we just chop around. Like, market-wise, we're all just kind of in a wait-and-see type of scenario getting ready for tomorrow. Now, we are going to add a trade for FOMC today because, again, the show is 2:30, right? Now, we know the real announcement isn't until 2:30. Like, we know the statement drops at 2. We know the interest rate change drops at 2. But what do we not know at 2? I don't have a hex color. I don't have a hex code. Do you have an RGB code? I certainly don't. And that's what we need at 2:30. What shade of purple did Powell go with? And so that's going to be the market mover. I don't really expect too much movement on the number. I don't really expect too much movement between 2 and 2:30. I think all the fireworks are going to happen once he walks out from behind that curtain. And we all know it's all exposed. It's all laid bare. Like, he went lilac or he went deep purple. Like, that's what this is all about, man. And so I'm not going to be able to trade that with you guys live, or maybe I guess I could at 2:30. I kind of want to have something on going into it, though. I want to have something going on into it. So just in case we miss an opportunity right there at 2:30 or 2:31, I want to be ready to kind of strike while the iron is hot. So we're going to do that here in a couple of minutes. We're going to get an FOMC trade on. And then as far as the things happening in the portfolio, there really isn't too much going on. We have our MES ratio spread. We have our MNQ short put. We have our Home Depot trade. We have our Starbucks position. One thing I do want to mention, because I know that we just got the 12 days of trading underway, and today we're focusing on IRAs. Now, right now, I am not in an IRA, but you guys have seen me utilize, and I'm doing it in the portfolio right now, right? Futures options. For those of you that are trading in an IRA, you might have it open right now. Like, if you have it open right now, test this in your own account. You know that if you want to do something undefined risk, you want to sell a put, you want to sell strangle, whatever, and you want to do it in SPY, you want to do it in QQQ, what's going to happen? You're fully margined all the way down to zero. It has to be a cash secured situation. And so obviously from a buying power standpoint, that's not super efficient. That's not the most desirable outcome that we would like to see. And so when it comes to, selling equity options naked in an IRA, that's a bit of a bottleneck that's difficult to kind of, work around. But the easiest solution, if you do want undefined risk exposure in an IRA, is go to the futures options. So MES and MNQ, like, for example, let me just, give me like 2, 3, give me like 11 minutes. Let me work through this just really quick. So if I go back into MNQ, so / MNQ, I go to the trade page. I go to like, January 16th, right? I already have this position on. So, pay no mind to this position right here. This is the one that we currently have on. But let's say I wanted to sell a 30 delta put in MNQ. Or let's just say 35 delta, just to make it a bit different from what I currently have on. That would be the 25,400 strike. Right, there's your 35 delta. The markets are actually reasonably decent, so I would imagine Vinny is not doing these markets anymore. That's Vinny Batista for people that are brand new to the show. Taking after his dad, just super wide markets, just ripping people off left and right. So this 25.4, this guy looks okay. So if I go in here and I go to sell the 25.4, you're going to see that my buying power is very, very favorable, right? $2,400. Now, naturally, you're thinking, well, Jim, that's because you're in a margin account. Like, Jim, that's because you're getting the margin relief. And to some degree, it is. But here's what's amazing about futures options. Again, if you have an IRA, in fact, we've got 500 people watching, 490 people watching? Do me a favor. If you have an IRA, put this trade up and then drop the buying power impact in the chat. Like, drop it in the chat. Go sell a 35 delta put in MNQ and drop the result in the chat and let us all know what you actually discovered. That's what I would like to know, because I'm pretty sure it's maybe 4,000, maybe 3,500, whatever. Let us all know. What you're going to see is you get unbelievable buying power relief with short puts, short strangles, undefined risk positions in the futures options, even in an IRA. It's not quite as good as a margin account, but man, it is light years ahead of equity options where you have to be cash secured. And so do us all a favor, let us know, because I don't have an IRA open right now, so I can't show you guys what the actual numbers are, but I'm willing to bet that at least one person out of 400, 500 people has an IRA open right now. Just let us know what it is. You don't even have to put the trade on, of course. Just let us know what it would be. So anyway, I wanted to bring that up because it fits very nicely with the 12 days of trading right now with the focus on IRAs. All right, so let's see. If I go to, there's not much to do here, man. There really, really isn't that much to do with the current position. So I want to see what you guys, well, hold on. I want to see where you guys are at. Maybe you guys have some trades for me. Maybe we could do a couple of things together. But if I go in here, let's go to, let me see. If I go to, are we going to do SPX? I mean, I think we kind of have to, right? I'm kind of thinking, let's do a little something in SPX. It's a Tuesday going into Wednesday. And so that's obviously going to be a little bit tricky when it comes to buying powers, or not buying powers, but when it comes to butterflies. It's not my favorite butterfly. You guys know I much prefer Wednesdays going into Friday, Thursdays going into Friday. Those are a bit more ideal for what we're trying to accomplish. That is, of course, make money. But if you do a Monday or Tuesday, it's gimmies and gotchas, right? All is not lost. All hope is not gone. Because when you do an earlier in the week butterfly, the reality is if we get the move that we want tomorrow, like during the show, we're not necessarily going to make a ton of money, but we might make a little bit of money. And by doing the butterfly earlier in the week, we are in a situation where we now give ourselves multiple opportunities to potentially be right on this trade. And so if we should happen to miss the mark tomorrow, which it doesn't happen often, only 4 out of maybe 5 days of a given week, then we'll have a chance to maybe remedy things Thursday and Friday, right? The last 2 days of the week. Whereas if you do a Thursday going into Friday, then all of a sudden, you don't really have any wiggle room. You don't really have any opportunities to kind of get out of, kind of being behind the 8 ball there if you happen to miss the move in the market. So I'm going to go to SPX here and let's do, oh, wait a minute. Hold on. Hold everything. I was kind of operating with individual stocks, right? Individual stocks, you've got Friday expirations. Individual stocks, you've got these weekly deals, right? When you go into something like SPX, this is the big sandbox. This is where all the big dogs are playing. You've got daily expirations. Look at this, man. We've got an expiration here in just a couple hours, hour and a half. We have tomorrow's expiration, right? We have, Thursday's expiration. We have Friday's expiration. So there's a lot to choose from. There's a nice little menu of different things that you could choose from when it comes to the DTE that might strike your fancy, that might be what you are indeed trying to accomplish. And so I don't know, guys, maybe we do. So what if I did? All right. So what if we do one? So obviously we're going to play it to the downside, obviously. Right. So we're going to, I say that jokingly, of course. I'm like 27% sure that this is the way that you should play it. We're going to play this to the downside, but I'm actually not going to do, so I'm going to use the additional expirations that are available in SPX, and I'm going to muster myself up kind of a 1 DTE. I'm kind of classifying this as more of like a 0 DTE type of play for me because I'm putting it on now, but I'm not doing it for expiration in an hour and a half. I'm putting this on for expiration tomorrow at the close. And the beautiful thing is, if we do get the move right, I mean, we might be going to Bonefish tomorrow night. I didn't think that we were. Right? I didn't necessarily call ahead, although I'm pretty certain there's going to be plenty of tables available for us. So if we happen to get the move right, then man, we're going to be in a really good spot tomorrow night. And man, that's some good stuff. So what if we did 68.40, 60, 68.05, 67.70? Let me just try a 35 pointer. Let me just take a look at this. Is this crazy expensive? Wow, it's not. It's only $5. Guys, look at this. I mean, are you guys seeing what I'm seeing? This is only $5.35, so it's, a little under 2% of the account. And I may change this a little bit slightly to take a bit more risk off the table. I may leave it right here, but I'm a little bit surprised. I thought it was going to be $7 or $8 for a $35 wide butterfly in SPX. You're paying closer to $7 at least. It's rare that you can get one for under $6 because the width of the spread is really favorable. Remember, with a butterfly, the wider you go, the better the situation for you. Now, of course, the wider you go, the more it's going to cost, right? The wider you go, the increase on the debit on the strategy, which puts more risk at play for you. And so it's obviously not going to be completely gotcha-less. Like you're going to have to be willing to absorb, some of the gotchas with this situation. But man, I like this trade a lot. Man, I think we found it, man. Did we just luck box our way into like the perfect strikes and the perfect situation? And by perfect, I mean, this guy's probably going to 0, but we're going to go ahead and put it on. I mean, 68.40, 68.05, 67.70 for tomorrow's expiration. So this is going to make the show tomorrow a little bit extra fun because, the number will have dropped at 2 o'clock, but everybody knows what they're waiting for. That's at 2:30. Sometimes like 2:31, 2:32, Powell likes to build up the suspense and make us wait. So hopefully he does that again tomorrow because then we'll be on air. Like we'll be on air. We'll be live. We can see how the butterfly's reacting. You guys control my trades. I control you guys back. Like it's a good time had by all, of course. And so I think this is it, man. Like, let's do it. Let's go with a little bit of something. And then, of course, tomorrow night we've got Oracle, and I think we've got like Avgo and a bunch of other stuff. And so, man, it's gonna be something. All right, so I'll do 550. I mean, let's give it a shot. Maybe we get filled. Maybe we get improved. I don't know. And so 545. We'll see if we get a little something here. No takers at 545. Let me just take it up. I'll take it up just ever so slightly to 550. I don't necessarily want fill the 550. So there you go. So there is a butterfly in SPX to the downside that is set to expire tomorrow. So this guy is going to meet its maker one way or another tomorrow at the close. I think there's a really reasonable chance that it happens on the show, during the show, and so that would be pretty cool. And that's kind of what I'm banking on, more or less. All right. So now what I want to do. Let's see here. I want to go because I don't have any other ideas, but I saw you guys early in the chat as I was kind of scanning the initial comments of the chat. I saw you guys giving me a couple of ideas. And so I want to explore the ideas that you guys have for me that are in the chat. And so I appreciate you guys so much. So very, very much. And I see you guys. Big Deal Donuts in the house. Man, James Wentworth in the house. Man, Cynthia's in the house. What's going on? Cynthia, I'll surprise and delight you really quick. Cynthia says, Dr. Jim, how do you think the market will react tomorrow? I think it's going down. I think it's going lower. Now, I don't know. I mean, what does that mean for the metals? I mean, the metals, you got gold up 20, silver's probably still up 1 million, right? Yeah, you got silver still up 280. And so they're hanging in there. I mean, I don't know. I mean, I think everybody is assuming, kind of safe waters until the end. And I even was saying this yesterday, right? Even on this very show. But now, I mean, the metals are like so strong. The market's hanging in there. It's so resilient. I'm now all of a sudden not wondering if we don't have a little bit of, turbulence. If we don't have a couple of bumps along the road that kind of take some people by surprise. And so could that happen tomorrow? I don't know. I mean, that's kind of what I'm going to push my chips in the middle on. But of course, you've got to blaze your own trail forward through the forest. And if you've seen the show for any length of time, you know that if you fade my trades, my directional trades, sight unseen, you're taking 6 to 12 months off of all of your financial independence goals. Every single one of them. Like they all get brought down by 6 to 12 months. And so again, it would just be good, sound strategy to probably be playing the market higher. tomorrow. But good luck to you there, Cynthia. Whatever you decide to do. Let me see. Who else can I surprise and delight? Oh, Ash Finn. What's going on there, Ash Finn? I see you with an IRA question there near the end. You say it has to be cash secured in an IRA. I thought, no, it doesn't. And that's what's crazy. That's what's crazy about it. Equity options do have to be cash secured. So again, to be very clear, you sell SPY, you sell QQQ, you sell IWM, you sell DIA, kind of throw a bone to the boomers, right? Those are all cash secured, yes. But the futures options, right? Kind of, the regulators and the powers that be, right? The Sosnoffs, the Sheridans, the Batistas, right? The Malmats, of course, right? The powers that be that are making all these decisions for the peasants and the plebes like us. We get buying power relief on the futures options. It's crazy, even in an IRA. And so this is why I was asking you guys to put it up. What is the buying power in an IRA? I don't see anybody put it in there. Smiley Plain said 24.41. That sounds too low because you typically have to pay a little. You're not paying anything, but you have to put up a bit more than you would in a margin account. And so if you're in a margin account, I think it's 2,400. If you're in an IRA, I'm going to say it's going to be closer to 4,000. It's going to be between 3,500 and 4,000, which again, that's a significant difference, but it's not nearly like what it is for an equity option. And so somebody with an IRA, help us out. Somebody with an IRA, come up clutch right now. We need you. Like, we need you guys to come ready to play. And so, anyway, let's go back to the beginning. Let me see. You guys got some trades for me? I think you guys do. I'll go back to the very, very beginning here in a second. But hang on. We got, Brian Dowdy. I'll get to you, Sam L., Stephen Bivens, or Daniel. I'll get to you guys in a second. But Brian Dowdy's got an earnings trade for us. Chewy. Man, Chewy. Man, my wife gets so much stuff from Chewy. Like Chewy, like we're all in on Chewy. It's CHWY, right? Just like you would think it would be. Yeah, Chewy, $34 stock. They've got earnings tonight. No, they have earnings in the morning. Okay, perfect. Yeah, I'll do a little Chewy. And again, we've got 3 cats. My personal preference, 0 cats. But we have 3 cats because my personal preference doesn't carry a lot of weight around the home in the Schultz manner. And so because we have 3 cats, we got litter coming in on auto ship like every 8 days. I'm like, man, what are these cats doing? I guess it's better they're doing it in there than elsewhere. But still, like, can we maybe start to stretch out kind of these litter box, drop shippings that are coming on the front door there? But man, we get so much stuff from Chewy. It is a constant stream. Amazon is obviously number 1, but Chewy is a very, very solid number 2. So I think let's go into Chewy. I kind of want to do something to the upside, obviously, because I feel like I kind of have to in terms of the situation that I'm in. You've got a $34 stock, right? So the very low price stock. Oh, so this is good, by the way. If you have a smaller account, if you have less capital, so let's say 25, 20,000 or less, and you're looking for ways to do undefined risk trades, you're looking to maybe do some things where you've traded defined risk for a while, you're fairly comfortable with it, you're comfortable with the different strategies, what have you. And you're like, hey, I want to spread my wings a little bit. Like, I want to go ahead and I want to start to maybe mix it up in some undefined risk strategies. One of the suggestions I always have is choosing lower priced stocks or indexes. Now, indexes are going to be better than stocks because you don't have that single stock outlier risk. But still, with Chewy, if you sell a put specifically, if you do something that has upside risk, that can be a little bit more tricky because if the stock doubles or triples, not necessarily overnight, but it can certainly happen in a month or 6 weeks or whatever. Maybe not with like a Chewy, but with something like, I don't know, like some tech stock, some small biotech company out of Silicon Valley, whatever. Like those stocks can obviously go up significantly in a very short amount of time. So I don't know if that's necessarily going to be the case for Chewy. It's always theoretically possible, of course. But if you sell a put in Chewy, which is what I think I'm going to do here, just in the January cycle, like let's keep it really buttoned up. I sell a put in Chewy. I sell a 32.5 strike. I'm collecting $1.50. It's not super crazy. Right, my buying power effect is $1,500. Wow, that's a lot, actually. Why is the buying power effect so high? Man, this totally ruined everything I was going to say. What's going on with Chewy? Is something going on with Chewy? I thought the buying power effect would be like $800 or $600 for a $34 stock. Hang on a second. So if I look at Chewy, $1,500. Okay, we'll come back to Chewy in a second. Brian Dowdy might be taking us down here. So we'll come back to Chewy. Let me go to what's another $30 stock? Just off the top of my head, Bank of America. Oh, it's 53. Bank of America was stuck at 35 for like 14 years. And so that was a pretty good guess, but we were dead wrong. Let's go to the watch list here. Let me sort by stock price. Oh, of course. How did I forget? Of course. $34 stock, Chipotle. $34 stock. What a piece of garbage. Chipotle, CMG. Let's go into Chipotle, though. I mean, it's dead to me, but let's go in there just for illustrative purposes only. Are we going to trade Chipotle? Absolutely not. But let's go in there. Let's take a quick look at, again, I'm going to go January, 38 days to go, and I'm going to basically I'll sell like a 33 strike, like a 37 delta or whatever. Look at the buying power effect. $600, right? That's because Tasty Trade knows this is a garbage stock, right? And so it's only $600. Whereas Chewy, they're like, this is a reputable company. This is a high quality product. This is a high quality service. So it's going to cost you a little bit more. No, I kid. That's not the reason why it costs more, but it could be. And it would fit with this actual scenario that we're describing right here. But I expected it to be similar in Chewy. And so I'll leave Chipotle on the screen just to kind of make the point that I wanted to make earlier, which is, hey, if you have, lower amounts of capital and you're looking to do undefined risk, it can be challenging. It can be difficult because you have less capital. You're needing positions or stocks that have lower buying power requirements. Well, Chipotle would be one of them. Chipotle, $600 for an undefined risk position. I mean, if you've got 15 grand, like you can do that, and that's certainly small enough, right, for an undefined risk position. Now, again, you've got all the Chipotle risk. I'll let you wrestle with that one on your own, of course. But let's go back to Chewy. So I'm okay doing Chewy. Just because, again, I mean, I'm working with a little north of 30,000. And so I'm going to go into January with 38 days to go. Yeah, we'll sell a 32.5 put. I mean, I'll try to get the mid price of $1.55. I mean, this doesn't look too bad, I don't think. And we'll just kind of see what's what. And so, all right, can't get $1.55. And so Chewy to the upside. Let's try $1.52 maybe. Can't get $1.52. Okay, Chewy is not the most liquid stock in the world. Let's try $1.49. I think I'll probably get filled here. Okay, so I got filled at $1.49. Okay, perfect. All right, so we're in Chewy too. So we're playing the market to the downside. We're playing Chewy to the upside. And so I've given you guys all kinds of fadeable opportunities. And so do with that what you like. All right, so let's go to the very beginning. We've got Sam L in the house. Doc Tuesday just got better. Back to guide us through the chaos with your signature blend of ghost-powered analysis and dad bod level humor. It's definitely dad bod level humor. I've been off the ghost tip for a little while, though. I actually need to replenish my stores. But again, I mean, we spend so much personal capital on Chewy and litter and cat treats and all these things. It's like, man, ghost is way down on the list. And so I'm going to have to see if we can't wrangle up something between the couch cushions to get some more ghost in the hopper. But I appreciate you, Sam L. I hope that you know that I do. Stephen Bivens in the house. Dr. Jim Howdy from Detroit again. What's up, my friend? I'm here for work this week, freezing my bottom biscuit. There you go. What are you? That's pretty good. I like that. I prefer to bet my bottom biscuit, but you can also freeze your bottom biscuit if you're in Detroit in December. Man, that's a power move, man. That is a power move if I've ever seen one. What are your thoughts on switching to synthetic long stock plays in low volatility conditions? Okay. I mean, synthetic long stocks, that could be a poor man's covered call. That's one way to do it. It could also be, you're selling puts and buying calls, like with the at the money strike. That could be another way to do it. I mean, generally speaking, when I'm thinking of synthetic stock positions, I'm not typically thinking about it from a volatility standpoint. I'm mostly thinking about it from a buying power standpoint. Because again, stock, even in a margin account, is going to give you, 50% buying power relief. So it's nice, of course. But I mean, if you've got a $100 stock, you're setting aside $5,000 of capital to hold that position. But if I do a poor man's covered call, or even if I do, like a short put long call, that's going to be significantly less in terms of the buying power, the buying power impact. In fact, here, let's actually work through an example. Let me go back. Let me find like a $100 stock. What's $100 these days? Man, I could get a share in Netflix for $100. Man, that stock used to be $1,200. Man, it's really fallen on hard times. Look at that. The whole thing is rigged. It's all manipulated. Right? I mean, Netflix used to be $1,200. Now it's $97. And you think this is fair? Nah, man, there's no way. So Netflix, if I go into Netflix, I'm sure maybe they split, but nah, that doesn't matter. So if I go into Netflix, if I were to buy the stock, you guys can see the buying power effect is, I get 50% buying power relief, right? That's great. It's nice. It's a good start, right? Okay. Terrific. But what if I want to do something where I create a synthetic long stock position just using options? Again, you could do a poor man's covered call, but another way to do that is where you're selling basically the at the money put and you're buying the at the money call. Because look at the delta on long stock, it's 100, right? My delta on long stock is 100. Well, if I want to create synthetic long stock using a short put and a long call combination, I'm looking for something that's going to give me around 100 deltas. And you're going to see this is going to do exactly that. So if I clear this away, clear away my drawings, I clear away this trade, I go into, let's just say I go to, just to give you, usually if you're looking for a synthetic long stock, you're not necessarily doing like in a 45 out of 21 type of scenario. So let's go ahead and go a little further out in time just so we don't have to adjust it as often and as frequently. If I go to February with 73 days to go, you've got the stock at 96.60. So it's not perfectly at a strike. So our delta's maybe a little bit off because of that. But if I went in and I sold the 96 put and I bought the 96 call, you can see right here. Let me see. My deltas, it actually did work out pretty well. My deltas are 100. So I have basically the same directional exposure that I would have with long stock. But look at the buying power effect. It's about half. It's a little over half of what I would have to put up to buy Netflix shares. I don't mind this at all from a buying power standpoint. Now, there's a couple of things to consider. Like, obviously, this looks like, wow, that's a really nice gimme. Where are the gotchas? You should always be asking that. Well, there's at least two. Number one, you are going to have to adjust this on a regular basis. Now, again, you can decide whether that's a lot to have to adjust this every, 73 days or whatever, every couple of months or whatever. You're going to have to do some type of adjustments when this thing gets close to expiration. Whereas with long stock, you just hold it, you put the shares in your stock drawer and you're done, right? And that's obviously really, really nice. But the other thing to keep in mind is if the stock pays any dividends, you're not going to collect the dividends on a regular basis. Now, of course, I know that the dividends show up in the put pricing. And so theoretically, I'm using air quotes if you're listening to the show. Theoretically, it's the same, but we all know practically it ain't the same. Like when you collect those dividends, that's categorized completely differently in your mind. And I understand theoretically they're equivalent, but we know they really aren't. And so just understand that you're not going to be collecting those dividends. Now, I don't think Netflix pays a dividend. Does Netflix pay a dividend? I don't think they do. We can check really quick in the quote overview. Yeah, there you go. Dividend. Got a nice little blank box right there. So no dividend from Netflix. So I don't really need to worry about that. So obviously, Stephen, it would depend on what stock you're talking about specifically, and that's entirely going to be up to you. But yeah, from a buying power standpoint, I like it. You just have to kind of know that, okay, I'm going to have to adjust this. And the nice thing about this type of position that's helpful to remember is your deltas are not going to change as the stock moves around. Like you're going to have 100 deltas. Like, the short put and the long call are going to work together to give you 100 deltas, regardless of which side of the market the stock obviously is on, whether it goes down or it goes up. The deltas should remain, they're not going to be perfectly static like stock, but they should kind of cluster right around 100 for as long as you hold this position. So that's obviously really, really nice. And so hopefully that helps a little bit. But to Org Denu's in the house. What's going on there, Org Denu? Hello, Dr. Jim. Best show in town, man. I appreciate you, my friend. How long should I hold my limited risk positions, short vertical spreads? Is there a maximum time I should hold them in case they are in the money? Thank you. Yes, that's a very good question. And I don't think so. So you sell a vertical spread, short put spread, short call spread, doesn't make a difference. It goes in the money, so it's working against you. You have some type of loss on the position. Usually I'm in the camp of I want to size my trades such that I can hold them all the way to expiration if that's what it comes to. I don't want to put myself in a position to where at some early point over the trade's life, I'm looking to pull the ripcord and hit the eject button because I'm taking on too much heat. Like I'm hemorrhaging too much cash in the position. To me, that's a position sizing problem. That's not really a strategic a strategic maneuver that you should have to make later on over the life of the trade. And so I don't typically like to do that, to close the trade early because I have to. Now you may want to, just because everything else in your portfolio is working or maybe it's not working. I mean, you can justify that on either side of that story, of course. But I never want to be in a situation where I have to. And so from like a loss standpoint, exiting early doesn't make a ton of sense to me. If you feel like you need to, it's a position sizing issue. So with that kind of out of the way, I'm typically looking at, carrying this thing all the way to expiration if that's what it takes. Now, are there some checkpoints along the way? Of course. If I get to a spot where I could maybe roll it out for a credit, then I would strongly consider doing that because that allows me to extend duration. If I'm doing it for a credit, I'm not adding any risk to the position. I'm actually taking a little bit of risk off. You might even justify maybe paying like a 2-cent debit or a 4-cent debit, which doesn't radically change your risk picture at all, of course. And so those are some things that you could consider when it comes to potentially taking off a vertical spread early. That's how I would view that. But generally, I'm in it to the end if that's what it takes. That's kind of how I view those positions. And so Adam Armfield in the house. What's going on there, Adam Armfield? Adam Armfield, how about a GameStop, a GME earnings trade? Oh my gosh, really? They're still around 25, right? I haven't looked at GameStop. It's been at least 6 months, 4 months minimum. I have not looked at the stock. I'm telling you right now, the stock is still at 25. Here we go. 23.40. Stock hasn't moved, right? Ever since Roaring Kitty left, man, he just went out to the pasture himself. This thing's been stuck at 25. Right? I know that we sold some puts in GME and we got fleeced like 18 months ago or 20 months ago, whatever. So I'm like, yeah, man, I think I'm all set on GameStop. But I'll take a look. I mean, December 9th. If I go ahead and they probably got a lot of juice in here. No, all the juice is gone. Look at that, man. Do you guys remember remember yesteryear? This thing used to be somebody. I mean, I remember when it would be a $35, $40 stock. You'd have IV. I mean, right now the IV is 130%. You'd have IV like 900%. You'd have IV like 650%. I'd have the 23 put selling for like $9. Right? The at the money strike selling for like $11.50. I'm like, this thing is crazy. But obviously it had that run from, the teens, I think, up to like 500 or so. When, I mean, it's still a mystery. Like I've seen the Netflix documentaries, I've seen all that kind of stuff, but man, those things, they kind of got a little bit of a slant sometimes. They're kind of like, all right, we've got an agenda and we're going to show you all the things that line up with our agenda. Are there other things that we should consider? Of course. Are you going to see it? Absolutely not. So you got to kind of, keep your eyes open a little bit. And so I don't know, was it retail? Was it hedge fund? I don't know what it was. But anyway. GameStop, I'm going to pass on GameStop, but I appreciate you, my friend. I know that you know that I do, Adam, so thank you. Good luck if you decide to trade some GameStop. Man, good luck, my friend. And so the Preston in the house, Dr. Jim, what do you think about TLT? Thanks for all that you do, my man. Man, I appreciate you so much. TLT, the bond index, of course. Yeah, I mean, looking at bonds, this one is tricky. And so because a couple of things. So number one, if you just think about an interest rate environment where rates are going to be clearly dropping, and you just think about it like at the surface level, it seems to imply that bond prices will be going higher because you have this reliably inverse relationship between interest rates and bond prices. Rates go down, bond prices go up. Okay. But if you go a little bit further, right, down the pathway that leads into the forest, you peel back a layer of the onion, what do you start to realize? You're like, well, I don't know. When I look at the curve, actually, short-term rates and long-term rates may not necessarily follow the same trajectory. And so if I think about that, it's like, man, I don't know. I've got long-term rates, which is, TLT is going to be more like a 20-year deal. I mean, you can see that up here, actually. So more of a longer-term instrument. So, I mean, when the Fed changes rates on the front end, in a perfect world, it's going to have essentially a trickle-down effect to the back end, but it doesn't always work that way because the long-term risk and the short-term risk are not the same. And so when you start thinking about long-term risk, I mean, now you're factoring things in like, I mean, if all of a sudden, I mean, Powell's days are numbered now, right? I mean, I don't know how many more meetings he has or how many more months he has, but the administration is going to get the new guy in there, right? And I mean, the administration, Trump's been very clear. He wants rates at like -6, right? He wants ZERP. Like he wants zero interest rate policy back, right? QE infinity back. So what's going to happen if that happens? Like if there's a huge drop in rates, it could have an inflationary effect. And so it could certainly have an inflationary effect. So now all of a sudden, what do you have? You have silver at 80, right? You got gold at, 4,900. And then all of a sudden you may have bonds actually selling off as there's these inflationary pressures on the back end of the curve. And so I say all that to say, I don't know, man. I'm not really sure, what's going to happen to TLT. So maybe you go in here, so if you're in that situation, but you're like, hey, I like the stock, I like the whatever. I mean, the IV rank here is only 4.8, so I'm probably not going to do anything. But if you were going to go in here and the IV rank was higher, maybe I sell a strangle, right? Maybe I go in here and I just do something, define risk. I go out to 38 days to go, and maybe I'm selling an expected move strangle. I'm not going to do it now because you can even see for yourself. I mean, look at the premiums available at the edges of the expected move. They're quite paltry, if I don't say so myself. I mean, these things are really, really paltry. You've got the 86 put, you've got the 90 call. I mean, these things, I would only get about $1.20 for the whole strangle, unlimited risk. That's not really a ton of premium to collect for something that is unlimited risk. And so I'm going to pass on TLT for now. And I don't really have any thoughts on it directionally for the reasons I just mentioned. And so hopefully that helps a little bit. Ashfin in the house. Dr. Jim, what's going on? What's going on there, Ashfin? I appreciate you, my friend. I hope that you get the IRA thing sorted out. But yeah, give it a shot, right? Get in your IRA, get your futures enabled, and just play around with it. And by play around with it, I mean, don't start slanging straddles on day one, right? But just take a look at the buying powers. Like set up a couple of trades and look at the buying powers. And you'll see for yourself, you get an unbelievable relief that you just don't get with the equity option indexes, SPY, QQQ, etc. Let's see. iPod Touch, what's going on there, iPod Touch? Dr. Jimmy, you are fighting the eventual. Man, I don't know, dude. You gave me a day. Man, you gave me a day and a time. You gave me December 7th at the Futures Open. That's what you told me. You told me the event horizon, December 7th, Futures Open. And what did we see? NASDAQ opening up 42 points. Like, what did we see? A tiny green gap up. And so it wasn't necessarily the event horizon that you called for. But again, the following day, you did get NASDAQ down like 110 points. So take your victory lap, my friend, because you earned it. But this might be the last time I listen to you personally. And so Sam L in the house, trick the algo. That's right. For the love of the algo, you guys got to put that in the chat right on your way out the door. We've only got a few minutes to go, which is crazy. I bet the doc is going to say tomorrow is the most important FOMC since he started trading in 2000. No, I didn't start trading in 2000. I started trading in like 2007. I started like buying stock in like 1999, I think, because I was 18 and I could get my own account and whatever. And it was nothing. It was like $1,000 account. My first ever stock purchase was actually Eli Lilly. And so this is a really funny story. And so my first ever stock purchase was Eli Lilly. And I bought 2 shares or 5 shares, whatever it was. I can't remember. But I don't even know why I bought it. I think I was reading Investors Business Daily, William J. O'Neill. He had that book. In 1999, it was popular. So this is 20-something years ago, almost 30 years ago, right? He had this book, and it was all about cups with handles and head and shoulders and breakouts and blah, 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 blah. Well, anyway, I looked at Eli Lilly, and I was certain that I saw a cup with a handle or an abandoned baby or whatever, 3 white crows or black crows or green crows, whatever I was looking for. I was certain that I had it figured out. Right. And so I went in there and I bought my 5 shares of Eli Lilly. And let me tell y'all something. I was like so nervous and so excited at the same time. I remember being at the gym like later that day or the next day after I bought the stock. And I would be like on the treadmill, like walking or running or doing whatever. And I'd be looking up at the TV and CNBC would be on. And I would see the ticker on the bottom. Right. Because it's 1999. We barely had the internet in 1999. In fact, I think I had to call my broker to phone my 5 shares in, if I remember correctly. And so I'm looking at the ticker, I'm looking at the thing pass by, and of course I get an Eli Lilly quote, LLY, like every, 18 minutes. And so I'd be on the treadmill just waiting for the next Eli Lilly update, right? It's like when you used to watch football back in like the 90s, and it's like you had to wait for the updates when the guy from the studio came in to tell you like how my Packers were doing, to tell you like how my Patriots are doing. Like you had to wait every however many minutes, right? So I'm doing the same thing. I saw Eli Lilly up like 13 cents. I'm like, I'm a genius, man. Like I figured all this out. I'm looking around the gym. I'm like, these people don't know. These people don't know what they're doing. I got it all figured out. 18 minutes later, Eli Lilly down 29 cents. I'm like, I am the biggest bonehead that has ever lived. And so I was on that treadmill and I'm like wrestling these emotions, right? Like I'm going back and forth. And of course, at the end of the day, it was unched. And so I remember that so vividly though. But yeah, tomorrow's FOMC meeting, there's never been anything like it before. That's all I can say at this point. If you're not ready, it's too late. It's too late. Like it's just going to be the end for you. And so let's see, Daniel Perkins, let's see, dude, Wolf in the house. What's up there, Wolf? Ash fan, what's the pop? Jim has the magenta polo on today. No, but we might do it tomorrow. We'll have to give it a look for the old FOMC maybe. Daniel Perkins, half FOMC Eve, everyone. Yes, to you all as well. Sam L, Doc, happy Tuesday. It's been a minute, no taco tweets. I know, but it's any minute now, man. It is 100% any minute now. Let's see. iPod Touch. What about the soy latte, Dr. Jim? Yeah, I'm not touching that, man. Soy is like, you can do a lot of different things now. You can do regular meat. You can do Beyond Meat. Like, you can do a bunch of different things. But soy, I think everybody agrees that is a terrible, terrible idea. So I'm not going to be doing that. But N1C in the house, drop rates, buy more short duration bonds, start the printers, inject capital into the banks via repo, and watch assets whiz up. I mean, that seems to be the chalk, right? That's what everybody's saying. I mean, I read Johnny Pools 47 on Twitter. He was saying that. I read Johnny Pools 48 on Twitter. He was saying the same thing. And so I don't know, man. I think he might be right. Grumpy Mike, what is it that we do? I don't know, but N1C says own assets. You might be right. Big Deal Donuts, can we get a Dr. Jim Zoom class? Like, you mean like I need one? Like I need to learn more about it? I don't necessarily disagree with that. I think I could use some improvements for sure. James Wentworth, Jerome should announce massive stimulus checks on the way out so we can gamble. No, that's not his call, right? That's coming from Trump, right? That's coming from the administration, if I'm not mistaken. And so we may get some stimmies next year. That'd be pretty sweet. Danish Dynamite says, I think Mr. Purple Tie will snuff everyone tomorrow and crash the market. SPX downside butterfly. Man, you and me are together on this one, Danish Dynamite, which is not good for you. Like, that would not make me feel better if I were in your shoes. And so you still have time to remedy the situation that you find yourself in right now. And so, there's Cynthia. What's going on there, Cynthia? Ryan LP, thoughts on an SLV strangle? I was thinking 50-65. I just don't know if it's a bus I want to step in front of. Let's take a look at it really quick. Just on our way out the door. Yeah, look at the Ivy rank in silver. Yeah, let's do it, man. 66? I mean, I like it a whole lot. Yeah, let's do, what'd you say, 50-65? I might just take it sight unseen, man. I'm going to sell a 50 put. I'm going to sell a 65. I'm going to bring that one in a little bit. I'll bring it into like 63 just to pick up a little bit more premium. Man, look at the buying power. My buying power is only 595. Man, that's amazing. That's incredible. I like this trade a lot there, Ryan LP. Let's do it. So let's put this guy on, and then I'm pretty much out of time. So let me get this guy on, though, really quick. Let's do 208. Should be good. Let me do a quick little discovery. 206. That should definitely be good since it is the bid price. All right, we got filled at 206. There you go. Thank you, Ryan LP. That's a great trade, I think. The IV rank is looking pretty good. And so we'll see. And it's a neutral thing. We can adjust it. We can do all kinds of different things. But I got to go. I got to run. I got to get you guys over to Tim Knight. Guys, I appreciate you guys. I appreciate you guys so much. If I can ever help you guys in any way, please shoot me an email. I'm jschultz@tastylive.com, or we can connect on Twitter. I am at jschultzf3. I would love to hear from you guys on there as well. But stay tuned. We do have Tim Knight coming up next with Trading the Charts. In the meantime, guys, trade them small, trade them heavy, and stay generous. We'll see you guys tomorrow.
Tasty Trade's Money Match event. Unlock 30 days commission-free trading. Plus a 1% cash match on all qualifying deposits to jumpstart your trading when you open and fund a new Tasty Trade account. Level up your trading experience with active trader mode, smart order tracking, risk analysis tools, dynamic watch lists, and more. The Money Match event starts now, exclusive to new Tasty Trade customers.
Look who's back testing. Tasty Trade now has options back testing for free. Test your trades with over 10 years of data for the most popular symbols. See how your trades would have performed in the past. Look back at profit and loss and take the guess out of guesswork. Oh, did we mention that it's free? Get back testing at Tasty Trade.
You're helping me through it. Baby, your love is too good. You knew what you did when you planned it. You scammed it, making right off like a bandit. I know what I know. It's time that I go. 'Cause baby, your love is too.
Hey everybody, Tim Knight, and it is the final FOMC day tomorrow, thank goodness. 8 out of 8 for the year. And today the market did something really cool, very subtle, but cool, that I was very pleased to see, which is kind of a bifurcation of precious and equities that I've been waiting for. It's true. If I just bought Palladium when I started talking about it, when PALL was in the mid-90s and didn't do anything, I'd be a lot better off with it instead of all this in-out business. Guys, it's been a really good trade for those who've held on. Silver's been great, gold's been great, but Palladium has been a special favorite of mine. I don't know, I guess I just have to be weird and go after unusual stuff. So I went after PAL. And this morning, it started to show some more strength. And the cool thing was that even as it strengthened, equities didn't necessarily follow along. It used to be like tick for tick. That's what I found vexing about it. I had this very tortured relationship with Palladium because I really liked the chart, but it seemed to also be going lockstep with, well, small caps normally, which didn't make any sense to me. And I don't have any faith in equities. I don't think equities are going to have a good 2026 at all. But I think Palladium will. And then so finally today they're showing a little bit of, split. So like at this very moment, Palladium futures are up about $30 an ounce, which is about 2%. ES is down. YM is down. Not by a lot, but they're down. And Palladium seems to be getting kind of a mind of its own. And it also helps, of course, that silver is at a lifetime high. So tomorrow should be very interesting with all of this. How does it affect equities? How does it affect precious? Because it's not like the quarter point drop is going to be the big news. It's going to be this sort of psychic release that happens after the news comes out and whatever verbiage they have around it and whatever plumbing changes they're making to goose liquidity even more than the trillions and trillions and trillions they've done already. So should be quite a day tomorrow. So rest up for that. But I do have the charts ready to go. So let's go explore a little bit. It's not a particularly dynamic day. The ES is down 0.02%. Like I said on Monday, it would be kind of stuck because everybody's waiting for Jerome. But here's the spider doing a whole lot of nothing. We've spent weeks blasting back toward lifetime highs, but we did not achieve it. Closest we got was on Friday, and there we sit. So tomorrow, either we, for whatever reason, kick to lifetime highs and get past this barrier, or we wilt. Kind of know what side I'm leaning. The diamonds are down about 0.25%. And same deal. There's the lifetime high, and I'm hoping for some sinkage here. I'm pretty aggressively short, with the exception of my Palladium long. We'll see if that survives. And China is particularly weak. It had bounced mightily on Friday. That's all gone. We fell yesterday, fell a lot today. Dookie, knock it off. I've gotten rid of a lot of drawn objects because they have a mind of their own. They keep moving about, and I get tired of fixing them. But I don't mind doing them fresh from time to time while we're on the air here, just to kind of show what I'm thinking. So the FXI, China, the main ETF for that, has been doing pretty poorly relative to U.S. stocks. And there is the break, like so. And the real break would take place if we can get below this range that I've drawn here, this tinted zone. We'll see. It's not out of the question that it could happen tomorrow. We don't have much time left this year, about 15 trading days left. And the last kind of big event is the FOMC, of course. And so that could give people an excuse to dump stocks or something like that. So as I say, it's, as boring as today is and as yesterday was, tomorrow will make up for it. I'm confident. Over in Cube land, the NASDAQ itself is actually green right now, about 43 points, about 0.17%. And we're still below this gap. So instead of a lifetime high, it's the gap that merits watching here. And so we were at lifetime highs back here at the end of October. Sort of the last gasp of this was on the 3rd of November. We slumped hard, with the real crescendo being Nvidia earnings. And the day after Nvidia earnings, or I guess the 2 days after, because the earnings day was here after the close. The next day was mayhem, and the day following that we bottomed out. So since that day, it's been pretty much green straight up until just yesterday. We started to soften up a bit, but we have not exceeded the gap, and the gap is key. So, it could well be tomorrow, lifetime highs on the spider, lifetime highs on the diamond, close the gap on the cubes, sad Tim, etc., or just the opposite. Digging deeper into tech, SMH filled its gap, and it's in a position to challenge its own lifetime highs, right? Like so, and specifically, of course, the largest component of the semiconductor index and the largest company on the planet is Nvidia. And it's interesting because there was a big splashy announcement about how the administration has given their blessing to sell all the H2000 chips, I think is what it's called, that you want. Just go nuts to China, just sell, sell, sell. And the stock's down. But the more interesting thing to me is, see that line I've placed? That line is anchored to July 31. So simply stated, we have traded today at the same price that we traded on July 31st. Even with all the news and all the support and all the splashy announcements and all the Trump meetings and the big earnings report and the AI hype, 0% since July 31, when you were running around with a beach ball under your arm. So interesting that that's the best they can do, unchanged for months and months at a time. And another interesting critter is Netflix. Now, if one weren't looking at the chart, one would assume correctly that Netflix must be doing great because they're gobbling up HBO, they're gobbling up Time Warner, they're setting the world on fire. Their stock stinks. It had been wonderful for a while. Here it is way back in the spring of 2022, and it was set for a multi-year, uninterrupted channel bacchanalia, just up month after month, week after week, year after year, up and up and up and up, just glorious. And that kind of stopped around July as it was approaching like 140. And then as you can see, it really hit the skids, and particularly after it broke its channel. Because it had dips before. It's not like this was a straight line up. It had dips here and here and here, all kinds of dips along the way. This is different. This isn't just a dip, it's a channel failure. And a sea change and a trend change and whatever else, whatever moniker you want to give it, is a pretty big deal. And this is all, of course, within the miasma of the giant companies they're trying to acquire, and other companies are bidding against them. So Netflix is doing quite poorly, although, short term, for the moment, it looks kind of bottomy right now. I wouldn't be surprised to see this rally at some point. But on a multi-month basis, it seems to have had a pretty substantial trend change. Okay, let's turn our attention to precious metals, because this has been a tough one lately because it's a real mixed bag. Gold is pretty boring because gold stopped being exciting around here, around October 20 or so, because it was just up and up and up, tremendous amounts of excitement and verve and gusto. And then there was this hard reversal, and that really kind of broke people's hearts. And since then, they haven't really gotten on board again. So this major reversal here, hit a bottom, try it again, down again, try it again, down again. The good news is that at least we are carving out a series of higher lows. So as those sell-offs come, it's not like it's getting killed. It's we're shaking weaker hands out, and buyers do come in before we crack the prior low. So higher lows is a good thing, but it's still kind of blah, because as you can see here over the past 5 days, it might as well be a weekend. It's barely moving at all. Put a fork in it. Even just a few weeks ago, at least has some dynamism to it. So what it needs to do is shake off these blues and push past its former high. Then it can start a whole new leg of that bull market. Silver doesn't have these challenges. Silver's doing just great. Lifetime high. It is up today nearly 5%. We have breached $60 for the first time, and it could be triple digits next year as the United States dollar gets ground into one-ply toilet paper. So silver is doing just fine, as you can see. My own, let's just switch gears to ETFs for a sec. The charts naturally look very similar, but because of the nature of their trading, they've got a couple of quirks. As I mentioned yesterday, GLD has a gap. That would be the first kind of important thing to conquer. So if it can push past this gap, it wouldn't be hard to take on Mr. One-day bar right there. I don't think that would be tough at all. It's got to seal up that gap first. And what's also encouraging is that miners are shoring up nicely. GDX, definitely higher lows on this one. So sell off, sell off, sell off, but shoring up nicely each time. Getting a nice reversal today. Is not out of the question that we could push to lifetime highs tomorrow. It's not impossible. And once we do, if and when we do get past that line, I think it's going to quickly push away from it toward the upside. And that goes to the same degree for the junior miners as well. There's GDXJ, and there's its line right like so. And as far as silver itself, SLV, the ETF, obviously lifetime highs on this. It has its own cute little cup with handle here, and then it was off to the races. So precious doing quite well. And my own fixation remains palladium, which importantly has escaped this range. This orange range has been trapped within since October. Just bang, 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 bang. And then finally, it looked like, my concern here was that it was going to just do another shtick lower. Instead, over the past 4 trading sessions, it's kind of found its way, escape out. And if Precious has a good day tomorrow in general, I can easily see all the pent-up energy from that incarceration letting loose and letting this fella fly. And its own challenge is to get past this gap, right like so, which is at 144. It's easy to remember. So, see, not a perma bear. I'm bullish on some things. They happen to be shiny. But yeah, that's palladium. On the short side, just a few quick items I'm short, just to touch on a couple of liners here. There's Carnival Cruise Line, CCL. There's also RCL, Royal Caribbean. Another good day last I checked for Brandywine. Been mentioning this one every day because it just keeps falling. Red, 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 red. And so we've cracked the 3s on that. We're down to the 2 dots. So Brandywine's doing well. Meta, even with the NQ up, Meta is sinking. We're down over $10 on this one. So that's another good looking short right like so. You can see the kind of orange overhead supply on that one. A good day for the VeriSign bears. We've got 7.31 negative on this one. Same idea. You can see all that overhead supply. Like I said earlier, pretty aggressive on the short side. Lots of little individual short positions, and then my one big old palladium long. As far as bonds go, which of course will move tomorrow one way or the other, it still looks pretty bearish to me. this head and shoulders pattern is complete. If it pushes back into the pattern, it'll water it down quite a lot. What you would expect would be a push away from this, but it's a clean pattern, so you'll know if it's wrong. But if we do tumble away from that, it's pretty clear that that'll probably be the last proper interest rate cut to be seen for some time. Same pattern reflected, of course, in the TLT, and even IEF, the medium-term bond fund, is close to breaking its own little reversal pattern. And one last comment, we won't see it by the time I see you tomorrow, but if my data is correct here, Oracle reports after the close tomorrow, and that'll be just more excitement for the day because Oracle's a big AI player. Okay, well, I'm glad it's almost over. We'll see how it goes. I'll see you during the FOMC press conference. So, bye-bye. Thanks.
Your crypto needs a wallet. And crypto is better when it's tasty. You can now do more with your digital currencies with the Tasty Crypto app. We're proud to offer a self-custody wallet for Bitcoin, Ethereum, and Polygon. Transfer your digital tokens directly in-app and access thousands of tokens available only on-chain. Your wallet is your key to decentralized finance. Download the Tasty Crypto app and get started today.
tastytrade's active trader interface makes futures markets your arena. Built for the bold, not the bored. Trade CME futures with a single click. From micro contracts to major ideas. And go even further with futures options. tastytrade lays out multiple ladders and charts for total visibility. Plus, hundreds of built-in indicators for traders who want a broader view. tastytrade, pro-level tools, intuitive design, total control.
Okay, cowboy, here's an earnings event. Keep an eye out for them when you open your trade. They're fast, they're loose, and they can take you for a wild ride. But that's no reason to steer clear, because you can be your own personal earnings event if you take the bull by the horns. What makes earnings events so special? Before the event, people will start guessing how the stock will move once the earnings report is released. That, in turn, makes the options IV rank higher. Like way, way higher. The nearer the event, the more the speculation, the higher the IV rank. Then right after the event, IVR goes the way of the buffalo. If you sell high premium options right before the event, when IVR is really high, you can take advantage of inflated prices and lock your profits when volatility disappears. Only if, and this is a big if, the stock doesn't move against you. If it does, well, sometimes you eat the bear and sometimes the bear eats you. Earnings events can hit you hard. They can also pay off big and fast if you play your cards right. Pretty simple.
Ready to take your trading skills to the next level? Dive into the world of stocks, options, and futures with tastytrade courses. Whether you're a beginner or more advanced trader, our courses can empower you with the knowledge to succeed. Watch as our team in Chicago shows you how to use the tastytrade platform and go over the basics of trading. Perhaps you'll learn about a new strategy or a potential product for your portfolio. To find our courses, go to the Manage section of our web platform or head to courses.tastytrade.com. Start taking control of your financial future. Visit our courses today.
Welcome to the last call, my favorite last call of the year. Jenny and I, matching sweaters, matching sunglasses. I wear my sunglasses at night.
I wear mine during the day. I wear my sunglasses during last call. How are you, Liz? I
Do you know
know
what's
you're
so funny? It feels like it's nighttime. I think that's why I said I wear my sunglasses at night.
Well, I missed you on the train today. We both did a photo shoot, a holiday photo shoot. You'll be seeing more of us in these outfits.
If you didn't get you're right. We weren't going to explain ourselves at all.
No. It's so funny because I was talking to one of our friends on the way home, and I was telling her about our photo shoot, and she was demanding pictures as soon as we get them.
Oh, I can't wait. This would be on the back of my Christmas card if I didn't make it already.
I mean, what if I did? What if I sent a Christmas card and just put the pictures of the two of us on there?
Nothing
Since
would
I
make me
couldn't
happier.
find a picture of my family
Do
this
you
year.
know what we should do, Jenny? Is just make 14 Christmas cards and send them out to the people we're going to Mexico with.
Yeah, countdown to Mexico. Jeez, before we know it, we'll be on our 50th birthday celebration.
Don't you think? Let's just make one. I'll make like 20 Christmas cards through Walgreens and we'll send them out.
Send them to our friends.
Yeah, that'd be funny.
Speaking of celebrations, get your party hat on, Liz. I'm going to show you something to get excited about. Hold on. I got to move up. Frank wants to know if we lost a bet.
I was like, who is this?
Okay, I had to get my regular glasses on so I could see. Let's pop into the platform. Get your party hat on because the big mover today is natural gas. I mean, take a look at the natural gas move between yesterday and today. Yes. Have you seen it?
I have not seen it. Okay, so what are we going to do?
Well, we're going to take our natural gas position off.
Can we take a look at it? Take me to the position page.
So this position has made, Liz does not like having any risk to the upside in natural gas. This position has made her nervous since I made her put it on, and we can take it off. It was $70 a minute ago, 65, 40%. We'll take it. We'll take it. Because then you don't have to worry about it anymore. You don't have to worry, but you don't have to lose sleep at night over natural gas.
Yeah, a natural gas to the upside position, Jenny. I must have been drinking to let you put this on.
It got so darn close to it, right? Like what is our center strike is 5, and 2 days ago it got as high as 549.
Yeah, that's a lot.
Look at this. Is it like a heat wave coming that's dropping natural gas? Because Jenny, it's 40 and sunny here right now.
I know this. Jenny's trying to tell me that. It's going to be sleeting rain in Chicago right now. Jenny, I'm just going to need you to be very descriptive with me if you can, because my eyes don't work in any of these situations. The glasses that I'm
yeah. All right.
So did you take it off? And did you take it off? And how much profit did we make? This is going to be me and you in the nursing home.
All right, Liz, listen up. This is what we've got going on. We have an upside broken wing butterfly.
I know that. How much profit did we take? How much profit? And did you press that button yet?
Okay, so we took in $150, but it's a broken wing, so it does have risk. So we took in $150, and right now we're making $60 of that $150 credit. So
press that button, Jenny Andrews.
I'm taking it off. I'm taking it off because I know this position made you very nervous, especially 2 days ago. 2 days ago when
natural gas was so high.
Gas like blew through it.
Yeah.
When it blew through it. So it's gone. It's gone. You could sleep at night now. And with the down move, with this move, boom, boom, 2 huge moves in a row.
I'm sensing puts.
63 rank. Would we? And the 49-day Jan future, like this 17-day future is 457. The Jan 49-day future is 422. Would we get into a downside position?
Yeah. I mean, now you're talking my language. Downside meaning downside broken wing butterfly.
Yeah, like maybe we start. So if I put it at we're trading 457. If I put our short at the 3.5 level, like if I do 3.6, 3.5, let me see what I can get. That's giving me 720, and then I have to buy something. 3.6, 3.5, 3.3. It's going to give me $140.
Okay.
$140, and our break even is like 3.35.
Oh, I like it.
Yeah, right. When considering it was over 5.5. Yes, 2 days ago.
I like it.
Because do you see natural gas getting back down below 3 anytime soon?
Okay, here's what I don't like about it, and I'm just going to tell you visually. So you see your red bar, whatever strike that is, 3.5. Can you shift that? You can't shift that down to where the expected move is, can you?
Well, we won't collect enough. Like, we're only collecting $140 now.
Can I see natural gas that low? Yes.
Okay. People want to know if we were out at a bar in between shows.
No, but I wish I was. No, but I'm going to a bar immediately following this. Does that count?
Yeah, I'm jealous. You're staying in the city, going out to a nice place. I was on the train all by myself. I'll tell you, I have never been so bored in my life. I've never been so bored in my life.
Oh, I'm sorry. I'll be back tomorrow with you. We'll be live from the CVO tomorrow, and then I'm going to come back with you. Oh, tomorrow there is What's Your Assumption for these. I got to spend the afternoon with Nick and Beth and Jamal. We all had wonderful talks. It was amazing.
Nick, Beth, Jamal, you had a party over there.
I did. It was
a
a
party over there.
We
Well,
were
I
not
was on the
drinking.
train all by myself.
But these two need What's Your Assumption trades for tomorrow. So can we pull up that What's Your Assumption archive? There we go. tastylive.com/What's Your Assumption. Send it in. No assumption too big, too small. Those guys love answering your questions. So make sure they're liquid products. That's the only thing that they keep telling us to say.
Yeah, liquid products. Liquid products. And then also 12 days of trading if you want to sign up.
For the email segment, it's tastytrade.com/12 days. So that's and it's been fun. We're only on day 2, so you haven't missed much. Today was the second day of trading my trader gave to me. And then tomorrow it's gonna be even better.
And I gotta tell you, today we were talking about IRAs and the and like some of the reasons why, the benefits of putting your money into an IRA. And Vanetta had a really great reel that she put out today on IRAs. And I just want to give a shout out to Vanetta. I loved it. It was a really great reel.
That's amazing because I was talking to Vanetta about it and I told her to put the hashtag LAZJNY whenever she does stuff like that. And she said, I can't for compliance reasons, but you should look there up and put the hashtag on it.
Okay, well, I saw it on a Facebook reel while I was sitting on the train for an hour. And I thought it was great. And all right, well, I'll look for it and share it.
Yeah, I will. I'm glad. Okay. She said Vanetta's really good at what she does, and she's in charge of our social media with that aspect now. So did she have, let me ask you this. I did not see it. Were there trade desk people in it?
No, it's just her.
Oh, it's just her. Wow. Good.
Yeah, it's just her. It was great.
I like Vanetta.
Just her. Okay, so if we go back in the platform, do you want me to push this button on this downside Brooklyn butterfly and natural gas getting our break even to about 3.4, 3.35 with a 62 rank and natural gas having fallen 15% in the last 2 days?
You are practicing for the nursing home. The answer is yes, Jenny Andrews. I want you to press that button. Do it.
Going to get $140. And if the last one made you sweat, this one will probably make you sweat too. But it's defined risk, so whatever. You know.
It's fine. This thing keeps falling out of my ear. So if I lose you, I won't be able to hear what you're saying. Just trying to keep it in. No, that's perfect.
If I shout, like if I yell really loud, maybe you'll hear it through the...
Can I just hold it like this?
I'll tell you, it can't be any worse than the audio setup we had last week.
I was trying to tell Jamal about it. Okay.
Oh my gosh.
What's on deck for We do have some earnings. I don't know if there's anything that we wanted to look at. Is there?
We'll take a look. But also just want to mention, like, crypto is on the rise. Crypto's on the rise. We have Bitcoin, over 93,000, and Ethereum, which we already ratcheted, has continued its rally.
How much are we up? What is that? Does it say 42? 24?
Yes.
It says 42.
So Ethereum's continued its rally, quite a run today. And you know what else is on the move? Which I jest when I make fun of it because it's probably one of my bigger losers this year. SBET on the run.
Look at that. All the little cryptos are getting a lift.
Mm-hmm. We sold this straddle around our SBET and we're up like $130 on this straddle. Let's take that thing off.
Yeah, I would for sure close that straddle.
So we're going to close that straddle. We're going to close the straddle. Yeah. And then if we want to...
What else? What do we have left in SBET?
Okay, so we have 100 shares in the straddle over it.
Oh, yeah, close the straddle and then roll it out in time because there's only 10 days left in that straddle.
Yeah, okay. So
or you could do a Jade Lizard over it. You can do anything.
I don't mind the straddle around.
We're filled in natural gas.
Or was that SBET?
No, that was SBET. Sorry, I lied.
And we're still working natural gas. But okay, so now we just have 100 shares of SBET. But honestly, I'll sell another straddle in January
For sure.
If it gets taken away from me, good riddance.
From us. This is our account, Jenny. From us.
Mine's gone. I got rid of mine. I couldn't look at it one more day. I couldn't look. Sometimes I just like to clean up the garbage. And I'm not saying FBED's garbage, but in my account, it was an ugly P&L I wanted to get rid of. Okay, so I'm going to sell the 10 put and the 12.5 call, get $1.64.
So $1.64, it's only a 13, is it a 13, 11?
Yeah, sure. It's amazing. It's amazing. In 10 months, we're going to own this for free. It's wonderful.
Yeah.
It's really like, again, I bought it at 30, I think.
Oh, yeah. Now I see your problem.
Yeah. I don't like it. I don't like it. Only because I lost in it. I'm sure other people might have, better opportunities.
No, I'm sure they do. So
it's dead to me.
We have a couple of earnings to go over, and then we were talking today about my brother, and the stock symbol was XXI. If you want to take a look at it, I really don't know much about it, but then Nikki Batista and I were talking about it, and the name of it is 21. Did you see that? XXI 21.
Yeah, not to be confused with 22.
XXII. There is an XXII. True story. Okay. Yes, and that's what we were talking about.
Okay, so this is it. This is the big talk today. XXI 21.
No, it came out yesterday supposedly, but this is the first time they have a
bar. Well, 12.9. This is the first bar.
Well, yeah,
I'm not missing a bar.
I don't know. I'm just reporting what my brother's telling me.
I'm just saying. 12.9. There is no 12.8.
And then what did Mr. Vecchio say? Because you sent me something, and I just saw Vecchio, and I was excited.
Oh, I texted you something.
Here, I'll look it up.
Some new product. I can look at the text I sent you.
Oh, NGHT. It's a new Bitcoin ETF. NGHT. Night.
Not here yet, I guess. Not here yet.
Okay.
Not here yet. It's funny. Like, look what comes up. Like, I went to type in NGHT and Tesla comes up. Well, this is a shared account. Were you looking at Tesla before the show?
Oh, listen to this. Oh, I wasn't looking at Tesla before the show. And then JP Morgan. Can you go to JP Morgan? This is another thing Nick Batista and I were talking about. Apparently, they just dropped $14 while we were sitting there.
Yes.
Yes.
Look at that.
Mm-hmm. Now that's
look at this. Look at this chart. This up, drop. That almost looks like. The T-bill. So TP pulled up something, and when I looked at the chart, it looked just like this. I was like, "Is this like T-bill?" I forgot what it was he was looking at.
Well, isn't it BIL, not T-bill? What's the?
No, but it was another one that he was looking at. It started with an S. It was like S-Gov. Yeah, I think it was S-Gov. Speaking of, look, S-Gov, another one. Speaking of, Blue Wackadoo posted for us. Here it is, December 10th at 2:30 Eastern time. That's 1:30 Central time. We've got you could watch live, not from our network. I'm just saying, if you're watching our network, it's going to be some other programming. But tomorrow at 1:30, we have the FOMC press conference.
That's it. Yeah, I can't wait. All eyes.
I watched it last time.
And how did you feel about watching it?
Exhilarating. It was exhilarating. I don't know. I watched it last time. Came home, sat on the couch, watched it.
Yeah.
And I used couch loosely. Chair. Sat in the chair, watched it.
I use couch loosely. Well, I'd like you to do some investigative reporting for us again this time, if you don't mind.
Okay, I will.
Good.
Now, I'll let you know. What's tomorrow? We don't have last call. We're not on it. So maybe I'll watch it tomorrow.
Yeah, you can sit and watch it. Pop some popcorn. See what JP has to say.
Sure. What else? So I'm going to go back to the earnings.
Yeah, I know wanted to see if there's any earnings.
Ajit came in with TSM, Taiwan Semiconductor. But as far as the earnings today, we've got AVAV, Chewy, and UEC.
The only one on that list that I even know the name of it's Chewy.
Whoa. Okay, let's take a look. CHWY, Chewy. I haven't been watching it lately. I mean, it did have that run up earlier this year, but now it's back in the 30s, which seems to be kind of like, well. I don't know what to think of Chewy.
So this reminds me of Lisa, because remember she would never feed her furry pet.
I know. 50 rank, $3 expected move in the 3-day. I don't know what to think. Like, because you can order. Do you order from Chewy still?
Medicines, but he hasn't been on medicine yet.
Yeah. I don't use it. I don't see a lot of people getting Chewy box deliveries around me.
It used to be hot stock, but I don't think it is anymore.
Like, you can order everything on Amazon. Like, I'll say, like, oh, out of the milk and cookies, order them on Amazon. Oh, out of this, order on Amazon.
You're so cute. Out of the milk and cookies. Out of the box of wine, order it on Amazon.
And I don't know. Maybe Chewy will shoot up. Maybe. But I feel like we've been hurting Chewy one too many times.
Yeah, I mean, honestly, we don't need to. Like, I don't want to push earnings in just to push them in. Do you know what I mean?
Yeah, you talk about like things the end of the year and things that worked, things that didn't. Over time, I would say like if we added up over time our P&L and Chewy, it's probably just like flat and a lot of work for nothing.
So, and you want to know what else? And we talk about this quite a bit on this network as well, is that I'm not saying we have high implied volatility everywhere else, but there is things to look at. I mean, we've got an FOMC meeting tomorrow. We've got a lot of things. Now, granted, it's not till 2:30, so or 1:30 our time.
1:30.
But when there is other things to do is when I kind of don't look at earnings. And earnings are when implied volatility is lower. And I took a poll in the office, and I think you'll be happy to hear this. So I asked Nick and Jamal, do they think that what they think is going to happen tomorrow, and do they think there's going to be a Santa Claus rally or not?
Yeah, I was wondering if you continued our poll. So what was the result on the Santa Claus rally?
So Nick thinks it's going down tomorrow. He thinks we need vol up, stocks down tomorrow. That's
okay. Does he just think that because the VIX is getting low? I know sometimes when the VIX is getting low, and honestly, 1679 is not terrible. But some people think like when the VIX is getting low, like, okay, we need a down move to get a boost in vol. But I feel like 1679 is fair.
It's under average, but it's not low. Can you go to the chart for me, please?
I don't think 1679. I'll take it. Like I know it's low compared to where we've been recently, and
compared to where we've been recently. But I still think if you were going to scroll back in time, it's still got like honestly, you and I are just so scarred by trading in the 10s.
Yeah, I mean, look at last year. Here we've got the lows in the 13s. So yeah. I'll take a 1680 VIX.
That's what I was going to say. I don't think it's that bad, but that's what his prediction is. He wants a pop and vol and a dip in the markets.
Okay.
And then Jamal says he was going to shake down Vecchio for me and find out how many. Talk about the Santa Claus rally. I love Vecchio.
SPY. I still wonder. Like, we never hit 690, did we?
No.
Right? No. We never did. This is the closest we got.
Let's review our SPY trade from today. I mean, I think we're down from where we put it on, but not by much.
689.70 is the highest we got. We never hit 690.
So it's you never never got to put your 700 hat on. You've been waiting on it. It's collecting dust.
The 690. Yeah, 700. No, never got to put that on.
You never got to put your 700 hat on.
We put in, it is down, you're right, because SPOOs were probably up, I don't know, 10 or 15 when we put that on.
Yeah.
So we did the 685, 700 diagonal, and it's a longer dated one. The long goes out to Jan 2nd.
Yeah.
Mm-hmm. Yeah, that's fine. It's a long-term trade, and we're not going to put in a GTC for that. I have like no real profit target for that. Do you?
No. Mm-mm. I mean, if we get a pop, we'll take it off because our bar is real low. So
well, I don't know. I mean,
if we get $250 out of that, you think we're going to hold on to a diagonal and try to get 50%?
Like in this account, sure, but you or mine, like we compared it to buffers where we could make $800. We were comparing it to other trades where we can make $800. And we're like, okay, look at this, $15 widespread for 770. We could make $700 on this. Great. And I know you're right. If it's up $100, $200, we'll probably just take it off. But sometimes I leave my diagonals. Sometimes I leave them till the shorts are expiring. Like I have diagonals right now in Disney. I have diagonals in Microsoft. I have a handful of diagonals that I just leave till the short's about to expire and then roll the short, treat them almost like a poor man's covered call.
Yeah, no, I get it. And but I feel like this is going to be, I think this is pretty common to say. That's a core position, right? If you're treating it like a poor man's covered call, It's not a trade. Like I think a trade is get in a couple $100, get out. That's a trade.
No, it's a, I don't know. I think it's a trade because even when we put this on, you're like, well, we'll have some rolls. So you're thinking like, yeah, we'll have some rolls. So you're not thinking like, oh, we're gonna take this off for a quick $100. You're thinking like, oh, we'll have some rolls in here. I love when my diagonals get right up to my short as that one's close to expiration, and then I could sell another one higher up. It's not necessarily a diagonal to me is not a core position. It's a trade.
Well, no, I mean, a trade is something where so yes, it's semantics, right? But I was just thinking like how we're like, oh, look at this. We're going to be in, we're going to be out. Like I look at, the SPX as a trade but this is, we put this on saying till the end of the year, right? But if we get a pop up and we're up a couple $100, I bet you and I are going to be out.
On this, yeah, we probably will. Because I do like to clean this account up. Speaking of cleaning up, so here is a 10-day to go trade, $10 wide put spread in Microsoft. We sold for $315. We're up. It's only 26%, but $83, and it's 10 days to go. So if we get a move,
close that button.
Yeah, right.
Mm-hmm.
235 debit. So look, see, like Microsoft, 491.55. I've got a diagonal in Microsoft in my shorts, a 3-day. It's this one. It's the 492.50. So I'm just like, hold, which is no way going to happen between now and the end of the week. Like hold in the 3-day, 492.5, because I want this one to be worthless and just be able to like roll a new one.
Do you want me to do my genie blink for you?
Yes.
There you go.
Yes, I do. Okay. Yesterday earnings, we tried to get filled. We never got to this on the show. CPB, we tried to get filled in Campbell's Soup on a put, and good thing we didn't because it's down $1.50.
Oh, yeah. I mean, that wouldn't have been the end of the world, but we could take a look at putting a new one on.
No, it wouldn't have been the end of the world, but it kept its rank. And I'm just curious to see, like, okay, 28 put, you're getting 90 cents. Say 90 cents on the 28 put using $522. It's not terrible.
It's not terrible.
I know like people laugh at this Campbell's Soup, but I don't hate it. Although the markets are wide. Look at that 29 call.
Ooh, that's way too wide.
Yeah, that is too wide.
Yeah, I mean, 16 million shares have traded. Am I reading that right?
Yeah, but they had earnings today, so that would be more accurate. Now what is TLT doing? We've got our TLT Zebra. What are all the bonds doing? It's just kind of sitting there.
I mean, we haven't really done much. I mean, SPOOs have taken a little bit of a hit. They're down 9 coming in, like spinning into the close. We're down 9 in the SPOOs. NASDAQ's kept its wings up, even though I think it's Meta and a bunch of things are down today. Isn't Meta down today too?
Let's see. Meta.
Yeah, Meta's down $10 and the NASDAQ's already still up. I mean, I think the biggest mover of the day was silver and natural gas.
Natural gas, yeah. And I wanted to see Nvidia, but that's barely moving today.
Yeah.
I do think natural gas, and you're right, silver, that silver move today is crazy.
It's a big move in silver.
I know. It really is.
Yeah.
The big move in silver. And I'm curious I haven't looked. I don't have it. And I don't know if we have it. The palladium.
Oh.
It's a decent move in palladium.
Was it a decent move in palladium? Let me take a look.
Yeah, up 2.5%.
That's not a small move.
Oh, look at this. So we have 2 shares of palladium we put on one day when Tim Knight was saying how bullish he was in palladium, which means, so if we're up $15 on 2 shares, that means palladium $7 higher than it was when we put on that trade. So we bought 2 shares just to keep an eye on it. It's up $7 since we placed that trade. I say we close our 2 shares of palladium.
Oh, I say we let him ride. I was just listening to Mr. Tim Knight right before the show, and he's even more bullish than ever palladium.
I know, but like 2 shares aren't really going to make us anything. And we put this on just to kind of keep an eye on it since Tim Knight was bullish. I'm just trying to clean up the account. That's all I'm trying to do, do some cleanup. Because I want to take off this palladium and I also want to take off this VOYG.
What is VOYG? That's a loss.
It's 1 share, $25, 1 share. We put it on one day. Someone wanted to take a look at it.
Yeah.
I want to do some major cleanup. So when we come in January, this account, I like things to look neat. I want this account to be clean. I don't like to look at a mess. And I would pay someone money to take RSX off of here.
I'll do it. I accept. I'll do it.
How are you going to get it off?
I don't know.
How are you gonna get it off?
No, this is. To be honest with you, I don't know that this is a mess. It's only one page. If it's scrolling, I get it.
I mean, you talk about retirement home. We're gonna be 90 trading in the retirement home, and this RSX is still gonna be on here.
I know how to make you mad. I'm gonna be like knocking on your door, being like RSX and running away.
I like, and I know you don't do it. Sometimes if you're like, well, what, I'm just gonna leave this, like, but I like my account to look neat.
Oh no, it doesn't bother me. I like the slop. I mean, I like my house with nothing on there, and I like pages and pages of scrolling things for my account. Wow, the bell just rang, Jenny. We're done. It's over.
This was fast. This half hour was fast. Since I don't need to see anything anymore, I'm going to take off my glasses, put back on my pink sunglasses, back up so everyone can get the full effect of the Santa Claus sweatshirt. Stay tuned for these pictures.
And God help us all. Exactly. All right, everybody. Good luck. Stay tuned for overtime. Those boys are awesome. And we'll see you tomorrow from the trading floor, wherever she is.
We'll be live from the SPX pit. Tune in. And we will. It's going to be another humdinger of a day. I'm sure there'll be nothing going on as everyone waits for the interest rate announcement.
Hey, you never know. Stranger things have happened. We'll see you guys tomorrow from the trading floor.
Bye.
Tasty Trade's Money Match event. Unlock 30 days commission-free trading. Plus a 1% cash match on all qualifying deposits to jumpstart your trading when you open and fund a new Tasty Trade account. Level up your trading experience with active trader mode, smart order tracking, risk analysis tools, dynamic watch lists, and more. The Money Match event starts now, exclusive to new Tasty Trade customers.
Tasty Trade has crypto, and you can trade with zero commissions. Bitcoin, Ethereum, Litecoin, and more. Diversify in one place. Crypto, we got it, we get it.
Look who's back testing. Tasty Trade now has options back testing for free. Test your trades with over 10 years of data for the most popular symbols. See how your trades would have performed in the past. Look back at profit and loss and take the guess out of guesswork. Oh, did we mention that it's free? Get back testing at Tasty Trade.
We are ready to build. This is make or break for this team. It's down to the last 2 minutes, and it's time to rock and roll, baby. That's all I got is 2 minutes, and that's on a good night. I don't know if they're going to be able to make it, but I think they can just slip right on by and maybe take it through to overtime. I think we're going to overtime. Here it comes. Man, he hit the boards hard on that. Wait, this is football, right? Woof! Woof! Take one. Hey, baby! I like the looks!
Grow a strong community with Tasty Trade's referral program. When your friend joins Tasty Trade, you'll both receive $100. As your community grows, you get more bonuses. The referral program runs through December 31st, only at Tasty Trade.
It's certainly quiet out there. It's Tuesday, December 9th, 2025. This is Overtime. I'm your host, Chris Veio in New York, Ilya Spivak in San Francisco. We're here to take you through the next 30 minutes as we wind down the trading session. If you're on the platform, welcome. If you're on Tasty Live's YouTube channel, join the chat. Tell us what you're trading, What you think of this absolute snoozer today in equities, only in equities, because tomorrow everyone's getting ready for the Fed meeting. Stocks down slightly in the S&P 500, stocks up slightly in the NASDAQ. Not really much home to write about with the Dow off by 0.4% and the Russell up by 0.2%. Of course, in the bond market, we still have our percolating concerns over whether or not there is a breakdown going on and yields continuing their march higher. Decent 10-year auction, right on the screws, bid to cover a bit better than the last one. So perhaps all calm, all steady ahead of that Fed meeting tomorrow. You make your way over to energy, where shifting weather patterns really plaguing natural gas. Europe rejecting a Trump-organized peace deal with Ukraine and Russia. So I suppose we're going to go do that a little bit more. But that's not bad news for crypto, nor is it for silver, which, Ilya, today topped $61 for the first time and $60 for the first time, on its way to its current price of $61.25.
One of these things I'm holding has got to be working at some point. I mean, everything else is asleep at the wheel, but just in time, metals, just in time.
Just in time, at least for silver, certainly not for copper today, which is off 2%, and some potential inventory warehousing issues here in the U.S. Too much available here and not enough available overseas, where London copper prices sit their all-time high squeeze level today. Ilya, we have 25 minutes here, and I think, of course, we should set the table just quickly for the Fed. I spoke about it a great deal today on Futures Power Hour. Of course, tomorrow when we are back for overtime, the Fed will have already met. So there's some ground for us to cover here. The big story isn't what's happening tomorrow, of course, with a market that's fully priced in 100% chance of a 25 basis point rate cut, according to the SR3 contracts, sitting right around 90% for the Fed funds futures. It's more about what's happening for next year, where over the past few days, we've seen the market effectively take a rate cut off the table. We had a full cut priced in here on November 25th. We are 90% chance of a hold now, Ilya. So what is the Fed going to tell us tomorrow that the market has been so fearful of over the past, say, 2 weeks?
We started this week with the market basically lowering the bar for the Fed and saying, okay, look. You told us in September that you only have confidence in a 25 basis point rate cut. What you're doing by effectively putting this on the board is signaling intent without signaling scale. You're essentially saying, we want to be cutting. There, now you know our bias. But the conversation that you're having around it, we don't have data, we don't know what's happening. The cuts in September and October were maintenance, because we saw some weakness in the labor market over the summer. We're seeing that weakness validated now. Way to go, Chris Waller, that called it early. He was right. Now, we don't have data. Now, we've done our maintenance, and the board is pretty finely split. So, here's your statement of intent. We'll get back to you on scale as time goes on. Meanwhile, the market is already, as of the end of last week, at 2 cuts leaning toward 3. Better than even odds of a third. We start this week with the market saying, all right, look, let's say 2. Meet us halfway. And that's really what we've seen over the past, let's call it 48 hours. If you look at what is going on, you mentioned SR3, what's going on in Fed funds futures, we are down to basically 50 basis points for next year. So the market is saying, look, just put one more cut here and we'll call it even. We'll call it acceptable for us. And the concern is that the Fed won't even do that.
Because right now, as a reference point here, the Fed funds rate projected in September to end near 3.6%. The cut that's
3 cuts, narrowly, but
purportedly
3 cuts.
Right. And purportedly, that's going to get us there. Next year, the difference between 3.6 and 3.4 is...
Just take a glance at the next page here, if you would, or maybe the one after where it shows how you get those 3 cuts. You see that really out there dot? Just the one dot for 2025. That's how you tilt that average to 3 cuts. Is that dot has to go all the way out to say we're going to have rates below 3% in 2025, which is, of course, a fever dream. But when you put your dot there, you tilt the average, because all that the summary of economic projections is a median.
Yes, it is. So right now, the Fed's telling us 1 cut. The market's taken some cream off the top over the past 2 weeks. I suppose that's the good news, right? If you're an equity market bull, if you're a metals bull, and you see that all we've done over the past, say, since November 25th, we've kind of churned water despite a rate cut coming off the table. There is still some room for disappointment. The Fed comes out with 1 cut for next year. Is there a difference between this projection and the one that preceded it? Sure. They had data when they made this projection back in September. They don't have data in their pocket right now when they make the projections tomorrow. What a difference a week would have made had they pushed back the meeting because of the December 16th releases for inflation and jobs.
Yeah.
They could have acted with a lot more certitude. So I guess the question I'm asking myself is, what will the Fed's... Tomorrow seems like it could be a violent day.
Yes.
Where we get projections that tell us, well, we don't have enough information to tell you definitively whether or not changing our forecast from September is even warranted. So we get a Fed funds projection that says 1 cut for 2026. The market's at 2. We've taken some of the cream off the top, but eliminating, at least reducing the 2026 pricing from 2 cuts down to like 1.5 could be something that's painful. And then Powell could come out and be like, listen, if we had the data, and given where we think the data are, we probably would be guiding for more cuts, but we just don't have it in front of us. The market would pick itself right back up. So the framing and how Powell responds to that framing, right? If the FOMC projections tomorrow are like, listen, growth is a little bit, we can't change any projections for the most part. We can't give you any more rate cuts. But then Powell comes out and says, listen, like if this meeting was next week, we'd probably be guiding for more cuts. Who cares?
I'm not sure he could say that.
Well, I don't think he will.
Yeah. I'm not sure he could say it quite like that. But to your point, I think the messaging is going to be something very similar to what you're describing here, which is basically to say, well, didn't we tell you in October that we're operating in the fog here, and that the thing to do when you're driving in the fog is to slow down? Did we not tell you this? Of course we would pick up if the economy was in some sort of an emergency, because the bond market would freak out, credit spreads would do something strange, the currency would do something strange. Don't you worry. If there was an emergency, forget the data. Markets would let us know, and we would act. But there's not an emergency. So why in the world would we get ahead of ourselves here and go and pretend like we know when we don't? We'll see the data. We'll come back to you. In the meantime, here is your one basic statement of intent. We leave 1 cut here so you know where we want to be steering, we think.
I look at the April 29th, 2026 Fed meeting at 58%, and you could see the market is effectively getting itself into a headspace where it's like, we should be comfortable if we don't get another cut under Powell's tenure. Because at 58%, we're only just past that threshold of 55 that I like to look at. So, maybe that's the bottom. That to me also says the Fed not cutting starts to matter a little bit less with each passing month, because once you get on the other side of May, you have your April meeting, Powell's last meeting. By the time you get to June, you have a new Fed chair. You might have a new governor that replaces Powell. It's not frequent that has it ever happened that a former Fed chair is stuck around to finish out their governor?
Not that I can think of off the top of my head.
Right? So Powell's gone. Mirren gets extended. Maybe other Fed people, regional Fed presidents step down, retire. But by the time you get to June next year, it's a totally different FOMC composition. one that has the proclivities and worldview of a President Trump that says inflation's not a big deal, which is ultimately what the Fed, I think, has been telling us all year long. They're more concerned with the decline in real output on the other side of the adjustment to tariffs than they are with the tariffs themselves, where the inflation spurred on in a one-off move in tariffs. So we get a cut next month. The market reacts poorly. In January, they turn around and say, yeah, we have a little bit more data. Maybe that gives them a little bit more confidence that they can keep cutting. But if not, another month, another 2 months. Does the journey matter or the destination at that point? So tomorrow,
it depends if the market really has the benefit of time.
Right. Well, I'm thinking about tomorrow.
If in fact the market wants these cuts because something is in fact wrong with the economy, as for example, the Atlanta Fed GDP tracker,
it's been coming
bare
in.
bones though it is, would tell you, as the state of bond markets would tell you, where break-even rates are back down to levels we last saw in early April, when everybody thought that reciprocal tariffs were going to melt down the global economy, which is obviously consistent with aggressive disinflationary forces. So why is the market saying that we are in the kind of disinflation risk that we were in early April? Well, ostensibly the same reasons why they want these extra rate cuts that the Fed is reluctant to give them. So I agree with you that the longer this lasts without something going wrong, the more the market is going to go, look, we're with each passing day closer to some sort of a post-Powell thing. And we have to decide whether we care more about a politicized Fed, which obviously is the kind of thing that we were so desperately worried about in April, that essentially the U.S. would compromise itself in some sort of sovereign way. Or do we just stop worrying and love the bomb and embrace the stimulus, short term and wrong-headed though it is, if the economy doesn't need it? So that's maybe, in fact, a conversation that the markets resolve in a positive direction. They're certainly inclined to find reasons to go up, at least stock markets are. And so, sure, but that's if we have the benefit of time. Whereas the markets seem to be saying that maybe we don't. That maybe under the surface of all this non-data that we've not seen is something the markets really are worried about. At least bond markets are.
Yeah, something's bothering the bond market. That's why just taking a look at where we are, 112, I'm out of anything directionally neutral. In fact, I want to be the opposite of that. Instead of a short iron condor, I switched over to a reverse iron fly in notes. Long the call and the put at 112, short the 114 call, short the 110 put. Effectively,
I was looking at some sort of a vol expansion direction neutral thing here.
Right. And the idea here is that it's vol expansion, direction neutral. I don't really care if it goes up or down. It just can't stay here. At 73 DTE, that's a lot of time as far as I'm concerned.
Yeah.
For this to work out. And effectively, like if this gets stuck at 112, it costs me $20 a day as this thing burns out in terms of the potential max loss. So a Fed listen, what if the Fed comes out and says we're not going to be able to cut? We don't have any clarity. We can't cut. That Ilya could restart the whole of the Fed's late game, right? Notes bonds.
I mean, we're kind of there now.
Well, but also I was thinking of 4D chess today. Jamal and I were joking. What if the reason why the Trump administration isn't releasing the data prior to Trump wants rate cuts?
Yeah.
If the data he's hiding is so bad, why wouldn't he release it? Because it would then give the Fed the ability to cut rates. So therefore, the data actually must be really good.
That's if you believe that that there is a connection being made between good data, bad data, rate cuts, no rate cuts. It seems like what the White House wants to do, and one can't really blame them for it as a fiscal and thereby political operation, that they want to both celebrate that the economy is doing well and cut rates to juice it even harder. I mean, let's go back to the first Trump administration and the tax cut. The president was raging against the Fed then when the tax cuts that administration deployed did what it was supposed to do, which is to speed up the economy. But of course, when that happens, inflation rises. So how did the Fed respond? With tightening. Of course, that's exactly what a sane interpretation of what would happen when you juice the economy with fiscal stimulus would lead you to think. And yet, the Fed was getting lambasted for it because what the president wants is both a hot economy and then a hotter economy because lower rates. So I'm not so sure that the kind of conspiratorial thing you're talking about here has legs, not because there couldn't be a conspiracy, but because you'd have to understand how these things work to conspire in that way.
What's going on with the metals today? Why is silver up nearly 5% in the session to a new high?
It's an interesting question because gold is not doing that. So it's really interesting to look at silver here. I wonder what volumes look like, actually, because it would be really interesting to consider
Silver
that
up across the board in every single product across every strike and expiry, effectively.
Yeah.
I mean, like the volumes today, I'm waiting for Frank to pass along the numbers here, but SLV calls last time I checked were leading. Sorry for this. I think they were leading puts like 6-1 on volume. That was 20% above the 1 month average.
Yeah. I mean, this is really where things get interesting. Like if you look at volumes for, let's say the current SI contract, SIZ 5, okay? It looks like this is a move with, I suppose.
Well, H6 is the current contract for silver.
H6, yes.
Yeah, I mean,
I was looking at the volumes for Z5. I'm like, wait, this looks unusually low. This can't be current. Volumes are up. I mean, it's certainly versus yesterday, but I suppose they're not through their average recently. But the last time we saw levels like this was Thanksgiving week when silver was shooting higher. So it's interesting because it doesn't really seem to line up with anything else on the board. It's not lining up with stocks. It's not lining up with bonds. It's not lining up with gold. It's not lining up with the dollar. What it does, curiously, seem to at least directionally sympathize with is crypto, which is up today.
Yeah, Bitcoin hasn't crossed the Rubicon for me just yet, but it's getting pretty dang close. Above 95K area, then you could really make a case that it's bottomed. Highs that
Kind
you
of
have
a
in October here. Well,
Higher
you know,
silver, higher Bitcoin.
We only got $50 away from 95 today.
Yeah, I mean, it's an interesting thing because the dollar is also stronger and yields are trying to defend, but they're not really making the kind of headway that would think the bonds have broken down in earnest yet.
No, 10-year is just poking its head above what would be considered a neckline that I have in this inverse head and shoulders pattern. But like that's another one of those, hey, how come
like
bond
slop all around?
How come bond vol is so low ahead of a Fed meeting? This also has me thinking, right? Like maybe the play, ZB breaking down isn't going to work out. But what if the play for tomorrow is it's only a 3 DTE? If the market says, oh gosh, the Fed is going to be late, then surely this bond market is going to bounce. and could bounce hard. I don't know, even like a small short-term call spread looking for half a point rally in notes just for the end of this week.
I mean, there's also the
risk to reward here.
possibility, right? There's also the possibility that the reason why you have bond vol so ridiculously low is because nobody has conviction and because nobody wants to make a big bet and everybody's just taking their hands off the wheel and going, you know what, forget it. I'll see you after.
What are you doing to prepare for tomorrow? Myself, I decided to take a whole bunch of things down off the board. There's just no reason to be sitting in such significant equity exposure or direct currency exposure, taking profits on some stuff when I'm at like 30 DTE and I would roll next Friday, but the Fed is tomorrow. Why wait?
Yeah.
Right. Why wait? Just get the extra time now. Vol super low now, particularly with the bond stuff. Jamal was pointing out you can go out right now in notes, go out to like 108 days. We could buy the top end of the recent trading range near 114. We could do a long call spread that yields a 6-to-1 risk to reward. 108 days. Basically, if you wanted to do a quick little math, max loss, we'll call it 300 divided by 108. It's going to cost you less than $3 a day, less than a latte, Ilya, out in San Francisco or New York. But this is also the time, like almost looking through the Fed, looking through the end of the year, through next week's CPI and NFP. What do we do in an environment where vol is exceedingly low, and how do you take advantage of that? And ultimately, you position yourself in a manner so that you can get that exposure, so that if there is that vol expansion down the line, or there's a narrative shift, you're prepared for it. It's deploying a little bit of capital longer, in my view, take advantage of the cheaper vol to get longer duration trades while also trimming your book, generally speaking.
Yeah, I mean,
and then redeploy tomorrow.
Yeah, I mean, when you look at this, looking at the end of the year starts getting difficult because you have this touch point that has been the guiding narrative basically since late October. So we're talking over a month now, well over, as a matter of fact. And it's been on the Fed. And the market has pointedly said, no, I don't care about tech earnings. No, I don't care about the US, China, whatever they're doing to put the trade war back in a box. No, I don't care about government shutdown on or off. Don't care. What's the Fed going to do? And we've got slop in the markets going into it for, I think, very understandable reasons. Assets are going this way, that way. It seems like people are just managing exposure. It doesn't seem like there's a narrative so much as there is people going, okay, let's move some money over here. Let's move some money over there. I might be overexposed over here. I might be overexposed over there, as you're describing for your portfolio. I did some cleanup myself because this is the event risk. Not necessarily because the Fed is going to discover the cure for balancing its mandates against a hostile White House somehow. There's not going to be a great set of insights here. But what there is a piece of critical event risk for a critical narrative that the market is going to get on the other side of and have to make a call. And after the call, we'll know. The price action is going to tell us which way the markets land and what the lens is. And so from there, we'll see. But there's no need to be a hero now or attempt to pretend like we can know what the market is going to make of what the Fed will do, because that's the thing. It's not that the Fed is going to objectively do this or that, and so the markets will respond in objectively this or that way.
Right.
We have no idea how the market is going to contextualize whatever outcome. There's first the uncertainty of what the Fed does, and then the uncertainty of what the market thinks about that.
Well, I mean, like, Ilya, there's the non-zero shot that Trump comes out tomorrow after the Fed meeting and says, this is who I'm choosing as my next Fed chair.
Yeah, absolutely.
And then,
absolutely.
then you have a, Thursday.
And it's Chris Waller. What?
Yeah, right. So last meeting, October 29th was the Fed meeting. The reaction came on the 30th, the following day. Friday had a little bit of a bounce, gap open higher, move lower in stocks, but the reaction was Thursday. So tomorrow it could just be, we know that they're not giving us what they want, or maybe they are, but I think it's really a crapshoot. And if anything, the low vol stipulates that maybe we should be playing for just movement. And I know everyone why? Well, if we're so smart, Ilya, how come everyone's not thinking that? You got to respect the market, whatever the market's pricing. I just happen to think the market's wrong here. Just like it was a few weeks ago when we were saying no data, no cut. No data, no cut was wrong given what all the FOMC officials were saying. Why was the market pushing the pricing around? I have no idea, but it did. And here we are back to a cut coming. So, Ilya, we are out of time here on Overtime. We'll be back tomorrow in a new Fed world with new projections on hand. Can't wait for that. Truly, can't wait for that. We're here every Monday through Thursday.
It's going to say some things.
We're here every Monday through Thursday, 4 Eastern, 3 Central, right after last call. So for Ilya Spivak in San Francisco, I've been Chris Veio in New York. Good luck trading. Catch us on Futures Power Hour, by the way. We get to cover the Fed meeting now. First one. See you there.
See you there.
tastytrade's active trader interface makes futures markets your arena. Built for the bold, not the board. Trade CME futures with a single click. From micro contracts to major ideas. And go even further with futures options. tastytrade lays out multiple ladders and charts for total visibility. Plus, hundreds of built-in indicators for traders who want a broader view. tastytrade, pro-level tools, intuitive design, total control.
Your crypto needs a wallet. And crypto is better when it's tasty. You can now do more with your digital currencies with the Tasty Crypto app. We're proud to offer a self-custody wallet for Bitcoin, Ethereum, and Polygon. Transfer your digital tokens directly in-app and access thousands of tokens available only on-chain. Your wallet is your key to decentralized finance. Download the Tasty Crypto app and get started today.
tastytrade is now on TradingView. Trade stocks and futures directly on TradingView charts with tastytrade's low commissions. Try it out and leave us a review.
Look who's back testing. tastytrade now has options back testing for free. Test your trades with over 10 years of data for the most popular symbols. See how your trades would have performed in the past. Look back at profit and loss and take the guess out of guesswork. Oh, did we mention that it's free? Get back testing at tastytrade.
Putting on strategies? That's easy. Taking off strategies? That's also pretty easy. But what do you do with everything in between? Well, in our Options Crash Course Strategy Series, we're going to show you how to handle the winners. We're going to show you how to handle the losers. But most importantly, we're going to show you how to handle everything in between with simple and clear guidelines and reference points. We'll see you guys there.
Diversify your portfolio with stocks, options, futures, crypto, and more. Focus on the markets that matter to you. See the odds before you trade using curve analysis, IV rank, and more tools. tastytrade. Download today.
I got 'em all shook up for me.
we have finally arrived at the fateful juncture where the Fed is going to tell us, essentially, not in direct terms, of course, whether the stock market is going to finish the year with cheerful disposition or something else wholly opposite to that. This is Macro Money. I'm Ilya Spivak, head of global macro here at tastylive. And we're going to, of course, spend the next almost half hour looking at what will come to us by way of the Federal Reserve's monetary policy announcement in the next just less than 24 hours, as a matter of fact, and see how the markets might respond and indeed what the Fed might actually do here with what it is going to announce. So we'll take a look at the price action going into this announcement here first and foremost, and then consider what the reaction functions might be across the major assets. And see what we might divine from there. So this is what the markets did today. And not surprisingly, it's kind of a hodgepodge. And the markets are very clearly not showing a meaningful level of conviction. We can see the S&P 500 a little bit lower, NASDAQ a little bit higher, slightly higher on yields across the board. In particular, it seems like at the front end. And what that appears to be is this continued lowering of the bar of what the markets would consider as acceptable for the Fed's announcement. And we'll get in just a moment to why the markets are needing to give the Fed something like an out on what they're forecasting here. But as we look across the major assets here, there's really not an immediate sort of level of conviction. Gold's a little bit higher, but ultimately not getting very far. Bitcoin's a little bit higher, but ultimately within its recent range. The dollar is a little bit stronger, which you might expect would be the opposite of what would happen in an environment where the markets would be saying, oh, we have these anti-fiat, anti-dollar proxies higher. At the same time, you wouldn't expect those proxies to be higher at a time when yields are up, which the dollar is more consistent with. Crude oil continues to be on a mission all by itself, seemingly ignoring everything else, inching lower once again in a kind of stubborn, choppy, but persistent stair step. And so the markets are seemingly disconnected from macro dynamics here of a unifying sense and looking instead like they're just kind of buttoning up exposure and getting the trenches ready for what is coming up when the Fed actually delivers their announcement tomorrow. We can already see in last week's performance some of this. For example, we can see Bitcoin stalls, gold stalls, but the dollar is weaker, even by a touch. Stocks start idling, but yields are up. So you get this sense already with the way the markets were kind of struggling for momentum last week after, of course, the spirited risk-on rally the week of Thanksgiving, where stocks were up a bunch. We can see that here. At the same time, gold was up and Bitcoin was up, and there seemed to be a lot more consistency. Dollar was weaker. There seemed to be a lot more thematic consistency. Now it seems that thematic consistency just isn't there, and we've arrived at a place where the markets are instead concerned with getting themselves ready and reluctant to make up their mind until after the event risk has passed. Now, what of that event risk? It's not much of an event risk it would seem, if what we're focused on is whether the Fed will actually move rates at this meeting. That seems increasingly like a foregone conclusion. The likelihood here that the Fed is going to cut rates by 25 basis points at this point looks like essentially a given. When we have this kind of a high setting here, 87% likelihood that the Fed is going to make the move, it's essentially unheard of that the Fed wouldn't be doing what this level of conviction is implying. And so what that would suggest is that the action really isn't in what the Fed does, but much more so in what the Fed says. Moreover, it's not as though the likelihood has meaningfully changed recently. So this is not newfound conviction that's still percolating through the markets. This is conviction that is quite well worn at this point. A week ago, we were already north of 80% and very close to current settings and have largely held exactly there. So there's really not a whole lot here to speculate on. Rather, the speculation seems to be here. And what we see is, while the outlook for this year has basically become something of an afterthought because we already had a pair of rate cuts, and so most of what the Fed has told us they would do when they last updated their intentions in September, this was it. This is the summary of economic projections from there. It starts with a median Fed funds rate of 4.4. The Fed says, we'll give you a cut and we'll project 3 cuts for this year from 4.4 to 3.6. By this point, we already have 2 of those cuts, of course, September and October. And as we just saw, the likelihood of a third is well north of 80 and approaching 90%. So this part of the outlook, that's a given for the most part. The controversy is in here, where, as we can see, the tally for this year and next has been shifting up, largely because the market has been factoring out rate cuts for next year, down now to narrowly favoring 2 cuts. So we're just at about 50 basis points, a little bit light, of course, but those are mainly rounding errors. So we're at basically 2 cuts. And that is a significant change from last week, where we got up as high as 65 basis points and averaged around 61. So we hovered last week, and really for the most part, the past 6 months at well over 2. And we've kind of vacillated between will we have 3 or won't we? The likelihood there has moved around some. But we would have to go back to mid-year to see comparable levels of rate cut intent for next year, where the markets thought, oh, we're probably not going to make it very much past 2 cuts. And still, this is more dovish than what the Fed itself is forecasting, which is 1 cut. Now, why is the Fed reluctant to be cutting? Well, we can see it clearly from its communication. The big story, of course, came on October the 29th, the last Fed meeting, when Fed Chair Powell very clearly said that the balance of risks has now shifted after the actions in September and October, saying, look, we don't know what the data from before the shutdown is going to look like. We know that labor demand has softened. Ostensibly, that's why the Fed is acting. Balance of risks shifted on employment, so we took a more neutral stance. That much is clear. This was really the part that got the markets in a huff. There are different views about how to proceed at December, and there are strongly differing views. And a further cut in December is not a foregone conclusion, far from it. Now, the markets have decided that it is a foregone conclusion by this point. Of course, quite some time has elapsed. But what we know here is that the board seems finely balanced. There's not seemingly strong consensus. We have here this further clarification from Powell where he says September and October, when he says today, that's what he means, were risk management cuts, and that's not the case going forward. We don't know what data we have in December. What do you do if you're driving in the fog? You slow down. And so that's perhaps why the Fed is inclined to just say, look, we are minded in the direction of rate cuts and not rate hikes. We are, generally speaking, in a direction where if we're doing anything, it's cutting, but we don't have the kind of data to jump out the window with conviction. So instead, here is a single rate cut. It stays on the board, and that should tell you where our head's at, but actually, we'll get back with you on what scale actually looks like. And that seems to be what the majority of the committee was worried about when we then got minutes from this same Fed meeting, where you can see most officials see more cuts as likely over time. So again, a statement of intent here. Several said that a rate cut in December could be appropriate. Of course, now we learn that it's most likely going to be the case. But many others, several versus many is an important distinction here, by the way, in terms of Fed minutes language. It is a very deliberate indication of scale. Many others felt rates could remain unchanged for the rest of the year. Most officials, right, as in more than many, where many is more than several, warned that additional rate cuts could risk embedding higher inflation. So again, very, very finely balanced. And we haven't had the kind of data, which is, of course, the Fed's point and Powell's point from the onset, to know which side here actually is going to prevail on evidence. We haven't had that much evidence. And so when we get the sense that the Fed is concerned and may not deliver, what do we see? When Powell makes this statement here is when stock markets make a top. Now, they haven't sold off in any kind of aggressive way, obviously. This attempt at moving lower found support at the former low back here, and we've since rebounded to basically where the market made up its mind about this Fed announcement from October and said, yeah, we don't like it, go down. And so we're sort of back to October's starting line here. The dollar has been a little bit more responsive. And we can see here that it's had a little bit of a pullback, but in the broader sense, it is not like the dollar is running away with any sort of aggressive easing expectations, nor is it really benefiting as rate cuts get hemmed in. In fact, since we got this most recent dovish adjustment here, the dollar has actually come down. And so it seems to be more so focused on sentiment than it really is on anything else. Now, does the Fed have a case out of the data that we've seen so far to push for rate cuts and give the markets what they want? Or are they more inclined to essentially continue what they've been saying, which is to say, look, we don't know, and we're going to take it slow while we don't know. S&P Global PMI data has shown that things have remained relatively well anchored, growth rebounding from the weakness earlier in the year and holding near some of the better levels that we saw at the end of last year. The ISM PMI data showing us that while manufacturing remains anemic, it's not really accelerating into a bad direction. Meanwhile, services, which is a much larger part of the overall economy, that's holding up reasonably well and even finding a way to accelerate a little recently. Looking at the main inputs from what the Fed looks at, sort of the dual mandate side of things, again, relatively steady on labor markets in manufacturing, both, by the way, services and manufacturing shedding jobs. Under 50 on this PMI data points to contraction. So both shedding jobs, but at least for services, the pace of shedding is easing. The way that this data works is under 50 is contraction. The further you go below 50, the faster the contraction. But of course, when you go from lower readings to higher ones and you're still under 50, then the pace of contraction is actually decelerating. And that's what we seem to be seeing here. So again, the Fed's already given us 2 cuts. It can take between 12 to 18 months for a single cut to work its way through the economy. Is there an emergency here? Maybe not. Does the Fed need to continue to do maintenance here? Maybe not. Looking at the pricing component side of things, not great, still relatively elevated, but lower, not higher. So perhaps this gives the Fed a little bit of confidence to be cutting this time. And maybe indeed the price of cutting this time on such a finely balanced committee will be that the outlook for next year is not meaningfully changed. And that's how you get consensus around a decision. Indeed, this most recent data that we got on consumer confidence showed us that consumer confidence actually perked up a little in the first look for December, and consumer inflation expectations fell to 4.1%, which is the lowest that we've seen since essentially February, since before the inflation-minded surge in inflation expectations really took hold. Now, it's understandable why the markets don't think that there should be a barrier to rate cuts. They are looking at inflation expectations as hovering near the same lows as we saw in early April. This is the 5 and the 10-year break-even rates. These are inflation expectations as they are baked into the bond market. And of course, in April is when we had the most recent lows where we had this sharp decline in inflation expectations because the markets were convinced that reciprocal tariffs were going to crash the economy. Until, of course, the White House decided to back off. The rebound here, both in stocks and in break-even rates going into the middle of April, is immediately after you get that Liberation Day announcement where the markets decide that this is going to be an absolute disaster. And then when the dollar, stocks, and bonds fall together in very quick succession and with significant swings for a few days, the president comes out and says, whoa, 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 things are getting yippy out here. Let's put this whole thing on ice for 90 days. And the fever breaks. We are at similar levels of disinflation concern as we were then. And so what does that mean about the state of demand? Well, the bond market clearly seems to think that something's wrong. But it's not showing up in growth data. So one might understand why the markets would look at this and say, you need to be cutting more next year. Something is wrong with the economy. But the data that we have on the economy as it presents itself, be it here, or be it here, doesn't seem to be screaming out for anything. And of course, we don't exactly have the kind of emergency that the Fed would readily recognize because markets are collapsing, credit spreads are widening, lending is locking up. None of that seems to be immediately discernible out here. So the Fed might be reluctant. And so the markets have lowered the bar. That doesn't mean the Fed is now going to try to get over it nevertheless. And so this really then comes down to whether moving this number to 50 basis points is sufficient. And whether the markets would even welcome that at this point, because of course now that's what's priced in. And if the Fed doesn't do that, if the Fed instead stays at one cut here and says, look, we'll get back to you when there's more clarity, that probably looks like disappointment. And if that's how this ends up turning out, well, then we know what that looks like. When the Fed gives the markets an outlook that doesn't match with what they want to see directionally, even when there is a cut. Risk doesn't like it. And if risk doesn't like it, one might expect that the dollar here would, in fact, find some support, not so much in the yields side of things as in the risk aversion. Exposure-wise here, going into the announcement, I've got something of a balance to the portfolio. So I'm still long gold and still long silver, in this case via the futures, the 1 ounce futures outright, for silver via a call vertical. But I'm also still short an element of risky asset exposure. Still short the second half of my Bitcoin position with later maturities. Still short the S&P through SPY put verticals. I'm getting really short on time here to manage this crude oil position, but as it's for now moving in the right direction, I'm reluctant to take it off until it does the most of what it can do. And crude oil has been somewhat ignoring of the macro narrative, so I'm going to hold it into the Fed announcement, and we'll see how that goes. And of course, I still have my longer term exposure here, EWZ, MSOS. The first one still working as Brazilian markets take a wallop last week around political headlines, but ultimately don't cross any Rubicons. And MSOS is going all the way out to the beginning of 2027, basically expecting that cannabis descheduling might come up in the midterms next year. So this is a very long dated idea, and still a bit long the dollar, still a bit short the pound, still a bit short the euro, expecting that ultimately they find their way lower. And that is macro money for today. As ever, we are here Monday through Thursday, right after overtime, a show I co-host with Chris Veio, looking at the Wall Street close and where things might go therefrom. I'm also writing for the news and insights portion of tastylive.com, commenting at Ilya Spivak on former Twitter and on Blue Sky. If you're watching this on YouTube, like and subscribe. Macro Money is back tomorrow, and I'll be joining Chris for Futures Power Hour to go through the Fed live. So definitely come and join us for that. Happy trading, everybody.